Yeah, I just had it in my ear,
Okay.
But Elizabeth Warren called Musk, co-president Musk.
Oh,
She thought that,
so they
she thought
all
that
were,
was pretty funny.
were
Yeah,
running the agenda.
yeah. And then one of the Southern senators took like 2 minutes to get a question out, and Fed Chair Powell would your wife like if you weren't able to bank
Oh, really?
anymore?
He went right to the wife.
Yeah, he
I
said.
like
He
that.
said
That usually doesn't end well around here when we start with
What
your
would
mom
you-
or your wife
Yeah, no, they kept it slightly more above board, but
or your house.
yeah,
Yes.
but just would your wife like it if you were debanked? They're big on debanking, so we'll see what today brings. But yeah, if the written part is the same, we saw a little bit that released earlier, or right as soon as he
With
spoke.
everything that's going on, they're talking about debanking.
Seriously, yeah, and the Doge kids, those were the hot topics.
The Doge kids.
They said, "Will you swear to us? Will you promise that you'll tell us?"
You're smart. You went to a
I
great
missed
university.
it. I missed it. I could have been rummaging
Wow.
through the Pentagon right now,
Yeah.
but we're here.
Little vest on and everything. And,
Do they get a
bunch of-
badge? I imagine they have
a bunch
like,
of access tokens
exactly.
and stuff. Yeah.
Yeah. I'm just saying, we'll call them up. Call them up.
Yeah, the more
Let
you
me
save,
in.
the more tokens you get. It's like Chippy's Pizza
It
Safari.
probably is
where
pretty
you probably
gamified, yeah.
You can get a prize afterwards.
And my discretion if funding is necessary or not.
Yeah, I can find that piece fascinating. Yeah, and this doesn't look good. Just shut it down. Shut it down.
Take that off the walls.
So,
But yeah, that is the news. Maybe the outside chance here is that someone asks Powell a question that he gives an answer that hasn't been
certainly
articulated.
seems like he's got it, though, very wired to stay away from. We're not going to respond to, and he says that in a very polite way, to policy until it's policy
He's
rather
good.
than rhetoric.
Yeah.
So it's not an enviable job. But actually, right now, they're in a pretty good spot. So my takeaway was that there's no rush to cut rates anymore.
Right.
So I didn't look at the Fed funds markets, but I got to imagine the probabilities are probably a little less and a little bit more skewed to a single cut
Yeah.
towards the end of the year, which really means it's a rounding error in terms of Fed funds pricing, and it's a little less accurate in terms of its predictive accuracy. But so we've got inflation numbers coming out.
Yeah, let's take a look because it is interesting. We've got CPI this morning in about 50 minutes. You can't really. We're expected to stay the same right here at 2.9% year over year. Come up a little bit month over month. But it is interesting. I can't really tell how much weight this will have. It doesn't really seem like a lot. I mean, we have the next Fed meeting isn't until March.
Right.
So we'll get another reading before then. Expected nothing really. What the interesting storyline here, I think, will be if there's a big difference in this headline inflation rate and the core inflation rate, because the core will take out eggs. No eggs. No avian flu jumps there, and I think that's what they're saying is keeping this so high. So maybe we see everyone care a little more. We're supposed to come down a little bit here in this core, which excludes non-egg, volatile food and fuel costs. There you go. Food is volatile right now.
Yeah, but when we look
You
at
still buying eggs? You're
Actually, I
still
bought-
buying the organic kind.
Yeah, I had to because we went to the store. My daughter, who lives down in the Loop, couldn't. She's like, I can't find eggs anywhere. I'm like,
What?
anywhere? She just went to Whole Foods. I'm like, well, your search was 2 blocks. It wasn't really exhaustive. It's not like there's no eggs in the city.
Right.
The usual place you go to have your food delivered didn't have eggs. And of course, she doesn't want we go to the store on Saturday, my wife and I grab her 2 dozen eggs because she was coming out to watch the Super Bowl. And my wife goes, oh, no, don't get her those eggs, which are like the regular eggs,
How dare you?
Yeah, it's got to be the organic eggs.
Sure, the ones with the slightly harder shell makes you think they're
Again, it's
protected.
like, okay, good heads up. I just didn't want to have 2 dozen eggs that I didn't want anymore.
This is true.
So the eggs were available. No sign on it, like at Whole Foods where they got the big sign.
Oh, interesting.
You're strong. They don't limit you, but you're strongly suggested not to take more than one, which almost leads to the question of why doesn't everybody take 2? Because I may not be here next week. It's
Exactly.
almost a little bit of a paradoxical stuff. this is what troubles me with all these numbers is, okay, so if we don't look at food and gas, which I consume every day,
What's left?
how's inflation? It's good. Okay, well, there's 10 different gauges of inflation. They all are have a lag into them. When you look at the constituency of these, they try to normalize it, but the basket itself is argued sometimes not relevant. So this goes back to, again, depending on who you talk to, the more macro guys will really focus on the trends in inflation, and we're not at the 2% Fed inflation. For me, I don't care if it prints. I hope it prints 3.1 or 2.6, because if it does, we're going to get a rip in FX. Will it last? Not to the great extent, but that's all I care about. So, again, if we get a lower inflation print, it gives the Fed a little bit more perceived room to possibly lower rates. That'll be a little bit of weakness to the dollar. Prints higher, reinforces inflation sticky, and maybe we see the dollar trade a little bit higher. Although, we look at Aussie, we're 100 pips off the low. We look at Kiwi, we're 75 pips off of all-time lows. Dollar yen's already bounced. So how much more dollar upside is there to it? The print's out of line, it'll move. Will it stay? I don't know. So that just lends me to, okay, I got a good, every binary event is a good one, because the tariff stuff is tough because you never know when he's going to say it, and that can catch you off guard. I know exactly when this is coming out. I don't care what it is. And I know that sounds, but there's a certain, from a trader's perspective, you get a certain peace of mind in not guessing what it is. You see, you react to the movement, and then you piece together what you want to do with your strategies. So
tell me, are you looking to this dollar yen? Because we've seen, a pretty high correlation lately with U.S. interest rates here.
Absolutely.
If the CPI plays through maybe into an interest rate story, do we see that action here?
I think so, and I think you're spot on. We saw a high in ZB, the long end bonds and futures, of 117 end of last week. We're down into, I believe, I don't need to believe, I've got it right in front of me. We're 114 and change. It's a pretty appreciable fall. So bond futures are adverse to bond prices, so that means yields have climbed a little bit, especially at the long end. The short end is really not very interesting right now. Where that plays the greatest through, as you ran for us, the correlations, interest rates.
Yeah.
So
we're coiling up a little bit here.
I think this rally has to do with a little bit of U.S. rates trickling a little bit higher, back into the middle of a wide 112 to 117 range in ZB. We're right in the middle of it now. So I do think this is one where if we get a higher print, this will extend. If we get a softer one, we'll probably revert a little bit. So it'll be interesting to see.
Yeah, especially because this is early this week, not a ton of movement, one direction in Forex pairs. But this is one we have seen already this week, a large appreciation, maybe a little bit of that baked in. And even a as expected number causes this to deflate a little bit. Because, it was really interesting. I was looking at this Friday, and it was near the lows for going back, I think, 2 months, all the way to
from 158 all the way down to 151.
Yeah,
absolutely.
And I went over to our client sentiment, and it was just about 50-50. It was like, wow, a lot of people. That was one of the lowest measures I'd seen tracking it for a long time. And it's like, wow, half of these people expected to bounce back, and then boom, bounce back a little bit, 200 pips. So they're right in the short term. But this has been a really interesting one to watch. Another pair, definitely keep an eye on, is this cable, British pound, US dollar. We've seen some good action here looking at the hourly chart. Yesterday, a big move to the pound, a lot of appreciation there. But we've also got a good slate of economic data coming up. If we skip back here to the calendar, looking at tomorrow. So we'll see the CPI through the morning. Likely nothing from Powell. Who knows what extracurricular discussions will go on to spike some of these. But overnight, if you're trading this pound dollar, a big one to watch. We've got GDP out of the UK overnight. So this, I think, has a little interesting storyline just because growth isn't great.
Yeah.
And maybe we see something. We've got forecasts here for quarter over quarter to go dip into the negative territory, which, isn't great. But is this what they use for recession, quarter over quarter? Do you know? It's month over month.
I think you've got to have 2 quarters.
2 quarters in a row.
Negative
contraction.
Growth
Yeah.
to call it a recession. Yeah.
Okay, so I mean, not quite there yet, but I think this one coming off of 0% growth, dipping into negative territory, a 0.1% move, it could stay positive, could stay 0.
Right.
And maybe there's a bit more of that psychological reaction. What do you think when looking at the tape action here in pound dollar?
I mean, cable's had a nice bounce off the low, so has euro. Very different than the yen action. So, I mean, the movement has been in the crosses, sterling yen, euro yen. And that's seen a nice reversion off of its lows. So this is where, we're really pegged right between, we're right in the middle of the range right now. So, we have that 122.5 down to up to maybe skosh under 125.5.
Yep.
Upper to middle end of the range. Decent pullback here. It'll be interesting to see if I honestly don't think we're going to get as much movement off of CPI into these as we will in the yen, because we have kind of the same story in euro right now.
Yeah, let's skip over to that euro. Here's the daily chart, so we can tighten it up, go to the hourly. Yeah, pretty identical story.
But sterling, again, just eyeballing the two, a little bit stronger than euro here. But a good bounce off the lows. We tried 103 late in the week and didn't, we pounded at it a couple of times, and now we've gotten a decent bounce back into it. Less focus on tariff talks is probably helping euro a little bit. And still, if we go and look at the daily, we're still, we're about 170 pips off of the lows. But where we looked at yen, and we've kind of gotten back to the middle of the range here is what, 107.5, 108?
Yeah.
So is this still bouncing around the end of its bottom? It does. And one of the things I talked with Frankie about, Lily, yesterday, we really don't get what we used to get 10, 12 years ago when a market put in a structural low, get this real flush of activity, and then you see a pretty substantial rally. Tends to be, markets are much deeper now, much more efficient. You get a low and you get a couple of rallies off of it, and then it kind of grinds lower a little bit. Then it almost wears you out being long looking for the bounce, and people get impatient. They're like, it's not going to go.
Interesting.
And then you get a couple of days. Now, we've had 2 days here where we've, for no apparent reason, we've just built on some nice gains. This is kind of what we see for bottoming action. Again, the goal is not to pin the lows. If we can get some constructive tape action over 104, maybe we have a little bit of room to extend here. So I'm going to watch and see. I'm not looking to necessarily, this is another one where I don't think you're going to get the CPI move to say, okay, I want to sell 104.70s, twice the daily range, and I want to buy them. This is almost where I want to, buying 103s is interesting to me if we get down there, just because if we are going to put a bottom in, that spike lower shouldn't stick. Now, shouldn't is a very dangerous word for a trader.
Exactly.
Because when it doesn't stick, you get out. You don't, it should be here. But it'll be interesting to see if we get a push down there, if traders look at that as a value area. So this is one where I don't set up equivalent ranges and just trade the range in a benign way. This is one where I'm looking for a little bit of value possibly. And you can look at doing it that way. Or you can look at if they trade lower, and they basically, you really have to clear out that 102 level to really put some stress back into the marketplace here. So for me, it's interesting. Kiwi, Aussie are having a really hard time here. Kiwi especially. Aussie's doing better.
Yeah.
They were able to stage and hold on to a pretty decent rally off of last week's lows.
For sure.
And hold on to the bulk of it. And what I mean by that is we see these bounces. We've seen a couple of 100, 120 pip bounces in Aussie, but they don't last a day.
No,
now,
yeah.
you can argue here, well, it's not 63 cents is still cheap. They're not tearing higher. No, they're not. But they're holding on to the bulk of the gains, and they're not releasing down. So this is another one that I think is starting to perform a little bit better in terms of tape action. You go over to New Zealand, though, and this I really struggle with because, yes, we had that spike low last Monday to almost 55 cents. But it's having a hard time. Very different chart than what we just looked at in Aussie.
Yeah.
For a pair that has such a strong correlation, it's
Right.
like, why is Kiwi sick? And I don't say that in a bad way. It's just the tape action isn't. Have we had rallies? Yes. Each one, here we rallied well above 56, 60, and we're not holding on to that. We're rolling over to the lower portion of the range. That is a little bit, you could argue, well, this was really the cheap one.
Yeah.
You want to look at things that way, there's nothing wrong with that. But for me, I want to see something that reacts a little bit better, and I'm a little frustrated that it's not. Don't quite know why. Is it the China story, the rate story? Yeah, pick your story. There's lots of stories out there. But for whatever reason, it is not giving you the same tape action that you're seeing in Aussie or Euro.
Really great call out because, yeah, when we compare these two charts, they should be identical. But, yeah, you're just seeing a little bit more of a decline here and not as much of a support anywhere. Would you attribute that to maybe, this run-up being a little more volatile? Do we see Kiwi react a little bit sharper than Aussie sometimes and then just nothing really, no interest after that?
We had a good bounce off, but I think on a percentage basis, they were both pretty close off of that post Monday, Sunday night kind of low we put in. But we just don't seem to be building energy closer to 57 even. In other words, we haven't broken out yet to the upside, and 57 cents is still cheap Kiwi when we were looking at 70-cent Kiwi last year. But we can't hold on to those upper ends of the levels where we seem to be doing a better job in that in Euro and Aussie. So still lots to parse through here. And we will spend a little bit of time tomorrow talking about some of the non-dollar crosses. But we do have, as you mentioned, GBP numbers coming out over the weekend. The chairman's talking PPI tomorrow.
Yep.
So another inflation gauge.
There you go.
Again, don't try to guess the number, just try to take advantage of it. Industrial production too, a little in the Euro area. We do have some good numbers flowing through the rest of the week, so it'll be interesting to see.
Yeah, a lot to watch, a lot to look for, and a good midweek update here. Thanks
All right,
for
my
having
friend, take us out.
Thank you guys. Happy Wednesday. Up next, we have Tom, Tony, and Vanetta. Thank you guys for joining.
Have a great day, guys.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
I'd started to disrupt my trading career like really early on, probably 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful...
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
And you know what? That Vanetta voice never gets old in the morning. You sound just as good as you always do on that song, Vanetta. Chef's kiss.
Why have you decided to dedicate your life to being a troll? Like, I don't like that. Like, you're just.
It's a really good question.
Troll bat is not my favorite. I love petty bat. Petty bat is like chef's kiss, my number one seed. Prank bat, that's also pretty good. But trolling bat, for people that aren't aware, it is not me who sings our iconic song. It is a very talented Korean woman named Mary Sohn. So
I just got an email that says Vanetta sounds so good on that opening song. I go, I know, she's got the voice of an angel.
Anyone who's heard me knows that I love to sing, but I cannot.
Oh, well. Look at us, Tom. I never wear white, and here you are wearing white. I'm wearing white. Vanetta's got a little pink and white. Who would have thunk?
It's gray, but yeah, it's okay.
Oh,
Yeah,
looks white.
I don't know. I don't like when everybody in this city freaks out over a snowstorm. Like, I just don't like it. Like it's all they talk about.
We're not freaking out. It's called alerting and preparing the public to be as safe as can be.
I mean, it literally hasn't snowed all year. And
that's not true. It has snow. There's been measurable snow. We are in a deficit. That's true. But it has snowed. You can't say it literally has not snowed when it's demonstrably false.
I have not. Let me rephrase that. I have not broken out the shovel yet this year.
Oh, well, sweetie, you can't lift it.
I got the snowblower all powered up last night, gave it one pull, started real quick, real easy, Saz. Beautiful. You want me to come over?
You might have to.
You got your guys.
My heated driveway is not working right now. You're
no, rich man down. Your heated driveway isn't working?
Oh no.
Your boy Carlos let me down. It's been a month. He ordered a part. It's not in yet. So my heated driveway is not working.
Oh no.
Which means
did Carlos get got? Like, what, is he okay? Is Carlos still with us?
They better not get him. But my heated driveway is not working, so I got to.
This delights me greatly.
Me too, kind of.
So Houston, I have a problem. Yeah, I might have to actually shovel my own driveway today. Not happy about that.
You can't do that, Saz. You got to have somebody.
It's
no,
steep,
and
but
it's what they call like the Widowmaker snow. It's going to be like that heavy, wet snow, not like that light, fluffy snow. So, and all jokes aside, you have to be careful.
I got spikes.
That's not in any way related to your heart or cardiac function.
No, I have spikes on the bottom of my shoe. I'll be fine. But anyway, yeah. So that's my dilemma today.
You have a son-in-law now. Call him.
Oh, there you go.
My God. As in the words of my own daughter, he's worthless, Dad.
Wow.
Oh man.
Wow.
Oh. Wow. My work here is done. I have heard it all.
Yeah, so.
That is a special way to show your love.
When that was coming out of your mouth, did you have any inkling of stopping? Like, did you think a little bit that, I should not say this, and then you said it anyway?
No.
How is your grandson? Like, you literally never talk about him.
Because my daughter has asked me not to make him part of the show.
So he's.
I'll talk about mine. Mine's starting to babble now. He's just doing a little babbling. He's going bam. And they taught him, both the parents are blonde, so his first words are duh.
What?
That's what he does.
Don't try to make jokes. That's what he
does. He goes like this. He goes, duh. That's his first word.
How old is he now? He's like a year, right?
A little bit more, like 14 months, almost 15 in a week or so.
Oh, okay, yeah.
15 months. 15 months. I was reading.
Of course. Oh, that's another thing. Yesterday you said you read books. I was too tired in the day to say anything to you. You can't even see the monitors in front of you with huge font. And you're going to tell me you're going to read a little paper book underneath the hut on vacation? I call bullshit.
Tom, do you want some book recommendations?
Hold it. What hut am I under?
When you go on vacation, I don't know.
When you're sitting in the cabana at Caesars.
It was like 50 degrees out. I don't know how. It was actually like 60 degrees out. I wasn't going outside in Vegas. I don't know if there were people outside. I didn't even look, but it was too cold for me. When you're when you're sitting in the hut, I just want to know, what hut do I have that I'm sitting in?
Don't change the subject. You read. Unbelievable. You can't even see. How are you going to read?
Oh my God, I read all day long.
Hey, can I tell you guys? You guys are on the clock, and you're going to have to do some extra legwork because we're getting a snowstorm here, and that's just going to make things harder. But you guys are aware Valentine's Day is Friday. And then it kicks into a long weekend where you're going to just be stuck at home with your significant other because the market's closed also on Monday. So
I was in Vegas.
Praise be to all of our family.
I was in Vegas last weekend. She got her present.
Oh yeah, she did, man. And she gave you yours too,
Omaha.
man. You left your beret at home, man. That stuff must have been
I hope
good.
it was thunder from down under. I hope you got her the package where she gets to rub oil on them.
Oh, the Jenny package when she would do that to the interns. I remember that.
Oh my God. Oh man. But Bat, how about for you? Valentine's Day's Friday.
Yeah, I went to the grocery store last night and I bought 6 chocolate-covered strawberries for my wife in a plastic heart container. I'm gonna give her that for Valentine's Day. I think I'm all good.
Nice.
Hey, they got a special at Trader Joe's too. You can buy little cakes there.
I'm all good. I'm all good. It's sitting in the garage. I don't want her to find it, so it's sitting in the garage.
Wait,
good.
Tom, are you gonna make heart-shaped toast at Bad Coffee?
No, but what they did do for Valentine's Day was they made red foam.
Ooh. So it goes in red. Does it come out red?
Is it red dye number 5? Did you get it cheap?
I'm just saying, like, you're gonna freak out if you see that. I'm just,
This is a good conversation. Do you look after you go? No.
Do you look after you go?
You're lying if you say that you don't.
I look.
Yeah,
And this is you call this a good conversation? Oh, you call this a good conversation? This is a good conversation?
Although I will say, as a lady, I don't poop. So
yeah, right. Of course.
Right. I don't like ladies who poop.
I do not. So all right. Well, yeah, we gotta keep it moving. So what'd you do last night, Tom? Did you get prepared for snowpocalypse? I went to the grocery store. It was a bleep show.
Oh, I had to pick up some stuff for somebody, so I did go to the grocery store. I went to Trader Joe's last night for just a couple seconds, but no, I was at a meeting. And,
a meeting. These meetings, man, where are they? Like at a strip club or something like that? Where are these meetings? Seriously, I have a meeting.
I was at a meeting, and which was fun, and then
which was fun. Home. You've never said that about me. You were lying. You had to go pick up some stuff for someone who your dealer. What are you doing? What did you get involved into?
Thank you.
I had some stuff I had to pick up, and then I had to meet somebody and have a meeting and with a couple people, and then I was home by.
Are you deep throat? What is going on?
I would say I was home by 6:30, 7 o'clock.
Okay.
Are you home by 1800 hours or something like that? Yeah, because I think it's like a military operation you're doing.
I couldn't even get in the parking lot.
Well, their parking lots are tiny anyway.
Their parking lots are horrible. I can't barely fit out of my car. I can barely fit.
You can barely form a sentence. Mister,
my car
can fit. 15 months.
My car can fit. I can barely fit. Like the door, I can't even get my door open more than like a foot.
Yeah, people are calling BS on you only going for a couple of minutes or a couple of seconds. Nobody can go to Trader Joe's for a couple of seconds, and you especially, the way you walk and everything else. It's a good hour at Trader Joe's for you. It's true.
No. I have a Trader Joe's that's 2 blocks from my house, so I'm in and out of there all the time. Boom. I know exactly what I want.
Mm-hmm. Can I tell you? So I was at Mariano's by me yesterday, and I was shopping, and I was getting some stuff.
Get the guacamole.
The aisles were crowded, so I left my cart kind of by the refrigerated section, and I was getting my dry goods or whatever. And then I came back. Someone stole my cart, and it had food in it, so I had to start all over. And then I kept like looking in people's carts, and I was like, "Did you steal my cart?"
They usually don't steal your cart. What a lot of people do, because I've done this, is I've taken other people's carts by accident. Like I found myself walking around Costco with a cart, looking in it, going, "Hold it, this isn't my cart." And I'm like, "You are not my wife. This is not
it
my."
was so annoying.
It is. I've done it. I've taken. So nobody stole it. They just. But when you're at Mariano's, I have come to the conclusion that the single greatest item at Mariano's is their guacamole.
Okay. Well, can I tell you what's really mad? Because like the loaf of bread and some spices I bought, that was easy to replace. But I had picked out the perfect package of chicken thighs that was the perfect price to weight ratio, and I couldn't find like another package. I got so mad about those chicken thighs. Do you know what I mean? Like you find exactly the weight.
You got what you wanted. I can understand it. Yeah, you're diligent.
Yeah. But I am gonna make my signature honey, garlic, soy, ginger chicken thighs. So that's what I'm gonna do.
Boneless
today.
or bone in or bone out?
Boneless, but chicken thighs. Yeah.
Yeah.
Do it in the crock pot.
I have never done boneless chicken thighs in the crock pot.
It's good. I put soy sauce, honey, garlic, ginger, hoisin, chili crunch, sriracha in there. It's good.
I have all of those.
You don't have any meat though.
No, there's missing one ingredient.
Condiment. Your refrigerator's just got. Do you still have Super Bowl food left over?
No, I threw every single thing out.
Oh, that's wasteful.
I tried to give it away, but nobody would take it, so I threw it out.
The research guys didn't want it?
No, they threw it away.
Wow. All right. Well, you were not going to want to throw away today's show. Yeah. Okay.
I see what you did there.
Yeah, sort of, maybe, kind of. We got a great show for you today. A lot of really good content. Head enjoy. I don't know if I have a schedule, maybe. No, it's fine.
Sure, we got an option jive at the top of the hour at 8 o'clock. At 8:40, we got what's your assumption, where we're going to look at 10 different trades, and then 9 o'clock. It comes on Wednesday. We got the skinny and options math with my man Jacob. But really, the true cherry on top, no pun intended, is Johnny Trades with Nick Batista at 9:45 Central.
And we got Truth or Skepticism today. Tom Sosnoff, Dylan Radigan. What are you doing?
Today Dylan is working with Josh, and they are coming up with so they're blindsiding me. They've already announced an official blindside, so I do not know, but they're blindsiding me.
Is Josh well enough to do work? I know he was a little under the weather.
He's on life support, but yes, he's well enough.
It's gonna
Tasty, Tasty, as long as you're on life support or better, you're good. He's on life support right now.
Got it.
He wanted me to tell you he's on life support, but he's working.
Got it.
Men with a cold. Like I would like just once for one of you guys to get a cramp.
I got a cramp. You know what I started taking? I've been
your JJ was cramping?
No, I got a leg cramp. So I drank a bottle of that electrolyte stuff. It works really good.
You have to be careful though with your sodium levels, because it's all like, yes, endurance athletes, but your cramps could just be because you're dehydrated, not necessarily
eat a banana, drink some water.
But just be careful. That's all.
Drink some water. See water.
I don't really like electrolytes. I don't really like bananas. I don't really like water.
Well, you should drink water, but you can do magnesium supplement. You may not be getting enough magnesium. Okay.
Oh no, I'm getting plenty of magnesium.
No, he looks great. He looks great, Vanetta. He's getting enough.
I got magnesium. I got magnesium pills.
Okay, well, be careful with those because they will make you poop like a goose if you are taking magnesium citrate. You take magnesium glycinate, that'll help you sleep.
All right, I don't know what it is.
No, but I'm just saying, look, dude, if you want to poop like a goose, then take all the magnesium citrate that you want, but that's what that does.
I am so going to get some of this powdered magnesium, whatever you just called it, and stick it in his iced tea.
Magnesium
I am so going to do it.
Yes.
I am so going to do it.
It releases muscles, and that muscle is also your colon.
Oh, I'm so gonna do it. I'm so gonna do it. I'm so gonna do it. It's gonna be good.
Like
I
a
can't
goose. Like a goose.
This is gonna be
Anyway.
nice.
Hey, we got a great show for you today. It is Assume the Position Wednesday, so like Bat said, a lot of great stuff headed your way. Hey, in the meantime, in between time, I got a lot of news. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking
Coming across the wire. Our leading story. Top story. Jump in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's February the 12th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Today, not really. John Deere, MGM, Williams, Cisco. I don't know, but SMCI was up 4, Lyft was down 2, CVS was up 6, but more importantly, option trades today got long Tesla, and Tesla's up $6 today. Hope you caught that.
We'll talk about that. I got it for news. Hey, first headline, U.S. Fed Reserve Chair Jerome Powell, in his first appearance before Congress since the inauguration, vouched for the strength of the economy President Trump inherited, even as he deferred questions about tariffs, what he thought about Musk's role in the government, bank account safety, and other issues. Basically, he's like, the economy's fine. We're not in a rush to cut rates. We're not going to do a digital dollar. I'm not going to talk about Elon Musk. What else you want to know?
What's he going to do at Jackson Hole? I mean, nothing to do.
Let's talk about bonds and what happened yesterday, I guess.
No, absolutely nothing. Bonds are unchanged this morning. They're down 1. They were down 5 overnight. But I think there's a number this morning, right? So we'll see what happens.
Yeah, I think he's talking more today, too. And honestly,
Yes,
I really don't know.
It is his second day. And I did mention this, but then a man with a penis wrote into Bat. And then Bat was like, oh, did you know Jerome Powell speaking before Congress? I literally had reported it 15 minutes earlier. But again, it's fine, whatever. So, yes,
That's an excellent point. That's an excellent point, Vanetta. All those facts are true.
Anyway, he is speaking again today, and there you have it. And speaking of your number, the consumer price report's coming out today, and it is expected to show inflation is not going away. The outlook for January CPI calls for a monthly increase of 0.3% for the all-time items index and a 12-month inflationary rate of 2.9%. I'm not sure what the implied move for the SPX is today, but you will get CPI.
SPX, let's take a look at that because you brought it up. You're looking at around $34 for the 0 days, the 1 day about 51.
Okay, Tom, what you gonna do?
Well, I'm actually more looking at the kind of the bond move, which is a little harder because they don't have the bonds don't have daily.
You got 2 days, which is about 88
It's a little less than a point, right?
points. Yeah. Mhm.
Yeah. So it's about the bond. The implied move in the bonds is about, let's call it 25 to 27 ticks over the next 2 days. So it's really hard to tell what the 1 day move in there is. And bonds are 14.24. I am a buyer lower. So anywhere in the low 14s, I'm a buyer for sure. So I'm going to offer, I don't know what's going to happen on this number. I'm hoping that the bonds take out last night's low. Let's see what the low was last night.
The low last night was 16, so I don't know, about 10 ticks lower than where we are right now.
Right. So I'm hoping that they take back out the lows that they made overnight. I didn't do anything yet, but we'll offer in about 6 or 7 minutes. We'll offer to buy some bonds or sell some bond puts and note puts on a down move because of the CPI. We're long bonds right now, and I'm long notes, but I'm long both, but I want to go lower and buy more.
Okay. I hope that comes to fruition for you.
It'll be fine if they go up. It'll be fine if they go up because we're long them, but I want them to go down because I really want to get more if I can.
Okay. Hey, let's talk about the dollar. This headline says dollar took a step back from its tariff-driven rally, leaving it below recent peaks as traders wait on U.S. inflation data and news. I basically want to get into a larger conversation about currencies. Overnight, the European Union, Mexico, and Canada condemned Trump's decision to impose 25% tariffs on steel. But let's talk about the euro, the pound, the peso.
The dollar was softer yesterday against every currency. Today it is basically unchanged. It's a little bit. It's doing well against the yen.
The yen is the only thing that looks lower, Saz, right now.
Everything else, the dollar is a little bit. It's flat against the euro. It's whatever. It's mixed. Let's just say yesterday the dollar was weaker, but I honestly, there's no based on the activity yesterday, there's no trade there right now.
Okay, that's good to know. Because, there were some opportunities, and there have been some nice opportunities in currencies, but...
Well, all the currencies are still basically on their butt. They are just a skosh off of their lows.
Yeah. They're all... If you're bearish on the U.S. dollar, you can buy anything you want. Throw a dart.
Right.
I got a bunch of crypto news. Crypto just received another signal that the U.S. regulatory crackdown environment is waning after waging an aggressive legal campaign against Binance for years. The SEC has agreed to just pause its lawsuit for 60 days. That's according to a court filing. Lawyers for the SEC and Binance noted that the new crypto task force may impact litigation and facilitate a potential resolution for the case.
What's funny for me is crypto rallied in the face of bad news and tough regulations for 10 straight years. The question becomes, when they loosen everything up, what will crypto do? Will it have the kind of reverse
same effect? Yeah.
I kind of feel
because you say equity markets like the slop, they like the unknown, but crypto markets?
I think crypto markets were the same way. The crypto markets rallied for 5 straight years under the worst regulatory environment possible. Now you're going to have a friendly regulatory environment, and I wonder, if the crypto markets, already priced all that in. I think it's going to be tough sledding, and. This is good for Binance, obviously, because their legal bills are probably $10 million a month, but the rest of us don't really care that much about Binance, that's for sure.
Bat, what's crypto doing this morning?
Hanging out at around 96,700. It got down, flirted with being under 95. I'm talking about the futures right now, and up to just about 97, sitting at the high end of its range. It said it's up $1,300, but it's really been going sideways.
This is a hilarious story to me. BCA Research, a research firm that's been bullish on crypto for years, say the market has peaked and it's launched its own meme coin to prove that the frenzy has gotten out of control. They're launching a new meme coin this week called Liquidity Trap. And they said that their short-term outlook on crypto was turning more bearish. What do you think of a meme coin called Liquidity Trap, Tom?
I think it's cute. I like that's how they're proving their point. I think that's kind of cool. I feel the same. I just said the exact same thing. That I think crypto has a lot more. To me, crypto's always had this huge upside skew, and I feel like that's probably not where I think the risk is in crypto now. I think the risk is to the downside, but a washout in crypto would be good.
For who?
Well, I think it's always good for trading.
It makes it interesting. Those who have missed or are wanting to get on forever can get on. Those who are looking to accumulate can accumulate. You really can't sell crypto. You can't sell it short. Let's trade an ETF.
Well, speaking of looking to accumulate, remember James Howells? He's the British man who's hoping to retrieve a Bitcoin-laden hard drive from the city dump. He accidentally threw it away, and he's been denied multiple times by the city council for going in. He has a whole plan to dig. I actually interviewed him for Luckbox a couple years ago. I was able to get a hold of him, and we talked about this, and I'm like, what are you doing? You can probably find it online somewhere on Luckbox. muck box. But the wallet today, he says, is now worth $770 million. So he's now offering to just straight up buy the landfill. This poor man, because the price has fluctuated so wildly since he threw this hard drive away. I think it was in the summer of 2013. So think about just what the price variance and what that does to your mentality. Like, it broke his marriage apart. Like, it was really sad writing the story.
This poor guy.
When I
gotta
interviewed
feel
him,
bad
like,
for him.
can you just imagine how much this haunts you?
Yeah, but how would he afford to buy the landfill?
Well, through a consortium.
partnership.
So through like a
well, I
venture
understand,
fund.
but if you own the landfill, you know that like it's not.
Yeah, so you're going to elevate it. So the landfill's worth $1 million. So you say it's $3 million. Would you take it?
Why would you say it's $3 million? No, what you'd say.
No,
is,
I'm just saying you throw out a number. We don't know what the landfill is.
No,
worth.
what I would say, if I own the landfill, what I would say is, I'll let you do whatever you want,
and I take a piece of the cut, the action.
He's offered them that. He's offered them that. He straight up was like, I'll go, like, he was like 50-50. I don't know the exact, but he was like, yes, if you just let me in.
Why wouldn't they do that then? Why wouldn't they do that?
I don't know, man.
Banana, can you go find out for us, please?
But anyway, what is Coinbase? What is Coinbase doing this morning? It's just an interesting story. That's all.
I'd rather you go and ask the landfill guy. Can you do that for us, please?
Coinbase is up $5.
271 up $5. He's correct.
Hey, shares of Intel, Tom, I know you have a position, rose yesterday after Vice President J.D. Vance promised to safeguard American AI and chips. In a keynote address at the Paris AI Summit, Vance said the U.S. will block efforts, full stop, of authoritarian regimes stealing AI. He also cautioned the EU to not be too concerned about regulations and safety, and that innovation should be paramount. What are your thoughts?
Well, Intel is one of our biggest longs, so it's actually up over $1 this morning, which is great. It's the first time this stock has been over 22, and I mean pre-market it's over 22. I can't believe it, but
last time was early in January, but it was only there for a second. It had a 2-day run where it went from 19 to about 22 and change, where it quickly fell back off into the 19 handle. So yeah, what are you gonna do, Saz?
I mean, I've held it this long. I mean, I'm short the 23 puts. I'm going to stay short the 23 puts and pray for a miracle.
All right. Okay. Hold and pray.
This is the first time. I mean, it's about a week ago, the stock was at 19. So I can't complain. We made $3 back.
Hey, in earnings news, Supermicro says they are confident they will meet the SEC deadline and reach $40 billion the next fiscal year. CEO Charles Lang says he's confident that the company will file its delayed annual report by the SEC's February 25th deadline. What did you do in SMCI? Up around 13%.
I did the right thing. I only sold puts.
Yeah.
You're so good, Saz.
So for once, yes, I did the right thing. I just sold putties here, putty.
I love that for you. That's nice. Good job, SMCI. Hey, just real fast before the number comes out, Apple is teaming up with Alibaba to bring AI features for iPhones to China. I'm not sure what Apple and Baba are doing, but the development could clear months of uncertainty over Apple's AI strategy for China. Apple did briefly look at DeepSeek. Number should be out.
Apple's unchanged. Baba's up 4. The numbers out. Even the S&Ps were just down 15. They're now down 50. 50.
Wow.
NASDAQ down 220. Russell down 13. Dow down 238. Volatility up by 37 cents, and bonds, Saz, which you wanted to look at, are down 24 ticks. That's a new low. They just traded under 114. They're 113.30, 31 right now. You just bought some. Nope, sorry, you did not. You sold some puts, some 110 puts.
No, I just
sorry. You're working 110 puts. You bought some bonds at 24 and 25. 113, 24, and 25. About 15 ticks lower than where you expected.
Yeah. No, this is kind of what I wanted. I haven't filled the puts yet. Not exactly sure.
Even the S&P's down 57.
Did not see that coming, did you?
No, I did not. Let's see SMCI. Let's see if that changed anything there. No, SMCI is still up around 4. Let's see if that changed anything at Tesla. I'm sure it did. It did. Tesla's unchanged, maybe up $1 after being up $6 just a moment ago. Buy the first dip, Sadnov?
Well, I bought some bonds. I'm not so sure. I'm a seller of. Oh, let's see. I mean, my God, these are rich. I want to sell some. Just selling some note puts here.
108 puts you sold at around 38 ticks.
Yeah,
38 ticks is about $600 in premium.
Yeah, this is a surprise. There's a couple of huge surprises here for me. First of all, the Russell down 43. It was the strongest index pre-market, so that's really interesting.
It was. Now the Russell is the weakest, down just about 2%, but even the S&Ps and everybody else down around 1%.
We're getting filled on some of these.
Which makes sense with bonds going down the way they are a full point.
Yeah.
The actual numbers, CPI back to the 3 handle, 3% versus 2.9% year over year expected. Core CPI came in at 3.3% versus 3.1.
Yeah. So I've been selling some bond options.
Even the S&P down 62.
Yeah, I've been selling the 108 puts in the notes and in the bonds. In the notes, I've been selling the 108 puts, and in the bonds, I've been selling the 110 puts.
Okie dokie.
Tough one. Yeah, I mean, I don't know. What else do you do here? What do you do here?
I don't know, Davey.
I think you're doing everything you can do pre-market.
Yeah, that's what I think. That's all I've traded. I mean, I don't have any naked S&P positions to do anything with.
Volatility only up 27 cents, Sadnov, 1783, about 20 cents off of its highs.
That's bonkers. All of these numbers are bonkers.
Small move in volatility for this move so far.
I would say it is, but I think that there's just a lot of nerves.
But wouldn't that make volatility go higher?
No. Here's a big one that doesn't surprise me is gold this morning. The fact that they're just whacking it, I thought it was so overbought. We actually talked about this yesterday.
Yeah, gold was weak yesterday. It finally turned around a little bit, down 1.5% now, $40. It was weak last night. I'm sorry, that's what I meant to say, not yesterday.
I'm gonna buy more gold. Hey, back to the headlines. Tesla dropped 6% yesterday after Chinese competitor BYD announced they're partnering with DeepSeek. Musk adds to Doge distractions with an OpenAI bid. He had a weird press conference yesterday. I don't know if you saw that from the Oval Office, just kind of maybe putting questions into Tesla shareholders. Hey, like, how many companies and businesses can he run? Like, honestly, legitimately. No matter what you think about him, but like him doing all this government stuff, with his kid on his head.
It was kind of a weird photo op. It seems very un-Trump-like, to have Musk in there with his kids. It doesn't seem that's not his Trump style, that's for sure, but who knows?
Anyway, but let's just talk Tesla, the stock. Wild swings. TP even wrote about it in the Cherry Bomb. Lots of opportunity. Bat did it for his podcast. What do we do in Tesla this morning?
Tesla looks like it's back to unchanged, maybe up $1.
Yeah. Tesla right now is, yeah.
And this is a real threat. BYD is offering like smart EV cars for less than $10,000 in China. That's great.
Yeah, I gotta get me one.
We can't.
What does BYD stand for?
I don't know.
Bring your own bottle.
It's a Chinese company, so I would be ignorant in trying to tell you what it stands for. I don't.
Oh, okay.
But they make a whole bunch of things, not just cars. So.
Oh, okay. I don't know.
It's all.
What's your Tesla position, Tom?
We're just short premium. I mean, I think I should be fine. I don't know.
All right. Affirm is partnering with the fintech company FIS to bring its debit card functionality to more banks. Affirm launched its own debit card in 2021, and in its earnings report last week, the company said its debit card now has 1.7 million active users, up 136% from the year-ago quarter. What are you doing in Affirm? Yeah.
I do not have a position on an Affirm.
Okay.
Firm IV rank of 30, hanging out at 77 or so, down around $1, but everything's a little bit weaker with the market being weaker right now today. Affirm had earnings already. So you all good?
Yes, they did. They had them already. Hey, this is crazy. Meta put a record-smashing rally together and reaches 17 straight days of being up amid an AI push. The 17-day winning streak is the longest streak of any NASDAQ 100 company since 1990. I did not know that. That's like a LeBron stat.
I'd like to sell that stock till my hands bleed.
Okay, so
wow.
Is Meta gonna make it 18 days in a row?
No.
Okay.
I guess not.
No.
What's it doing?
Not a chance.
Meta, let's take a look at it. With this type of move, I don't think so too. Meta 713, down around $6.
Okay.
I think the streak is over, maybe over.
Okay, good.
Yeah, I don't want to say it for sure.
This is interesting. Amazon is testing a new service where they send customers directly to brands' websites if Amazon doesn't stock their products. The retailer says the feature is only a beta test for now, and it will be activated for a subset of U.S. customers who perform searches on the Amazon shopping app.
That's pretty good.
Yeah. There you go.
Okey-dokey.
What are you doing in Amazon? That's
Nothing.
it. That's all I have. Okay.
I don't have anything else.
Nothing.
Yeah, Amazon's got an IV rank of 14. It hasn't been on our radar for a little while. Maybe today with Amazon down $4. Amazon the last 4 or 5 days hasn't really participated with the market. Been going a little bit lower.
Netflix, haven't talked about that in a hot minute, is considering adding podcasts because they're cheaper than quality films. Podcasts have gone well and truly mainstream, actually present a huge revenue growth opportunity for companies like YouTube. And did you know, Tom, more people watch YouTube on TVs now than they do on their mobile phones?
I did not know that.
Yeah, so Netflix is now considering a foray into video podcasts. Spotify wants video podcasts. YouTube wants video podcasts. And now Netflix wants in. What are you doing in Netflix, the stock? I watch YouTube on my TV, and I watch podcasts
I do not have a Netflix position.
Netflix down 10, Sosnoff, 998, under 1,000. Netflix IV rank of 16. We'll see if these IV ranks start to pop today with this move lower. Did you just nibble on some Tesla stock?
No, I only bought some stock just to flatten out my deltas.
Got it.
So, I wanted to get. I bought some Tesla stock at 329-ish.
328.68. I got. Mm-hmm.
Okay. So, and the only reason is just to flat out delta. So if the stock rallies up, I'll be a little bit long. Because if you look at Tesla this morning, I mean, they've annihilated it, right, the last week or so. And I wanted to go a little bit long, but with the stock up pre-market, I was kind of like flat, and I wanted to stay a little long. So I took advantage of this down move just to buy a few hundred shares.
Panetta, I got a little Taiwanese source here on your landfill if you want to know why they're having such a hard time with it.
Go ahead.
And the Bitcoin. It says a UK judge stopped a guy who tossed a laptop. His partner accidentally tossed it in the trash, I guess.
No, it was him.
Okay.
It was fine. I interviewed him, but that's fine. Go ahead.
Okay. Stating it's property of the landfill, which is owned by the city, and environmentalist permits would make the search impossible. So there's a whole lot of things on who owns the laptop. Never mind the landfill.
Okay. Good to know. Yeah, it's just.
Well, the problem is even if they found the laptop, it wouldn't do them any good because if it only does him good because he has the password.
True. But we got Gino. The elusive Gino can get in there.
Hey, in a very bizarre marketing stunt, Papa John's partnered with a TikToker to show a funny new release for Valentine's Day. You can now bathe in Papa John's garlic dipping sauce because there's a new bath bomb. Oh, this is gross. Starting yesterday, super fans who share their love for Papa John's garlic dipping sauce on social media will be surprised with a one-of-a-kind self-care essential. Look, dude, as a lady, I don't want my Hot Pocket smelling like garlic. Like, what are you doing?
Yeah, you do. Who you kidding?
Oh, my God. Why?
I can't
Tom,
believe that Papa John's has anything that's any good.
I can't believe Papa John's is on TikTok. This is crazy. They are also offering heart-shaped pizzas for Valentine's Day for $11.99. They're served unsliced from February 10th through the 16th. So if you want a heart-shaped pizza or a garlic dipping sauce bath bomb, Papa John's is the phenomenon.
The place to go. Mm-hmm.
Yes, there you go. Hey, an AI-powered sports media company called ScorePlay has raised $13 million in Series A funding, led by Alexis Ohanian. He's the guy that co-founded Reddit. He's married to Serena Williams. And Giannis Antetokounmpo. I cannot pronounce his name, but you know who he is. You know who Giannis is. The service helps teams and leagues gather and distribute clips faster using AI. So they raised $13 million in Series A funding. So love the Greek connection there.
Me too.
Those are some crazy names to pronounce.
Mm-hmm.
Finally today, Super Bowl 59 attracted a record 127.7 million viewers. It was aired on the Fox network. The Kendrick Lamar halftime received 133.5 million viewers for the best Super Bowl halftime ever. That's again by viewers. Personal preference aside, at game peak around 8 to 8:15, not sure what time zone, but there were 137.7 million people watching, and it was the best Super Bowl pregame audience ever. So those are just numbers.
It was the worst game ever.
That is true. There was a precipitous drop off after halftime, after Kendrick played. Like, I don't know how many millions of viewers they lost, but there was a drop off after that. One, because the score was so bad, and two, people wanted to see Kendrick. They saw him, and then they turned the TV off. So,
what do you rate the Kendrick Lamar halftime on a scale of 1 to 10?
On a scale of 1 to 10, for me, am I rating it for myself, for like humanity,
for
me? Oh, like an 8, like a very solid 8. I mean, the memes are good. The jokes are really funny afterwards. James says 10 out of 10. James, who works in production.
If it would have had subtitles, maybe the boomers would have given it a 6 or 7. But I don't know. Without subtitles, can't rate it.
Josh's son rated it 13 out of 10. And he told me it was the best. And then and another young kid, Jamal's kid, said it was 9 out of 10. That's curious.
Wow, you invited all the kids but the back kids.
Straight fire. But you know, there is a meme that's going around saying that like boomers are complaining about Kendrick Lamar, but y'all listen to Pearl Jam. You know, oh yeah.
It's a good point. It's a good point.
I didn't mind Kendrick Lamar. I just didn't know all the little. I didn't know all the little stories in there. I kind of liked the whole Serena thing, but I didn't know their backstory.
It's got layers, got levels to it. Anyway.
Yeah.
But anyway, those are just the numbers. Good job to Fox. Good job to all the advertisers who paid millions of dollars. Congratulations to all of the celebrities. I don't know. Although I will say it's very funny because right now Swifties are beefing with the Eagles. We are taking no prisoners.
When is the Eagles parade? When's the Eagles parade?
I will look that up. Hold on. Come on.
City of Philadelphia is getting ready to.
Okay, well, thank you. I think today, maybe. No, Friday. Sorry.
Oh, Friday.
The city is
Okay.
going to be
Friday
Friday,
makes
starting
sense.
at 11 a.m. Starts at Broad Street and Pattinson Avenue, in Philadelphia. There you go. So that's when the parade is.
According to my Taiwanese sources, which is really just Google right now, best Super Bowl halftimes: Michael Jackson, Beyonce, Kendrick Lamar, number 3, U2, Snoop Dogg, and Prince. I would rank Prince a little bit higher, but that's just me.
Again,
I
but those
would
are
rank-
subjective rankings. I was just talking about number of people watching.
Yeah.
So,
No. I'm just.
What's your favorite? What's your
Prince.
favorite?
Prince is the number 1 halftime show of all time. It's
I
the
think Prince
single
was great.
greatest Super Bowl performance in the rain with
In
the
the last-
marching
in the
band on
last-
the field. It's Prince, and there's no other answer. Whitney
last 10
Houston
years-
for national anthem.
In the last
I
10
agree.
years, I would rate Bruno Mars. He was really good. And
Bruno was good.
He
And
was good.
I-
He's an entertainer. And
and I
Beyonce.
think
Boomers love Bruno Mars.
I would say
Because we
Bruno
do
Mars
sexy time to Bruno Mars. That's
I would
why
say
there
Bruno
I
Mars
said
is
it.
good, and I would also say I happen to like the one with J-Lo and
Tom
Shrika.
Petty. Tom Petty was great back in the day.
I don't
Did you say
remember
J-Lo
Tom
and
Petty.
Shakira? You love Shakira.
Shakira is one of my favorites.
And wasn't it Bruno Mars and somebody else though? Wasn't it like
I think Beyonce.
yeah,
No,
Beyonce? I even
no.
think
No, it wasn't
Yeah,
Bruno Mars
no.
and Beyonce. Beyonce doesn't share the stage with Bruno Mars. Give me a break.
oh.
Okay. Well, I don't remember. Anyway,
Wow,
I got to keep
okay.
it moving here, boomers.
Britney
Here,
Spears, the time wasn't it Britney Spears and Aerosmith? That was a good one.
I don't know, Grandpa. Maybe.
The Super Bowl that I went to was the Who, and they were
Red
absolute-
Hot Chili Peppers were good. I don't know. There were a couple.
I went to see the Super Bowl I went to was the Who, and they were so bad it was embarrassing.
Hmm.
Okay. I don't know where the conversation goes. I'm just trying to get out of here.
Yeah, you got to go shovel. We'll take a quick 90-second break and come back. We
Wait,
got more
I have a video. Jesus Christ,
Oh,
dude.
okay. I thought you wanted to leave. I was trying to get you out there. I was trying to get you
I just
shoveling.
want to show this real fast. There's so much, just everything's being blown up on my phone. This is crazy. New York City instituted their new congestion pricing, but it's been a really huge success. But Amazon is very smart with their new delivery truck that is literally powered by drivers pedaling it. Watch this.
Check out the new Amazon little trucks. Bro, how's that? Pedal with the battery? Yeah. So you don't need a license? Nope. Wow, check this out.
Oh
That
no!
has no license?
You don't need a license.
The vehicle, tell me what you think. Here in New York City.
You don't have to pay congestion pricing.
Wow, I love it. I
it's
love
a-
it when everybody outsmarts everybody. I do.
That's bonkers. I don't know.
I don't know. That's
I
a
would be
tough
so
job.
mad.
I can only guarantee one thing. That's one job Saz will never have.
Let me tell you right now, that job, that's a tough job. You know, that's a tough one.
But if you love to work out, you just basically get paid to work out. Like you're lifting boxes, you're doing cardio and pedaling.
Yeah, for
Hey,
sure.
hey, just remember, you don't get paid by the box.
All right.
yeah,
Now I'm done. Hit 'em, Bat. What's coming up next?
We'll take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll be back in 90 seconds.
Boomer chaos.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada
face,
yada
big
yada
bank, blah,
yada
blah,
yada
blah.
yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bank, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader. People are always asking, where can they find my podcast? There it is, son. Look at that, Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday, around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. I made the coffee this morning. It is strong. We got effervescent. But let's look at the market first, Sadno, if you want to. Sure. Because we got something to look at. Even the S&P down 60, Sadno. You know what 60 means? It's time to buy them, Sadno. Buy them while you can, not when you have to. NASDAQ down 230, Russell down 36, and the Dow down 400 and change. The Russell is the weakest of the group, followed by the rest. Volatility only up 25 cents, 1780 Sadnoff, and bonds down 107, 113.19. They traded down to 113.14. Did you think you would see that number today?
Not a chance.
See that?
When they traded up to 116 like a couple days ago. So I was like, please get down under 115 again, so I could, because I sold mine out. It was a good trade. Yeah. I wanted to reload, so I just reloaded this morning. All over the place. Sold bonds. Sold bond puts, sold note puts, bought bonds. So I got my first full tranche in. So we'll see what happens.
And Tesla back up 4. Let's go. Confirm and send.
Yeah, I bought a little Tesla. That's it. Let's see. Confirm and send.
I mean, you got $4 in you got $4 in Tesla right now. I can't believe you're not taking it.
You know what?
A guy like you, I mean, when was the last time you made $4 on your own original idea, which wasn't really your original idea because the back got long Tesla yesterday, but when was the last time?
You mean the last time pre-market?
Yeah, pre-market. Yeah, when was the last time? Like never? Like maybe when you copied off of my trades back in the pit in 1983?
Yeah, maybe.
Okay.
Copied off your trades. I'll sell a little bit up above. Just a little tiny bit. We'll see what happens. I'll take
and gold down 30 after being down about 40 or so. Just maybe even a little bit more, 40 or 50.
Yeah. I'm not looking at silver right now. I don't know what that's doing.
Silver is down equally as much, down about down only less than a penny. Gold, silver not really moving.
Oh, okay. Yeah, that gold silver ratio is way out of whack, I think. But anyway, let's take a look and see the confirm and send emails that came into us overnight. It's 7:57, so we got to move. When buying the guts and selling the wings in the same expiration cycle, what is your DTE cutoff before you roll out to the next month? And is it different when you would roll any other trade? Is it different from when you would roll any other trade?
No, it's around that same 21-ish days. If you're asking me to come up with a number, I mean, have I done it earlier? Sure. Have I done it later? Not as much. So I would do it earlier, but I wouldn't do it much later.
Yeah, I mean,
21 days.
The simple thing here is that, and it really is a simple thing. It's just like, why would we change based on a specific strategy? Right. Like for us, the mechanics are the mechanics. It doesn't really matter, what the strategy is at all.
That's correct.
Right? We're indifferent.
Yep.
Right, there's your Tesla profit.
Oh, Saznoff, you know how to trade now, my man.
Scalpy, scoopy. All right, let's go to the next slide. Do you use different profit targets for different strategies and or assets? It seems to be that for things such as narrow spreads or iron condors, the profit target should be much lower because the positions take longer to come in and you can turn over the capital quickly. But for undefined risk, you can aim higher because they come in more quickly. Is there any research on this?
I don't know if there's research on it. I mean, we have put a pretty broad 25 to 50% out there as the credit received. I'm assuming it's a premium selling strategy. I mean, that's all I could think of for the question.
Yeah, I mean, the simple answer here is that you're exactly right. I mean, when you have a very narrow spread and, the 50% profit target that we talk about is a generalization. It's just a target to go for because everybody in this business needs to know, where the numbers are optimized. And that's how we optimize, the discussion. But if you have a narrow spread on and you want to take a quicker profit because it takes longer for the position to come in, of course, go ahead and do it.
Sure.
And if you want to squeeze undefined risk trade a little bit more, or whatever, go ahead and do it. We're just giving you kind of,
optimal numbers, guidelines.
Yeah, just guidelines. And I mean, Tony and I will take a profit at 20%, 25%,
sure.
30%, 35%. Sure. I mean, why wouldn't we, if it comes in quickly? And, And sometimes we'll wait longer. It really just depends. So the simple answer here is the 50% is a guideline. You do what you want. But sure, if you think that it makes more sense to take a quick profit because it's a narrow spread, do it. Let's go next slide. I recently inherited a decent amount of money. It's all invested in dividend-paying stocks that my parents lived off of for a long time, along with Social Security. I'm not sure if I should leave the money in the stocks or sell them and use the capital to trade. I'm not worried about the tax consequences of selling the stocks. And if it helps, I'm 42. What would you do?
First of all, congratulations to your parents, to saving. I mean, that's something that you probably should think about doing too. This is such a hard thing. I'm a little sentimental, so it's tough for me. I'll split the baby here and say I would take half. No, what would you do?
No, that's exactly my answer. Split the baby.
I would split the baby here and do half with yours and half the way it is. I would probably leave the legacy the way it is and go from there.
My answer is exactly the same. I split the baby because I think that's just like Tony said. It's fair to your parents' legacy, and it's also fair to you because things have changed. Yeah. And so I split the baby. Sell some, keep some. Try not to overthink this and move forward.
Yep.
I definitely sell some and trade with it. I definitely keep some the way it is.
Very good.
Call it splitting the baby. Let's go next slide.
Yep.
How does someone learn to scalp? Are there certain products to stick with? Is there an approach that works best?
Man, it's got to be the hardest thing to learn, and I don't even know if you'll learn it. I mean, I think if you can learn to stay small. Luckily for us, futures have gotten very, very small. They were extremely big. Even the future that we're trading right now used to be twice as large as the big future is right now. So it was actually 10 times the size of what we're trading right now. So for me, I would get as small as you can, and you can't add to these positions. It's just stock, you got to be small. I think you got to stay small. I don't think you can learn to scalp. You can't learn to scalp coming into the market brand new. That's for sure. If you've got years under your belt and you think you know that how markets move, then maybe.
Yeah, nobody ever actually learns to scalp. I
thought even S&P's 10 handles ago you could buy them. I mean, so what do I know? I've been doing it for 40 years.
I thought you could buy bonds 7 ticks ago. I mean,
there you go.
It's sometimes like where we bought Tesla this morning and sold it out, it works, and you make 4 or 5 handles, and sometimes you buy bonds and they go down and you lose 4 or 5 handles or 7 handles, whatever it is, and
that's right.
We're always learning. But if you want to learn to scalp, there are certain products that I would start with. If you're just learning, I would start with /MES or /MNQ. That's it. Those are the only two I would start with, because /MES, it's $5 a point, okay, and that is, that's a very reasonable number to deal with. Now, just think about it. Like on a move of 60 points, like we have today, it's $300. So there's some money involved.
Sure,
but,
sure.
It's $5 a point, and whereas the big future is $50 a point.
Right.
So if you had a big future on this morning, it's already moved, almost $3,300. On the small one, it's only $330. So if you're wrong, you kind of know what you're, risking. I mean, of course, it's a big move this morning. It's 2 times the expected move. But my point is that if you're going to start learning how to scalp, you want to start with MES, and then if you're doing MNQ, which is the micro NASDAQ, that's only $2 a point. Okay, so that's where we would start. And those are the 2 best products to start with. They're liquid, they're small. We start there. Let's go next slide. There's a lot going on in the world right now, and I don't care what side of the political spectrum you fall on. I think we can all agree that there is a lot happening, but the VIX is only 16. I don't get this. At the same time, there's tremendous liquidity. there's tremendous liquidity. Do you think it's possible for volatility to become less sensitive to risk because there's just so much liquidity? In other words, it's unlike markets will ever fall too far because it's just too much liquidity that will come in.
Man, there's a lot of assumptions here, and the market is more liquid than it was, and it's more accessible than it's ever been with computers and programs and everything else like that. So there is some validity to this, but let me give you the flip side. Everybody jumps on one side of the train, you get an exaggerated move. So maybe because of all this liquidity, you're actually going to get an exaggerated move. So there's no way of telling what's going to happen. All you can do is make an assumption and pick the strategy that fits that assumption. All you can do is have money on the sidelines, as we always talk about, to take advantage of this. All you can do is use leverage to make your account larger than it is and keep the right percentage in the market. So for me, it's business as usual here. I don't try to overthink this too much. Volatility does seem to be a little bit low, but we're at all-time highs. No matter what you write here, we are a day or two away from all-time highs. That's the facts. Now, you can make an assumption and say that volatility is too cheap here and do something about that with the strategy that you want to apply. Other than that, I don't think you can do much else.
Yeah, this is a really interesting morning because I think this caught everybody by surprise. Mm-hmm. There is a lot going on in the world right now, but there's always a lot going on in the world. Sure. I always used to joke about this one guy that was in our office for years, and he every single day he came in and said, can you believe this? And we're like, you say that every day. Shut up. Mm-hmm. Like you say it every freaking day. Of course we believe this, because every day for the last 40 some odd years, I've been coming into work and going, wow, do you believe this? So yeah, I believe it. If the VIX is only 16, it's 16 for a reason. And there is a tremendous amount of liquidity out there. There's also, like Tony said, there's a lot of money that everybody's watching the same movie. Everybody chases things in the same direction. You know what? Ever since we built Tasty, we kind of have a philosophy of just trade them. Like, Tasty has never been about trying to overthink the macro side of the markets. I mean, we throw a couple of macro people into our network just because people, don't want to hear just our own opinions all day long and stuff like that. So, we have some macro people that we toss in there and mix it up a little bit, a technician here and there, a macro person here and there. But for the most part, Tasty has always been all about just trade them. Just trade them. If you think something's cheap, buy it. If you think something's expensive, sell it. That's it.
Very good, sir.
Let's go to the last slide. I mostly trade futures. I don't understand how margin for futures works. What's the difference between intraday and overnight requirements?
Enough, I'll let you do this. You've got the nuances down pat.
So futures are on Tasty, you don't see what's on the back end. You only see what's on the front end. That's your trading platform. On the back end are multiple very complex margining systems. The way the securities industry is anything that's considered a security, like stocks or options or indexes, ETFs, those are regulated by the SEC. Anything that's a future or futures options is regulated by the CFTC, Forex, all that stuff. And they have a different margining system. The SEC's margining system is like from the 70s and 80s. The futures margining system, which is written by the CME, is more current. It's called SPAN. And the way futures margin works is the brokerage firm, like Tasty, or whatever brokerage firm you have, sets the intraday requirement. So the intraday requirement, they might say it's 25% of the overnight, it's 50% of the overnight, it's 75% of the overnight. We don't give you an intraday. We don't give you intraday relief, or we'll make it super cheap. Tasty, a long time ago, we decided to go to 25% of the overnight requirement. So if the overnight requirement is $1,000, the intraday requirement for us is $250 to hold a future. We are pretty much right around industry averages. Some firms like I actually don't know what Robinhood is. I think they're 50, but I'm not sure. I think Interactive Brokers is 50, Tasty's 25. Some firms could be as low as 10, I guess, but most firms are around 25%. I think at Thinkorswim we used to set it at 25% as well. That's the intraday requirement. The overnight requirement is set by the exchange, by the CME, and that's not negotiable. And the firms cannot loan you money. So whenever you trade futures, you have to have, and you want to hold it overnight, you have to have enough capital for the overnight requirement. So intraday, the firm can set it to whatever they want. Overnight, you have to have the capital or you get liquidated. And so, and that's set by the CME. And, we have, as a firm, we have nothing to do with that.
Very good, sir. Let's say
intraday, 25%, overnight, 100%.
Let's say a quick 90-second break and come back. We got even the S&Ps flirting with their lows down 68. We'll be back in 90 seconds. We've got an option jive next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Don't die like squirrel.
It's option. Jive.
Tomas, we are back, my friend. You know what? Time for a little option jive. Even the S&P down 65.
Yeah, Bonds losing it here too. I don't know. Maybe they're not going to bounce back so quickly here.
Maybe not. Time will tell.
Yeah. I got to tell you, didn't see it.
I didn't see it coming either. All was quiet on the Western Front.
Taking a look right now at some of the markets, they're killing the yen. That's not good for the good kids. They've rallied the gold all the way back. Painful.
Yeah, gold's only down 14. Have to be down closer to 50.
Yeah. So they totally whammied me, double whammied me in there in gold.
Mm-hmm.
Totally double whammied me. Yeah, they caught us in everything today. Little bastards. Little bastards.
And you call yourself a professional.
I do. I thought I was. All right, let's see what we got here, Beth. You know, it's funny. I got this text message yesterday, and it's that scam. Have you got it yet?
It's got what?
It's a scam text message. Have you been? I got a text message.
You mean she really doesn't want to talk to me and think I'm interesting?
I got a text message that says you owe blah 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 for a toll booth fee, whatever. Okay.
Oh, okay.
And I'm like, that's weird. I don't remember going through a toll booth, right?
Uh-huh.
So for some reason, I just Googled the address, like, you know, rather than click on the link. And I noticed, and the first thing it says is, this is the scam. And then on the news last night, I saw, it's funny because I got, like, sometimes the news, they talk about all these scams going around the country. This was a scam. And yeah. I have not
gotten that yet. Thank you.
Oh, you haven't gotten it? Okay.
Mm-mm.
All right, let's do it. Boom, 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 boom. The four most recognized U.S. This is we're calling this Trading the Small Cap Index Part 1. We decided to break this down because a lot of people, like, for example, I'm long small caps. I'm long the Russell, short the S&Ps.
Mm-hmm.
And I mean, obviously it's nice this morning, but hasn't really been working that well. But we got a lot of questions about different indices, so we decided to do a piece on the small cap index, the Russell. The four most recognized U.S. equity benchmarks are the S&P, the NASDAQ, the Russell, and the Dow Jones. While the Dow Jones is famous worldwide, and the S&P is favored by traders for its focus on the large cap companies, the bottom line is that the Russell, like, if I asked you to name a bunch of companies in the Russell, it'd be hard for you.
Yeah, it certainly would be. Yep, totally agree.
I mean, it'd be hard for any of us.
And there's thousands of them.
2,000 to be exact.
Yeah, right.
Let's go next slide. So the Russell 2000 is a crucial benchmark for the U.S. small cap stocks. It serves as a comprehensive barometer of the smaller capitalization sector, providing insight into the economic contributions of emerging enterprises, often in early stages of growth. God, that almost sounds like that was ChatGPT. Let's go next slide. Despite its importance, the Russell 2000 has seen less discussion in recent years compared to other indexes because it has been other indexes have outperformed the Russell by a lot.
Sure, it hasn't been as interesting.
Even the Dow Jones, which is designed for conservative investors, for conservative returns with lower risk, has outperformed the Russell. The reason I'm long the Russell is because everything's outperformed it. That's the bottom line.
Yeah.
Let's go next slide. So this raises the question, are small companies losing momentum, or is there still an advantage to investing or trading in the Russell? Because, we're kind of like, we love to buy the underdogs, but for the last couple of years investing, everybody has bought the leaders.
Sure.
So let's take a look. Go next slide. So to explore this, let's review the nature of a small cap index. The market cap of stocks in the Russell is significantly smaller than those of other indices. To be included, a stock must have a closing price of at least $1 and a total market cap of at least 30 million. Now remember, we have some stocks now that are worth trillions.
Sure.
So currently, the stocks in the Russell have a much higher market cap than the minimum requirement, ranging from 3.9 billion to 92 billion. The top two weighted stocks are MSTR at 92 billion and Carvana CVNA at 50 billion. The majority, though, are much smaller in scale, less than 10 billion. But I'm surprised the minimum's kind of around 3.9 billion. That seems high to me.
Mm-hmm.
But it is what it is. Okay, so let's go to the next slide. So in comparison, the total market cap of the S&P 500 is around 50 trillion, while the Russell is less than 1/10 of that, or around 5 trillion, let's just say. So for perspective, Microsoft alone has a market cap of 3.5 trillion, while the entire Russell is actually 3.4. So Microsoft should just buy every single stock in the Russell 2000. That makes sense.
It's one way to look at it. It's a big dog.
Let's go next slide. So despite the smaller size of its component companies, the Russell 2000 itself is not significant. The IWM is the 7th most actively traded equity index based on option trading notional value. And it's not far behind the Qs. And we put it up here on the slide. So looking at the 90-day notional value, the SPY blows everything away. Then comes Qs, then comes IWM, and NVIDIA's big. NVIDIA trades like the Qs. NVIDIA and Tesla trade like the Qs.
They're always the top 1, 2 in option volume too.
Yeah, totally. Let's go next slide. So the Russell 2000 represents several compelling opportunities. First, growth potential. And now this has not played out over the last couple of years, but you would think that at some point it's got to. Pricing inefficiency. Yeah, they're a little less liquid, and they are very sensitive to more sensitive to domestic economic conditions because they got less wiggle room. They got a lot less wiggle room.
Yep.
Let's go next slide. And so while small cap stocks have underperformed other indices recently, they've shown better performances over the long run. Over the past 25 years, the Russell 2000 has outperformed the SPY 14 times, 56%, the NASDAQ 11 times, and both together 10 times. I'm kind of banking on that right now. So the median annual return for the Russell is about 12.5%, which surpasses the SPYs of 11.2, although it hasn't been the case recently. And here you can see it on a graph. We just graphed everything out so you could take a look if you wanted to look at, I think this is the past 25 years. Pretty good.
Yeah, for sure. It's a nice little graph.
Go next slide. Yeah. Next slide. So some of the takeaways. The Russell 2000 provides exposure to a broad range of small cap stocks across various industries. And it offers diversification for sure and growth. Like Tasty is a small cap stock. We're a publicly traded small cap stock. Although the Russell 2000 hasn't performed well compared to other indices in recent years, over the long term, it has. And it's also a really good pairs trading vehicle. And that's one of the positions we have on right now. We're trading the Russell in a pair versus the S&Ps. You can trade it versus the NASDAQ. You can do whatever ratio you want. It's all interesting.
Yeah,
right,
looking for one to underperform, one to overperform, the opposite of the way it's been. That's really usually the way we do. We don't look for it to widen. We look for it to contract. We'll take a quick 90-second break and come back. We got more Tasty Live right after this with the opening bell sound of even the S&Ps back down 59 only when they were just down 69. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
Oh. It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tomas, we are back, my friend. You know what that means? The opening bell is imminent in about a minute and a half. Even the S&P is down 60, Sadnoff. NASDAQ down 232. You can see the NASDAQ's only about 40 handles off of its lows. Russell down 33 is about 20 handles off of its lows. Still the leader in the clubhouse to the downside, 1.5% versus everything else. That's around 1%. That's where we've been sitting after the number came out. Dow down 400. Volatility up 35 cents to 1790. And bonds down 109, trading down to 113.09. Gold has been the big two-sided mover today. I guess there's been some two-sided movement on both sides. But gold has been higher last night. It's been significantly lower this morning. And it's only down 10 right now. So gold has had that two-sided action, completing its top side, its downside, and now back up near its highs. Silver is actually up 20 cents, 22 cents. Silver was basically unchanged before. We had a bunch of earnings, well, not a bunch of earnings, but some earnings plays that you did. They all look good. SMCI is the one which you have the largest position in. It looks like it's back up $4, Sadnoff. Well, there's your opening bell right now, so we can see what it is. SMCI up $3.50. Let's see what Tesla's doing. Tesla's up $2.50. Not for earnings, but we just played it. You scalped it. LYFT, live for earnings, down $2.20. And CVS was up as much as $6. It's still up $6.
Taking a look right here, the big winner for us is going to be SMCI because we just sold puts.
Directional play, yeah.
Directional play. CVS. Well, that's going to be a weird one. Yeah, we sold some extra puts in CVS last night, so that worked. I just bought those back for 2 cents.
That's beautiful. It's a beautiful thing.
In Lyft, we're going to lose a little money. We sold some puts. We sold some puts at 50 cents. SMCI, we just bought back all our naked short calls at 10 cents. So the only one we got to deal with is Lyft. And in Lyft right now, we are short the 13 puts. We sold those at like 50 cents. And I think we're going to have to sell the...
Oopsies.
Oopsies. To the wrong trade here. In Lyft, we're short the 13 puts, so we're going to have to sell the... I guess we're going to have to sell the 13 calls.
You can do it.
I can do it. You
just did it.
I just did do that, and I'm going to try one more. Done. So I sold the 13 calls against the 13 puts. So earnings
even the
plays.
S&P is back near their lows, down 67.
SMCI is the big winner. We're flat there now. Lyft, we're short the 13 straddle. That's a small loser. And CVS, which we had a position on coming in, I don't know. I think it's about scratch. Maybe a small loser. I don't know. We're short stock in the 60 puts.
GLD for gold, all the gold's movement is down 18 cents.
Yeah. And let's take a look at Tesla.
Tesla's up $4.98 right now, almost $5.
Winner, chicken dinner.
Stick with me, kid.
Yeah. I'm going to roll some puts up and sell out my stock. How's that for Tesla? How's that? Make you happy?
Makes me happier.
Makes me happy.
I'm sure it does.
Take a fill, Phil. That was finally a good adjustment.
A good scalp, too.
It's funny. It's funny, last night when I was sitting here watching the SMCI earnings come out, did you watch them at all?
Of course. It was a little bit lower, then it went higher. Mm-hmm.
Yeah, so I'd sold the 31 puts. The stock traded down to 31 after the number came out. So I'm like, all right, I'm not going to do anything. I'm start watching it. Next thing you know, it's trading 40. So I'm like,
how does Daddy do it?
No, I'm like, I should sell some stock here at 40. It's a gift. So I put an order in to sell some stock at 40. And
because you had long delta, that's why you were looking.
Because I had long delta. So I put an order to sell some stock at 40. I got filled at 41. I'm like, that's weird. Because because that's how fast it was moving. And then I'm like, you know what? Why do I even need this short stock? I'll just buy it back. So I put an order to buy it back at 40 to make $1, and I got filled at 39. And I'm like, that is the first time in 30 years I got filled $1 better selling it and $1 better buying it. And I'm like, okay, I'm not complaining.
But that's never gonna happen again. I hope you like it.
Because as Scott would say to me, nobody calls us up and tells us, "Oh my God, I got too good a fill."
Yeah. I think I owe you a couple of bucks, guys. I'm gonna give it back. Who do I send it to at the brokerage firm? Please do.
It's the funniest thing because we've owned brokerage firms now for 25 years, and we always laugh because people come and say, "You guys, you cost me this. The software didn't work or whatever." Like there's a million reasons. Okay, something didn't happen. I got a bad fill. The quotes were bad. Blah blah blah. So over the years, over 25 years, what have we got? Hundreds of calls on different things. Sure. We're still waiting for the first call where somebody calls up and says, "Hey, you know what? There's some extra money in my account."
Yeah, and not call up and say, "Can I have a check?" Hey, let's see what's bucking the market here. UPST up 18. CVS, that's the earnings, up 7. Baba Savnov up $4. Reddit up 2 and change. Baidu up almost 2. SMCI up $1.50. Dell up $1. PDD up almost $1. And to the downside, what's leading us lower, Savnov? You've got, I guess Carvana be the first one, down $9. Netflix down almost 7. Shop down 5. Lulu down 4. CRM down almost 5. Microsoft down 4 and change. Looks like it's a pretty broad-based sell-off here, Savnov, across the market. Even the S&P's pretty tight range for this 1% move. NASDAQ's still down 1.5%. Really hasn't moved too much one way or the other.
No, I haven't adjusted anything. I think my first adjustment is going to come in Boeing, which I feel like Boeing's one of those stocks that loves to play games with me.
Boeing down $1.75. Boeing IB rank of 16, Savnov. I don't know if you should be in here at all.
You don't know if I should be in here at all?
Well, I mean, it has an IB rank of 16. I mean, unless you got a directional bias.
I don't. I mean, you're right. I didn't realize that IB rank. When did it drop down to 16?
It's been low. There's actually an uptick in Tesla. I mean, in Boeing.
Wow. You know what? You're right. I did not notice that. So this is a perfect example. Do you keep the dream alive? Let's see. Hold on. Let's see. Boeing.
I don't know the answer. I wish I got out of things I wanted to get out of at the end of the year with low implied volatility. I did most of it, but it cost me a couple more dollars.
All right. I closed Boeing rather than adjust.
Good job out of you. Staying mechanical. Unbelievable.
Close Boeing rather than adjust.
Who says you can't teach a new dog tricks?
Who says you can't teach? I'm not a new dog.
Come on. I was trying to give you some props. All right, what do you think here, Savnov? No movement right now. Can we buy them?
Can you buy them? Oh boy.
/VX down 25 cents.
I don't like. Okay, there's a couple things here. First of all,
I got to scratch, Savnov. I got $1 or $2 one way or the other. What do I do? I had a $10 loss. I got $1 or $2 profit. What do I do?
I probably ride it.
Oh, I'm dead. Let's take a quick 90-second break and come back. We got more Tasty Live with What's Your Assumption next, Sadnov. What's your assumption? You ready?
I probably ride it.
Oh, I'm dead. I'd probably sell them out and buy them lower. We'll be back in 90 seconds. Let's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. Even the S&P is down 53. You know what that means? It's time for What's Your Assumption?
Lift back over $13.
Now we can do it.
Oh, I messed this lift up. I would have been up. I would have been up money. God, I stink.
Oh, that's for sure. We know that already.
God, I stunk. I stink.
You're stink. Okay. You're okay. You don't stink. You're good. You scalped Tesla today.
That I did. You know what? It's hard to buy Tesla when the SPOOs are down 60 or 70.
It sure is. Unchanged, by the way. I mean, I was buying it. It was down $25. I mean, you were doing it unchanged. You're the real trader, not me.
Yes, that's so true, Tony Batista. I am the real trader.
But I'm getting paid today, Sosnoff. Getting paid today.
Yeah, you know, I'm getting paid today a little bit too. I'm surprised because I didn't think on this down move, especially
your Tesla Strangle should be working pretty good too.
It is. It is. I didn't think. I thought. I mean, I would really have gotten paid today if I didn't buy the bonds this morning, down 113. But you know, listen.
Should have traded the E-mini S&Ps like the bet, Sosnoff. That's all. That's what you should have done. Quick little 10 handles here, Sazi.
Yeah, well.
Gotta get in the game, Sosnoff. Gotta get in the game.
I'm in the game. Gotta get better at the game, that's for sure.
I'm sorry, I misspoke. Gotta get better at the game.
I'm definitely in the game. All right, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. We're about to do a little What's Your Assumption? It's Wednesday morning. We have What's Your Assumption? Then we have Jacob Perlman coming on at a little after 9 o'clock. He's going to destroy every bit of confidence we had in our own intelligence. And then we're going to go bring on. One thing about Jacob is he always sets me down to a new low every time he comes on. So I feel like he makes us feel like we're the dumbest people on the planet. And then, but then Scott comes on to boost us back up.
Yes, he does. Yes, he does.
And then we got Scott and Nikki. They'll make us feel normal again. And so we've got all that packed between now and 10 a.m. After 10 a.m., don't forget at 1 p.m. today, Central Time, Dylan Radigan and myself will be doing a little truth or skepticism, and Dylan's going to try to blindside me today. He's all excited. I spoke to him last night, and so he's in a good mood. All right, let's do it.
Good. Good. Let's do it.
Trades that came into us overnight. Let's see. First one, we haven't traded this in a while. A little Roku earnings trade. When is Roku earnings?
Let's take a look because they're making me think I missed it. The 13th, that would be tomorrow after the close.
Okay, we have no Roku position on. I don't know when this stock got back to 80. It's been trading like in the 60s, hasn't it?
It is almost 83, Sadnoff. No, it's been steadily stair-stepping higher since about the beginning of the year. It started the year, as you said, closer to 70. It's now 80, 83 and change.
So this guy, Nate from Omaha, is bullish in Roku. Stocks bet pretty much nothing unchanged, up a little bit today. The expected move is $10 on the weeklies. It's $10.50. You know, I'm going to go straight for the 71 puts. They're going to trade around. I saw them at $1. I don't know.
I could do that.
Know. Let me try 102. Nothing done. Let me try 101. Nothing done. Looks like my dollar sale is a good price.
I like it. Filled at $1.
I tried to sell more at $1, and I did not get filled. Oh, there I am, filled. So I have 2 tranches. I did $1. I'm doing the 2-day because this earnings cycle, I switched to the very short term, Tony. I've done the whole cycle, and it actually has worked quite well for me. I'm just saying, I switched to the shorter cycle. And the reason is, in the longer cycle, it obviously gives you more premium and it gives you more time to adjust. But I found that the shorter cycle just gives me like a quicker payout, and I don't have to worry about, like if I'm wrong, fine. But so far I haven't been wrong. Let's go next slide. Just sold puts, Nate. That's all I did. I'll see what happens. I'm going with your bullish thing. Jordan from Tucson, Arizona, or Tucson if you prefer that, if you're from Brooklyn. Tesla, 45 days. He's bullish. Tesla, had a significant pullback from recent top. Now, IV is high. I agree with you. We are locked and loaded in Tesla. We actually, Jordan, got long Tesla yesterday. We are currently in what I would call a very essentially kind of a delta neutral position right here. We are short the 410 calls. They're about 450, let's say. And we are short the 280 puts. They're about 450. So I'm going to keep that position. I'm locked and loaded. I put it on yesterday, so our timing is great. I was a little bit bullish, and I bought stock this morning, so we're up good money.
Beautiful.
We bought stock this morning at 28 and change, so it worked out nicely. Let's go to the next slide. Brad from Houston, PLTR. I forgot we have on in there. Oh my God, we're all over the place in PLTR. It's up $2 today. You're bearish in there post earnings. Let me just see what my deltas are. PLTR. I have like every strike. We're unchanged to down small in there. Money-wise, we're a little bit short. We are short the 140 calls, the 135 calls, the 100 puts, and the 95 puts. What do you want to do, dude? It's Ivy rank is still really high. He wants to sell the March 140 call.
Mm-hmm.
And that's it, right?
That's it.
I will put a position on in here, but I sell both sides because why not? 140 calls are, let's call them, and the markets are wide in here.
Markets are wide in here, but the Ivy rank is good, of course.
Yeah, the markets are wide in here. The 140 calls are, let's call it 250, 260, 270, somewhere in there. And the 95 puts are $2. I'm okay with that. I'm moving. I have a lot of short delta already in here. I'm going to do 145.95, and mid price is 430-ish. It's kind of hard to say. Okay, I'm in at 430, nothing done. Again, this is not the easiest stock in the world to fill. I'm just telling you. I'm working a bunch of different strikes. I'm working a bunch of different prices. So far, nothing done. But I'm working it. I'm at 427. I started at 430. Let's go to the next slide.
Yeah, you got to go in at mid price or high, like above mid price, and work it from there, don't you think?
I did, and I'm nothing done at all. And I'm working multiple orders. I got partial fill at 425. I like this play. I just don't know why I got a partial fill. Kind of weird because it's a big stock. I should get everything. All right, I'm filled on one tranche. I'm trying to do another tranche.
Okie dokie.
All right, let's go to the next slide. Kyle from Atlanta, Georgia, is looking at rocks. It's an earnings play with an IVR of 97. I have not traded this in a while.
CROX earnings on the 13th, the morning. That's tomorrow, Sadnov, if you're really looking at this. Crocs with 2 days has about 20-cent wide markets, not a lot of volume. You go out to March, you've got 20-cent wide markets, almost 30-cent wide markets, not a lot of volume. Good Ivy rank, as they did say. Maybe a defined risk trade if you're doing anything in here.
They myrtleized this. Expected move is $10. Stock's been myrtleized.
Crocs has been myrtleized since you no longer wear them every day.
I wear them all the time. I'm a huge Crocs. I'm a huge Crocs wearer.
That's CROX, right? You're saying? I just want to make sure everybody knows.
As opposed to what, Tony?
I don't know. It sounds, you got marbles in your mouth sometimes. It sounds like something else.
Expected move $10.89. Man, the markets are a little wide in here. Markets are a little wide. They're a little thin, Kyle. Actually, so just to give you an idea, in the weeklies, the 79 puts are 91.65. That's like an untradeable market for me.
Yeah.
If I go out to March and I go to the regular March expiration, which is March 21st, the expected move, let's call it $12. Let's say we go into the 75 puts, just as an example. They're a little tighter. And this is one of those cases where I think you have to go out and you have to go to a number where the markets are tighter. So you can't necessarily do what you want to do.
Understood.
So here's an example of where you reduce your size and you try to find a spot somewhere in between the markets and you do a little price discovery. And I'm going to
maybe even reduce size.
I did already. Cut my size in half. So I cut my size in half and I'm trying to do price discovery. So far, nothing done. Okay, we're still working it. Let's go to the next slide. Mark from Montgomery, Alabama. He's, I don't know in the bonds, 120 days moving average. I assume it'll be 5 points in either direction. A reverse iron condor.
Ooh. So what do you think about this play?
Okay. So he just thinks it's going to move. All right. Now, let's just understand something. A reverse iron condor. He just means selling an iron condor, right, Tony?
I thought he actually meant like a reverse jade lizard.
But it doesn't say it. It says reverse iron condor.
No, he doesn't. Because
to me, a reverse iron condor is
buying an iron condor. I don't know.
A reverse iron condor. Yeah. And because if you bought the iron condor, you're hoping for a move.
Right.
Right?
I think it's a reverse jade lizard. I'm sticking with that because that would be a short put. No, reverse jade lizard would be bearish also. I don't know what this is, Sadnov. It doesn't fit your assumption. Let me put it to you that way.
So my assumption here is to get long.
Right, and this would be a anything reverse would be a bearish position. I don't know.
Okay, so I'm going to go to my bond position right now. Having a bad day in bonds because I opened my big mouth this morning.
This is true.
But I am going to buy. They are currently I just put a bid in to buy some bonds. I'm going to add to my position. Market's 0304 in the June bond. And let's see what happens. 03. How about we take a fill?
Beautiful.
And just to show you, this is not what I like to do. We bought some this morning at 24, and we're buying some now at 03.
Yeah, that's $32 a tick there. That's no bueno.
No. And 02. I don't like that. But I did not think bonds were getting back to 112. Don't under 113, and we're right there. So I think this is a good number for me to lock and load. Let's go to the next slide. So I just bought bonds outright, Mark. Let's go to the next slide. Tyler from Salem, Oregon. We've traded this stock app. It's another earnings play, Tony.
Let's take a look. APP, not something that we normally trade, Thomas. APP has earnings on the 12th after the close. That would be today. Looking at the 2 days, you got $1 wide market, $2 wide market. And if you look at the March options, you've got $2 wide markets also, $3 wide markets.
Well, the fun thing here is that the expected move is $70 overnight. Tonight. No, it's the 2 day. Right. The earnings are today, the 2 day, which is the 14th. So this sounds like it's going to be a Valentine's Day massacre for me.
We don't usually put on trades with $2 wide markets. So if you're going to do anything, you're going to do defined risk. That's why I wouldn't mention it to you.
So the expected move is $70. Stock's trading $380. I'm going to go $140 away. So I'm going to go 2 times the expected move. So 380 minus 140 takes me down to 240. Is there any premium left? 240. No. And is there any premium on the upside? I just want to see what the skew is. 380, 520. What the hell? Okay.
A lot of call skew.
So 2 times the expected move to the upside. Am I looking at something wrong here? 2 days. 520 is 2 times the expected move. 340?
Yeah, a lot of call skew. At 3x actually higher than that, probably closer to 350, 360.
And the put side is 10 cents, 20 cents.
That is correct. That's called call skew.
Okay, we got to do something in here.
Okay, well, if you want to do something in here, this is a defined risk trade. Wouldn't you kind of agree?
Okay, what is it?
I'm looking right now. So I would probably try to go as wide as I can. 475, 95, 535. Here. Yeah, you can. Are you ready?
Ready.
475, 495, 535. $20 wide by $40 wide. And it trades, if it trades, it might trade for a credit, maybe a 75-cent credit. If you get filled there, I mean, markets are wide, maybe a little bit wider. 75, 95, you got under $2,000 or around $2,000 in risk, depending on what credit you receive. 94% pop to 2-day play. Catch lightning in a bottle to the upside. You're outside or just at your 2 times the expected move, where you were looking at 520 as your break even. Your break even is closer to 515. But at least you got a chance to make money here if you get that move.
Okay.
Put on for small credit.
So I have been looking at all the various potential trades in here. And I have to tell you, there's a trade I like, but you have to do it really small. You go out, you buy the 450 calls because they're at the expected move, $70, right?
Okay.
And you sell the 515s, which are 2 times the expected move.
Okay.
The ratio's 3-to-1.
Yeah. I mean, yeah, it's a high cap. I'm looking at a $2,000 trade. You're looking at a $30,000 trade. I'm a man of the people. You know, you got heated sidewalks. You know, I mean, I'm gonna go out there with my snowblower and probably do my neighbor's too, because she's not quite fit enough to go do her own. You know what I mean?
Why can't you do mine? I'm not fit enough.
This is true.
Well, I can't get filled in here anyway. The markets are too wide. Hey,
yeah, markets are very wide.
Tyler, I'm looking at this. Price is $375. No naked positions. I hear you. I'm trying to do a call ratio.
I'm annoyed. I had over $1 on all the trades I did in Tesla yesterday, and I didn't take my profit. I got piggy, and now I only got 50, 70 cents on them. That's what I'm pissed about. I didn't stay mechanical.
Well, you're not very good. Let's go next slide.
I hate you.
I just got filled on something. I don't know what it was.
Prox. You sold the 75 puts.
That's not what
I'm sorry. You sold the 75 puts for $1.70.
Oh, okay. Small.
Had to have those.
I needed them. Oh my God. People are coming with the heavy stuff today. Chris from from Cincinnati, Ohio, is looking PA&W. We have not traded this neutral to bullish earnings play. These are all earnings plays.
Okay. Do you trade Palo Alto Networks? Do you trade stocks that have $2 wide markets that you can't get filled in?
Every single freaking day.
Okay. All right. Got it. From now on, I'll mention them. I try to curate your list as best I can.
Thank you so much, curator boy. All right. Palo Alto Networks. What do you want to do? What is
down
Chris
$2.33. The stock has been parabolic.
Expected move is $15. Stock's trading 193.
5,000 APP options have traded today, Sadnov. That's double the average, and it's only the first hour.
I love it.
Mm-hmm.
I'm going to trade. I don't know what to do in Palo Alto Networks. I'm going to do something small. I'm going to sell the 170, 220 with a couple days to go, just to do something for the show. That was too easy. 178 right at mid price.
You did get filled at 178.
Right at mid price. Somebody needed to buy it. APP, yeah, I tried, man. These markets are really, really wide.
Yep.
That's all I can tell you. So I don't even know if I'm in, like, even if I'm close. Let's go next slide. Lyft, bullish. Ryan, I agree. We're bullish. March, the earnings trade sucked. It's back to around 50, which it is. It rallied up to over. Where's Lyft right now? It's a little over 13, right?
LYFT is trading at 13.11, down $1.28.
We did an earnings trade in there, and we lost a little bit of money, Ryan, because we sold the 13 puts yesterday. We are just about back to even. I need one more downtick in volatility to get back to even in there because I'm short the 13 straddle now. I'm going to leave that. I'm going to leave what I have on. I'm bullish in Lyft too, but the overnight trade didn't work. Let's go next slide.
Gotcha.
If I had seen his email this morning when it was 12.5, that would have been a good buy, but I was too late. Leon from Singapore is bearish in gold. I agree. Gold seems overextended. I could not agree with you more. I am super bearish in gold. It's down $16. Leon, we are already short gold. So I'm short GLD. And let's take a look. GLD. We're small short GLD, and we are also small short GC. So I'm kind of all in already. I'm agreeing with you. I'm bearish in gold. No question about it.
You're agreeing, but you're not doing anything.
I'm gonna sell just because Leon's coming in from Singapore. I'm gonna sell another call spread. I'm already pretty short in there. I'm just gonna sell. I'm gonna add to my position and roll down some call spreads in gold in March in GLD because I'm already short in GC.
Okie dokie.
So here's I'm just gonna sell another call spread in there, Leon, or a bunch of call spreads. I'm just gonna roll down my position. There you go. All right, I'm a little bit shorter. I'm just short deltas. It's just a delta play for me. Let's go next slide. I sold a call spread.
You sold a 69.70 GLD.
Yeah, because I already have a bunch of different strikes there.
I understand.
So
it's basically just better than 50-50 shot, 60-40 shot. I got it.
Warren from upstate New York is looking at SPX in the 0 day. On last call today, sell a put ratio spread 10 to 15 points wide for a small credit.
What do you think of that?
Well, it's early in the day right now. Let's take a look because I won't be watching this later. SPX. Put ratio spread. 0 days. Small credit. Tony?
Mm-hmm.
Let's see. If you buy the 20 delta, which is the 59.85s, in order to do it for a small credit, you've got to sell the 59.70, right?
Yeah.
Okay.
I like the play elevated implied volatility. IV rank is still relatively low. Make sure you're in the 0 day.
I am filled, right? Yeah.
You are filled. 75-cent credit. Trade has about a 96% pop. Sadnov, you are doing the 59.85, 59.70, 1 by 2.
The only thing I didn't get filled in is APP. And to be fair with you guys, I don't think it's very tradable. I mean, the markets are like $2 wide. I can't even do decent price discovery in there. We'll look later.
Okie dokie. All right, my friend. You know what that means. It's time to take a quick look at what you've done.
So
look at you.
Roku, in Roku, we did an earnings trade where we sold out of the money put. In Tesla, we already came in with a position on, so we didn't need to do that. Palantir, we sold a strangle. In Crocs, we sold a put for earnings. In bonds, we bought the futures. In Beth, in APP, we did not get filled. We tried. It's a tough one. I couldn't really do good price discovery in there. I just don't have the time to look at it. In PA and W, we did an earnings strangle and lift. We already are long lift. In GC, we sold a call spread, and in SPX, we did the put ratio spread. In total, we have positions on every one of these, except for APP. But I'll say 7 out of 10, but it's really more like 8 or 9 out of 10.
Beautiful, my friend. Let's take a quick 90-second break and come back. I love your new math. We'll be back in 90 seconds. We'll have more after this with who? Jacob Perlman. Jacob Perlman. That's right, Sadenoff. The skinny on options math. We'll be back in 90 seconds. Easy for me to say.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
All right. So you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
means time for a little bit more Tasty Live with Gideon Options Math, my man Jacob. What's up, brother?
Good morning, Tony. Good morning. I'm well. What's up with you?
I'm doing just fine and dandy. I'm with my friend Tom. It's snowing outside. It's winter. It feels like winter, and I'm with you. This is beautiful.
Yeah, perfect. Listen, it feels like winter here too. We don't quite have the same winter, but we do have our winter going. It's gray and rainy and something like
that's called summer for us. That's called summer for us here in Chicago.
That's called spring.
Yeah.
So spring.
Yeah,
Sorry, you're right,
April.
Tom. Spring. To be fair,
our winter is like Chicago April.
Yeah, no kidding. No kidding. Well, what do you got for us today?
So today I wanted to talk about, one of our favorite topics of volatility. And in particular, I wanted to sort of highlight some. We often harp on how historical volatility is problematic because it's backwards looking and dependent upon your choice of time scale and these things. But there's sort of an even more fundamental problem, which is that historical volatility doesn't actually capture the idea of what being volatile means. Right? Volatility is supposed to be sort of unpredictability. And historical volatility doesn't get you there, at least in an efficient market hypothesis kind of way. What it gets you is to sort of how erratic something has been, but that's different than how much it's been moving, right? And so the historical volatility expected move is really almost a completely misleading statistic, and I want to sort of highlight how that comes about.
Okie dokie.
A couple of examples. Yeah, so let's get into it. So firstly, volatility, we're going to talk about it a lot. I should have some sort of, standing concept. And the key thing here is that long ago, it wasn't strictly defined in any particular way. It was just sort of an amorphous general idea about something was more volatile when it was moving around a lot and less volatile when it was being relatively stable. And that was the beginning and end of the discussion of volatility. And it wasn't until 1968 when Black-Scholes Merton model came out that there was all of a sudden a specific number that was volatility. And what that was because in the model, which, comes from a couple of assumptions that we've gone over before, your efficient market hypothesis and some central limit theorem applications, and then an assumption of time homogeneity, which is the flawed assumption in Black-Scholes, but it is what it is. It came out that you would model log returns as Brownian motions or underlying prices as geometric Brownian motions. That's the same thing. And Brownian motions have two parameters. They have a drift term, which is just sort of how much it changes on average over time. So the risk-free rate comes in there. And then it's got this infinitesimal variance term, which is how wiggly or hot or fast moving. Those are all the same thing when it comes to a Brownian motion. A Brownian motion is to make it into sort of more trader interpretable things, a little bit less abstract than infinitesimal variance and wiggly and hot. If they were constant over a long period of time, what you would get is that the volatility is the standard deviation of annual or annualized, right? You can multiply by the square root of time factor to turn other time scales into an annual time scale, and get a standard deviation of log returns. But we come along with the problem of volatility is great, except that we have no idea what it is. We know what it is, but we don't know what value it has. The number it is not observable. It's a fact about the future distributions that we don't have access to. And so we're left with trying to come up with, as traders, though, it plays very heavily into the price of options. So we're left trying to come up with ways to try to measure it. So let's look at historical volatility on the next slide as sort of our first try. Right. If you have a quantity and you can't, it's supposed to be a prediction about future distributions, but you don't have the ability to observe it directly. The most natural thing to do is to look at historical data and then try to figure out what value would best fit all the historical data. So that gets into historical volatility, where you take all of the standard deviations of historical log returns and you look at the historical log returns, you look at the standard deviation that those have had. And like I've said, this is backwards looking, which makes it, not well adjusted to changes in market condition, and it tends to lag behind real world situations and things like that. But there's even worse problem going on here, which the next slide has 3 examples that we'll try to highlight it. And the first one is just, right, so these are not real underlying price histories, but they're simulated. to illustrate a point. And so in the bottom right one, where it's up, down pretty regularly all the time, that one historical volatility is going to do a pretty good job. It's going to, if you pick a time span and you look at how much the returns have varied over time, you'll get that the amount that they varied over time is about the right amount. Right? It's about how much it goes up and how much it goes down. That's fine. The one above there, where it's a long up tear and then a long down tear, that gets you, if you look at the whole time span, it'll get you the same historical volatility, but it's now very dependent on where your time cutoffs are, right? If you're looking only back far enough to see the right half of the graph, it's going to look like it's very constant. And that really highlights the problem in the leftmost graph, which is the biggest thing, which is that underlying has been on a tear. It's been up every day or almost every day for the past 3 years, but it's been up by a pretty consistent amount, which means that the returns are all very close together, which means that their standard deviation is very small. So that would say that this underlying should have will have a very low historical volatility, almost zero historical volatility, which, given that it's been moving a great deal every day, is not a good justification, explanation of our, pre-1968 idea of volatility. It's supposed to be how active the underlying is. And this underlying is clearly active. It's making a big change over the course of the time span. And so having a measure which says that it's low volatility is just clearly wrong. So let's go forward one, and I'll sort of pitch a couple of alternative historical measures that could capture this better. And then we'll talk about why we don't want to use those either.
Okay.
So I think probably the thing that fits most people's more natural intuition about volatility would be to look at the mean absolute size of the returns, right? Rather than saying that it's how much the returns vary from their average, just look at how big they tend to be, right? Look at how big the returns tend to be, and that'll get you a measure of historical volatility. Unfortunately, that measure of historical volatility won't mesh with the Black-Scholes model in the right pricing way. So it won't be on the same scale as the volatilities we're used to using. It won't be interpretable in the same way. And it'll be, right, it will go up when like the intuitive sense of volatility goes up, and it will go down when the intuitive sense of volatility goes down, but it won't turn into prices in a helpful way like that. Or, right, sort of a chartist might say, okay, what you should really be doing is looking at sort of intraday candles and looking at the 68th percentile for how big those are, right? Look at what sort of the typical sizes for the intraday candles are. That would have, again, it would give you a better representation of how much this underlying is moving around, but it would be as sensitive, if not more so, to sort of what time scale you're looking at, right? What time span your candles cover would all of a sudden have a big effect. I could cook up examples which would have zeros and large numbers where they shouldn't be here as well. And again, this doesn't do you any good when it comes to pricing an option, which is sort of the real goal as option traders looking at volatility. So let's see sort of what's going wrong here and why this isn't going to help for pricing an option. And it's because we're overly normalizing everything. And by which I mean we're applying the normal distribution in situations where it does not apply. Let's go forward one. And you can sort of see that here when I mentioned the 68th percentile. That seems like kind of a random number until it's pulled out because we're assuming that everything is normally distributed, right? The Black-Scholes model assumed that return or showed that given time homogeneity, returns would be normally distributed. But that's not true, right? Since 1987, market prices very clearly reject this reality. If you think that's how things are, you're going to lose your money by betting against the market every day. Sure. The central limit theorem explains why the normal distribution comes up so often and gives us a reason that people both have intuitions about it and why we sort of expect it to find it in lots of circumstances. But standard deviation and the normal distribution have a number of particular interrelations that the standard deviation of other distributions doesn't have, right? So on the normal distribution, the standard deviation captures the central 68% of the distribution, and then two standard deviations captures the central 95%, et cetera. But those cutoffs, those percent quantile cutoffs, are particular to normal distribution, right? As the standard deviation, as the expected value of the square root of the expected value of the square of the difference to the mean right? The actual definition for standard deviation, it doesn't have to comprise those things. Those are facts about the normal distribution that it takes in those quantile amounts. And the other thing that I think that really comes into when we use the standard deviation as our expected move, the real reason that like fits well with people's intuition is this normal distribution fact where the concavity changes at the 1 standard deviation mark, which is sort of one of the most special facts about the normal distribution and is not present in other distributions at all, right? That the bulk, the center of it, where it's concave down and doesn't change and it is capturing things pretty quickly, that goes out to exactly 1 standard deviation. And then after that, it becomes concave up and the tails start coming into play and everything gets more narrow. But that doesn't come into effect. Once we admit that the market says it is not itself normally distributed, those facts aren't useful to us anymore, and we should really stop trying to play on them so heavily. So instead of all these historical measures, what do we actually use in life? Well, we use implied volatility. So let's go forward one. We'll run through this, and we'll see why that's not as helpful as one might hope. Or it's good, but it's not perfect, right? So if we had the market price for an option, we can invert the Black-Scholes formula, and you get the infinitesimal variance of log returns that would make that price correct if the infinitesimal variance of log returns was constant now through the expiration. But because the market's not normal, or perhaps we can see the market is not normal by seeing the fact that this gives different implied volatilities at each individual option, even on the same underlying. And there's only there's a number of explanations for this, but only one of them doesn't violate the efficient market hypothesis. And that's that the volatility is not a constant time homogeneous quantity, it's instantaneous and dynamic. Right? That the volatility expresses how instantaneously wiggly the underlying price is, and over time changes, right? And sort of the put skew, call skew, typical distribution shows that like if prices go down, we expect volatility is increasing. It becomes more unstable as prices go up, as long as they don't go up too fast. They'll become it'll be more stable. And this gives us our whole volatility surface and smile and all these things, but that's really difficult as a retail trader to make a decision based on, right? It's hard to look at sort of this shape picture and decide, is this a good opportunity? And because of that, we use sort of IVX or VIX or the money IV or right certain various ways to try to narrow down the whole surface into a single number for the sake of sanity and making decisions based on it. And which isn't a wrong thing to do, but it's important to keep in mind what we're throwing out when we do that, how much information we're ignoring when we decide that we're going to take, a VIX style IV, when like take all of the IVs all up and down the chart, the option chain, and narrow them down into sort of one averaged number. We're losing a lot of nuance and shape. But it is reality. It's what we have to do in order to like make a decision, right? Because at the end of the day, every option sale or purchase is a yes/no decision. So it doesn't need to be so fine-grained.
And also remember that we can't, as a retail customer, we really don't determine price. You can leave something, you can leave an order in all day if you want, and you might be filled, maybe not. I mean, it requires an incredible amount of patience, and it's very slow. And we have basically taught entire universe of our customer base that they essentially have to trust the markets, because let everybody else worry about the volatility, worry about the little, as you called it here, kind of those infinitesimal opportunities in volatility, and let us just focus on kind of the bigger strategy, smaller positions, bigger strategy, a lot of diversification, like you said. Break it down to like, one number like IVR and simplify everything for us. Otherwise, we're not trying to raise, quants. We're trying to raise retail investors.
Well, but I'm hoping that people can, right, you're going to want to lower it down to a single number so you can make a decision about buy or sell. But I'm hoping that people can also look at the option chain, right? Because the platform shows it to you. You can see the volatility smile staring you in the face when you look at the IVs going up and down the strikes. And you can get more understanding about what sorts of price moves are expected, right? The expected move narrows it down to a single number, but you could also break it down as you move further out, those ones are more likely to be broken, right? We're much more the normal distribution statistics are not correct, right? We're much more likely to have a 3x expected move reality than a normal distribution would tell you are. That just historically is the case. Things do those really outsized moves more often than the normal distribution says.
Right. And we just looked at one stock. We just looked at a stock where the puts were 30 cents and the calls were $3, equidistant away. Yeah, crazy.
And then it comes down to strategy, right?
Right.
Yeah.
Mm-hmm.
Right. But you can then tailor what choices you make, right? Do you want to do a call spread or a ratio or whatever have you based on the shape of the distribution, which is nice. It's nice that people have all of this information and can use all these decisions. And that's it. So historical volatility, very bad. Don't use it. Implied volatility, much better, but still limited and worth trying to look at the whole surface when you can. Those are my takeaways for today, but let's see what I wrote down. Volatility is the infinitesimal variation of log returns, which is a crucial statistic for option traders, but completely unobservable. If it were constant, it would be the standard deviation of annual log returns, and that's the Black-Scholes model lens that we can use to sort of try to interpret how these things are. Historical volatility is perhaps the more obvious way to try to gauge volatility, but it's very flawed, both behaving badly if the underlying is on either a tear up or a tear down, and being incredibly sensitive to your choices of timescales, right? What size, how long you're looking between price observations to look at returns, and how far back you're looking when you're looking at history. And the dynamic and non-normal nature of volatility and the market means that while implied volatility can be a useful and forward-looking statistic, we need to remain alert, right? Because it's instantaneous and dynamic, but our models and our single numbers are making assumptions that it's going to stay constant between now and expiration. It's very important to stay active as a trader so that you can see when volatility changes, right? When your premiums move differently than the price moves would say that they should. Because you may want to adjust your positions even though they seemed good at first, because the market conditions do change over time. And when you are using only a single number, you can't see that, right? If you're looking at the whole volatility smile, you have some better idea about how to prepare for that. But if you're focused on a just IVR, then you really need to stay very attentive and active, because if things change, you might want to change your positions.
Got that, Sosnoff?
That's well said. I actually feel pretty confident about this segment.
Yes, good.
Nice. What, you ever doubt Jacob?
No, he doubts himself. He doubts himself.
I don't doubt Jacob. Sometimes I just don't understand it.
Yeah.
Good enough. Sosnoff, even the S&P down 37. We're going to take a quick 90-second break and come back. We got more Tasty Live after this, Sosnoff. What comes up next? That's right, oh joy, your friend and mine, Mr. Scott Sheridan, Tasty Trade World Headquarters, coming at you next. Back in 90 seconds. Thank you, Jacob.
Thank you, Tony.
Thank you, sir.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tomas, we are back, my friend. I think he's still my friend. Tasty Trade World Headquarters. Look at us. We're all in whitish colors. I know yours is gray, but we're all in whitish colors. Simpatico. You're a friend of mine, Mr. Scott Sheridan. Tasty Trade World Headquarters.
Okay, two things. Beth, can you please confirm that that was not live? Okay.
We don't have John here.
Okay, just confirm that.
I'll take it.
Okay. And Tom, do you shovel with those guns out like that?
I don't even.
Do you do a show for the neighborhood for all the ladies who are working at home?
When I shovel in the snow, I usually take my shirt off and then shovel with my shirt off in the snow.
Like this. Okay, go ahead. So
he's got bigger problems, Scott. We've got a driveway issue.
Oh, no heat.
No, it's broken. I don't know. Is Carl?
No. Really?
Tony's guy.
The coil's underneath your driveway, and it's snow.
No.
Just Tesla.
No, the coils are turned off because Tony's guy ordered a part. He hasn't got it yet. Carlos has let me down. He texted me last night. He goes,
Carlos is back in Mexico.
Wherever. He texted me last night. He said next week, so he's not that far away.
Uh-oh.
Again, it's Tony's fault. So wait a minute. So you can't get your car out of the garage?
No, I'm fine. It hasn't even started snowing yet. I'm going as soon as the show's over. I'm going to run around, drive around. I'm going to put the hood down. Put the top down.
Put the hood down?
Put the top down.
Put the top down. I like it. You got a convertible?
Yeah, sure.
All right, good.
I'm going to open the windows.
14 inches of snow. Be careful.
First of all, I don't know who said 14 inches snow. On my phone, it says maybe 6.
Tony just said 14.
14 inches are telling me out here. That's what they're saying. They always exaggerate.
Maybe out there. It says 6 inches in the city.
6 inches in the city is like 14 inches in the suburbs.
Maybe. I don't know.
All right, so the lake effect. All right, well, good luck with lake effect snow. I hope you guys are okay. But Tom, doesn't the car wash, don't they come plow?
Yeah.
And they don't do the back?
No.
It's
all heated. It's heated. It's all done. I mean, it's supposed to be bada bing, bada boom. It's supposed to be done. But
Supposed to be the key there. And when Tony, because of course it's his fault, when Tony's guy doesn't show up with the park because he's in Mexico, smart man, then you're stuck.
How about this, Sosnoff? $500 right now. I'll go down there personally, do it with my snowblower.
Oh, done. No, done. You're going to bring your snowblower down for $500?
I get you out, Sosnoff. I bring you food too.
You know what? How about this? Because I'm such a nice person, I do have one offer out, and if they don't want it, I do have a snowblower. It's all yours. It's beautiful. It's a big snowblower. Beautiful. People look at me like, what are you doing with that thing?
Where?
You can have, well, in my house that I don't use anymore.
Oh, so you got a snowblower in your garage? I'll go over there and get it.
No, it's under the deck, but you can go get it if you want to go get it. There's one offer out right now.
Too much work.
First of all,
if she doesn't want it,
hold on.
No, I don't want it. I don't want it.
Go ahead. Let's hear this. You can say I don't really have a snowblower.
Be honest, Scott. When you put this away, did you drain all the gas out of it?
Absolutely not. Jews don't do that.
Okay, it ain't starting.
You know what? You know what I love about you people? So you say that about me. I'll say it about you. What I love about you people is you think you have to drain it. I've had this thing sold bought it with, let's see, in 2010.
I'm gonna tell you right
years
now.
old. 15 years old, never had a problem firing that baby up. Year to year, sometimes I don't even use it for 3 years. Gas still in there, fires up every time. Because you people have to.
You people got it wrong.
You want it over under? Well, I'm not there, but I'll put money on it that when I go pull that starter, that bad boy fires right up.
I'll take your word for it. When you put it on Let It Go or whatever site you're going to try to sell it on, I'll see if it starts. I will do that with you. I got $20 says it doesn't start.
We'll walk down the street with it. People will be looking at us in the middle of summer, be going, what are you guys doing walking down the street with a snowblower? Yeah, don't worry about it.
$20 says it doesn't start.
Really? Okay.
All right. You're in.
I've never once. It's funny because I have an ice machine, which I've been told breaks all the time. Like they don't work. You can't start and stop them. Just don't. I start and stop it every year, come back, boom, boom. See, it's a fallacy that you people buy into because then you get the people to come out and you pay them to fix this stuff.
We are the people you're paying. Of course we're going to spread the rumor. I mean, come on.
That's true. You do have to spread the rumor.
We are the people. How do you? I got to make a dime too.
$20. I like this.
$20. You're on.
I got to go home and fire this little bad boy up the promise. I got to find.
It's kind of like it's like a generational thing. They just pass it down, like from the early 1900s. It's just. What this stuff like you got to change your oil, you got to take the gas out, you got to drain the pipes.
I don't believe in any of this.
Nothing
for sure. He's on my side. Okay, I'm gonna have a video. We'll fire this little bad boy up. Seriously, I don't think I've used it in 5 years. Maybe I don't know when the last time we had a big snow. Could be more. Guarantee it fires up.
You want to make it 50?
I need odds. Now you're so confident. I need odds. I would do it.
No. You people do that to me all the time, and then I got to pay you money. I'll be right, and I still got to pay you money.
Right. See, I got to get odds. All right. Now I got to find out if I have any gas to put in because the gas probably evaporated.
Tom is not allowed to do this unassisted.
A snowblower? You know what? That's actually Beth has a point.
I'm going to tell you something. There is no bigger waste of life than a snowblower. They are. They're more work. They're more work.
Shoveling?
I could have the whole thing shoveled by the time you get the snowblower started.
Oh my God! I used to.
Okay, then why don't you? Why don't you?
Yeah,
I do.
Okay, I want to see pictures of your driveway. You shoveling it today. I want to see that.
Yeah.
No.
And then I want to see you making snow angels.
Tony, have you seen the incline on that driveway? He'll be on
my driveway in about 2
seconds. He's going to slip, and then we got to go get. You're going to get the phone call. He's going to push the button because that button, the thing he wears around his neck.
I've gotten the phone call already. I had to push him out of his driveway.
Yeah, the life alert. He's going to have the life alert going up. The police are going to.
I can't get up.
The police
Do you
are going
have
to be
a shovel?
I got 6 shovels.
He uses a broom. You don't use a shovel.
Like all the old ladies, he uses a broom.
Yeah, he uses a broom.
And I got spikes on the
and
bottom.
not a push broom.
I got
I'm just talking
spikes
about
on
one
the
of
bottom
those
of my
little, like,
shoes.
kitchen brooms.
I offered
Spikes.
to share my goy. I would send Brandon down to help you. I offered.
He's got a city goy. And the city goy's close. Right? And the city goy's close. He can come over. Just tell me you'll feed
Call
him.
Nikki. Nikki will help you.
Wait a minute. Hold on. Watch this. Watch this. Your goy's got a snow shovel, right, Beth?
Oh, a big one.
Yeah, right. See that?
Locked and
But he
loaded.
does. That Brandon, big one.
I'm done.
Tom, do they come with the bro? Tom, do they come with the
Beth is a size queen.
Omaha.
Tom,
Give us an
do they come
Omaha,
with,
Beth.
with the brush, or do they come and actually with the plow for your sidewalk?
No, about 4 guys jump out of a pickup truck. They do it in 30 seconds and they're gone.
It's a drive-by. It's a quick.
It's a drive-by. It's
like
a
everything in
literal
Chicago,
drive-by.
it's a drive-by.
I mean, you got to have the heated pavement, don't you? I mean, that's
The problem in the city, because I was going to do it, but when they were going to do it, and they said, "Look, you got to understand something in the city." I don't know about the suburbs where your dad lives, but for us in the city, if they need to come rip up the sidewalk, they don't care about your snow melt, and then you just ruined your whole system.
But let me tell you something. I got it. It's the greatest thing ever, Nick. Except I don't have it. It's unbelievable.
You're right. You don't have it on the sidewalk.
But
because
Tony's guy Carlos took it apart because he thought it was broken, and now he hasn't got the part yet. So now it's broken.
Ooh.
You've walked on your front sidewalk how many times since you've been there in 10 years? Twice?
Front sidewalk. He parks up front. That's how he goes in. And personally, when I come in, yes, he does.
Yeah, I do park in the front. I like parking in the front.
Yeah.
I like parking with the people.
You are such a liar. I've had to pull you out of your driveway. Don't listen.
He doesn't do it anymore. That's the old Tom. I'm telling you, he parks in front. I go over there. I see the car sitting out front. And personally, if he does invite people, which he doesn't really invite us much anymore, but it's nice to have it, the plow come in, make sure there's no snow so we don't slip. Now, if you could have your crew go over to my house, because that'd be nice if they did it.
I'm gonna tell you right now. I'm home. I'm gonna take care of I'm gonna shovel my neighbor's front.
Okay. Okay, there goes 100 on that one. So that one I will give you odds on. You're shoveling your neighbor's front. Okay. And it's a law in the city. If it's more than whatever, like a couple inches, here it comes. Say it, Tony. Who's enforcing the law?
I know you think it's a law because everybody says it's a law in the city, but I don't think there really is a law in the city.
That you have to shovel if it's over a couple inches?
Right. But I do, but I don't think there's a law.
All right, fair enough.
I'm looking.
I think it is.
I'm looking. All I know is I'm gonna go. If there is a law, I'm gonna go fall on Scott's sidewalk. You must shovel sidewalk as soon as possible, or after it falls no later than 10 p.m. Don't make too much noise. So you have to shovel. You can get fined up to $500.
As soon as possible. As soon as possible is the key there. I'll do it as soon as I get home.
Yeah. That's it.
Or unless Tom wants to go over and do it for me.
I'll do it. Nice. I'll go over to your place and do it.
Take your broom. Take your broom. I appreciate that. All right. I know you got Johnny trade, so let's get to some business, and then I'll exit stage left, and then you can bring in the real talent on stage right.
Beautiful.
Right. Top 15 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Tom, for you. Number 15, Apple at a 31. For everybody else, Tesla at a 41. SMCI at a 43. NVIDIA at a 45. PLTR at a 63. UPST at a 35. Lyft at a 35. TLT at a 23. Intel at a 63. Amazon at a 14. Microsoft at a 21. Baba at an 82. Google with an L at a 21. CVS at a 26. Dash at a 17. And number 15 for Tom, Apple at a 31. Rounding out the next 10. TQQQ at a 35. iBet at a 31. GLD at a 70. And Hood at a 65. What's
beautiful? Sadnoff, what do you have to say about Scott's list?
I mean, the list is amazing.
Best one all week.
Best one of the week.
Thank you, Scott.
Yeah.
Thank you, Scott.
See, when you wake up in the morning and you go, what am I going to look forward to today? Well, Scott's list. There you go.
Scott's list.
Scott's list. See, if you didn't have my list, think how sad you'd be. And by the way, glad you found the beret.
Oh, he didn't lose it. He just misplaced it. Man, that stuff must have been good in Vegas. You know it. I mean, he's been doing this. He's been doing this for how many years? He's been wearing a beret. What is it? 30? Seriously, 30? And he forgets his beret?
25, 26. But yes, I know. Right. And we're supposed to be like losing the blue denim jacket in a taxi cab or at the airport. That's understandable.
Understandable.
Not the beret.
30 years he's been putting that thing on. I got to tell you something. That thing must have been so good.
And the thing is, at this point in time, you should have learned you need a backup beret. Always have a backup.
No, I never have a backup. I don't like backups. Backups are for losers.
Speaking of losers,
he goes bareback.
I got to wear my jersey with my name on it. Speaking of losers, I'm going to wear the loser jersey with my name on it. I forgot to do that.
I got the loser jersey. I got one.
Your daughter is so stealing that because she will wear that.
I don't think she'll wear it to the game.
100% she will.
It's a nice jersey.
It's a really nice jersey. A little big on her though. Did you get the XL, or you've lost a lot of weight? Did they go a medium with you?
I don't know what they sent me. I didn't put it on. I didn't run around the house in it naked yet.
Oh, yes, you did. Oh, that's coming.
Omaha.
Okay, that for sure is coming. What do you think Motorola paid for that patch? I have no idea. What do you think they pay a year for that?
So that Sadlov could run around with it naked in his house and then throw it in his closet? Yeah. Zero.
What do you think they paid for the patch on the Cubs jersey?
Yeah, $20 million. I don't know.
No, I'd say they pay $5 million a year, $3 to $5 million a year.
That's not bad.
Yeah, that's what I say. That's my guess.
Yeah, it's a nice jersey. All right.
Yeah.
Oof. All right, it's a rough one today. At least we worked it out, Tony. We worked it out.
Mwah. I love you, Scott.
Nikki, leaving this to you. Good luck.
I love you too, Scott.
No, you don't.
I do. Okay. I love you. I love you guys.
Goodbye.
My three daddies right here. Come on.
Play some music for me.
Tom, I do have an update for you from Peter in the chat. I do monitor the chat. I know I'm sorry that you probably won't worry about this one, but they changed the law so that you can't get sued or you can't sue people for doing a bad job of clearing out the sidewalk of the snow. So don't worry too much about it.
You can just brush it off. Get fined. You can't
get fined. You can't get sued though, because I mean you don't care about the fine is. The fine, here, give me a fine every single day. You don't want to get sued because you know you got the big pockets, so you're okay. You're fine.
Right.
Couple trade ideas. You ready? You want? Yeah, I got 3 trade ideas for you. You're gonna poo them all? Man, maybe one you'll like. We'll see. I don't know. It'll be interesting. DraftKings, you got a position?
In DraftKings, I have no position. Hold on. Let me see. I have no winner earnings.
Tomorrow after the close. So they're coming up. I'm doing a delta neutral strangle here in the weekly. I mean, the no Saquon TD bet has to be good for DraftKings. I mean, that's got to be the number one bet prop over the weekend. So you got to have good numbers here. I'm selling some premium, selling the 4147 strangle in the weekly. Delta neutral. You get a move to either side. You can roll it out to March. $1.42.
What's the expected move in here? About $3, $4?
Yeah, it's right at the expected move. It's about a 20-ish delta on 25 deltas on either.
You're selling the 2 days?
The 2 days, $1.42, $600 in buying power.
I like the.
Please don't move it further out of the money.
Please. No. I just like selling the puts.
Please. Oh, sure. Yeah, you could do that too. I mean, the stock has had a nice run, so I figure I sell both sides here. But if you did have a move down to 41, I would consider, rolling and wheel it, cover calls, something like that. I would take it long.
The stock's had a good move. I just sold the puts. I'll consider tomorrow selling calls.
Yeah, maybe get a little bit of a pre-earnings pump, as Mikey Butler would say.
All right.
You know, like the day before you get a couple dollar up move.
All right. What else you got?
All right, beautiful. Next trade, Baba. I mean, the stock's gone parabolic. We've watched this story 100 times. I think you got to get a little short delta here. I know I saw the Apple news, all that good stuff. Earnings are on the 20th, I believe, which is Thursday of next week. So I did a little bit of short delta. I went and did a put diagonal spread. I bought the 115 out in the March monthly expiration. I sold the 107 in the 9-day, which goes into earnings next week. Slightly
I've been
short
long.
delta.
I've been long Baba the entire year, and all this year and all of last year. If you
And
think
you're
I'm
finally
getting
a
short,
break even.
if you
So
think
why
I'm
don't you
getting
just close
short,
it?
if you think I'm getting short on the first uptick, you're out of your mind. No chance.
That would be called trading, son. You can't
This
do
is
that.
actually a second uptick. You didn't get out in October. You watch it go all the way back down to 90. It's now back at 120. You're gonna watch it go all the way back to 90. And you can say, "I'm gonna buy more. I'm gonna buy more." Come on.
I'm a buyer on any dip. I'm not selling the rallies. What do you
All
got
right.
next?
Yes. This one you're gonna poo-poo totally. A Tesla put spread. Is this the craziest thing ever? The stock is down 30% in 2-3 weeks. Volatility is high. An out of the money put spread, 300, 290 at $2.14. This spread was trading at pennies and nickels and dimes a month ago.
I don't hate the play. In fact, Nick,
I know.
I bought stock pre-market today, as Tony can
Really?
attest to. Yes.
I like that.
So I bought stock before the market opened. And
I think, yeah.
I just bought naked stock, and then I'm also came in long Tesla. So I thought it was oversold. I have no interest in selling a put spread with the stock up $10 here, but I'm not short Tesla.
Oh, okay. I like it.
I'm short.
happy.
I'm short Strangles in there. That's all.
Yeah.
We sold
Volatility
them.
is still high.
We sold them yesterday.
I like it.
It's
Wow.
worked
We sold
so
a
far,
bunch of
so
Strangles
good.
yesterday, and they've actually worked really nice today. Yep, no issues.
All right.
Volatility's
Three
contracted
trades.
nicely in there. Mhm.
Yeah, volatility's contracted nicely. It's been a nice. We lost a little money yesterday. We made a bunch of money today
On the marks,
And-
yes.
on the marks. Yeah,
Yeah.
and so I mean the 2-day play in there has been good. Yep.
Very nice. Good job out of you, son. Better job out of Tom, as always. We're going to take a quick 90-second break and come back. We got Liz and Jenny next. Peace.
Live at the SIBO.
No.
You
don't read the emails. You
today you
ruined
got
everything,
Liz-
son. You
Liz and
ruined
CP.
everything.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deer King, that beautiful brunette to the left of me, who's been filling in all week, is Miss Jenny Andrews. Hi, Jenny. How are you?
I'm happy to have you back. I'm sorry you're sick, but you're looking good, Liz. And
I would like to say feeling good, but that would be lying.
Oh, everyone sends their well wishes. We are not live from the SIBO floor today because Liz is filming. We're filming remotely because poor Liz has been taken down with RSV. And she's not 65. She's not even 50 yet.
They won't give me the vaccine. I want the vaccine. The RSV. Yeah, you have to get it when you're 55. But everything settles into my lungs. So I've got a fever and nobody wants to get this. So I can do it here, but I don't want to infect our SIBO team. We love our SIBO team and our Tasty team, and we want to keep them healthy.
Right. So I appreciate you coming on today, but tomorrow you'll be back at the doctor and TP will be back on. And I have been getting emails. Lots of viewers have questions for TP. Yesterday I said, if you have any questions you want me to ask TP tomorrow, you can email me at Jenny, Jenny, at tastylive.com. I did get some emails already with questions for TP. He's been a wealth of knowledge. So
he is a wealth of knowledge. I love TP and I love having him on when he's on. I mean, talk about experience in everything, but especially bonds.
Oh, he taught me a new bond trade yesterday that we've never done.
I was listening. Even I'm laying on my deathbed listening.
So that was cool, and I think the viewers appreciated it for sure. We'll have to go over it or look at it again, just so you have to do something so many times in order to remember it.
Okay, when I was listening, it was something like you're selling the ZN straddle and buying the ZB straddle. Strangles.
Oh, you know what? Let's pop into the platform. We'll see what the market's doing.
My question was, how did you get to the number where you're like, if the number's high? Because I was listening and you were like, what is the number, TP? If it's higher or lower, you do it.
I know. So that's why I want to do this again, because honestly, let's see if I could even remember how to do it. Okay, I'm going to take out my calculator, and I think it's good. When we've learned plenty of new trades, it kind of reminded me of when Frank Caberna would come on and he would teach us some new futures trade every Thursday. I really miss those days. Don't you?
Yeah, I love Frank Caberna.
And we would learn trades that we wouldn't have thought of on our own. That's for sure.
No.
Okay. So you go to ZB, and he went to this 37-day, and you take this 12.3. So 12.3, and
we're getting 12.3 in ZB.
So I'm looking at the 37-day option, the options we would trade, the 37-day.
Oh, you're looking at the volatility. I thought you were talking about price. Okay, got it.
Yeah,
okay.
the volatility, 12.3. Okay, then you go to ZN, same cycle, 37-day, and it's 6.8. So you take 12.3 and divide it by 6.8. Okay, the number is 1.8 right now.
Okay.
So that's on the lower end, so anything, 1.7, 1.8 on the lower end, then you trade ZN instead of ZB. If it's on the higher end, closer to 2, then you trade ZB instead of ZN. And I hope I'm saying this right. I hope I remember this correctly. And our viewers will let me know on Twitter, post on Twitter, include the hashtag LAZJNY if I'm wrong. But I think that was what he said.
All right. Well, I believe you because you traded ZN yesterday.
Yeah, right. And and then if you get a real big discrepancy, right, a really big discrepancy, that's when he will do a strangle swap where he will, like if it were really low, like, and I'm making this up, I say like 1.3 or something, where he would sell, let's go, here's 28 delta, 25 delta, and sell the strangle in ZN, and you're getting, $671, and then go to ZB and buy the strangle in ZB, and I'll keep it similar,
So if I'm going to try to simplify this, and tell me if I'm wrong here, Jenny, please tell me if I'm wrong, because keep in mind, I'm on drugs. Hi, my name is Liz, and I'm currently on drugs. But so is the point here that you're trying to see which volatility is higher, and then you're going to try to play the arb between the two?
Right.
So can't you just without dividing it, you know that ZN should be double ZB. It should be 50% of it no matter what. Like it should be 1. And if it's off 1, then you can do something with the manipulation.
Now because it's 1.8 now. So it's not the exactly half. It's not.
No, but that's when you can decide what to do. But it should be exactly half, or when it is exactly half. When it's really low, you do something with it, or when it's really high, you do something with it, right?
So you have him on, and you could talk to him about this because I don't think it's exactly half. Because right now it's like I said, 1.8, and he said for 1.9 or 2, then trade ZB. If it were lower, 1.7, 1.6, then trade ZN. And again, I think I'm getting this right. This was something new I learned yesterday. I've got to do something a few times in order for it to really sink in. But if you're looking at the strangle swap, he would only do that if there's like around a $500 difference. Like if you're selling one strangle and buying the other, and the credit you're collecting versus the debit you're paying is about a $500 difference. We looked at it yesterday, and it was maybe only $150 difference.
Okay, pretty cool. I too have to do things multiple times in order for it to sink in. So
yeah, so speaking of our Twitter peeps, we are taking live tweets. Let's see if anybody remembered exactly the TP's rules. But he's going to be on tomorrow, so I can go over it again just to double check, because our viewers see it too, and seeing it once sometimes isn't enough.
Oh, I love going over things multiple times.
Right. What is there's like an actual rule of thumb, like you have to do something X amount of times before you really.
10 times.
Is it 10?
I believe. Well, me, it's 10.
For me, it's about 10. But if I do, so talking about it with you today was good. And then having TP on tomorrow and going over it again, I think I'll have it. I think.
Yeah, you got him on tomorrow. You got this. And then you'll teach it to me 10 times, and we'll bore our viewers to tears. It's going to be amazing.
No, because I think the viewers will want to see it again too, because everyone wants to learn a new trade. If we're learning this new strategy that TP, and it's not a new strategy, it's one TP has been doing. But learning TP is a wealth of knowledge, and I'll go over it again tomorrow. And I'm sure the viewers won't mind going over it again tomorrow.
He is great. Look at our Polish warrior coming in. Thank you very much, Polish warrior. I am feeling a little bit better. The CPI drop, that drop was bonkers. Was able to put on a Polish warrior. What is this?
Okay, so he's just going rogue and buying ES calls. He's buying ES calls, and so. Mikey, I looked so every day Mikey's been making money buying ES calls. And so I was looking this morning. So if you were paying $7.80 for an ES call at 8:07,
you can buy it early. You can buy it early.
So this is before.
Yes, you can buy ES calls then.
What time did the drop happen?
7:30.
Okay. So it was after the drop. This is after the drop.
Yeah,
but if you're paying 780 at 807, was pretty far out of the money. That was my point. It's not at the money. It was pretty far out of the money to pay 780 at 807.
Yeah, probably. And that was probably the lowest point because I mean, CPI came out and I saw the SPOO's down 60, and then it continued to stay down there.
So look at this, doubled his money. Happy snow day. Hope you are feeling better, Liz. With CPI drops, able to put on Polish Warrior. Yeah,
I love it.
So TP wants shirts that say like Polish Warrior with Mike's picture and his trade. This is the new trade, him scalping these ES options. And to your point, Liz, you don't have to wait till the open.
No, you don't have to wait till the open. Not with those. I mean, not with futures options. I bought I sold puts and bonds at 7:30 as well. 7:37. Wish I would have waited till 8:07, but I did it at 7:37.
I kind of waited till the open too. I'm just used to waiting till the open. I tell myself,
didn't wait till the open. I did it at 7:37, and I wish I would have waited. Yeah.
I waited till the open for everything, but next time I'm going to take a page out of Mikey's book.
Yeah, you can trade.
But I did look at these, Mikey. So the 650 call in ES in the 0 day was in the money now. But when we had that, because it was only down 35, but when they were down 60, it was pretty far out of the money.
Yeah, that was pretty far out of the money. But yeah, that's awesome. That's pretty cool.
And where was the open today?
I like it. You know what, Polish Warrior?
Like it.
You've got diamond hands because you held it that long.
Open today, 60, 90, low 60-20. 60-20 was the low.
Yeah.
Okay. Before we get to Jacob's study, because we have an amazing study by Jacob, I'm going to tell you one more thing because I don't want to forget. Another thing TP does for anyone that might have a concentrated position, and Beth, you're listening to, like anyone out there that might have a concentrated position in any British company.
I'm listening.
TP does this all the time. He's always selling call spreads in the British pound to offset that.
Okay.
Because if the British pound goes down, it's not good for his concentrated position in a British company. So he is always selling the British pound to try to make some money on this end if it's going against him on the other way.
Okay, I want you to ask him one question for me tomorrow, because the last time he was on with me, he said hedge is a 4-letter word. This is a hedge.
I know. But he does. I don't know. He's been doing it. He's been selling.
I know.
And honestly, it's been working.
Yeah. That's awesome. I mean, that makes sense. And you can win on both.
You should have him on, because I told him how you were going to Florida and you were really going to give it to your property manager. And so he has many rental properties. I don't know if you knew this. I didn't know this.
He's his own manager. This would be me like screaming at himself. I do not manage mine myself.
But he's got a whole system of you got to make X amount and get this return and blah, blah, blah.
My property, let me just tell you, this is not just me being a Karen. Our property manager has not paid us in 9 months, totally forgot to put us in the new system. They aren't sending us emails anymore. Our property is, oh my God, I'm getting balloons.
And let's celebrate.
Our property is rented all the time, but we don't know when people are in it or not in it. It's like there's zero transparency. So we are out of there. And they shouldn't have gotten balloons, but I'm going to give them to them again.
So even though you were sick, did you meet with them, or did just your husband go?
No, we left before then. I went to Florida, laid on the hotel floor for a night, and then we flew home the next morning because I was like, I can't be here. So clearly we have to go back down again or have a virtual meeting. But I think it's all taken care of. We'll see.
So we are, and I saw this on Twitter. Normally we're at the SIBO, and normally we're trading SPX.
There. We should have worn our trading coats today just for fun.
Oh, yeah. And normally we're trading SPX and loving it. With SPOOs down 44 and at 10:15, it's 10:15. Should we do the SPX Jajun trade before we start Jacob's trade?
Yes, and you got to try Jajun with TP. I was telling you this yesterday. He's hysterical with it. Like when the Jajun trade hit, you thought TP would have won the lottery the last time.
Oh my gosh. All right, I'll do it with him tomorrow. I'm just going to just put this on really quickly, buy a $5 by debit spread for $2.80, wrap it around the money. We'll see what happens. Boost around 43. So we know, all right, filled at 280. Now I'm going to put in a quick, where is it? SPX. Put in a quick 3. What do you want? Should I just go 320?
Oh, $40. Yeah.
Yeah. Our bar is lowered. We've lowered our bar lately on this Jejun trade, trying to get 320 out of this. And that's in. So on that note, shout out to the SIBO and our peeps over there. And let's get into Jacob's SPX study.
I like it.
All right.
Okay, so Jacob every week produces an amazing piece for us. We're usually smack dab in the middle of the SPX pit. So this is the SPX series that he's put together, right?
Right. This has been, I don't know how he keeps coming up with more and more and more studies. And shout out to Dr. Data and the backtesting program, because they added VIX to it, Liz. While you were under the weather, Dr. Data added VIX to the backtesting program. So now not only can you backtest trades, you can backtest trades and only put them on when VIX is at a certain level.
Nice.
So now Jacob's got a whole new world open up to him.
This is amazing.
I know. It really is. I mean, that's a game changer for the backtesting.
It really is. Because that's what we always said. Well, we'll be like, the results would be different if you only put it on if VIX was X. Well, now you can put your money where your mouth is.
I know. And so us thinking about, gosh, how does Jacob keep coming up with these studies? Well, now he's going to be locked and loaded for the next 3 months.
No, but you know what, though? The zero DTEs are still in their infancy, I believe. Meaning when I say zero DTEs, I mean the SPX. They're still pretty new. I mean, what are they? Only 2 years old? Just under 2 years old?
Not even.
Yeah. I mean, they're toddlers. There's still so much more to kind of explore with these. So it's exciting.
Let's have a birthday party for the SPX zero DTEs.
Okay.
On their 2-year-old birthday. Hopefully it's a Wednesday.
Don't make me laugh.
All right, defending zero DTEs.
I mean, we could up the date and come in party hats and balloons and spray streamers all over those SPX boys.
Yeah, let's go to the SIBO that day, whatever it is.
Yeah.
Okay, defending zero DTEs, sponsored by the SIBO.
Okay, I do have to defend my honor real quick, because the chat. So this is from Frank the Great. He said, "I hate being on an airplane listening to all the travelers coughing." I can honestly say I did not cough once on the airplane, not once, because
she took her cough medicine. Took her cough medicine. You have those coughing pills, don't you?
Because it drives me, Frank. It drives me insane. And I was sitting next to a sniffer McSnifferson, and I never coughed once. And I was like, oh my God, I'm going to kill that guy. I'm going to kill that guy. I'm going to kill that guy.
And Frank, this is 100% true, because so we take the train together when we go to the city. A couple weeks ago, maybe it was last week. No, it was 2 weeks ago. We were on the train. This man next to us was coughing. And so Liz said, let's pick up all of our stuff and move our seat. I think
I got from him and you said no. And I was like,
I felt awkward. I felt very awkward picking up all of our stuff and moving away from him. So then Liz is like, we're out of here. We're moving. Pack up your stuff. Pack up your bag.
I was out of there no matter what, because I can't listen to it.
So then we packed up our bag and we moved our seats away from this man. And I think he got so mad that we did that. He picked up his stuff and he came and he sat right back next to us.
He sat directly behind us. And I was like, oh my God. Jenny thought we were going to get murdered.
It was actually pretty funny.
It was pretty funny.
And then the conductor came over to all of us and was like, what's going on over here? We've got quite a few stories from the train. Let's get on with the defending zero DTEs. All right, here we go. Defending zero DTEs. Using cheap, far out of the money long options allows even smaller accounts the opportunity to try selling zero DTE premium. Listen, you're under the weather. Do you want me to read everything?
No, I'm actually okay. I'll let you know. If you see balloons, that means I need a break. Okay, but these long wings are more about buying power control than risk mitigation. Okay?
Stop losses, standing orders to exit a trade at market price if it turns too far against you, are a common, if unreliable, tool in management mechanics.
So stop losses are not something that are usually in my vocabulary. I'm just going to give you a little FYI. This is a little out of my, I usually don't put them in. I don't know how to put one in.
No, I prefer to go with the close at 21 days till expiration than have a stop loss. So if you're looking at the 0 DTEs, the close at 21 days till expiration is like close around 11 or 12 p.m.
Yeah,
right?
That's right. Because you just break it up into 21 days as if it was a 45-day cycle. Mm-hmm. So managing losers is sure to decrease our percentage of winning trades. But how does it affect net profitability, and what stop loss levels have performed best for the 0 DTE traders? Now, we do have a rising star who would put a stop loss in. Do you remember? For 3 times.
Oh, yeah.
We did. Yeah. They would trade SPX in the morning and they would put a stop loss in for 3 times loss.
So let's say they collected $2. If it hit $6, they would close it.
They would close it, correct. And it was a wide iron condor, but that was one of our rising stars from the past. I remember that.
Yeah, I do remember that. Reading this today is just giving me flashbacks of emceeing that fashion show. 90 slides of just reading.
Would you like to talk about my outfit?
Liz is wearing a lovely white sweater turtleneck by a designer.
It is a Lululemon sweatsuit.
All right, what do we have going on? The study using nearly two years. See what I mean? They haven't had their 2-year birthday yet.
Let's pick the date on a Wednesday. We're bringing balloons. We're bringing candles, and I want a confetti cannon. Maybe a t-shirt cannon for those guys. We'll say happy birthday SPX. If a t-shirt cannon.
Okay, so back in the day on the floor, there would be paper all over the floor. And then they came in with the paper blower and cleaned up the paper. There's not paper all over the floor anymore. So in the old days, we probably could have done a confetti cannon. I don't know about now.
I'm telling you, okay, this is more information than anybody on this chat needs to know. But my water broke on the trading floor in post 4 station 9. Post 4 station 9. My water broke, and that's how I found that they never washed the SIBO floor. The only thing that they did was use a leaf blower to clean the floors. And I remember saying, you're going to need something stronger than a leaf blower, but I gotta go.
Were you in the IBM pit?
I was in, post 1 station 4.
I'm doing the math in my head of where
right by the escalator. So you know where Timber Hill's booth used to be? Then you walk straight out and down in that first pit.
Okay. And what pit was it?
It had everything in it. There was 375 products.
You've
been gone for a long time. This was with my daughter. Yeah, I had 395 products I was trading.
Oh my gosh, the super pit. But I do think that I don't see, we're going to look when we're there next week at the SIBO, we're going to look at the floor and see if there's any paper on the floor. You used to have these tickets, right? You'd have your call tickets, your put tickets, your buy, sell tickets, your buy tickets, whatever. You had all your tickets and that was all over the floor. But if, I don't think there's paper on the floor anymore. I don't think they come with the leaf blower anymore.
Well, there's going to be confetti. Shh.
We blew off 6 confetti cannons at Dance State.
Okay, we'll bring those with.
I've got a source. I can get us some. Good. And they were fun. It was actually fun and actually really added to the level of excitement.
It's going to be amazing. So we're going to bring birthday hats. They're not even going to know it's the birthday, but we're going to blow them up. Okay, let's keep going.
Oh my gosh. All right, let's keep moving. I read that already. On to considered selling. You're up, Liz.
So are we on number 2? Consider selling either 50 Delta Strangles or 30 Delta Strangles, each for market open. This is standard stuff, right? Explore the efficient stop loss orders ranging from 25 to 200% of initial credit. So that's really what we're looking for.
Okay, yeah, good. So we're going back to looking at that. For each stop loss level, we considered with or without, maybe with or without, managing winners at 25% of the initial credit.
Okay, perfect. So let's just break this down. They're doing the Delta Strangles are the 50 or the 30. That's great. And then they're doing different ranges of stop losses. And then they're also putting in managing 25%. So great. You've got a lot of levels here.
Okay. All right. All trades were assumed to exercise at mid-price and the cost of buying power controlling long strikes was neglected. And honestly, since we've done more studies on the wings, I think Jacob's upped this. Now it says subtract $20 to $35 per day, depending on how much buying power you're willing to commit for those wings. Because I think it used to say maybe more like 15 or so, but I think he's up there.
10 to 15. Yeah, it used to.
Yeah, so now he's upped it because now that we've done more studies looking at wings, that's a little more realistic.
I agree.
Yeah. Okay. All right. So straddles. This is starting with straddles. Selling the 50 delta call, 50 delta put, selling the at the money straddle on the open. 25% stop loss. You're looking at a negative. They're all negative P&Ls.
That's what I was going to say, is kind of taking a look at this. And this kind of, this is edifying a little bit in what we do, because we do it at, we usually do 45 DTE, right? But so this is very similar in there. But if I put a stop loss in, a lot of times you're going to get stopped at a certain price when things come back. So all of these are losses.
They're all losses. And they're straddles. You're starting with the straddles, which is aggressive. We're usually not starting with straddles.
Okay, so let's keep going forward. I want to see if it changes at all. And then we'll go to the takeaways, because I didn't read this yet today. Okay,
so now here's putting in a profit target. Nice.
Okay, so at some point you hit your profit target before you hit your stop loss, which is great. Now all of a sudden these all become positive.
That's so crazy. So here, I went back to the first one. So here you're looking at not trying to limit your profit. You're trying to keep as much as you can, but you're only putting in the stop loss. And every scenario is negative returns, negative average P&L. But in the scenario where you're willing to take less of the credit you've taken in, 25%, 50%, or 25%, all 25% profit target.
All 25%. But that seems to be where we land with these zero DTEs. Our bar is lower. You have to have a lower profit target.
And we say this all the time. If you're starting with the straddle, you have to have a lower profit target. Sometimes we'll go with even 20% when you're selling the straddle. But when you're looking for just 25% profit target of your total credit collected, now your average P&L is all positive across the board.
Look at that. Looky here. We just have a revelation. 25% profit target on the zero DTEs.
And 25% stop loss. That kind of surprises me, honestly. I thought you might have better results with a bigger stop loss.
That does surprise me. Which is nothing. Like, if you think about from that perspective, if that's your number one winner on the board, a 25% stop loss is nothing. So if you sell it for $2, the 25% stop loss would be buying it back for $2.50.
If you sell it for $2,
right? Buying it back for $2.50 would be a 25% stop loss, because you lost $50. That would be 25% of $200.
Yeah, like 100% would be buying it back for $4.
Well, that's what I'm saying. So 25%, if you sold it for $2, you'd be buying it back for $2.50. That's my winner.
That seems crazy.
Close this study up and let's go put something on.
That's not bad, because you have very little risk on.
Yeah. You're going to have to teach me after the show how to put a stop loss on, Jenny.
I was just going to say that. I've never put on a stop loss. I don't even know how to do it.
Okay, keep going forward.
Okay, now we're looking at 30 delta strangles. 30 delta strangles without
your profit target.
All losers.
Yep.
Yeah, all losers.
In the words of Tom Sosnoff, all freaking losers. Doesn't he say that in a commercial? You're all freaking losers.
I don't know, but I'm sure he said that to us before.
You're all freaking losers on this page. Okay, go to the next one.
All right, now taking those 30 delta strangles and putting in your 25% profit target, just taking 25% of your total credit collected. And here, now they're all positive.
They're all positive, but this is what more, because you and I typically don't trade straddles in the SPX. It's very
But you know what? Looking at these results, I'm going with the straddle.
I'm going with the straddle too. I'm going to use $87,000 each day to make $86.
Liz, you have to subtract. Now, we're looking at $20 to $35 per day, depending on how much buying power you're willing to commit for more realistic results. But we've seen that the wider your wings, the better. Like, spend as little as possible on those wings, especially if you're putting in a stop loss.
Go back to the straddle win then. Just go back to the straddle win real quick. One more back. Yeah, there you go. So subtract $35 out of these.
Yeah, right. If you're buying those wings and spending that much, you've got to go for something bigger. Mm-hmm. You've got to go for the $86 a day.
Yeah.
You could do this one, but you're not going to do the 100% stop loss for 27.
No way, man.
I guess you could do any of them except that one.
But so this is pretty interesting. Okay, so let's see his takeaways.
So, and in this scenario, of the strangles if you are giving up that much in wings. But I don't know that those wings have decayed completely. Like if you're buying your wings, I don't know if by the time you close this out for 25%, if your wings have decayed completely, like if you've lost it all.
But this is pretty interesting because this is just very true. Manage your winners, because anything you put, the stop loss is not management, right? So take it off when it gets to a 25% profit target. That's my massive takeaway.
Yeah, and honestly, if we're watching it, we would just be watching it and take it off. Like you've said and I've said, we've never put in a stop loss. I don't even know if I know how to do it.
Yeah, we couldn't figure it out the one time.
That's right. Yeah, I can't remember what happened when we tried to put one in, but I think you bought it right where it was trading.
Yeah, I think we did. I bought it right back where it was trading, and I thought it was a stop loss. I was like, I'm out.
All right, takeaways. Employing stop loss orders to defend 0 DTE short premium positions without also managing winners was a recipe for failure. That's true. True that.
Yeah, it was. When coupled with rapidly taking winners, things got more interesting. I like it, Jacob.
As with profit targets, 0 DTE short option positions seem to benefit from tighter stop loss orders than we might employ for longer dated trades, with closer to at the money trades especially performing well when closed rapidly, win or lose. Yeah, and it would be closed rapidly. I can't imagine time in trade is longer than 2 hours.
For straddles. And remember it said, another study we had says, if you're in it past noon, get the hell out too.
Right.
Yes. Okay.
Add that in. If you're in it past noon, get the hell out.
Get the hell out. Okay. While exiting losers brought down the percentage of winning trades specifically, it also was effective at reducing downside exposure and left enough profits to more than cover the purchase of wings. Great. Yeah, I like that.
Yeah, we saw that. We saw there were some P&Ls which gave you plenty of returns to cover the cost of wings. Bear in mind when using stop loss orders that once triggered, they will fill at market price. Okay, so that's what I didn't know. So if you set your stop loss to buy it back at $2.50, let's say, and again, they're way more than $2.50 because you're selling the straddle, but let's just say you sell something for $2, you put in the stop loss to buy it back at $2.50. When your stop loss is triggered, it fills at market price. And I've always wondered that, because can you have a stop loss and then you never get filled because it just blows right past it. But then once it's triggered, wherever the market is, it gets filled. So you could get it back. You could get it back filled, which is why we don't like it.
Triggered, it's a market order.
That's why we don't like it. That's why I'd rather just watch it and put it in on my own.
And that's why we don't do it.
That's why we don't. That's why we don't like the stop loss, because I don't like market orders.
No, we don't like market orders. We do not like them, Sam. We do not like them.
Okay, awesome. So that was a great study, another great study from Jacob. And I know they're not going to be the same right now, not at all, but I'm going to just look. We've got this trade in, but right now the straddle is $23. So you could imagine how much more it was on the open. A lot more.
Yeah, so just do me a favor. It would be a lot more on the open and the wings would be a lot farther, but just go look for wings right now.
Oh, why don't I look at tomorrow's? They'll do the one day to give us like a little bit better of a.
I think your wings are going to be so wide if you're getting $30, 15 cents and 15 cents on wings.
This is what I've learned from these studies. You make this as wide as you can, as far as like, could you afford it? Because if you're putting in a stop loss or stopping yourself out anyway, you make it as wide as you can that you can afford. So let's say I can afford to use $20,000 a day on this trade.
I do just think SPX is so big that the wings are so much more expensive with 1 day to go than they are at 0 DT. That's all I'm saying.
Yeah. So 625.
This is not a good example because they're so expensive. Like it won't.
But it's
be
not
like
going to be
tomorrow.
a good example here too, because it's way different now. They're way cheaper now than they were at 8:30.
Yeah, but it's still a little bit better than tomorrow's. There's still so much juice in those. Like, look, you can go down and buy 80-cent wings on the page.
I'm just doing $50. I'm doing
$50 and $50.
$50, which so let's say someone wanted to put, can we make it $100, $100? What are we?
Yeah.
60, 25, 61. Oh yeah. But again, at 8:30, these are more. But
yeah, they will be more, but I think it's a little bit more. We're only 2 hours away from this. There's so much time built into that one with 1 day left to go.
I might try to start this, but we can only do it when we're home on the open. So like if we're in Chicago studio, we can't do it because we're driving.
Or on the train.
Yeah. So, but I would like to start doing this where we put it in let's say you say, hey, you know what? I'm going to set $10,000 aside for this trade every morning, and you make it that wide, or you set your price of what you're willing to, what kind of buying power you're willing to keep aside for this trade.
Yeah, it's not bad.
Because I think that's probably, you're putting $5,000 up when you put on that put spread, and how much are you paying for the wing of your put spread?
What do you mean? Oh,
in
when
the
I
morning. Yes, in the morning when you sell that put spread.
Jenny, I couldn't even answer that question if my life depended on it, because I don't even know. I just make it wide and I get $2 on it.
And you put up $5,000, and you're probably paying a decent chunk for that wing.
Probably, yeah.
Yeah, so that's why I think like these have to be pretty wide in order to not pay that much for the wings.
Yeah.
And if you're paying more for the wings, you got to lower your profit target. If you're paying too much, more than $35 or $40 for the wings, move your profit target from 25% to 20%.
It's true. I do love these studies, and it was really good. We'll keep an eye on it.
SPOOs are right here. We put this on the Jajun trade on when SPOOs were down 43. Now they're down 45.
Dun, dun, dun. Come on, Jajun. We need a winner. Big money, no whammies, Jajun.
Okay, we have a few minutes before we get to what's your assumption. I want to look at today's earnings. Oh my gosh.
The Polish warrior. Yes.
Honestly, Mikey, that could be TP's horse.
No,
still work in progress.
TP's got a pygmy horse.
That looks like a miniature horse.
I don't know.
That looks like a little horse.
Well, then there's a little man on it, because Mikey's bigger than that.
Still a work in progress, but would you prefer a coffee mug or t-shirt?
So I'm a fan of mugs, but I love my mugs because I have so many mugs with pictures on them.
I do love my mugs, and I got my Mikey mug right here.
Oh, we can't see it. Oh, there he is.
Yeah. Love it. Here's what I think, Mikey. If you're going to put yourself on a horse, have TP send you a picture of his horse.
I think Mikey can stand on the horse. Like it's a pygmy horse.
But that would be even funnier if Mikey's on. Oh, he put himself standing on TP's horse. Like it might be funny.
I think the horse, like a dog. Like, Mikey could stand and the horse could be in between him. So like 6 legs are on the ground. The horse's legs and Mikey's legs. That's how little I think TP's horse is.
I don't think it's that little.
Mm-hmm. It's a pygmy horse.
Well, we're going to work on this image, Mikey. We're going to work on it. It's not done yet.
My favorite thing is usually we have TP on and we, chat back and forth about him. We never have him on that you can go back and ask him all these questions that we have.
I know. Okay, so I do want to, look at this, getting in and out again, twice in one day.
Wow.
I got back in and out a second time. Mikey's been killing it. Okay, we've got to get to earnings. Oh, Steve Jones. Liz, I ran into that too. Wanted a certain vaccine. I was outside the CDC's recommended age range. I found where to buy it and receive it, paid out of pocket. The recommended age is only because that is the limit for their test, not because it's safe. So tell your doctor you pay out of pocket for the RSV vaccine next fall.
I mean, I will, just because I keep asking for it too. I mean, things settle in my lungs. I have no idea why. It's so weird.
But thank you, Steve Jones, because
I appreciate that.
He's a very concerned and caring viewer. He's been with us for as long as we've been around.
He has. Yeah.
And Jack Tucker, 3 tranches of 0DT SPX collected 16,950 today.
Jack Tucker.
Yeah. 6,060.55. Where are we now? We're right at, where are we now? Then he's got 59.85, 60.45.
Where's and he upped his tranche level. He's 10 lot, 10 lot, 10 lot. He used to be 8 lot, 8 lot, 8 lot.
And we're right in the middle of them. We're right in the middle of them.
Yeah.
Jack Tucker.
Is Jajun going to hit? They're both in the money now.
Jack, according to Liz, if you're not out by noon, get the hell out.
Get the hell out.
All right, we have to get to the earnings. I know they're here somewhere. Okay, here they are. Earnings from Bob on Fire. Thank you, Bob. Listen to this, Liz. Reddit.
Ooh.
APP is, I don't know what, is that Jajun?
Jajun!
It was it. Jajun. And barely from SPOOs down 43 to SPOOs down 39. 4-point move. Nothing.
That's right. Jajun for the win.
Jajun. In Jajun we trust.
Jajun we trust.
Okay, it better work tomorrow when TP's on.
You're gonna die. You're gonna die. He is so funny with it.
All right, so I'm just gonna pull a couple from this list. Reddit, Hood. Do we want Datadog? I don't know.
Yeah,
let's just look at Reddit, Hood, and maybe Datadog.
Okay.
RDDT. You know, honestly, Reddit is such a thorn in my side. I don't know what to do with Reddit. It's painful. It's painful for me to look at. Painful. What do you do? You want to do anything in Reddit?
Yeah, I do.
I know what you want to do. 2/18/72.
I'm not doing the 2/17 calendar. That's a bearish. That's a trade saying it's not moving. Let's do.
That's a trade saying it's not moving. Sure, I just want to see how much it is.
Well, how about you buy the 2/17 in the 9-day and sell the expected move in the 2-day?
Listen, it's only $1.60.
That means it's not going to move. There's a $35 expected move in Reddit.
If we put on the diagonal, it's going to be okay. So yesterday, like every diagonal worked, but if we put on this diagonal, it's too expensive for us. It's too expensive for us. I might honestly pass on Reddit if I'm going to do anything in Reddit.
Okay, let's go to the next one.
Can we just at least for fun put on the 2/17 calendar?
Yes, I will never stop you from putting on a 2/17 calendar, Jenny Andrews. Never.
Went from $1.60 to $1.90.
What the heck? No, it's because it's wide markets. You've got 1885 at 1945. Those are pretty wide markets.
I'm going with $1.70. Filled. Okay, Hood. What? Okay, we have something in Hood. What do we have?
I have a lot in Hood.
Oh, this is diagonal. It's a bearish diagonal. From what's your assumption?
Oh, get the hell out! I'm just kidding.
I don't know what to do with this. It's worth 217. It was a view. It was 14 days ago. It was 2 weeks ago. And what's your assumption? A viewer was bearish in Hood. Put on this downside diagonal for the viewer because what do we know? And so do we just leave this?
I mean, we have to, right?
Yeah, I think we have to. Okay. On that note, let's just get to what's your assumption. 10:41. We're a minute behind. Beth, hit us with what's your assumption theme music?
I don't know if there is a music here anymore. Love it. All right. Okay. First up, let's go to the first slide here. And I got a preview. Roku, bullish for earnings. So this is from Nate from Omaha. 100 before March. This is what they say, 100 before March expiration. Bullish for earnings. I like this. We're going to go diagonal, diagonal, diagonal.
All right, let's go to the platform and put on a trade in Roku. They think it's going to be 100. 100. Here we go. I'm in Roku.
100 before March.
It's trading 84. Expected move on earnings is $11, so that takes it up to 95. He's not that far off. When Liz says we're going to do a diagonal,
don't go to 100. I mean, they go to the earnings expected move. Yeah.
I thought about it. Thought about going to 100.
They said before March. They didn't say on February 14th.
All right. So if I sell the 95 in the 2-day, and I'll price out the different cycles.
And you can yell at me if it goes to 100 tomorrow.
Well, we'll see. It would be an extra 70 cents to go to 100, I think. No, an extra 90 cents. So buying the 84 in the 9-day, this is 424. If we move the expiration to the 16-day, it's 472. So yeah, 472, we've got the 84.95. That's only $10 wide, and we're paying half. We like to pay a third when we can.
That's a lot.
It's a lot. I know. That's why I almost think we need to move this expiration down to the 9-day, and then move the 95. Look at Upstart. I mean, if we would have moved it in Upstart, jackpot. Yeah. Let's pay $5.18 for a $15 wide.
Go for it. This is Nate from Omaha.
Or if I really make it $15 wide, the 99. $15 wide for $5.
Love it.
And I mean, he's super bullish, and we're getting him just to about that 100.
Love it.
Cent. And she loves it, but that doesn't mean it's going to be a winner. We have we could be out $500 tomorrow.
When I say I love it, I just mean I like Jenny Andrews' style. That's all I'm saying.
Okay, next up, I'm going to 508.
Now, next up, the next slide we have, I'll push all these out in a minute because I'm going to try to follow along. It's Tesla bullish, 45 days. Tesla had a significant pullback from the recent top. Now IV is high and no earnings. This is Jordan from Tucson, Arizona.
Okay, so we can just go to the next one. We already have a short put spread in Tesla, which is bullish. We're already bullish in Tesla. We have a short put spread. If we were to put on a new trade, it would probably be another short put spread because Tesla's $340 and we can't afford naked puts.
Okay, and then I'm going to read you the next one, but we're going to say pass. So Beth, pull up our next slide, number 3, and it says, and I'll tell you why we're going to pass. I'll tell you right now, because it's PLTR bearish, and it's from Brad from Houston. Post earnings high IVR 60 can't sell the March 21 140 call. It can't go all the way to 140, right? So I think we could probably pass on that one too.
Honestly, well, let's go. I just want you to see it. I want you to see it. Let's go to the platform.
Okay, let's hit the platform. And I know, honestly, it's what's your assumption, not what's my assumption. I'm in PLTR for life just because I've got a teenage boy who always talks to me about it. And so I will always have a bullish PLTR position on, but I've ratcheted mine up. The 140 call is going to be a lot of capital, I believe.
But the fact that PLTR is trading 115 and you can go out to the 140 call and get premium for the 140 call, I know that you're always bullish on PLTR, but selling that 140 call, it doesn't mean that PLTR can't go up. It's pretty far.
And I will tell you, in the same way that puts are neutral, calls are neutral too if you get them pretty far out.
Yeah,
but
you get them pretty far.
You can press the button if you want to. I would never go against Paul. So there you go.
I mean, you think about it. You're looking at a 10% move would be $11 higher. That brings you to 125. 20% move would take you to 135. So Correct. It is more than a 20% move.
Correct. 20% take a look at PLTR's chart. It's up.
I know, but earnings are over.
It's up 360% in 1 year.
Earnings are over.
Yeah, but earnings didn't matter. It went like this. It gapped up on earnings, but it still was gapping up the entire time. I don't know. You can sell it if you would like to sell a naked call. You're going to have to spread this off because we can't use $3,200.
I know that you love PLTR. I won't send it, but I do think like there's a lot of premium in there.
There's a lot of premium, but look at all that call skew. You can't even buy something to make it like you're keeping something.
I know that's the problem. He's looking at the 140 call. That $5 call spread up there is only 60 cents. Yeah, we'd have to make it really wide to make it worth it.
You were $15 wide for $1.37.
I know there's so much call skew.
Yeah,
but I if you can afford naked options in there and you're willing to take the risk, you get paid to take the risk.
You get paid to take the risk in that stock for sure, 100%. Okay, let's go to number 4. Now this is an earnings play, Crocs. So Crocs bullish weekly. This is an earnings play with an IVR of 97%. The downside risk is smaller than the upside. You love Crocs, Tom. Go long. This is Kyle from Atlanta, Georgia.
All right, let's go into the platform and I'll take a look at Crocs. Earnings are like today, so before the bell tomorrow morning. So today's trade would be our earnings trade. They were bullish in Crocs?
They're bullish.
And it's really taken a hit.
So really taken a hit. Yeah, that has taken a hit. That's really taken a hit.
And I've been watching and comparing my Crocs versus Burks. So Burke has been on, is it more near the higher end of its range? And Crocs is near the bottom. And when we talk about market cap, Burke is worth, why does it not say a market cap today?
It's gone.
Wait a second. Do I need more space here?
I don't know.
I
would worry about it.
That's unusual. But anyway, Crocs has really been, not doing well. Like everyone's buying Burks now instead of Crocs, I guess.
But so this person's bullish. Do we want to trade a bullish earnings trade?
I bet the diagonal's pretty cheap.
I think we pass, but we could look at it.
I'll look. So if I go the expected move of,
it's a $10 expected move. So you should pay like $3 or $4 for it.
Yeah, $350, yeah. 89.98, $350 for $9 wide. Well, yeah. What do you think? Let's do it.
Sure. What the heck?
Okay, so that's working. All right, what's next?
Next up, slide 5 is, and I can start reading it before she's putting it up too. ZB, I don't know. This is Mark from Montgomery, Alabama. Bonds at the 50-day moving average. In the next 120 days, I assume it will be up or down 5 points in either direction. Reverse iron condor?
Reverse iron condor?
That's why I said it like this. Reverse iron condor. I don't exactly know what that means.
If you're buying your call spread and buying the put spread instead of selling it, he's just playing. He is playing for a big move one way or the other. Big move one way or the other.
Yes.
If you think there's going to be a big move one way or the other, let's pop it in the platform again, if that's okay.
Mm-hmm.
What was his time frame, Liz?
120 days.
120 days.
That's correct.
120 days. I was just looking at TLT and going to see how much that straddle is in TLT. It's $6. So you would need a really big move. A really big move. 120 days is just too long.
Okay, honestly, put a pin in this and talk to our bond master about this tomorrow.
Oh, yeah.
Okay.
Definitely. All right, good idea.
Put a pin in this, and we're going to bring, because TP got his teeth in the bond market, right? He cut his teeth in the bond market. He's our bond expert.
He is our expert. And ZB, we sold a put spread in ZN yesterday. If anything, I would add a put spread in ZB today with the bonds down to 113. That's kind of what we were waiting for.
Yeah, it was what we were waiting for.
All right, next up.
Next up, number 6. The slide is APP, neutral earnings play. APP is overvalued at this price. I'm neutral to slightly bearish since its price is $375. No naked positions. No naked positions. Tyler from Salem, Oregon.
I mean, the crazy thing is that we have it's a $62 expected move.
Yeah, that's what they were talking about today.
$62 expected move, and they're bearish. How much do you think this put diagonal is going to be?
They're neutral.
Oh, I thought they were bearish.
No, neutral earnings play.
Neutral earnings play? No, because they said it was overvalued.
Well, okay, so I'm reading to you, Jenny. I'm literally reading to you.
Okay.
APP neutral earnings play. App is overvalued at this price. I'm neutral to slightly bearish, but it's neutral.
Then I would just sell 2 spreads. I mean, that $62 expected move is big. And if they're neutral to slightly bearish, maybe I'd sell a wider call spread and narrow put spread.
Yeah, sure. Right? Neutral to slightly bearish. That makes sense. You're going wider on your call spread than you are on your put spread. We're only risking 355. We do this on diagonals all the time.
Yeah, right. It's not bad. $5 wide call spread, 250 wide put spread.
Yeah, that's perfect.
Filled.
Okay.
All right, APP.
Yeah, you know me.
That's what I was going to say.
And I'm on drugs, and you're coming up with this stuff.
All right, what's next?
Slide number 7 is coming up next. It's Pan W, which is Palo Alto Networks, neutral, March 21st. Neutral to bullish earnings play. How about selling a strangle? Chris from Cincinnati, Ohio.
Pan W, Palo Alto Networks. We haven't traded it in a while. 194.
When are their earnings? Because I don't remember them on the list.
Oh, tomorrow after the bell.
Oh, tomorrow after the bell. So this would be our earnings play. Okay.
But they're neutral.
Neutral. Yeah. Okay.
If I'm neutral, I'm waiting until
Jenny,
tomorrow.
I'm reading again because No, you're right though. But listen to this. It says Pan directional bias. It says neutral. Maybe they left the button at neutral. Everybody that was filling out these things, because then it says comments. How about a neutral to bullish earnings play?
Yeah, just like the last one said, they think they're overvalued, which I would think bearish. So I
almost says, how about selling a strangle? That's not bullish.
No. But if I'm selling a strangle or anything neutral in Pan W, I'm waiting until to the end of the day tomorrow.
I would too, just because you want to give yourself a better footing. You want to give yourself a better footing.
Okay.
If you're doing a directional play, you can do it early, but not if you're not directional.
Right.
Okay, let's go to slide number 8, please, Beth. So slide number 8, lift. No, this says bullish.
They had earnings. So let yourself puts. That's easy.
Yeah, hold on. Let me read you what they say. Post-earnings trade idea. Lift is back around 1250, which is a short-term support level. If the short put is too cheap, maybe a covered call or a poor man's covered call, depending on the IV after the market opens. And this is Ryan from Madison, Wisconsin. I know a Ryan from Madison, Wisconsin. I wonder if it's him.
Oh, the Vanilla Gorilla.
Oh, I wasn't even thinking about him. He is from Madison, Wisconsin.
Yeah, you were thinking of another Ryan?
I know a second Ryan who lives in Madison, Wisconsin currently.
I don't know. Okay, I agree with him. The 13 put is 55 cents. That's using $200 in buying power. The 14 put is the synthetic covered call. That uses $275 in buying power, but we're doubling our credit to $1.04. So all in favor of selling the 14 put and lift? Good idea. Good idea, Ryan from Madison.
The Vanilla Girl. My neighbor's name is Ryan, and he moved to Madison, Wisconsin. I was thinking about him.
Your neighbor moved to Madison, Wisconsin?
Mm-hmm. Yeah, with Ann Lee.
Oh.
Remember? Yeah, the demon. Okay.
I should introduce them to my friends because one of my college roommates lives in Madison, Wisconsin.
Let's set it up. Let's hook it up.
I'm sure she would like another friend out there.
Sure she would. All right, let's go on to slide number 9, please, Beth. This is GC. This is Leon from Singapore. GC bearish. So 43 days, gold seems overextended to the upside. Sell a wide call spread.
We have an upside broken wing butterfly. Liz, while you were gone, it blew through it. I was glad you were out and didn't have to witness it because now it's back down and it's like not quite so much blown through our broken wing butterfly.
Yeah, I'm glad I was Rip Van Winkle because that would have made me mad, Jenny.
You would have been really mad on Monday. We had really blown through this whole thing. Now we're back down to 29.30. Which is about our break even, 29.15, 29.25, 29.30 is about our break even right now with this GC trade.
So a lot of people we're already bearish.
There are a lot of people who are bearish in gold right now.
Yeah.
Did you see this move? See that point, that move it had on Monday? Or what, yesterday? Yesterday.
Wow. It's crazy.
Yeah. So is this a spinning top? Do you see it? The red bar goes down and up. Would that be a spinning top?
I don't know, but if you want it to be, it is.
So anyway, gold is a big product. We did an upside broken wing butterfly. Call spread's fine too.
Yeah.
All right, we are almost out of time.
We've got one more left, Jenny. One more left. Let's get to the last slide, Beth, if you don't mind. We've got SPX neutral, 0 DTE. On last call today, sell a put ratio spread 10 to 15 points wide for a small credit. He wants to do it on last call, so this is not us. This is Warren from Candor, New Jersey.
But hey, you know what? It's not a bad idea. You put on a put ratio spread. This is like we're putting it on for.
I was like, it only uses $111,000. But yeah, if you do a broken wing butterfly, it's not bad.
Like broken wing butterfly, where this isn't really costing us anything, it's $1,000 in risk below 60.15, and we just leave it because it all cash settles.
It's not bad.
Not a bad idea. Not a bad idea at all. What do you think?
Not a bad idea at all. I go for it. I mean, I don't mind. But it says on last call. But it doesn't matter either way.
That would mean we have to stay above 60.15 to not lose money. So. But our risk is $1,000. If the market falls out of bed, we have $1,000 in risk.
It seems to be an excessive amount of risk for 0 DTEs.
For our account. Yeah, this account's only $35,000. So to just like casually risk $1,000 on a trade like this maybe doesn't seem right.
Casually risk $1,000.
All right, let's see what we did today. Today filled our Jejun trade for the win. Reddit, we did the calendar, which I couldn't bring myself to risk more than $170 in Reddit. Roku, we did it in a bullish diagonal. APP, we sold a pretty neutral iron condor. Took a little more risk to the upside. Lift, we sold some in the money puts. We are still working our Crocs diagonal.
If we get filled in, look at that. It's getting away. I mean, if we get filled on it, great. It's not dying to get into any of these.
Okay. If you're not dying to get it, I'm just going to cancel that because we're not going to be in this account to push it out later.
True. And the rest of them are just GTCs for closing orders.
I've got to go to school pickup. My daughter's school's closing. We've got to go pick her up. We've got to go get her. They're closing early.
Oh yeah, you got to get out of here.
Your kids had a snow day.
No, they're downstairs right now watching TV. All right, Jenny, go get your daughter. Everybody else, the fast hour of the day is done and dusted. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you all tomorrow.
Bye, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9. Yeah. It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day, because I get to spend it with my buddy, Mr. Mike Butler. Welcome back. How was your trip? How was the POW? How was the were you shredding? What was it perfect? How are you, sir?
I'm doing great. Thank you. Yes, we got some nice POW. I got there on Friday. It was snowing and raining at the base, and then it turned to just like thick snow that just covered your whole jacket. And then overnight, it was like -10 on the mountain. So that just took all the moisture out of all the snow, and that's it creates a nice, perfect POW situation. So yeah, Saturday it was really nice snowboarding conditions, and then Sunday and Monday it was sunny, not a cloud in the sky, visibility as far as you can see. It was perfect. It was amazing.
You did the t-shirt skiing?
No, it's still too cold for that, but it was nice to get some sunlight. And you can see it on my face below, goggles and below. It's definitely a separation of tone on my face. But yeah, it was great.
The winter golfer's tan.
There you go. Yes. But yeah, I didn't really look at the market at all. I heard that on Friday there's a little sell-off, and then on Monday there's a little rally, and yesterday there's a rally, and now we're in a little sell-off. But it feels like we haven't really gone anywhere. Am I wrong about that?
No, you're correct. You're correct on both those fronts, and it's funny because we talked about before you left on Thursday when we hosted the last call with you and Tom both gone. There's always going to be some sort of tasty live problem, which we had on Friday, a little website issue which has been resolved, and we had the market selling off when Tom was in flight. So both prophecies have been fulfilled. But yeah, to be completely honest, we've gone basically nowhere, and we've gone basically nowhere for the last 3 weeks or so, but we've had some big moves, mostly coming on Fridays and Mondays. You've seen a little bit of weakness on Friday going into the weekend. Obviously, we've talked about it too, of just, the pricing of risk going into the weekend seems to be a little bit light, and it kind of front runs that Monday move. And we had it again this weekend with Sunday futures opening down like 40 or 50 points, rallied all the way back to flat within like 30 minutes. So we've gone basically nowhere. We're sitting right now with the E-minis at 60, 70, which is near the higher end of where they've been trading. We had CPI this morning that came in. The market sold off. The low of the session today was 60.20, so about 50 points lower from here. We got as high as 60.98 in the overnight session, so just touching that 6,100 mark. But that's really where we've been bouncing. We've been bouncing between 6,000, 6,100, for the better part of the last 3 weeks or so, as all the news and the press conferences, all that good stuff gets digested throughout the week. NASDAQ is actually the strongest of the group, only down 9 right now, getting some nice bounces from Apple up $2 and change. You got Tesla, which has gotten absolutely murdered over the last couple weeks here. I got long it in the Johnny Trader account today with a short put spread, the 290 short put spread, just playing for a little bit of a bounce here, but it's up nicely today after what has been just a huge move lower. Meta had 17 straight green days. Looks like we're going to 18. I think that's what it is. Maybe it's 18 or not 18 before today, maybe 19 coming up, something like that, but it's been super, super strong. Even like your Netflix is up significantly. You've got on the other side, Amazon down a little bit, Google down a little bit, as well as Nvidia giving it up a tiny, tiny bit, but it's near the higher end of where it's been trading over the last couple of weeks. So definitely a little bit of bouncing around here in some of the big tech names. You got the Dow down 235 and the Russell down 23. The Russell, the weakest of the group, that coming on the back of the move in bonds down to over a full point, which means the rates are increasing, which usually drags on the Russell. Oil selling off a bit, /CL down $1.64. It's been strong over the last couple trading sessions. Volatility futures this morning were only up 20 or 30 ticks, which was kind of a signal to me that there was that this was kind of like a nothing burger. Gold is basically unchanged. Silver having a nice little bounce here, up 44 cents. And then Bitcoin looked like it was dead in the water, but bounced off of the lows just in the last hour or so. Futures are up 1,800, spots up 900 and change at 26,000 or 96,000 from the lows of 94.
Yeah, kind of a crazy market here, that's for sure. But Netflix over 1,000, Costco over 1,000. All these stocks are in split territory again. Kind of wild. And some of these, of course, we still have some earnings reports coming out this week. I know Thomas is working on a Coinbase one. We've got a handful of others, so lots to come back to, that's for sure. Coinbase is tomorrow after the close. That'll be an interesting one for sure.
I mean, you got DraftKings tomorrow after the close. That's got to be your number one. I'll give you what I did in the Johnny Trader portfolio today. So I went and sold. I have a strangle on in this account. In the Johnny Trader account, I went and sold the 2-day 41.47 strangle. I did it at $1.42, so you can actually do it better now. The stock is up $1 from where I put this on. I think I did it when we were at basically unchanged here. Where's my little trade here? Yeah, we were at 43.75, so it's up 75 cents.
I like it. We're definitely seeing a little pre-earnings pump in DraftKings, that's for sure.
Gotta love it.
I'm very interested to see the Super Bowl numbers. I feel like they always do that.
That's what I said.
The earnings report, they'll give you some Super Bowl numbers, but yeah, I don't know. I'm not sure what to do with DraftKings here.
I told Tom the most bet on or the most exposure the books had was Saquon Barkley anytime touchdown, and that didn't come true. So
yeah,
you got to imagine something is good for them. I mean, those numbers got to be good.
Oh yeah, they probably made an absolute killing on the lack of Barkley touchdown.
Yeah.
But yeah, you had to know that there was some kind of feeling about that where Barkley was just going crazy, but Kansas City, if there's a team that's going to stop him, it's probably Kansas City.
Yeah.
So yeah, very interesting to see that. But yeah, we've got Coinbase, we got DraftKings, we've got PanW, we've got Win, we've got Applied Materials, a ton left for this week and next week too. So if you got any
PPI tomorrow too.
Yeah, I was looking at that. I was looking at SPX, not really pricing in too much, but we shall see.
Yeah, Vol has been smashed here to start the session. I see you cleaned up a couple positions. Nvidia, you close out of the is HE lean hogs?
Yes. Yep.
Yes. So you got out of that one too. I mean, it was actually good that you weren't watching your positions because I closed mine out for lesser profits. But Mr. Westwater came in hot with those as always.
Indeed. And yeah, I have this micro crude position on, and it's losing a lot of its profit today. But I'm going to hold on to that one still. I think we'll still have some two-sided action there. I'm long at like 70. Just under 71. So.
Oh, okay. Oh
yeah.
Man, you missed $3 to the upside.
I know. That's what happens when you go on vacation, right?
That's true. Sometimes you could have put in some GTCs or something like that,
True.
But I get it. I don't normally do that. Do you have any interest in Tesla? Can I put you in that today? It's up 13 and change today. I mean, if you've missed the move lower, it's down, $70.
Yeah.
Over the last week and a half. I just did a little Johnny put spread. I have a wider one in this account that's probably actually closer to a scratch at this point. Not quite a winner just yet. Yeah, I'm out about $120 on this position. The 325, 310, I legged out of the call spread, but it's a stock that you got an IV rank of 41. It's obviously gotten killed. Implied volatility, not super, super high, but 41 IV rank is right in the middle there. Could do a call diagonal spread or a short put spread or something like that. I mean, this has buy the dip written all over it.
Yeah, I'm looking at a 300, 295 put spread in March, and it's trading for $1 exactly. So not too much premium, but at the same time, you can have your downside risk at 300, and we are 40 points away from that, even into this rally today. So yeah, something like that is intriguing. Calendar spread is also interesting. Diagonal spreads are too expensive here, but even like a 400 strike. Ooh, 400 strike calendar spread.
400, 420?
Yeah, that could work. Yeah, 400 strike calendar, long April, short March is trading for 666. Ominous.
Oh, do it.
I think I will.
As the NASDAQ turns green right now.
Yeah. Yeah, long April, short March for 666.
I like it.
Instantly filled. Don't know if I like that.
I think that gives you a little more upside, obviously, than the put spread. You're putting a little bit more risk on, obviously, but that's a position where if you get a 15-point bounce from here, that'll be a real nice one.
Yeah. If we continue to the upside, which you certainly could see. This thing's been moving around like crazy. But yeah, yes. Long April, short March, you can see there's a pretty significant vol differential there. The April contract is trading for $1,300 with 60 days. March is trading for $7. So over 50% of the cost of the April cycle is in that March cycle. So yeah, I like that setup. And yeah, if you get a continuation here, it'll be a $100, $200 winner, something like that. We're in.
Love it.
There's some other stuff here that's kind of fluttering on potential profitability. I've got a lift call diagonal spread. That one's up 30 cents with an expiring short option this week. The IBIT position is still working marvelously. And then Apple is up $120. That one's a longer term one, long April, short March, $10 wide diagonal spread. So I'm going to hold on to that one because that one I only paid $5.85 for. So if we see a continuation here in Apple, that will be a much bigger winner.
Glad you pointed out Lyft. I forgot about my little short put that I sold yesterday into earnings because they had earnings after the close yesterday. I sold it, the 14 strike put in March at $1.20. I closed it out for 89 cents. So I took, $31 out of it. Nothing huge there, but the stock has gone from 12 to 14 right now. So I figured you'd take the money and run. Yeah,
that's a definite big move to the upside today. So yeah, that's a small winner. There's not much to sell. Rolling that 16 call out to March, you're only getting like 30 cents. So I would not do that personally with an in the money call that's already gaining some intrinsic value here. But yeah, it's still such a small trade, and that long options in April, I'm just going to hold on to it. See if we get a continuation to the upside here.
Yeah.
But yeah, that's pretty much it. Lovely. Well, we're streaming live on YouTube. If you want to join us there, you can pop in your trade ideas and questions along the right-hand side chat. Just go to Tasty Live. I've also got the newsletters pinned to the top of the YouTube chat. You can sign up for the cherry picks for free and others. But yeah, what else have you done today?
So I had those Johnny trades this morning, getting long Tesla, short Baba, and a strangle in DraftKings into earnings. I closed out of some of my IBIT positions. I'm left with these risk-free butterflies on the upside into this move. So I got one 65, 70, 75. I got one in the 9-day at the 60, 65, 70. So I mean, these are obviously low probability trades or low probability shots, but if this Bitcoin move continues, those will play out nicely. And usually when you see Bitcoin rally to the upside, you get that pop in volatility, which would be ideal for me because then I can roll into a new April position, volatility on the kind of lower end of where it is or where it has been, 27 IV rank. And even when I talked to Ryan on Monday when we were talking about Bitcoin, volatility has been super, super low. So I took off the short put. It was using like $1,700 in buying power. I just closed out of that, leaves me with these risk-free butterflies. And then if we get a continued rally here, volatility will likely expand. And then I can do, a new strangle out in April if it happens in the next, couple weeks here.
Lovely. Lovely.
But the last like 2 weeks though have been an absolute dream. They've been a great trading range.
Yeah.
It's hard to even go through all my positions because I've been so active. Like yesterday, I got out of an ARC position into the move lower. I mean, that wasn't a winning position, but that was a position that was a $500-$600 loser to just a couple $100 loser. I added some new positions, managed a Tesla position, which is helping me close out of IWM. I had DraftKings position that I closed out of as well, got back into a new one today. Oklo, Shopify. I got bailed out on Shopify in my Johnny Trader account. That'll be the next life cycle of a trade. I've been scalping the micro euro. I was just looking at that now. It just bounced 50 or 60 ticks in the last 30 minutes. So maybe something tariff related came out. But I mean, this market has been a lot of fun.
Yeah.
And so I'm ready for new ideas. If people got stuff, I'm ready to sling around some trades.
Yeah, this has been a great two-sided market. We haven't gone anywhere, but we've had 100-point moves in either direction pretty much. So it doesn't matter if you're bullish, bearish, neutral. You've had opportunities to close winning positions. If you
and losing positions.
Moves. Yeah.
You get bailed out on stuff that's been a pain in
the side.
Yeah.
It's been a fun market, that's for sure.
Yeah.
I did close some positions this morning. I closed out of that NVIDIA call diagonal spread. I had the 130, 140 long April, short the 9-day. That was a $175 winner. And then I closed out of that lean hog short put spread. With 30 days left, it was pretty much worthless. It was a $130 winner. So shout out to Thomas for that one. Price of lean hogs just absolutely skyrocketing. We'll see where it goes.
And you closed the live cattle one last week before you went?
Yes.
I think we closed that at the same time. But that was another one that had, nice little move for us.
Yeah. That one was a quick winner for sure. But yeah, these futures are moving. That is for sure. All right. Popping over to the YouTube chat now. Let's see if we can get some trade ideas on here. Kicking it off with Ron. What do you think about an Iron Condor and APP? Earnings after the bell, 92% IV. What expiration would you recommend for an Iron Condor specifically?
Yeah, this goes back to whoever gave us this in the chat 200 points ago.
Yeah.
shout out to them. I hope you bought calls or, did some sort of upside trade, call diagonal spread something, because this thing has just absolutely flown to the moon. I watched Tom kind of fumble around with trying to get filled on this for what's your assumption, because the markets are not great. And when you're looking at an iron condor, even if you go to March and we go to somewhere around like a 20-ish or one standard deviation, 20 delta or one standard deviation, you go $10 wide, and you could do any sort of width you want. You're looking at $2 or $3 wide spreads. So you're going to have to do some price discovery here. I think it's a tough one to trade into earnings. You're obviously going to, at least the expected move is $63 through the end of the week with 260% implied volatility. If you get some big moves, it's going to be real hard to price these options. So, I think it's a stay away from me. When you're looking in the weeklies, they're $1.50 wide. It's a lot. It's a lot to kind of figure out.
Yeah.
Pricing.
I was looking at like a 300 290 and a 490 500
in the
2-day
weekly.
Yeah, because you could go to March and get $3, or you can go to the 2-day and get $2. But like Nick said, like this product is it's going to be so hard to get out of, even if you get filled, that and normally we say with an iron condor, we go to March, which I still think is true. Like if you go to March and you get blown out on either side, you still have 30 days for a reversal. But if you're looking for like an instant pain, instant gain, where you don't have to worry as much about getting out of the trade, if it's a winner, going to the weekly cycle can help you do that if there's an inside move, because the options will just go to zero, and you're giving up $1 in premium. But if it goes nuclear or it crashes, you're going to be on the hook for max loss because you don't have time on your side. But yeah, either way, it's going to be wide bid-ask spread. It's going to be a tough fill, and I don't know. I don't really have a lean in either direction here, but this is a gigantic expected move for an earnings announcement. This is almost 20% of the stock price. This is probably the highest one we've seen this earnings call.
Yeah.
This earnings season, I should say. But yeah, I think you define the risk either way, whatever you do in here.
Yeah, it's a tough one. I think if you have a directional lean, I would just lean towards like buying calls, buying puts, I think, or doing like a spread, a wide spread, because doing the 4-leg neutral trade is just going to be a tough in and out.
Yeah. Sunflower.
So I'm going to pass.
Yeah, I'm going to pass too. When would be a good time to buy Leap and Microsoft to do poor man's covered calls? Would it be when the IV is elevated and the stock is slightly down, or when the IV is lower and the stock is slightly up?
Stock down, gamma.
Yeah. It's IV is less of a factor when you're buying leaps, because leaps are much more time-based in terms of the makeup of extrinsic value. The near-term cycles are the ones that are a lot more sensitive to implied volatility changes. So if you're buying leaps, those are basically pure directional trades. I would rather buy it on a down day like today, rather than trying to time when there's an IV crush or whatever. And you can look at these leaps like, I don't know which one you're looking at.
450 in January is what I pulled up.
Yeah, so the 450 in January has lost $1 today, and that's pretty much in line with, like, if there was a 1% increase in IV, it would gain $1.50. So it's really not going to change anything too much. You're always going to want to be buying into a sell-off if you're buying leaps, because the value of the option, delta is usually going to be the strongest driver of an option's value at the end of the day. So on a down day, you're getting a cheaper price regardless of IV. But yeah, when's a good time? It doesn't, I can't tell you where it's going to go tomorrow or the next day. It's just a matter of when you're comfortable taking the risk. I did a call diagonal spread in here for earnings. That one went down dramatically. I've got the 460 long call in April. I went back in and I bought the 420, 440 call diagonal spread. That one's down a couple $100. So I've been trying to buy the dip in here, but it has not performed the way that I would want it to. But yeah, I mean, if you're comfortable down here and you're willing to take the risk, like you're getting in at the recent lows. This is the lowest print we've seen this whole year, pretty much.
That's how I gauge my entry.
Yeah.
So I think if you're bullish, and just when you think about this from recent time of what the value was there, it's much cheaper than it was just a week ago. And I don't, not a ton has changed, in my opinion, of Microsoft in a week.
Yep. How much you try and capture on the Jive trades? $1? Guess it depends on how wide you're doing them, but I'm not sure. Do you do these trades every once in a while?
Not really. I mean, I think the whole thesis basically, or the whole idea is that around the 11 to 12 central time, or maybe it's 10 to 11 central time, is when you typically see volatility peak, and because of that, there's a little bit of a bounce in the market because you have volatility contract from that point, which is, a natural bid for markets. And I know that, over the most recent time of last 10 years, it's probably been a fantastic trade. I think that's just kind of been the market. In terms of these trades as a 0-day trade, yeah, if you're doing this $5 wide at $2 and it's marked at $3 and change, I'd probably take the money and run. If you're doing a bigger spread, and you're willing to take risk, I might hold it till the end of the day. It's a tough call. I mean, anytime you're trading 0-day, whether it's defined risk, naked, buying calls, buying puts, your decision making, you have hours to make decisions. You don't have days. If I sell a put and the stock goes down, it's no big deal. I can deal with it tomorrow or a week from now or whatever. But when you're trading on a time frame where you got to deal with it in the next minutes, you just got to kind of make the call and go for it.
Yeah.
Or don't make the call, or just sit with it. It's there's not a ton of management you could do other than closing.
Yep. Agreed. How about RGTI, short put at 1050, expiring on Feb 21, print money? It printed money if you did this yesterday. The 10.5.
Oh, the 10.5.
Yeah. This lost over half of its value today. So I would not be selling it today for 20 cents. I mean, this is a stonk, and selling undefined risk for 20 cents is just not something I'm going to do, especially after it's lost half of its value on today's move. If you did it yesterday, then that's a great trade, and you made 50% in one day. But yeah, you're not getting paid too much to take the downside risk, although the downside risk is real here. It just went from 0 to 30 and back down to 12. So this is a pass for me, but these kind of stocks, I just stick to defined risk. I'd rather buy the call in this situation and try and make try and make 20 cents by risking 60 cents instead of risking $1,100 or $1,000 here at the 10 strike. But it's up to you.
Agreed. Totally agreed.
Let's see. If a diagonal trade goes in the wrong direction, the first step is to roll to a calendar if there's short premium that makes sense to do so. But do you ever go inverted with the short leg to be on the other side of the long one? We do not. You can, but what you're doing is you're turning your diagonal spread max loss, which is at the start a debit defined risk trade, meaning the most you can lose is your debit paid. If you roll your short, in the case of a call diagonal spread, if you roll your short leg below your long leg, now all of a sudden you're still going to have a debit cost because your long leg will still be worth more than your short, even after you collect more premium by going inverted. But now you have an embedded credit spread. So the worst thing that can happen here is, of course, you get a downside move, and then you make that adjustment, and then the downside move is reversed, and you get whipsawed into a much bigger max loss with really no profit potential. So I don't like to do that. I like to stop at a calendar spread. But really, this is an example of why we say, your best defense is accounting for it up front by having a longer expiration date. It's not a foolproof plan, as you can see by my Microsoft positions, but I still have 64 days for Microsoft to recover. That is a long time, especially when you see the violence of the moves that we've seen to the downside. You could see those reverse to the upside just as quickly. And if that happens, having time on your side and not having an inverted diagonal spread is going to be much more beneficial in that situation. But you got to account for your max loss up front because it can be real, as you see here.
Yeah. I mean, if I think the biggest issue is just the adding risk into, a non-advantageous position. Like you're selling into the weakness of your position. If you're rolling down a call into a down move in the stock, that's it's not an advantage to your original position. You're putting more risk on the table. It's just, with
And
call
buying
diagonal spreads and buying power. Yes. So you're tying more capital up, but with diagonal spreads, you got to be comfortable with the size on entry.
Yep. American Express, 9 days out. What would you do? Liking a strangle here.
AXP. 9 days out. There's no earnings, is there?
No.
No, they already had their earnings.
Just looking for a 9-day options trade. I mean, it's such a short time frame that you're putting up a lot of buying power, putting up $5,500, and you're not collecting a lot. But if that's what you want to do, I mean, I think it's okay. It's just a low volatility product. You're not getting paid a lot to take that risk.
Yeah, the markets don't look great. I do not often trade this. But I was looking at an iron condor, 290, 280, 330, 340, but the markets stink here. And as Mike said, volatility is just not very high. On second thought, I think I'm a pass on that as well. And Tom hates it. So
there you go.
Mr.
Green had the 603 puts and calls for the 0 day, was down about 400 on the calls, averaged down to 40 cents and sold them at $1.12. Made it a very nice profit today on a horrible morning. Yeah, you definitely got the reversal. That's for sure. These intraday reversals are so wild to me. Just like every day. It's crazy.
Mm-hmm.
It is crazy.
What is your phrase? Until proven otherwise?
Until proven otherwise. But I am being proven otherwise in Google currently.
Me too.
And Microsoft.
Mm-hmm.
And that's pretty much it. Everything else is within striking distance, but
but you got to get long at these prices.
Right.
Even if it's wrong, you can get more long at lower prices. You got to dabble. I mean, that was my whole thinking with Tesla is like, I don't know if this is it, but it's down from the highs. What we get close to 500, it's down 40%, 50%,
Yeah. In Google and Microsoft, my long options are at 190 in Google and they're at 420 in Microsoft. I haven't touched the short options yet. Both of those short options are in March, but I will likely be rolling down closer to my long calls into a rally. If we get a reversal in Microsoft and Google, I will likely be rolling down because I have a 15-point wide in Google and a 20-point wide in Microsoft. So I can reduce the width of those and still reduce basis a lot. So that's probably what I'll end up doing if we get a reversal there. Smack Lovin is looking to stonk. How about a call calendar in the weeklies for Reddit at 250 and 270?
Oh my God, this stock has done nothing but go up. 250, 260 in the weeklies. Is this into earnings like a February monthly and then the weekly against it?
Yeah, 250, 270. Call calendar. So maybe a diagonal is what they're actually looking at. Long 250, short 270.
Oh God.
I mean, yeah, you could totally do something like that if you're willing to take the risk. This stonk has a 32-point expected move against a $200 stock price. So this is another one that's really high, over 15%. of the stock price almost. So that's crazy.
Yeah, I don't know if I can get behind this. I've been hitting on all cylinders, so I don't want to like break my juju with like a short term just, earnings trade like this. So I'm going to pass, but if you like it, I see where your head's at. It's a high upside trade. I mean, if you get an expected move into tomorrow, you're sitting at 250, you're going to make some dollars on this because this option probably doesn't move all that much, maybe $2 or so, but this is going to go, 7 to 15. So, you make $500 more.
Yeah.
I like the idea. I don't know if I can do it into this move that we've had in Reddit.
Yeah. You just have to close your eyes and click if you're doing something like that.
Yeah. 1,000%.
Don't look at the chart. But yeah, the risk is definitely real there. I would say the biggest thing I'd be worried about is a big vol crush after earnings in the long option you buy, but you're getting a lot of premium in the short. Yeah, it's definitely tough, but I kind of like calendar spreads in these environments because your cost is lower because you're collecting so much in the sale of the short option relative to cost of your long, but still, if you get a wrong move, you're still going to be at a big loss there. So I think I'm just going to wait on the sidelines. This one is another one where it's such a crazy expected move. Even if you're bullish, I would say you sit on the sidelines, you hope for a big sell-off, and then you can get into a lower price at a lower volatility, and then you can, hopefully get it after earnings. But I don't know. These are tough.
This goes to zero if you get a 30-point move to the downside.
Yeah.
The call diagonal or close to it.
Yeah.
So it's
short put on Rivian, 20 delta for 45 days is giving 50 cents.
Around the 11 strike. I don't hate that at $300 in buying power. I haven't traded this in a while. I'd probably prefer to just go to the right at the money, the 12.5, and do it at $1. I kind of stop myself at $1 in premium. So I would avoid, for me, 50 cents. I get it. It's $1 a day. It's somewhat interesting, but I'd rather do the $1. So I'd do the $1.
Yeah.
In March.
We would go to the March monthly.
Yeah.
Here.
I guess you could do the weekly if you wanted to like wheel into it.
Yeah, it's still fine. It's just you're gonna have better liquidity in the March monthly.
Mm-hmm.
But yeah,
all right.
I don't really mind it. Just earnings are coming up next week on the 20th, so just keep that in mind.
We'll wheel into this if something crazy goes down. All right, I did the 87-cent 12.5 strike put in next week's expiration into earnings. If it goes down, I'll take some stock, sell calls, wheel out of it.
There you go. Bear trade on Palantir. It seems to have become more like a meme stock.
Certainly.
Yeah.
I know. I need a $10 down move.
$115, just gapping higher. But yeah, this is one where diagonal spreads are enticing.
Mm-hmm.
Like a 115, 100, 15 points wide, you can buy for $8, or 10 points wide, you can buy for $6.75. And you're getting a rally today, which gives you a better strike price and pricing. So yeah, I would say I really don't mind it. I would just stick to defined risk here.
Skew is off the charts in there.
Yeah.
You go 35 points out of the money, go to the 150 to the 80 strike, and it's almost $1 more on the upside. I had the crab trade. It went too far against me. I rolled it. I was hoping we were going to get a little bit more of a pullback this morning and I could roll that out to March, but we didn't. So hopefully we get that in the next couple of days. If not, I'll probably have to take a $200, $300, $400 loser on that, depending on where we are.
Good old Palantir. What about a 260.590 strangle in APP for March? 260.590.
Damn.
Wide. Yeah, I think it's better. I like this better than the other one we were looking at. You're outside of the expected move, which puts you more into an implied volatility crush trade. But I mean, there's still plenty of risk here. So yeah, it is not for the faint of heart. You're better off getting a sell off here. Yeah, you're much better getting a sell off here. Because the problem is if you get a big rally to the upside, this call could explode in premium, which it doesn't change your intrinsic value risk, which is infinite, but it could change your marked loss after the fact. But yeah, you're still going to see a sizable vol crush. You're probably going to see a 20 percentage point vol crush in March after earnings today. Considering the back months here are in the low 70s, and this is at 86. So if you just chop this to 66, that's a pretty reasonable expectation. So 20 percentage point vol crush plus an inside move, then this could be a nice trade. But if you get any kind of crazy movement here, it could be trouble. But if you're comfortable with the risk, it's definitely, you're definitely well outside of the expected move, which is important here.
You can't go much further to the upside.
True.
620 is the highest strike. It's crazy. That is some fireworks potential there.
Yeah. How about an iron condor in Reddit?
Okay. What are we thinking for the 2-day?
Yeah, I mean, 2-day, March is still wide. I mean, it's tough. These are 50-cent wide markets, which makes it tough to sell an iron condor here and have the ability to get out with ease, especially after tomorrow if it's chopping around like $5 at a time. But yeah, I don't mind the idea of going to find risk here.
I'll be the guinea pig. I'm looking at the 185, 175, 260, 270. It's basically a one standard deviation. I guess you're delta-wise, you're a little further out of the money on the put side, but that's just because there's so much skew here. I'll try and get filled a little bit above the mid price and give everybody an idea of where this will trade at, because you do have the 40 or 50 cent wide bid-ask spreads here.
Yeah.
Let's see, 315. Nope. Give me a 310. See?
Yeah, it's tough. And this is getting in.
305.
Getting out could be a little tougher.
306, I got price improved. So I had to move about 20 cents off the mid price. It's 1/3 the width of the strikes. I mean, there's certainly risk. You had 240% implied volatility. So, I like the idea of defining the risk. But, if you stay within the expected move on either side, you're going to be perfectly fine. If you go a little bit further than that, you could probably roll this out just because volatility will probably explode, especially if it's to the upside. I would imagine volatility to stay bid, which will actually help a spread trade in terms of like not being at a full max loss. So, I don't know.
Yeah.
Give it a try.
We will see. With a long stock portfolio and a market pullback of 10 or 20%, and you want to get longer, but don't know if it will take half a year or 2 years to recover, would you use synthetic stock leap positions or futures? I like leaps as the answer because it's defined risk. Futures can do the same thing. You have that static upside profit potential, but you have leverage downside risk. So if you have a continuation of that move, you're going to be in a much worse spot with the futures than if you just buy a leap or buy leaps at, near the current stock price or whatever. But you're still adding risk in both scenarios. You still need a reversal regardless of timing.
Yeah. And if you're talking about single name stocks, I mean, futures obviously will move in, there's a high correlation there, especially if it's a big name stock, but those are two different products. I agree with Mike. I mean, both of them are you get a lot of leverage. So, if you have 13 or 14 grand and you can buy the outright futures, that's probably your most cost effective way. But if you're looking at a less capital intensive position, doing a leap or, poor man's cover call, something like that, definitely a good way to get that exposure.
Yeah. Pablo's got a leap with a covered call 2 days out that's at the money. How much extrinsic value left in the covered call poses a risk of assignment? So how much extrinsic value in a short call that's in the money prevents you from being assigned, I think is the way to ask it. And the answer is, how much are you willing to light on fire? I like to say, like, if you have 5 or 10 cents of extrinsic value, you're at assignment risk because someone on the other side is probably willing to give that up if they're trying to get the shares. If you've got like 50 cents or $100 or $200 in that short call, it's just not going to be assigned. If it does, you're in a better position because you just get all that money immediately. You could close the shares, resell the call, pick up more premium. That's why, like, it sounds amazing, and that's why it's rare. Because if you have a lot of extrinsic value, it prevents assignment risk. Either way, your long call offsets your short share risk in that sense. But yeah, it all comes down to how much extrinsic value do you think is someone willing to burn to get the shares? It's a low number.
The assignment doesn't matter.
Yeah.
If you're long a leap, it doesn't matter. It's just a one, obviously if you had a big move against you in come Monday, that would be a problem. But as long as it's still open into, like, if you got assigned today or tomorrow and the expiration is Friday, nothing changes about the position other than the buying power, as long as you close it out Friday. Now, if you hold it through Monday, you're continuing with the position, and that position has a different risk profile than what is expiring Friday. But the difference between your short call right now and being short stock is the same risk.
Yep.
Going into the end of the week. So it doesn't matter.
Yep. End phase, beaten down so badly in the March cycle. Yeah, it has. Wow. Trading at the lows. March cycle, buy a butterfly. Sorry, buy a, looks like a custom thing here. Buy 250, buy 250s.
Okay.
Sell 155 and sell 160. So it looks like a staggered zebra. Yeah. Buy 250s.
Oh, you're doing the call side.
Yeah.
Okay.
Actually, it looks like the put side.
As like
Maybe it is the put side, yeah. Sell
back
a
ratio
60.
of sorts.
Yeah. So you're defining your risk at 2 of the 50s. So yeah, it's basically a put spread that's customized.
Well, yeah, I would just sell the naked put. I mean, you're selling the 55. You have 2 short put spreads here. So you got $5. You're going to use more buying power than if you just sold the at the money put. I guess it's a little bit higher.
Yeah.
I mean, the other one you're selling at $5 or at $1 for the $5 wide. So you might as well just go with the 15-point wide and not overcomplicate it.
Yeah. Or you could sell the 65-55 put spread once. Something like that.
Mm-hmm.
This or the 60-50 once. It's a very similar trade. Reddit strangle 143.20. Yeah, another wide one.
Or I'll do the 60. I'm going to do the 60-50. I wanted to sell a put, but I'll join you. 60-50. There you go.
If you're going on vacation and you're managing open positions, would you place excess cash in BIL or SGov?
Sure. I mean, we're talking pennies here.
Yeah, they're both very similar.
Yeah. It depends on. I mean, like if you're gone for a week, on $100,000, you're making 5% a year, so that's $5,000 for the year, and this is $100,000 cash. You got to divide that by, 252. What do we get? A couple dollars a day?
Yeah.
You're parking it in bill for, if you're doing that. And that's if you have $100,000.
Yeah.
In cash.
But yeah,
just
in other situations, if it's like a similar product, I would just look at the share volume, see which one is trading more. But both of these have a very similar share volume today. So the answer is whatever one makes you feel more comfortable. They're very similar if you're going to do it.
Mm-hmm.
D-Dog, call diagonal spread. Long the 150 in March, short the 157.5. Data Dog. Earnings tomorrow.
Is that of earnings?
Yeah, earnings tomorrow before the open.
Yeah, these stocks have been hot recently.
Data.
So, well, it's just the second level of the AI boom.
Yeah.
Data and LLMs, all that stuff. I mean, Snowflake is another one that bounced. Obviously, Palantir is in there too. So I don't hate the idea. So what are we thinking here?
150, 157.5. Yeah, I just checked April's cost at the 150, and it's pretty substantially more. But if you're willing to put up more capital, you have a lot more time for this thing to work out. But if you're looking for just like a quick hit, if you're right, then yeah, buying March is fine. You're just going to get a bigger vol crush in March than you would April.
Yeah, I think I'm going to move this to April. I'll do the 55, 62.5. We'll go to the 62.5 in the weekly. You're getting about $1.80 there. It's about the same the same amount of outlay as the gentleman was looking at. But it gives you a little bit more flexibility. If you're wrong, you can roll to March, and the March premium, I don't expect to go anywhere. Assuming the stock doesn't fall out of bed, you can sell the 165 or the 170. If you get a slight up move, even go to the calendar spread at the 160 or 155 strikes. There's just a little bit more flexibility. And I think Mike pointed out as well, volatility 43% in April versus the March at 49%. And even in the weeklies, 70, 80%. It's a much cheaper vol, so I'm going to do that.
Yeah.
570. Let's see if we got filled here. One more quick one, then we'll get out of here a little early to help Vecchio get set up.
Yes. Husco's looking at XLO. It's basically a penny stock, but pairing with AbbVie, cancer fighting deal, big volatility today. But yeah, there's nothing to do there other than just like buy stock if you like it.
Maybe I won't be able to get in this because I can't get filled on anything. 580 is my last stop.
Yeah, a couple quick ones here. Manny from earnings have a leftover ARM short put. Thinking of selling a 185 call to convert to a strangle with no buying power effect. Thoughts?
Do we know the expiration? 2-day?
321.
150 and the 180. Yeah, I mean you cut your delta exposure by half. Yeah, I like it.
Yeah, and you're still out of the money on both sides, so yeah, I like it too. And yeah, last one here. What are defensive mechanics with ratio spreads? When you've blown through the break even, you just close the long spread. That's all we really can do. When it's reached, 90% of its max value, you want to secure that value. You don't want to lose that value. And there's not much you can make after that happens. So yeah, we close the vertical spread that we are embedded there. And then we just roll the short option or convert it to a strangle like we talked about here. There's a lot you can do with the remaining short option. But yeah, we usually close the embedded debit spread that's in there if it's trading for close to max value so that we secure it.
Good stuff.
That's it. Thanks for tuning in. If you've got any further questions, you can reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to tastytrade. See how it pays to have friends? Terms and conditions apply. tastytrade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I've been trading for 15 years now, and more than anything, what got me interested was just this kind of need to learn, really. I started off as a chemist and engineer, and I love those fields, but sometimes when you're doing an experiment, you can go months without anything changing, materially, I should say. Whereas with trading, every day is different. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Uh-oh.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young.
There it is, the song, yes.
Yes. All right, good luck, good trading. Let's go eat some roost.
Peace. We are back. It's still Wednesday, February 12th, 2025. This is Futures Power Hour. I'm your host, Chris Vecchio. Thomas Westwater will be joining us shortly. We're here to talk about the CPI day, ladies and gentlemen. It's been quite the session. How about that ride in? U.S. equity markets down 1.5%. Immediately after that, much hotter than expected figure. When we say much hotter than expected, no economists forecast a print to be this high. I think 73 were pulled by Bloomberg. Not a single one was looking for 0.5% month over month. But the market's rebounded here. Talk about resiliency. S&P 500 about to close the gap from the initial CPI move. The NASDAQ has already turned green on the day. Can't say the same thing for bonds, though. Gold recovering, silver up. You see that copper moving up as well. Some headlines between Trump and Putin, perhaps negotiations for an end to the Russia-Ukraine war right around the corner. Oil prices coming off the board and the dollar struggling here today. But Josh, as we wait for Thomas, we can go to the charts here and we could talk about the market. It's shrugging off this CPI report. Color me surprised. When we look at the market reaction as it pertains to the Fed rate cut odds themselves, the last few days have been pretty violent. We see a market goes from pricing in the first cut in June, 25 basis points in June, 25 in December, to the start of this week. We were only looking at September this year. After today, and still right now, the market is only pricing in one 25 basis point rate cut, and that's due to come in December this year. Why might that be the reason? This comes from Michael McDonough over at Bloomberg, the head of products there. We talk about his charts a lot. Go recommend to follow him on Twitter, X, wherever you can follow him. This is the super core inflation. Yeah, that seems like a bunch of nonsense. And as a lot of people like to joke, super core, we take out everything that really matters to people for living, and then we really get to the heart of the matter. But in this case, super core inflation, even trying to take the very narrow scope, what the Fed may be looking at, is accelerating at a very rapid clip here. It's accelerating at the fastest clip since last January, which interestingly enough raises the question, did this CPI report have rebalancing effects like the ones at the start of 2024? Yesterday, when we were talking about this report on Futures Power Hour and on Overtime, we noted that there's a base effect period right now in the CPI data that's kind of been haunting the figures as you make your way through the turn of the year for the past several years. And this year seems no different right now. What's the biggest driver of the increase in inflation? It's transportation services.
Used car prices went up a lot in January, and it looks like they were going up perhaps in anticipation of tariffs. If you're buying a vehicle, if there are going to be tariffs on goods that are going back and forth between Canada and Mexico, if we're removing de minimis on packages, well, then the cost of everything is going to go up. So might as well buy those vehicles now before prices spiral higher and higher. Okay, we also see that auto insurance is up. That seems a little ridiculous, continuing to get rebalanced at the start of the year. Health insurance rates, those are generally speaking up. But it's the transportation services that, quite frankly, is that something that really we think is going to last long term? Now, why is that important as well? Because the inflation numbers that we're looking at, they pertain to what oil prices and gas prices were doing through the middle of the month. And as we know, we started the year with this big bump in gas prices and oil prices. Oil went up from about $71 to close to $80 a barrel, depending upon the contract you're looking at. And now we find ourselves back trading near $71, $72 a barrel. So if this whole bump we're talking about here is related to vehicles, how long is it going to last? The market seems to be shrugging it off today. I think that's the more important news. We come into today's session pricing at about a 0.5% move in either direction for the S&P. And while we were certainly outside those bounds, not anymore. My personal gripe with the inflation data today is for the cost of my morning breakfast. I'm a big egg guy, 3 or 4 a day, every day. The Bacon, Egg, and Cheese Index, which Mike McDonough put out this morning as well, reaching a new all-time high. You want to get a bacon, egg, and cheese in New York City or Chicago, perhaps, it's going to cost you more now than ever. I don't know why my ShopRite's still selling 18 eggs for $6.99. I will continue to stock up. I think I've had eggs every day for the past 3 weeks now because they're going to spoil if I don't keep eating them. But Josh, we're going to continue to wait for Thomas here. We're going to talk about this market reaction as stocks try to close the gap. What a remarkable turn of events for today, ultimately, in the stock market. Now up at 60.77, a little bit off where we were a few minutes ago. We did have a 10-year note auction that just came down the pipeline, and we'll review that when we get to the fixed income portion of this episode of Futures Power Hour. But with the S&P 500 here today at 60.77, it means that we've recovered off the lows that were in place near 60.20. It's a 50-point move. That's not nothing, and it occurs with relatively higher volume over the course of the morning. The up candles here throughout the morning were defined by relatively higher volumes than the down candles were, as a sign of strong breadth, strong demand here in the internals in the market. So by reading some of the tape, I was talking with Westwater and Nick this morning, and I said to them, it looks like we actually may be able to turn back green here today. Does that change the big picture here for the S&P, for the NASDAQ, as we've recovered a good deal of these losses? Quite frankly, no. And that's frustrating to suggest here, and perhaps I'm cutting myself short because we do have another 49 minutes to go, Josh. But the big picture for the S&P 500 right now is that we remain in a multi-month range. We are continuing to trade sideways between 57.75 and 61.75. And as my friend and colleague Ilya likes to say, if you've been short from near the highs, north of 61.50, if you've been long from near the lows, near 5,800 or so, what are you doing here? Not much. You're still in the money. So you're stuck in the middle of a range. What can you do? You actually find this price action to be rather unappealing. But it's the scope and scale of today's reaction that, as someone who's still holding the long 61.50, short 6,300 call spread of 2024. Oh, it looks like Westwood has joined us.
Power hour.
Yes, hello. Sorry about that.
We noted that there's a base effect
we have some
period
feedback
right now in the CPI data that's kind of been haunting the figures as you.
Do we have Thomas here?
Can you hear me?
Yes, now we can. Excellent. Thomas, I'm glad that you joined us here. We were just talking about how the equity market bounce here today, it leaves things relatively in a similar position to where we've been the last few days, hovering right around 60.80, 60.90. But if the market, or at least if you as a trader today were thinking this CPI report was going to be the death knell for equities here, it's quite the reversal intraday. That kind of leaves you scratching your head a little bit. If we just survive this, what is going to bring us down?
Yeah, I mean, that's a good point. There's a lot of resiliency. We already see that big wick on the candle, shows a lot of buying down there. So traders were pretty, incentivized to scoop this up. I almost did a little scoopy this morning. Regret pulling the trigger when I was talking to you this morning, but Silver position's carrying me a little bit today, so that's fine.
In terms of the CPI data, the biggest contribution was the transportation services. And that was also the biggest contributor at the start of last year when we had that outlier January report. Now, we can't really see it here in ESH5, but if we go back to the continuous ES contract and we look back to the start of last year in February, when we had that big data dump on the 13th, it was a setback for the market. I'm actually just going to pull this vertical line right here. It was a setback for the market. It wasn't the end of the bull run to the upside. I mean, market participants sorted through the data and said, how much is this going to really impact broader inflation moving forward? Transportation services, the kind of thing that we should hang our hat on, is saying, nope, the rally's done. It wasn't at that time. So today's intraday reaction almost seems like it's informed by history. If CPI is going up for that reason, it hasn't been a reason to derail bulls before, so why should it be now?
Yeah, I mean, that's a good point. I think as long as economic growth is continuing or expected to continue, it's not going to be like the same thing we see in the European equity markets where growth is kind of, or you're seeing that stagflation in some areas of Europe and a lot less appetite for equities over there. So I think, this speaks to an economic story as well. The market's not only concerned on inflation right now. 3%, it's higher, it's above estimates, but is it going to derail the cutting? It could push it back a little bit. It could cause bond yields to rise a little bit. But unless there's, something in there that just is cataclysmic or something that signals that economic growth is going to slow a lot, I think we're going to continue higher.
And it's not exactly the kind of report that suggests economic growth is slowing right now in the short term. We've looked at the GDP trackers from both the Atlanta Fed and the New York Fed Nowcast. I prefer the Atlanta Fed because they've been a little bit more accurate in the post-COVID years than really any of the other regional Fed banks in terms of producing GDP estimates. But we're still talking about something that if you blend them all together between 2 and 3% right now. We're just getting to the halfway mark of the first quarter and the data are just coming out, but the momentum from last year remains. And so while the S&P is fighting back here to close its gap from the CPI release, the NASDAQ already has. NASDAQ is now up by 0.1% on the day. It would hit a low of 21,510. We're currently at 21,807 here. This tilt in the moving averages persists. The slope is getting a little bit more positive day by day. Momentum is building. We're getting back towards overbought in stochastics, which is just a wonderful thing to see. If you think that we're heading into a sustained breakout period, that was ultimately one of the features of the market during these strong runs throughout points of last year. You could see it in December. We stayed basically overbought for the first half of the month before, well, the Fed came through and rained on the parade. But Thomas, I mean, if we were trading at 21,500 right now, we would be having a different tone of a conversation, to be clear. It would be, okay, so the chop is going to remain. Seasonality says chop's here until March 15th. Let's not get ahead of our skis. Is anything broken? No. So I'm going to hold on to these calls, but I'm probably going to have to roll them at a small loss. Now I'm feeling a little bit more like this is another week where we have bad news. We cover a gap. The gap closes are getting faster. If we're surviving all these body blows, what is it going to take down the market? Is it just recession?
That is a good question. I mean, I think the big concern was tariffs. That's kind of subsided a little bit. So I think the biggest headwind was already removed. I'm going to go back to what I said a few moments ago. If we get a signal that economic growth is contracting or slowing at a large pace, then I think we'd see a reaction in the equity markets. But this just tells me, every time there's bad news and it gets bought like this, why not continue to do that the next few times it occurs at least? I want to say, I'm not sure if it was the NFPs last week or another event from last week where I wanted to buy the dip as well. I didn't do it. So I got to start, having a little more conviction, aligning myself a little bit more with the price action in the market in the early trading hours. So I'll be looking at making those kind of plays going forward.
The one thing that is really struggling here today, relatively speaking, it is off the lows, but the interest rate sensitive Russell 2000 is off by 0.82% still. And perhaps the signal in recent days was we were failing to get through 2337, so a good opportunity to get short. I was waiting for the long, so I thankfully not in a position here that's underwater right now. The conditions were never met. We never cleared the January 22nd high. But if rates are going to be staying up for a little while longer, right, the whole idea is that the Russell is more rate sensitive because it has floating rate debt. For the companies that make up those, the Russell 2000 companies, they have more floating rate debt on their balance sheets. And so as rates stay up and they have to refinance, they're refinancing at higher rates, and those rates are adjusting to higher levels. And so they have smaller moats. If there's an economic downturn, they're already operating from a weaker standing, if you will, financially. This consolidation persists. This is not a consolidation I think that's really worth playing, though, because despite today's big move in reversal, where on earth are you getting the volatility? 12.9 IVR? What a change of pace from a year ago, right? When the IVRs in the Russell were double, triple what you were seeing in ES or NQ. And I mean that if the IVR in ES was like 15, the IVR in the Russell was like 45. That's not the case right now. So considering it's the most rate sensitive and rates are struggling a lot today, and you're seeing those Fed cut odds pushed off the board, the NASDAQ, once again, is looking like the healthiest and the most resilient and the most durable because it can withstand a higher for longer environment. And we saw that in 23 and we saw that in 2024. And if higher for longer is going to be here, even if the Fed doesn't start hiking again, then those mega cap tech stocks, they have the moats that the smaller cap Russell companies do not.
Yeah, and I mean, a lot of the spending where money is going in the tech sector is chips, data centers, things like that. Investors have already said they're going to continue to spend. And I don't think that spending is really going to be affected by treasury yields, at least not as much as it is for smaller cap companies that are, like you said, holding more floating rate balances and things like that. So I think that kind of speaks to, they're getting their funding from also private sources as well, private investments, a lot of those data centers, AI, things like that. So I think if you're looking at rates and trading the market, you see a big spike in yields, all else equal, that's of course bad for the market. But the fact that the NASDAQ has swallowed this easily and has done for the past couple of years, just speaks to when this happens, that's probably the play you want to go with on the dip, is buying the NASDAQ.
We've seen volatility come off the board here. VIX 1D is on pace for its lowest close of the week. We can go to the VIX itself. Since going back to yesterday, we're now looking at, we put in a low relative for the last 24 hours. Let's go back to the 15-minute chart there just to make sure we're not making any sorts of outrageous claims. No outrageous claims here. We did hit the swing low from the 7th in the VIX today, although we're definitely not doing technical analysis on the VIX. That's should be against the law if it's not already. Call your local congressman. Don't do technical analysis on the VIX. Either way, though, back to a 16 handle, right? This burst above 17 today. So volatility here shrugged off as well. This is not like a market reaction where you see low trading volumes over the course of the day and the market flowed higher and volatility staying pinned up. You're actually seeing healthy trading volumes. We go to ES, 1.09 million. Not bad for 1 p.m. on a Wednesday here in February. So trading volumes are there. The up candles are having higher volume than the down candles, and volatility's come back in. The end of day options, if we're talking about the 0 DTEs, we're talking about 12 points in either direction, right? If we're looking at the money call and put, maybe we're just over it, Thomas. And hey, guess what? If you're worried about inflation, what's the number one long-term hedge for inflation? The single thing that you could do to protect your wealth: own stocks. Owning stocks and owning real estate are the best long-term inflation hedges. So if you think prices are going up, do we really think American companies are going to let those margins subside, or do you think they're going to pass the prices on to consumers as they did in 2022? 2022 was rough, but there's a reason why the equity markets are at all-time highs and earnings are increasing the way that they are. Our pain on the micro level, Thomas, is the macro level's gain, if you will. So these companies, hey, inflation, that's your hedge, stocks and real estate.
Yeah, why not pass the cost on if the consumers are still relatively resilient?
Yeah, why not? They can handle it. We're fine. Right? What's another 20% increase in grocery prices? Which I think, Thomas, you would have found enjoyable. We did look at the cost of our eggs. And as a fellow egg man, maybe we should be selling more eggs. Let's talk about bonds here today, though. We did have a 10-year note auction at the top of the hour. ZN got hit fairly hard on that CPI report today. That 0.5% month-over-month increase, again, it wasn't on the radar. We talk about 70-odd economists being pulled by Bloomberg. Not a single one anticipated inflation being this high. We likewise see that big step down when we think about those Fed rate cut odds through the end of this year in the SR3Z5 contract. That's half a rate cut eliminated right off the bat. Fed funds rate at 4% is equivalent to 96 in this contract. So by dropping down to 95.88, you are effectively pushing half a rate cut off the board for this year. And what does that leave us with? Only one priced in, because the cadence was we get the first cut in September and then another one in March. So now it's December for the first one. All right, that's not great. The 10-year note auction, we tailed again, 0.9 basis points. It looks like the bid to cover ratio was 2.48, which is lower than the 5-year average. Let me just confirm that here. Yeah. Lower than the 5-year average of 2.54. Okay, sorry about that delay, folks. That does matter, right? We've seen now with the 3 years yesterday, with the 10 years today, people aren't willing to hold on to the fixed income. You don't want to see an auction tail. You want to see it stop through. And if you are wondering about how you should be reading, how to read the Treasury auction, my brain's in all sorts of places here. We have an explainer on this on the website. Go to tastylive.com or just Google ChatGPT how to read a Treasury bond auction here. We work through the specifics, but the things that you will read on this page that are bad about what happens at an auction, low bid to cover ratio, and an auction that is tailing, that's what happened here each of the past 2 days. Now, there's a 30-year bond auction tomorrow. In light of the fact that inflation is a little bit stickier, investors seem to be demanding a little bit more compensation for holding that fixed income. So where does this lead us, Thomas? The long ZN calls that I had today, those are going to be kaput. The short ZB put spread, on the other hand, that's still very viable. And I say that's still very viable here, despite being off the highs by almost 4 full points, is because it's a short put spread in the 108-110. And to get back down to the lows where we were when we were just dipping below 111, we were priced in for one Fed cut through the end of next year, not just this year, through the end of next year. And we were talking about a world where the market was discounting 25% tariffs across the board. I'm under the impression, and the market seems to be under the impression, that tariffs are being trotted out as something real, but also a negotiating tool. So to embrace a mindset like 25% are coming across the board in full, that is going to probably take a little bit of hand-wringing, elbowing, if you will, by the Trump administration, thanks to this boy who cried wolf phenomenon that they've created. I'm comfortable holding it right now. The ZN calls, those are going to be a loser. But bonds here, the inverse head and shoulders pattern, we joke it's too good to be true. Turns out it was, Mr. Westwater. Turns out it was.
Yeah, and it's important to note that, the auction performed poorly after yields spiked. So that's a sign that investors, at least bond investors, are more concerned about inflation than they are about the immediate reaction to the CPI report. So even though yields spiked before the auction, it still did poorly. So like you said, they're demanding even more than what we got today. So, that could be an indication that inflation expectations have now increased a bit over what we're currently seeing for the future versus now.
If we want to hold ourselves to account here, this was mishandled. Last week on the 7th, on Friday, you get this big bearish engulfing bar. We see it moves above the Thursday high. We close below the Thursday low. That is a key reversal after a rally. That, if you were being purely technical about this and not residing on, well, let's see what happens with these cut odds in the CPI report, this would have been, you know what? This was a nice little accumulation for a long. That may have been it. We should have gotten out, right? A pure technical trader would have been long on the breakout. They would have seen this and said, this just isn't coming together the way I thought it was. Return to the neckline. Likewise, that was the line in the sand today. This is decimation. We're back to a place. The point is that it doesn't look like that long deltas are appropriate. And quite frankly, if the technical momentum is this deeply negative, is a 24.4 IVR all that alluring for a contract as big as ZB? I don't think so. So if I didn't have fresh capital, if I was deploying fresh capital here today and incrementally, okay, I can do XYZ or something in notes or bonds. Notes and bonds are at the bottom of the totem pole, 6.3 IVR. That's juice ain't worth the squeeze if this is a falling knife. So looking to sell a put spread down here, just not yet. Let's see a green candle.
Yeah, I'm not sure. We were talking last week about as the bottom in for bonds. It's a lot easier to say that it was last week. I'm not sure if we'll get back down there. I mean, selling a put spread, something like that, even buying a call spread is something I'm probably really interested to do right now in the bonds. Probably want to wait a little bit after such a big move, just a little consolidation or something like that. I usually don't get into bonds, but I'm really enticed right here.
Well, I wish I wasn't into bonds. And just when I thought this 4-month streak of operating on the long delta side with just repeatedly getting punched in the face would end, actually, the ZB put spread is still in the money. Just, I don't like seeing it go down. But something to live with as a trader. Something that is nice here is this move in silver. Thomas, you mentioned that silver is helping you today. Silver here is outperforming gold, changing leadership a little bit. What a nice little rebound. This is just kind of picture perfect clean. You have this area right around 3180, 3185. Former resistance. We've seen this several times. Support in November, resistance in November. We break out, we return back below it. Ceiling. Now the floor. Yesterday, where do we rebound from? The 1-month moving average and this pivot zone. And now we're back on the up and up. Thomas, are you feeling as good about silver as I am?
Yeah, I sold a put spread yesterday, 42 days out with the short strike at 32. So I'm feeling really good about that trade right now. I could almost take it off right now up 100 for a quick win. I'm going to let it ride a little bit more. I'd really like to see that February swing high around 33.20 break. I think we can get a run if we go over that. Otherwise, I'll definitely let this play out for a couple days, reassess probably on Friday unless we get a big move tomorrow. And yeah, it's kind of saving my portfolio today. That and the hoggies. So
yeah, last week you decided to short silver, and then it went down, and then today or yesterday, we're looking to get long silver. Now it's going back up. So I've learned my lesson, right? I was deeply upset with you on Monday. I said you were GIF, like, what did you do? Why did you do this to me, Thomas? It was long silver. And just shows the power. One person can totally change this market. Jokes aside, this is a nice rebound at a place where you would want to see that kind of rebound, technically speaking. So out in the SI K5 contract, where we're operating, looking at that long 33, short 33.5 call spread. It's 42 days to expiration. It's moving up a little bit more today. This looks like it has a chance to run back to the swing high that we have on December 12th with the ample time. And given the fact that vol is also bumping up here, that's really the encouraging thing. We've seen vol expand from the teens now up into the 30s, 40s as prices are moving up. That's the hallmark for gold and silver, seeing sustained strength and resiliency, which is absolutely how I would characterize gold today as someone who's still holding on to long deltas. Only because what have we done? We've made a significant move off the low of 2886.50. We find ourselves back above that 1 week moving average. Firmly in breakout territory, and vol, again, in the breakout from the triangle, all vol has done is creep higher. So the tenets of a market that may still want upside remains. I am very comfortable being long gold and silver right now, and the resiliency today is nothing that should be ignored.
Yeah, I should have bought that gold dip this morning. The reason I didn't is I already had the silver position on, trying to get away from that correlation a little bit there. But gold's a really nice play right here. That candle is beautiful. Buyers stepped right in, right off the Monday lows, so that's nice.
Again, thinking about what happened in the S&P 500 last year on February 13th. February 13th, we actually need to go back a little bit more to get that candle fully on the screen. February 13th is right here for gold prices. So much like last year, when we had that very warm January inflation report, and when you look into the numbers, it's basically all car insurance. You look in today's numbers, it's car insurance, transportation services, right? Just the visual here, so people just don't think I'm saying that. This is the orange bar is transportation services. This is the January report last year. Okay, big orange bars to start the year. The market wasn't freaking out about sticky super core inflation because it was from this odd category. We reacted negatively the day of. We ultimately shrug it off and continue to march higher. So metals here, the weakness comes in. We seem to have learned our lesson faster, because last year we then spent one more day lower, Valentine's Day, and then, quite frankly, if you bought right after that hot CPI report last January in gold, you got in at long $2,000 an ounce. You're up basically 50% in your position since then if you've just been long gold and rolling it. I don't think this is the inflation report that should be worrying us. The dip today may have been the dip, and the weakness we've seen over the past 48 hours may have been the turn before we start our next leg up. So I'm fully confident, comfortable right now looking at this particular setup and thinking about the GC long 29.50, short 3,000 call spread. No reason to get off this train right now.
So, Chris, when you say transportation services, you're talking things like public transportation, private transportation. Is that things? Does it include like Uber and Lyft? Are they tracking that? Do you know?
That's a very good question. Do they track Uber and Lyft? I will get that answer for you. Private transportation is included. Yes, private transportation is included.
Yeah, so I mean that has to be like Uber and Lyft because that's all anyone does. At least, I mean, around Chicago nowadays. I know New York City too still has a lot of cabs, but Uber is pretty much everywhere now.
Yeah, I'm trying to find the exact. Every time I try to find the exact source, it's sending me just right to the BLS page, even though it's directly linked there. I would like to go directly to this data set, but maybe it's offline right now.
The government.
Well, this is in this government now. Yes. The month-to-month change in US CPI for transportation. Yeah, it says link to BLS, and every link I'm clicking onto is just. I'll find that for later. I am curious myself if Uber and Lyft are included in that, but private transportation would be, and not for nothing. The country's largest urban area, New York City, just put in congestion pricing. I want to really dig through the CPI data today to see how much of this transportation services is a country nationwide thing. Maybe it's not. But either way, the price action, that's what we're focused on, not conspiracies about congestion pricing raising inflation here. Well, I am, but we'll leave that off the show. We're speed running the reaction to the same thing from last year, right? There's a dip in the market in equities and metals after the hot figure. Why is it hot? Not exactly for the reason that really worries you. we rebound within a day. Today, we're rebounding already. S&P here, by the way, 60.75. NASDAQ is 21,798. That's still up in positive territory. So, Thomas, we're going to stay long gold and silver here. Copper is something that I was in and out and didn't get back in yesterday, regrettably. Although I could always get back in here. We did bounce off the 1 week moving average in yesterday's session. So perhaps this is now an attempt to carve our way through this 470, 475 area. Market found a peak in September of last year up at $4.80 a pound. How do you feel about copper? I know that you said you've been bullish in the past, and it's given me the confidence as my commodities quant to go do so myself. You still think that copper has more gains ahead?
Yeah, I think so. If you look at some spreads in the market between the U.S. and London, that spread is widening a lot. So copper inventories in the U.S. being drawn down. But you have to look at tariffs too. Trump, he said some things that are potentially conflicting, and until we get a very clear, those actions actually taken. So for right now, I think the market's running on a little bit uncertainty right here. Yesterday, the move surprised me, a very volatile day, erased Monday's entire move, but we're still seeing a lot of buyers come in. We've broken out to technical levels. We're about to challenge the October, or I believe that's the September high from 2024. So if we could get over that, establish a base, I think that sets us up for a really continuation of the bullish run we've seen since pretty much right at the start of the year. So copper is looking at having a really good year this year. China taking a measured approach and retaliating against these tariffs. So that's also good for copper as the world's biggest consumer. We could look at things like dollar weakness. Is that going to come in and help? Overall, I'm pretty bullish. I don't usually trade copper too much. I do sometimes. It's a big product, so I usually do a defined risk strategy. If I'm doing it, I usually don't do anything else. I'll never go long or short a future. It's just really big. But yeah, yesterday would have been a really good time, obviously, to do something like selling a put spread or getting probably long a call spread with the volatility where it's at. I'd expect some consolidation here after a big move up last week. I think Friday we pushed through that level. Looks like we can be consolidating around this 4.7 level. I don't think I want to get on the short side here, but I'm not getting long just yet. So if we get back towards 4.6, I'd probably pull the trigger on that.
That's what I was waiting for yesterday, to see that maybe, despite the rebound, we could get a smaller dip into the area where the highs were carved out in November. And, it's 450, 455, somewhere down there. And we got close. I didn't do it when it was down there. I figured maybe today we'd try to test again. Unfortunately not. Two things. One, as noted yesterday, check out CPER. If you're looking for the Ivy rank, there's a follow-through problem for the HG IBR right now. So this is the commodity index tracking fund for copper itself. It's a 45.8 IBR, right? That's actually pretty decent. It's certainly better than what you're looking at in ZN, as it were. You mentioned that copper is a big contract. It's kind of like gold. It's actually a bigger tick value than gold. Copper moves $12.50 per tick, whereas gold is $10. You can always go over to the micro. Micro copper MHG is a $1.25 tick value. There's not listed options, so that is the other side of it. But if you wanted to be directional on copper, you had a very strong feeling, and you think that HG itself is too large, you could always go to MHG, which, it's like MCL or MGC. It serves its purpose, right? It can serve its purpose. Now, if you thought copper is going to be range bound, unfortunately, there are no listed options for MHG, as just noted. So doing something like a short iron condor wouldn't be applicable in that scenario. And you might have to take the dive into HG itself. But Thomas, if the metals are brushing off the weak hands today, silver rallying, gold rallying, copper rallying, crude oil's not. We see here that there's a headline this morning, a tweet, a truth, I don't know what we're calling them these days anymore, from President Trump that ultimately he had a very productive conversation with Russian President Vladimir Putin. They agree that there needs to be some common sense measures to stop the war in Ukraine. Millions of people have died, displaced, and so let's just cut it off. We do see that there was a prisoner exchange last night. Mark Vogel, a U.S. teacher who was arrested over there, he was brought home. There was a Russian Bitcoin exchange operator who apparently was involved in money laundering, was released in exchange. So in any event, we talk about a potential negotiation ceasefire window. Maybe energy supplies are not going to be so throttled moving forward. Thomas, I have a very difficult time looking at oil, as I've been kvetching about for the past several weeks. Where's the vol? It's now a negative 1.2 IVR. Should we forget about looking to collect premium here and just be buying vol instead, like we were looking at in December, like a reverse iron condor or a reverse iron fly? I mean, how do you play this? Scratching.
Yeah, I mean, you kind of have to, right? There's no vol, so if you're trying to sell a put or call spread, you're just not getting a lot of bang for your buck. So yeah, negative IVR rank that's showing volatility is highly subdued compared to the past 12 months of trading. When you look at the actual volatility, it's not that great either. See, I was going through the other day trying to structure some trades to get premium. There's really nothing too exciting there, especially when you could put your money other places right now. But the prices, I think they're going to stay above 70. But the data we've gotten from the EIA, the API, things like that, it hasn't really been that good. It looks like stockpiles are building. You've got metrics like the prompt spread, which is the premium that the current month's contract holds over the next month's contract. That backwardation there is down to, I believe, 15 cents. Last time I checked, 17 cents right now, but that's all the way down from $1.59 just last month. So that entire prompt spread has been pretty much decimated. We're going towards the lows of November. Crack spreads, which is the refinery margin that refiners get, has actually been going up. So that may incentivize refiners to keep refining, keep their inputs going. That could help negate some of the effects of building inventories, things like that. So I don't know, it's a pretty mixed picture here. I think we're going to stay above 70 with crack spreads going up. Downstream activity is being pulled by that a little bit. But at the same time, like you said, geopolitical risk coming off. There's always the potential for that to come back at a moment's notice. Things could turn around in an instant on that front, but trying to trade off that prospect is really hard to do. You got to be really quick to see geopolitical headlines before the algos and things get to them, so it's almost impossible to do. I don't know. If there was premium in here, I would definitely be selling a short put spread around 70. But there's no premium, and I'm not too enticed by buying a long call spread either. So I'm just kind of leaving it be for now. My energy plays are more focused in natural gas right now.
Natural gas up by 0.97% today. Volatility starting to pull back here a little bit. The technical momentum's nice. You mentioned that you were thinking of getting out of your long positions to me earlier. Why do you feel that way? You did already. Okay. So why did you do that?
I'm taking a quick profit. I'm managing my winners. And that's what I like to do. Take money when you got a quick win. If I want to get back in, I could always get back in. So I think I got long natty gas either Friday or Monday, I want to say. And then, had a few days just up. Took a quick 110, 120, I believe. And, I was debating it a lot. I messaged you earlier. I was like, I'm thinking about taking my natty gas position off. Kind of said I'll wait for a little bit. I still had a bunch of time left in it, but I just figured I'll take the winner. Over the past couple of weeks, I've had a few winners that have gone into losses and haven't rebounded. So I've been, trying to change my strategy a little bit on that way. EI inventory numbers do come out tomorrow. Those are probably going to be good. We had a really cold January. We're below the top range of the 5-year average now. And the EIA, Europe's inventories are below 50% now, I want to say. So they've also had, the first cold winter in actually a few years where their inventories are getting snapped. And they started the year at 100%. So they were bolstered all the way up. It was a pretty good looking situation going into the winter for European natural gas. And then we get this really cold back half of December. We get a fairly cold January, and now it's looking like the end of February is also going to be another pretty cold one. So if you look at the premiums that, those Dutch TTF futures hold versus U.S. prices, that's been rising, and we're at the highest right now we've been since going back all the way to June 2023. So what that does is it opens up an arbitrage window, and that's when you see a lot more U.S. cargoes being rushed to get out into the Atlantic and go to Europe. And at the same time, the JKM pricing over in Asia, which is the de facto benchmark for Japan, Korea, those Asian countries, that premium is also pretty elevated, not as much as Europe's is, but it's elevated versus U.S. prices. So you get a lot of these cargo pulls coming out of the U.S. At the same time, we have a major snowstorm moving across the U.S. right now. The long-term forecast, and when I say long-term, I mean 2-3 weeks out, those are looking pretty cold. So it's a really good position for natty gas right now. And it's funny because just 2 weeks ago, we had this outlook for a warmer than expected February, and natty gas bulls were getting really, really on it. They were selling pretty heavy. And this just shows you the situation could flip pretty quickly in natty gas. And that's good for a trader because, of course, we want that volatility. We want those quick swings in price action. And we want to play those levels if we can. So I got out now. If we have a dip, I don't know if I'd buy on a Friday, but I'd probably wait till Monday and get back in. But I'm definitely more biased to the long side now, even though I'm not long anymore.
Yeah, so a few things here. You mentioned the temperature outlook. It's starting to set back in. This is roughly 65-70% of the country or so in terms of population. That's going to be looking at below or below average temperatures, these blue areas. You mentioned the inventory situation in Europe. Inventories are low right now. This is the third lowest level of inventories that we've seen since 2020. But perhaps interestingly enough, seeing how much of an issue this is, today, a report came out. EU countries are going to discuss relaxation of gas targets so that they don't need to refill their capacity back to the mandated 90% by November. And in theory, that would mean less demand, right? It would take some pressure off the demand side of the equation in the near term. And if that demand goes away, then, well, prices should come down a little bit. Maybe. Or maybe it means that there's more time for these companies and countries to find alternative sources, which U.S. natural gas is cheaper than its European counterpart right now. So maybe demand for U.S. natural gas is going to stay elevated while demand for this European benchmark that's elevated in the short term is going to stay depressed. So that spread closes as these inventories are refilled. I'm going to stay long the short put spread here. I'm going to stay short.
Yeah, I don't follow you for that. In Europe, as I was looking into it, their bylaws or whatever regulations that are within the EU countries, they're obligated to buy natural gas through the summer, regardless of the price. So I think this new thing they're trying to do is something called dynamic pricing, where it's going to give them more discretion in, say, if it's June, prices get really, really low. Try to buy as much as you can there. If prices get really, really high in July, you stop buying. Exactly. Now that could open you up to a problem if you aren't diligent in getting those tanks filled before the winter. But it is also economically advantageous to them because, of course, it's going to give them a better price on that natural gas. And they buy a lot through the summer to get those tanks filled because Europe doesn't produce its own endogenous, or they don't produce it within the country that much. So they're in a tight spot. part of that you could blame on the EU's energy policies over the past 20 years, which in my opinion have been absolutely horrendous, but that's another topic to discuss altogether.
That is. Yeah, I was actually tweeting about something similar a few days ago. If you think back to what the UK is going through, they had political leadership back in 2010, 2012 saying, like, it's not worth doing nuclear. This thing isn't going to be online until 2022 or 2024. It's like, okay, well, it's 2025 now, and where's the source of energy to fill that gap that you guys shut down? It doesn't exist.
Exactly. Yeah. Yeah.
Okay.
And,
right.
The UK does a lot of wind energy too, and they're in tough spots when the wind dies down. They do get, they're off a windy coast. It's pretty high most of the time, but when that wind energy falls a lot and it's cold, that's when you really see the prices in Europe spike, because not only is their energy production going down from their wind, but the energy consumption is going up at the same time.
Thomas, lots of vol in the currency space still. IVRs that are 40s, 50s, 60s, 70s here. The dollar reverses hard today. Now, dollar index lower on today's session. Not tremendously, but this is a big reversal. We see here that the pound, the Canadian dollar, the euro, all positive, even the Mexican peso. It's that rate-sensitive Japanese yen that struggles the most and is back to its breakout point near 0064.75, 0065. I had not been able to get filled on any long yen exposure, so perhaps this 150 pip setback, if you will, 150 point setback in 6J is a gift to try to reestablish. I know that's what I'm doing as well, so hopefully we get filled. Thomas, what's next on the calendar? Tomorrow, it is a very, very busy day. So busy that we couldn't highlight them all. Go over to the parent company's website, check it out. Check out the macro calendar. Look for all the medium-ranked events as well. But the big ones in Europe, GDP out of the UK, and then PPI here in the US. PPI perhaps carries a bit more weight after today's inflation reading. At the end of every one of these shows, we do a brief bit of education. We're running up against the clock, so we're not going to go over. I would encourage everyone to go to tastylive.com, top banner, learn beginner futures, or just click the link here on the bottom of the slide. It would take you there directly after the show. Learn about all the various aspects of trading futures. They are a cost-efficient way to help express your views, and they offer trading nearly around the clock, which is my favorite aspect. Understanding the mechanics of the contracts, very, very important. So go check it out, tastylive.com, top banner, learn beginner futures, or the link here. But Thomas, you and I are done and dusted. We have Truth or Skepticism coming up next. Dylan Radigan, Tom Sosnoff at the top of the hour. Everyone should stick around after a brief break. They'll be back.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. There's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, everybody. We are back. It's that time again, Mr. Radigan. It's truth or skepticism. We were just talking a little bit about the past. Now we're going to go into the future. Enough with the historical, into the implied. Bada bing. Let's do it.
So here's my issue. I'm feeling very skeptical. First, let me just say I'm feeling more skepticism than truth than I felt in a long time. And my skepticism comes from two words. Two words have been really stuck in my beak.
Okay.
Jammed in my craw, if you will.
Okay.
Yeah. One of those words, I'll give you an there's one of those words is intelligence.
Oh, okay. I can work with that.
And then the other word is corruption. Because I've been hearing a lot of talk.
That's a little like truth or skepticism, but that's
intelligence or corruption. It might be our spinoff.
Yeah. It's a spinoff.
Yeah, spinoff. So intelligence and corruption are the two words that have been bouncing around in my brain. And because there's a lot of talk about intelligence these days. Okay, and who's smart and who's not smart, and who knows and who doesn't know, and do the robots know? And
are you going to tell me that there's a thin line, and the thin line is getting caught between intelligence and corruption? The only difference is that one gets caught and the other one doesn't.
That hasn't occurred to me. That actually didn't occur to me, but yes, that is also true. Actually, we can. Okay. You could feel free to bring that up later in the discussion.
Okay.
You got your intelligence and you got your corruption.
Okay.
And you got a lot of people with a lot of power in the private sector, in the public sector,
okay,
talking a lot about intelligence and talking a lot about corruption.
Okay.
And they say, "Oh, this is the greatest form of, and this is an intelligent market. It's an artificial intelligence. We have an intelligent design for our automobile. It's a smart car. It's all this intelligence."
We have such a thing as smart water. You know, if you drink water, you get smarter. It says smart water on the outside.
Mike, add it to my list, submit it in discovery to evidence. There it is.
Okay.
Put it on the list. And on the other hand, you have a lot of corruption talk.
Okay.
The corruption, they're paying off, it's nothing, the valuation, the government, the USAID, whatever it is.
Sure.
Corruption.
Yeah.
And obviously there's in reality, whatever that means, through my subjectivity, granted, there is intelligence. There's things that I say, oh, that's intelligent, that's smart. I look at it, or I defer to people. I'm like, oh, well, this person is a domain expert in some subject. I listen. I'm like, oh, I could probably learn something from this person who knows this intelligent thing about something.
Okay.
And I also have a point of view on what I think is corruption. Whatever that may be, right? Fraud,
okay.
Rip off, a scam, whatever.
Okay.
And you and everybody else, I'm sure if I walked through 300 million Americans and I said, can you tell me, define intelligence or give me an example of something intelligent, most people could give me some example. And if I said, define corruption, give me an example of corruption, most people could also, again, give me an example.
Okay.
But my issue is that I feel like your example of intelligence or my example of intelligence or whoever, the next 300 million people's example of either one, they tend to vary. In fact, they vary significantly. So what you think is intelligent is not necessarily what I think is intelligent, or what you think is corrupt is not necessarily what I think is corrupt, or what you think is smart. You get my point. You see where I'm going.
Yes.
And so my question is, who decides? Who is to decide? So because what I'm really, when you start to consolidate, and the president of the United States or the head investigator for the attorney general's office in New York or whoever the arbiter is, and they say this is corrupt, or the shareholder meeting for whatever, and we're raising $1 bajillion million, and we say it's because of the intelligent design. Aren't we getting ourselves into trouble when we collectively, when we get into groupthink, basically, and we say, oh, well, this isn't the groupthink applies its obedience to your definition of intelligence, or the obvious would be Sam Altman's definition of it, or the other AI companies. That would be the most obvious, but there's all these layers, right? Or what's a smart car? What's smart water? Or similarly, aren't we getting into the same issue when I take a singular authority's definition of corruption? I just feel like there's room for a lot of abuse and problems and misallocation of resources and I feel like there's a lot of risk developing through the consolidation of the point of view as to what is risk and what is corrupt. Because I think it's risky, and it's making me uncomfortable.
Okay, so I'm not 100% sure that I'm following you, but I think what is intelligent is something that is, I don't know if we can define that. I think that's pretty subjective, and it should be pretty subjective. I have met incredibly intelligent people that are incapable of carrying a conversation, incapable of running a business, incapable of doing really anything. And then I've met in insanely competent people that I don't feel are that intelligent, but they're just they're able to visualize things, and they're able to get things done. And so are they intelligent? Sure. Different kind of intelligence. I don't think intelligence is measured by IQ necessarily. So I think intelligence is much more subjective. I think corruption is less subjective because we have laws. I mean, you can't just say something is corrupt. Sure, I shouldn't say you can't. You can say anything you want.
That's my whole point. But my point is, you'll throw both of these words around like it's like just because I paid too much for my tuna sandwich at the coffee shop, I'm like, oh, this is a corrupt operation. They're charging $10 for bananas.
Sure. Well, I'm not sure that they forced you to buy that tuna sandwich, but sure. I understand that. I'm not sure that that's truly the definition of corruption.
I don't think it is, but my point is, obviously for me, it's obviously not. My point is, it gets used, that we're allowing the use of the word corruption and intelligence in a way that is making both words meaningless.
Because I think people are using the term corruption. It's become a very popular term recently. It's never been a popular term in the U.S. as far as politics goes, because it just has never had a home here, because we actually have, the rule of law, and we have it's pretty well defined. But I think that people have used it to kind of make a case, because it's such a crappy word that you can say something is corrupt without having to actually prove that it's corrupt. I mean, anybody can say, I can say Dylan Radigan is corrupt. Okay, what the hell does that mean? Like who? Tom Sosnoff is corrupt. Tasty is corrupt.
Illinois is corrupt.
Illinois is corrupt. I mean, what the hell does that mean? It doesn't. I don't even know what that means. Like, it's so ridiculous. So I'm not sure why.
But don't you think it's more common than ever? I just feel like it's become a plague of these words upon our lives.
Well, it's become, the reason it's more common than ever is it's become a rallying cry of the current, it's become a rallying cry to justify what's currently going on, with this new administration. It's basically, we're getting rid of the corruption is a very easy way to explain why they're basically cutting a lot of anything that they can cut, they're cutting. And the answer to every question is, we're getting rid of the corruption. And so it's a great way you can repeat it. So every yin yang in the world can say, well, when you question, 2 million kids are going to starve to death. Well, we got rid of the corruption. We'll rebuild it some other way, like that kind of thing. I don't.
But you don't think intelligence is being degraded in the same way that corruption is, where everything's intelligent and everything is smart and all this jazz?
Well, the one thing I would say is that one thing people have to realize about artificial intelligence, which is what's on, the top of the
front of the paper,
is that artificial intelligence, the biggest challenge we have with artificial intelligence, and anybody that works in the area of artificial intelligence will tell you, the biggest challenge is that it's not that AI doesn't have the potential to be intelligent. It's that AI doesn't know the difference from, can't separate the difference from right or wrong. Like, so AI can think it's being intelligent because it's been fed so much information that it can spit out a lot of information, and you have to figure out, because it's not perfect. AI is very imperfect, and you have to figure out what is right, what is intelligent, and what it just spits out that's wrong. And the biggest challenge, and what scares people the most about AI, is the amount of mistakes that it makes, because its ability to be kind of it's impossible for it to be perfect, and the cost of getting it close to perfect is still a little outrageous. So it is less than perfect, and sorting through those imperfections is what makes AI, so dangerous sometimes. I mean, could it be a huge help? Sure, of course. Nobody's arguing that. But AI is not perfect, and it makes a lot of mistakes. And how do you eliminate those mistakes? That's what everybody's challenged with right now. So, and I think that, using the term intelligence, that's a very dangerous term, especially. Bingo. It depends how you apply it. If you apply it in politics, it's incredibly dangerous, because you have some politicians that are that I would argue that are incredibly dull in an IQ sense, and then you have people that are not elected politicians that are making comments, statements, and whatever, and people that are a little bit on the dull side are trying to, are trying to validate those other things. It's a little bit scary. Like the example I gave before.
Now you're talking my language. Now you see why I'm nervous. I couldn't sleep last night trying to.
Well, I was when we were preparing for the show today, I gave Josh an example of an example of what I was, how you can interpret this different ways. Like yesterday, there was a photo op where you had Elon Musk standing behind Trump or standing next to Trump.
Yeah,
you saw it with his son on his head, whatever. Yeah. Now, if you just go backwards a little bit, okay, just go back a year and imagine George Soros standing behind Joe Biden with a grandkid picking his nose there, you would have had World War III. Like what the hell is going on? That would not have been considered intelligent. That was not an exercise in intelligence if that was the case, a year ago. But yet all of a sudden, when somebody else that's clearly
is running
an
aligned billionaire in the administrative office in public,
then all of a sudden that's the new definition of intelligence? I don't think so. So I think we have to be super careful here of how much credit or how much validation we give to certain things. I mean, when it's exposed, that intelligence is a high school graduate that's running, the department.
You're talking about big balls?
Yeah. I'm just saying, but when that's what you find out, you're like, that's not really. I'm trying to think of what the there's so many good comedic examples, but But the thing that comes to mind, top of mind for me, is everything always goes back to Seinfeld, but there's an old Seinfeld reference where Kramer was, I don't know if you saw this one, but Kramer was learning karate and he was winning left and right every single time. And then they found out that he was fighting 8-year-olds, so they're like,
and he's like prancing around like a rooster, like Mr. Big.
Right. And so, so yes, he's a great fighter, but he's beating 8-year-olds, okay, that are a third of his size. And it's almost like the same thing here. We're experiencing it in real time. We're sitting here and, we're impressing the 8-year-olds. Let's put it that way. So I understand the discussion of intelligence and corruption. I think
I'm just talking about the broader thought. Sorry to interrupt you. Is when you overuse a word, any word, efficiency, beauty, evil, whatever, that the word loses all meaning because its utilization is so broad, that it becomes a meaningless statement.
Yeah.
What is, and I feel like we're because of the excessive use of both words, that they're being used as political or marketing words, basically, either a marketing word or a political organizing tool. And in the process are losing all meaning. And people can say, oh, well, it's just a word, who cares? But when words lose meaning, then the ability to communicate becomes degraded, and then the integrity, which is our favorite word, whether it's the integrity of the financial markets, the integrity of the government, the integrity of the data, the integrity of the dollar, blah blah blah, that integrity is protected by the validity of words. And if words lose their meaning, then integrity is at risk. That's what I guess the thought that I was having.
I agree with you, and I also think that we have to be careful because intelligence and the misuse of the term intelligence, the misuse of the term corruption, you have to realize that the world is a better place, not necessarily because there's waste, but because there's culture, because there's fairness, because there is compassion, because people that the haves have to give something back to the have-nots. And anytime you have the haves who decide to cut out the have-nots altogether, that's when everything breaks apart. That's the let them eat cake
And the logic of cutting out whoever the other, whatever the other may be, is, well, that's the intelligent thing to do because that process is corrupt, right? Intelligence and corruption are the two foundational words that are justifying all sorts of resource allocation.
It's spending money on culture is not a waste. That's our history. Spending money to make sure the world's a better place is not a waste. Spending money on a gold-plated toilet seat is a waste. All right, but spending money to make sure that people can eat, that we can learn, that we that we are basically incubating the next generation of smart people. And that culturally, we're not just void of any culture whatsoever. These are all super important things that work to build our ecosystem, that make us what we are. And we have to be very careful that we don't strip that all out just for the benefit of trying to say, hey, we don't need to strip all that out just to justify a tax cut or something like that.
But the interesting thing where you're, and I don't disagree with where you're sort of bumping up against this, the manipulation or degradation of the words intelligence and corruption. But where you're going to is whether something is deemed to be intelligent or corrupt is secondary, or at least is adjacent. I don't know if it's secondary, but it probably is secondary to whether something is right or wrong. Like, you're basically saying there's a moral compass, and that just because something is just because something is intelligent doesn't mean it's not illegal. Or I could say it's intelligent to steal your credit card number, and not it's more why work when I can steal everybody's credit card number and have more money than I would ever make working.
Well,
that's intelligent.
I'll give you a better example. You take somebody that professes to make a ton of money. Listen, I make $1 billion a year, somebody like that. And yet I don't pay any taxes. Or I own this company and the company makes $10 billion a year, but we don't pay any taxes. That just is an example.
And that's intelligent. That's an example of intelligence.
Yeah. It's an example of intelligence, not ethical responsibility.
And so I guess the point that you're making, which I don't disagree with, which is that you can use the words intelligence and corruption to justify things that are immoral. To say it most very simply.
Yeah.
I can claim that I'm being intelligent, or I can claim that you're being corrupt, whoever the third counterparty is, in order to justify any moral position that I want. Yeah. Or whatever moral position is convenient for me in that moment.
Yeah. Yeah, and that's that's dangerous, and that's what makes things unfair, and that's what challenges convention, and that is when society gets dangerous, it's combustible. And that's the scary thing. And again, I want to go back and just emphasize on this AI stuff, because I think people get confused thinking that AI is going to, solve everything. And it's not, because it can't be trusted 100%. We're never going to get there. And you can't blame it. So, because it's not.
But do you think we're going to get to a world? Have you met anybody yet who generally who's making decisions where they're like, oh, I don't know who to go on a date with, or I don't know what clothing to wear, personal decisions? Have you met anybody that uses artificial intelligence that they're like, I'm going to ask ChatGPT which girl I should go out with, or because I've met a couple of people in Los Angeles who were literally asking ChatGPT these questions that are, one, totally subjective, two, generally unanswerable, and three, there is no right answer. I don't know which,
No,
What should I have, chicken or beef? Like, what do you feel like? I don't know what to tell you. Like, how can ChatGPT tell you whether you should have the salmon or the pasta? Like, what are we doing? But my point is that if the fact that it was even happening was shocking to me, and it did make me wonder whether, as we move into the future, with like, imagine there's a baby born just in the last few months. Okay, I don't know if you can have to conjure the thought, but imagine, and that this baby now is coming of age, and not just the area of the eye. We all like, oh, the baby's 1 year old on the iPad, and they can use the iPad. We've all seen this. Well, now it's a 5-year-old, and you're like, well, do you want macaroni and cheese, little Johnny, or do you want to have chicken fingers? You know, and they're like, let me ask ChatGPT, what do I want? And it didn't even occur to me that that's something that I would never, you and I would never imagine consulting. I might say to you, hey, what do you think's better, Tom, the chicken or the fish, or whatever? You'd be like, oh, get the fish. They got a thing, whatever. But like, I'm not going to ask ChatGPT, but my point is that I actually believe it's possible that there's a total deference to artificial intelligence for all decision making.
Well, yeah, I mean, when kids start growing up and they don't believe their parents and they ask ChatGPT, or they say something to the effect of, who should I listen to, mom or dad, based on the following, it's
or like my father says that it's good that I should start working when I'm young to get a good work ethic and blah, blah, blah. And then the kid's like, well, I asked ChatGPT, and ChatGPT says it's abusive to make a 14-year-old mow the lawn.
Welcome. This is going to be one of the challenges.
I mean, I just think that that's really what's in the cards. I think it creates and you're like, well, who's smarter, my father or all of the?
Yeah, but the funny thing for me is that I don't actually think that that's a negative. I just think we have to take it in, we just have to accept it for what it is. I think it's all a positive. Like, I don't think there's any negatives there. I just think, you use it to complement. You don't use it. It's not primary. It's complementary. And that's how I think ChatGPT will be on a personal level. On a business level, I think it will be an enormous help intelligence-wise, but it makes error. It makes mistakes. It has errors. It spits out false information, and it is challenged in that sense. So you can't take everything, just ask it about Dylan Radigan. You'll see. It's not hard.
No, I get
see
it.
The mistakes.
The biggest issue is the use of intelligence and corruption as a way to circumvent any sort of moral code.
Yeah,
we're seeing that there's examples of
it.
That's like the most meaningful part of this discussion, really.
Yeah, you're right.
And then it's easy to assign it to the presidency because for all the things, not just this president, but all the political leadership is common to these sort of what I'll say is quickly tossed off or frivolous accusations of intelligence or corruption. I'm more intrigued in a sense by whether, if we assign intelligence if ChatGPT says it's intelligent to not pay your taxes. In other words, I just wonder the degree to which that because ChatGPT only has the moral instincts of its programming, I guess. I mean, I don't even know how that integrates. Ultimately, it just seems that artificial intelligence, obviously the primary risk of artificial intelligence is that it is amoral and that it empowers people's negative desires for each other. That's the why. The only why worry about artificial intelligence. Why? Because it's amoral and it may give people's negative intent more horsepower, because just because I'm here, I don't like Tom Sosnoff. He gave me a bad cup of coffee, but I'm not gonna. But then I go to my artificial intelligence and I'm like, make Tom Sosnoff's life a misery. Figure out the best way to do it. That's actually more concerning for me.
Yeah, that's not as concerning to me. The reason that we bring it up in the current context is because in the current context of this president and this administration is because they have brought the the whole AI discussion right into the White House, because you've got, on the one hand,
corruption and intelligence is at the table in the room.
I mean, they basically brought it in there. They're mixing business and pleasure, or they're mixing business and business. And what you have is, if you have Elon Musk standing next to you, and if Elon Musk bidding, $100 billion to buy OpenAI, then you've mixed it up, and there's clearly conflicts. Now, of course, they're not going to sell it and that kind of thing, but there are absolutely conflicts, and so you brought it there. It's not us bringing it there; they brought it there, and that's a dangerous, that's another dangerous thing. Where's the line between, business and politics and business and pleasure and everything else? So anyway, that's.
I mean, the other argument, the counter argument would be that's always been like, there's always been a billionaire next to the president, tweaking his ear. It's just always been in secret, and at least now it's being done in public. Would be the counter argument to that specific concern.
Yeah, I don't think
that George Soros or whoever, Bill Gates, whoever has been lurking in the shadows, and for the first time we're bringing it out into the light.
Yeah, that's a stretch, but sure.
That's not going to get you over the hill. With the transparency is not going to cut it.
I mean, yeah, yes, that's a revisionist history. It's a stretch.
How about the utopian vision, which is by reducing corruption, whatever that means, and by increasing intelligence, whatever that means, that you're going to have a streamlined government that pays lower rates and borrows less money, and an economy that is more prosperous.
Yeah.
Because it's less corrupt and more intelligent, just to take the other side.
Yeah. Yeah. I mean, I get it. I get it. I'm not sure that it's necessarily more intelligent, and I would hope that it's less corrupt, but sure.
To counter myself, something can only be as intelligent or corrupt or whatever it is as the people asserting intelligence and corruption are moral. Which, going back to the central point, so to the degree to which it's a moral arbiter of intelligence and corruption, then perhaps that utopian vision is possible. But the degree to which the people asserting intelligence and corruption are immoral, it becomes a recipe for a catastrophe. That the intelligence and corruption are only as good as the moral compass of the perpetrator thereof.
There's nobody opposed to efficiency, and there's nobody opposed to true intelligence, because anything that generates efficiency, meaning anything that eliminates the inefficiencies in the system, makes it better for all consumers, and we are consumers. And that means on the tax side, that means on the revenue side, salary side, that means on the purchase side. So yes, anything that is better for consumers, which means efficiency. I actually wrote about this last weekend. That's what we all want.
And so the only question is whether I believe you, whoever you are, whether you're a CEO or the president, genuinely have the moral fiber to assert it, or are you just using it as a marketing word?
That is exactly right. Do we have the moral fiber to assert it, to protect it, and to scale it? And that is a huge question. And there is where you have to that's the part that becomes, that's the part that voters have to answer. That's the part that, everybody's got to try to figure out. And that's what makes this country so divided. Because half this country feels like, no, they do not have the moral or ethical fiber to lead this, and the other half of the country feels, oh, they're the perfect people to do this, and therein lies the challenge.
Mm-hmm. Do you see a path to resolution, or you're going to sit back and wait with everybody else to see what happens?
Well, first of all, I don't think we have a choice. I don't see a path to resolution under the current under the current circumstances with the current people. I don't see any path to resolution. I think eventually the signs are there that yes, this will become automated, efficient, helpful, and it will be ultimately scalable. I don't see that right now. I think we'll see that in the future.
Does that make you a techno-utopian, even if it's a bumpy road getting there?
I'm a technical positive drift person.
Meaning that technology, because of positive drift, will ultimately work for the benefit of mankind.
That's right. That's right. The one thing I've learned about mankind is that the grifters get sorted out and they get shot down. They end up dead, or they end up basically being useless. And so it doesn't matter. You can only grift for so long, and everybody gets exposed, and everybody gets terminated in one way or another. And so that's the good thing about mankind.
The different variable right now that gives me concern, and I think a lot of people, probably you too, is I agree generally with what you're saying, but the different variable right now is extreme outcomes are more possible more quickly now on a more broad basis. So the ability to do a lot of really good things for a lot of people very quickly is the highest it has ever been. And the ability to do a lot of bad things to a lot of people very quickly is also the highest it has ever been. Somebody wrote a great article talking about how in the era of extremes, that the most likely future outcome is either an extreme positive or an extreme negative, not because of any preference for the positive or the negative, but because there's always a preference for both. But we're at a moment where the ability to express the preference is more empowered than it ever has been because of technology. And so that's why we perceive both incredible, it's easy to perceive incredible abundant futures as well as incredible catastrophic futures at the same time.
Yeah, because there's a lot of articles and there's a lot of discussion that essentially say, if you think AI is dangerous now, just wait.
Right. Or if you think AI is powerful now, just wait.
Just wait. Yeah, you have no idea what's coming next. And the issue behind this is that instead of just smart people, building stuff like the people that might have built stuff at Apple or places like that, whatever in the past. Now you have a certain, as they like to call them, the tech elite. There's and they're not and they don't have and they don't feel like they have any downside because they're not millionaires. They're not billionaires. They're 100 plus billion, 100. They have hundreds of billions of dollars. Hundreds of billions of dollars. So it's the modern day tech elite that hold the keys to the next generation of machine learning, the next generation of AI, and none of us have any idea of what's up next, what's coming next. I don't, nobody knows. So
right,
if you're nervous about what you see now.
This is where I get hung up. I get hung up. So we accept there's the potential for more extreme expressions than ever, if you whether in any direction.
Yeah.
And we accept that over the course of any individual or group of individuals series of decision making, whether it's a group of people working together at Tasty Trade or just me walking down the street or the entire nation of America, everything, that we're all constantly capable of creating good outcomes and bad outcomes.
Sure.
And that the idea is to be resilient in the bad outcomes and recover quickly, and to take advantage of the good outcomes and harvest them and all the sort of traditional cliched sort of personal advice, right? But if the outcomes are super extreme, it's more difficult to recover from a really extreme negative, I guess is my point. Like that I can tolerate a bunch of small negatives, or I can tolerate a bunch of small positives. And I can even tolerate a big positive, but it's not everybody's equipped to deal with an extreme negative.
Yeah, that's the last thing I worry about. I mean, having lived through many crashes and things like that, you have to
Because
worry
you
about
think people are more resilient to the extreme negative than we believe.
Yeah, sure. Sure, they definitely are because people ultimately, and I say this all the time, you have to worry about the things that you can control. Like you can't worry about the things that you can't control. So we could sit here, we could talk about the next generation of this and that scares us and all this stuff, but you have to really think about the things that you can control, and which is your voice, your vote, all that kind of stuff, and your conflicts, your own intelligence, all that kind of stuff. You can't worry about the stuff you can't control. You can't worry about the stuff, next generation machine learning, next generation of tech elite, all that kind of stuff. You know what? That's just a waste of life. That's like what we do in the trading business. We don't worry about the macro stuff because we can't control it. We worry about the opportunity that's in front of us on the stuff that we can control. It's so much more powerful. Like people get all hung up on, and they sit there and they debate, and we have all this ridiculous, back and forth yakking up about stuff that nobody has any control over whatsoever. So it's just background noise. Just worry about the stuff you can control, and don't worry about the 4 standard deviation or 7 standard deviation outlier move that, AI takes us down a black hole that we can't ever get out of. I don't worry about that for a second. I worry about the fact that we have terms now that don't really mean anything, like corruption. We have terms now that don't mean anything, like intelligence. We used to say somebody was intelligent, and then they actually were.
Exactly.
I know. That's the scary thing.
That's the whole thing. That's my whole problem.
Yeah. I know.
All right, enough. We only have a couple of minutes, but did you see these Trump headlines regarding the war in Russia?
No.
Anyway, there's some rhetoric about going into discussions with Putin and making a deal and blah, 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 blah. Have you been trading oil at all, whether it's around the Middle East rhetoric or the Russia rhetoric?
No.
Do you trade oil based on either the Middle East or Russia ever?
No, never. I mean, oil's down big today, but down almost $2, 3%. But I have no position on an oil right now because the implied volatility is too low for me.
And you wouldn't say, and you don't think, I mean, I guess I'm not going to put words in your mouth, but I would argue that the headline from the Trump rhetoric regarding the negotiations with Putin on Ukraine is causing oil to go lower.
I don't.
And you
know.
would say maybe not. I understand.
I would say what's causing oil to go lower is the fact that oil was up for the last 4 or 5 days in a row, and it's just pulling back. But that's just me. I don't care about the news. I don't read that stuff. It doesn't mean anything to me.
Does integrity mean anything as a word? By the way, speaking of words,
it means something
how intelligent and corrupted are. Huh?
It means something to me.
Mm-hmm.
I don't do business with people that I don't where I don't feel like where I'm not confident in the integrity of the counterparty. I come from a trading background. The counterparty was my life. I don't do business with people where I don't trust the counterparty or I don't feel like the counterparty has integrity. And, so people ask me all the time, they go, well, why don't you like this administration? Why don't you like Trump? Look how great he is. And I'm like, I don't trust people and I don't do business with people where where their integrity and their ethics are at question, period.
Mm-hmm.
That's the whole reason.
Mm-hmm. No, I agree with that. I mean, you and Warren Buffett, it must be a Midwestern thing, even though you're from New York.
Well, I'm pretty much from Chicago now. I've been here 40
I mean, you're an honorary Midwesterner at this point. I mean, if they don't let you in now, I don't know what you got to do.
I served my time. I got my green card. Okay.
And you serve your coffee.
Yeah. I got it all. All right, Dylan, we're out of time. Thank you so much. He is Dylan Radigan. I'm Tom Sosnoff. This has been Truth or Skepticism. Thanks so much for your for hearing us out today. And we'll be back next Wednesday, 1 p.m. Central Time. Thanks, Dylan. Have a great week.
See ya.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
Very. You made my weekend, man.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
The
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was
Now the RV on rvtrader.com.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel.
The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Yo, what is going on? Welcome to today's assignment. Today, we're going to talk a little bit about CPI year over year, what it is, how we can look out for it. I know we got a pretty big volatile move about an hour before the market opened up today. So we'll get in a little bit into that, get Dr. Jim's opinions on some of the positions that we have in the portfolio and talk about some of the more popular headlines today. But before we get into that, Dr. Jim, how we doing today?
Man, what's going on? It's a good day to be alive. I can't believe we survived.
It's a great day to be alive.
I can't believe we survived CPI. I mean, it came in scalding hot, did it not? I mean, we're going to talk about it today, I think. It was super hot, right?
Yeah, I mean, yes, scalding hot. I guess scalding hot is relative, but, hotter than expected, no doubt. Before we do get into that, though, Dr. Jim, the Broncos won the Super Bowl this last Sunday. I couldn't be more excited to talk about that with you today. And
my Eagles did it, man.
They did it. Great game. When I was watching the game, we'll get into our segment here in a quick second, but 34-0. I'm just looking at that. I'm looking at the score, but I'm reminiscing. I'm reminiscing towards the Seahawks and the Broncos a few years back when we got absolutely crushed from the first snap, having a safety into the end zone. And I think that was the largest deficit since that last Super Bowl. And I think the largest deficit was like 36 points, and the largest in this one was 34 points. So, they got caught on the wrong end of the bell curve on that one, Dr. Jim. But did you have any thoughts on that one? Did you watch it?
That's a pretty good line.
Watch it? How
I'm going to
was that?
steal that line, by the way. That's a good line. I've never thought about that.
You can steal it. I got you.
That's pretty good.
Yeah.
That's pretty good. I'll tell you what, man. All I'm saying is I don't want to hear any more talk about Mahomes being in the same conversation as Brady. It's not even close, bro.
You're writing him off already.
I'm not writing him off.
Yeah.
But everybody was just ordaining homeboy as like he's the greatest now. I'm like, dude, he's got a long way to go. He's 29. He's got plenty of time, whatever. Yeah. But you can't discount the fact that he got blown out. He got blown out in 2 Super Bowls. Yeah, Brady. So here's what's crazy about Brady: 7-3, 10 Super Bowls, blah blah blah. In every of the 10 Super Bowls, even the 3 that he lost, when Brady walked off the field, his team had the lead. When Brady walked off the field for the last time, his team was in the lead. Dude, how crazy is that? Think about that for a second.
No.
That's a crazy stat.
That's greatness.
That's crazier than 7 wins, in my opinion.
And he was what, 40? When did he retire? Like 50, 40, 50, 45, 50, 60, 65?
Man, I don't know.
Something around there. So I will admit, I will, the longevity, right? To perform really well 1 year, 2 years, 3 years, like, it's not that it's a common thing, but to perform like that over a course of a decade and a half, like, Brady did, is GOAT status. So Patrick Mahomes, I think he's in the conversation still, but still a lot to prove. Like, you got to be great. To be great, you got to do that every single year. Like, you got to do it for a long period of time. That's why LeBron James is the GOAT over Michael Jordan. But before we even get deeper into that, Dr. Jim.
He's not, dude. He hasn't even
You're
caught
biased,
Ben Roethlisberger. Dude, he hasn't even caught Ben Roethlisberger yet.
You talking
like, forget
Patrick?
about Brady. He hasn't even caught Montana yet.
I agree. Drew Brees.
Like, come on, bro. He's not even, like, come on, dude. Like,
I think the conversations are just fun to have. The conversations are fun to have to see who has the most potential. Yeah. Speaking of potential,
what do you think about
CPI,
LeBron and Luka real quick? What do you think about that?
Oh my goodness. well, what is Luka going to do when Bron retires? And, maybe that's why they got. I'm sorry.
It's going to be his team. I mean, he's 25.
No. Luka's going to retire before Bron. They're going to have to, what is Bron going to do when Luka has to retire?
That's probably true.
That's what I meant to say.
That's probably true. Yeah. What's Bron going to do when Luka returns? That's good. Yeah.
Yeah. I mean, I'm excited. I mean, AD for Luka. I mean, they could use a center. The Lakers needed a center as well, but it's going to be an interesting combination between the two. Personally, Luka's great on paper, but I hate watching his game. I'm not even going to lie. Like, it's so slow. It's just not pleasing to me to watch. It's kind of like Jokic. Jokic is my boy. I'm from Colorado, born and raised. So Jokic is my boy, and a lot of people talk about how watching him play is not very entertaining or exciting, and that's what I kind of get from Luka. It's just it's just very slow, efficient, effective, and he's killing it. So I'm not taking anything away from that, but I am interested to see how these two kind of, play along together with each other. So what are your thoughts on it before we get into it?
I mean, I'm interested. I'm not really an NBA fan. It's never been like my favorite sport or anything, but now I'm just kind of interested because it's such a shakeup to the league dynamics. Yeah. I'm curious to see how it goes. Yeah.
Lastly, I was curious, NBA ratings have been down. Was this kind of a little scuffle to kind of see if we can get a little bit of, headlines popping for the NBA again? Because that did. I mean, the headlines were going crazy with the Luka, and they're already talking about, we're going to try this, we're going to do that. Adam Silver, the commissioner of the NBA, was talking about that as well. So, and this kind of came at that same time when headlines and ratings were down. Was this to kind of mix it up a little bit, get people talking about the NBA again, especially right when the NFL was over? A little bit of conspiracy there, but any thoughts on that?
I'm all in. No, that's probably 100%
right. That's what I'm saying.
Oh yeah. No, yeah. I love it, dude. I love it. I didn't even think of that, but that's probably 100% right. Oh yeah.
Yeah, we'll see. But CPI year over year. Did you tweet last night?
I didn't. I totally forgot.
Did you not?
I totally forgot.
See, I never miss it.
Do you know why I forgot? I forgot because I was at Publix and I was getting batteries and flashlights and water. Like, I was stocking up the bunker.
This guy's not preparing. You're not preparing. Yeah, right. You're not.
I usually wait till the very end. I got the wheel all dusted up. I got that thing all updated, and so I get everything in order. But I forgot to tweet, man. That's totally my fault.
That would have been believable if you were grabbing a pub sub. Then I would have been like, all right, maybe the world is.
I've never had a pub sub, actually. I've never had a pub sub.
You've been in Florida longer than I have.
That's crazy.
I mean, I don't know. I got over here and everyone was talking about, you haven't had one before, so tried it. They're pretty. They're valid. They're pretty good, but. Anyways, today, CPI year over year, let's just break this down, what it is, traders' expectations heading into something like this, because I think if you're not paying attention to the economic news coming out, something like this can catch you off guard. Thankfully, I defined risk positions on, so it was nothing too crazy whenever we were opening up the portfolio today. But I mean, if you didn't even wake up this morning and you were to open up the platform today, we pretty much would have gone nowhere, despite the massive move to the downside that we had this morning. But we'll get right into it right now. Understanding the CPI and its implications. What is CPI? Well, it's a consumer price index, and it measures the average change over time and the prices paid by urban consumers for a basket of goods and services. Now, year over year, this metric compares the current month's CPI to the same month in the previous year, providing insight into annual inflation and trends. So we can kind of get, just see the trends, seeing if we're increasing, if we're decreasing, just kind of seeing where we're at. And then the recent CPI data, right? January 2025, CPI rose by 0.5%, leading to a 3% annual inflation rate. And this was a little bit more than expected. We got a negative reaction in the market, but the core CPI, which excludes volatile food and energy prices, increased by 0.4%, bringing its annual rate to 3.3%. So kind of like what we mentioned earlier, before we got into it, Dr. Jim, CPI is increasing. The chickens aren't going down anytime soon. It doesn't look like. But I know we're trying to approach that 2% benchmark. But really, I know we peaked at, what was it, 9%, or was it a little bit above that, somewhere around there, right?
I think it was 9. I think it was right around 9. Yeah.
Have you noticed anything in your day-to-day life from a decrease from 9 to 3? I mean, we're almost at that benchmark. We had a huge issue with inflation, but right.
If people who follow from theory to practice, I mean, y'all know how I feel about these numbers and these equations, right?
Let us know. Let us know.
It has very little connection to the real everyday experiences of the average consumer, in my opinion.
Okay.
CPI. The jobs numbers, I really truly feel like a lot of these numbers are sort of artificial to put it very mildly, because they very often they get revised later and they get changed later and they're like way off the mark. And like even like CPI, it's like a basket of goods and services, but that basket of goods and services, it's excluding a bunch of things, it's including a bunch of things. It's, you know, is it a true representation of what we are experiencing as a consumer? I'm not so sure that it is. But again, I mean, being an active trader, these are, you know, economic data points that everybody is looking at that always have the potential to move the market significantly, a la what happened this morning. So we need to be plugged in. Like we need to understand when these things are coming, not because we're trying to trade them or we're trying to game the system or whatever, but I just want to be aware for these, you know, potential injections of volatility so that I can potentially take advantage of those opportunities.
No, I mean, that's a great point. I mean, I know I'll have a lot of times an extra tab pulled up just to be aware of what kind of economic news we have coming this week. And then if I ever miss those, you know, I always look out for those tweets. But this one is the implication for traders and market reactions, right? Market response to higher than expected CPI data led to significant rise in the 10-year treasury yield. So these are some other, you know, underlines that we can kind of check out to see where inflation's at and the response from these markets. And then we have the Federal Reserve considerations, right? The Fed may adopt more of a cautious approach to interest rate cuts, potentially pausing or even, you know, increasing rates to combat inflation. But this is just a general idea of how the Fed might react to some of these numbers, or, you know, just the approach moving forward, depending on what, you know, these numbers are saying. But the goal is always to control inflation. So trade expectations. Traders should monitor CPI releases closely, just kind of what Dr. Jim was mentioning here, because they can influence market volatility and, you know, some of the Fed policy decisions. And adjusting portfolios to hedge against inflation and interest rates changes can be advisable. You know, just being aware of these market conditions that we're in, so we know how to manage our trades, and then just overall managing, you know, our expectations. Again, I had on defined risk positions, so coming into this morning, managing my trade, it was no stress, right? I was just kind of being patient, seeing what's going to happen. I have these defined risk positions on. I accepted the risk as I was putting the position on. But Dr. Jim, I got to ask you, you do a lot more undefined risk trades. So you do a lot more strangles. A lot of the times I'm doing iron condors. With something like this, do you manage your strangles a specific way? Are you making sure you're sized properly? How do you manage that, you know, mentally and manually, you know, in the portfolio whenever we have an economic event, especially pre-market, right? Not even during the market hours. How do you approach that the night before?
Well, you can't really do too much the night before or in the pre-market, right? You know, in terms of the position. I mean, the positions are already on, right? And so because the market's not open, you know, you can do stuff with futures and things like that. So if it's like a futures option, then it could be a little bit different and you could get in there and do something with it. But it really is all about position size. Like we talk about this so often. If you're sized correctly, then you should never feel the need to get out of or into a position, namely out of a position too early because of some economic event. Like you should always feel completely free to, hey, I'm going to leave this guy on, you know, forget about the CPI, forget about FOMC, whatever it might be. I'm just going to leave this trade on because I'm sized correctly. Now, that being said, I would say pretty regularly, maybe, I don't know, 25, 35% of the time. I mean, I'm looking at the calendar, like I see the main things that are happening across the month. Like, you know, I'm talking about the 4 or 5 main ones, right? CPI, jobs, FOMC, and then, you know, maybe PPI too, if we're talking about kind of the top 4 right now. There's a lot of other ones too, but those are the main ones. If I have a lot of risk on going into one of those numbers, that's when I'm a little bit mindful. Yeah, it just means like maybe my buying power is higher than usual in terms of buying power allocated. Maybe my theta numbers are higher than usual in terms of the unit risk that I have out there that's exposed to potential moves in the market. Like that's what I have my eye on. Like if those things at the portfolio level get a little bit stretched, that's when I'll look to maybe trim some positions going into those numbers. But at the position level, you should never really run into a problem where you're like, hey, I'm way too big. This number could really put me in the lurch. I need to get out of this. If that's happening to you, I mean, it happens to all of us from time to time, but if that's happening to you on a regular basis, that's a problem that needs to be addressed.
A regular basis, that's tough. That's tough. But we're gonna break down some of the portfolio, some of the positions that we have.
What do you mean? What's tough about it?
That's tough. I mean, to consistently oversize or consistently get caught in. I know the rule of thumb, especially with an undefined risk, is 2x, 3x the credit received. Some people might be more comfortable with a 1x, whatever the case is. But if you're consistently cutting at 4x, 5x credit received, I would say that's tough, and maybe you need to be a little bit more prone to managing that risk a little bit sooner. But again, to my question real quick, Dr. Jim, is like, what if you wake up on something and you're down 4x the credit received? What's going to be your first approach to the market? Managing that, seeing how the market's going to respond?
I'll tell you right now.
It can happen.
I'll tell you right now.
Okay.
You don't do anything. You do absolutely nothing. Nothing.
You do nothing.
Nothing.
Really?
So
undefined risk.
Undefined risk. You do nothing. Okay. You sit and you stew in the bathtub of filth, and you just figure out what your next move is, right? I personally, I understand, looking at the Tasty research, 2x, 3x, these are great exit points for kind of max loss that you want to take on undefined risk. That's totally fine. Right. But if you look at those studies too, they also show that if you just hold these indefinitely, it's basically on par with a 2x or a 3x. So you could go either way. It kind of depends on your risk appetite. My personal experience in the marketplace is, if you give positions an extremely long time to work themselves out, most of the time they will do that. Most of the time they will come back to whatever you're looking for out of that position. Now, is that a guarantee? Of course not. Does that mean you're going to have a 100% win rate? Of course not. But as a baseline strategy, I'm not cutting it 2x, 3x, 4x, 5x, 6x. I'm not cutting it any of that. I want to be small enough on entry to where I actually have the freedom to just let this guy breathe for as long as it needs to breathe. So my go-to management strategy is 9 times out of 10 or maybe 19 times out of 20 to not do anything.
Hey, you're dropping a little nugget there. So really where your mind's at is just making sure you're sized appropriately to be able to withstand that drawdown if it were to happen.
That's correct. That's exactly right. That's exactly right. That's exactly right.
I got you.
And, you kind of play into the marketplace cyclicality that exists with all assets. I mean, back and forth, up and down. Like they all do the same thing over and over and over again, and so you're able to kind of tap into that and just give the trades as much time as they need.
I love it. Well, we don't have on any our undefined risk trades here, Dr. Jim, but we do have a couple defined risk trades, and I have a couple expiring by this Friday, and we got to see how those play out. But the first one, I do have a SPY position on, sold an out of the money call spread, expires in about 37 days. We'll manage that within about 2 weeks. That one is just expressing my longer term. I like to have a position on in QQQ, SPY, IWM, whatever it is, just to express my longer term opinion on the market. And I'm always kind of sitting in that one very comfortably, just because, again, further dated out, selling it way out of the money, being able to collect enough premium. So that's a position that I always have on in SPY. And then QQQ, excuse me, this one expires in about 2 days, Friday after the bell. Originally, I sold a put spread. Then I sold a call spread. These were 2 different days, not even intentionally looking to leg into something like this. And again, right off the bat, I know that's a very narrow range. So what I'm thinking within these next 2 days is most likely, and again, I could have, should have, would have taken off the call spread this morning, waking up on such a massive gap down. I didn't expect a rally straight to the moon after the market is opening today, but it's looking like potentially I can break even on one of these. I can either just break even on the entire 4 legs of this trade right now if I want to, and then reassess and reposition myself into a more favorable, position. Because again, this is pretty narrow. Or, I could close one side, break even on one side, and then if I feel comfortable letting the other one open until Friday to see what happens. But that's kind of the one that's taken most of my attentions right here, Dr. Jim. I kind of see the look on your face. What are your thoughts right now based off?
Well, I have a lot of thoughts. I mean, my first thought, is, yo, bro, like, let us in on the secret sauce for M&Q. Like, come on now.
What's that?
Like, here it is again. Where's my drawing tool at? Like, $134, bro. That's dude, that's like 3 Jalen Hurts jerseys right there. Like, come on, man. Like, what are we doing?
Is it? Those things are going for like 100.
I mean, maybe it's only 2 now. I'm not sure, but
this isn't 2000. This isn't the year 2000 anymore. Jerseys are about $100, $120 a piece now, Dr. Jim.
I'm a little 2000 late with that comment, but yeah.
I get that. This is prior to the 9% inflation that we've seen over the last few years.
Man,
so
I'm just saying,
I mean, you're gonna need to reassess.
Forget about your QQQ Iron Condor and your SPY call spread. Let's talk some M&Q, bro. Like, talk to me about some volume profiles, dude. Like, what are we doing?
I mean, to be completely honest today, Dr. Jim, I was completely just following the extremely bullish order flow that we were having. So I hate to say it. Yes, I made money on it, but it wasn't even really something I necessarily look for. Like, for example, what I really look for, like we kind of talked about last time, is some of these kind of, you know, buying and selling the extremes, like if you pay attention right here, we get to this extreme, then we sell off. And then, I mean, if you even look over here, right, these levels are in from Sunday night. So it's not like we're moving them throughout the week, but it's just really finding that range and then selling or buying the extremes. And if we break out of that extreme, we probably go find a new level. But I'll just play within those levels until I'm proven wrong or proven otherwise. And then I'll manage my risk if I need to do so. So those were kind of the trades taken this week. And then again, today, if I just go into this 5 minute, we can get a little bit clear on what was going on today. But I mean, we were just extremely bullish, and I got long down here right underneath this point of control. This point of control is just the price level that had the most trading activity from last week. And then oftentimes in the following week, it'll often act as a magnet for price, just from what I've noticed. Anybody can check it out if they want to. We also have the volume profile tool on the Tasty Trade platform, so you can check that out as well. But I use the previous week's point of control. And the whole idea here was just to get long down here, expecting a pop off of the point of control, and then long that for a couple contracts and then took it off. But really, that's not what I always look for. It was just one of those things in the moment where, you know, price was extremely bullish. We didn't come and take out this high yet. So I was like, you know what, I'll manage this risk. It was a super tight risk. So I just wanted to pull the trigger on that. And then, you know, I had a favorable outcome after that today. But there really is nothing like the position today. There really wasn't more to it than that. If we're being honest, Dr. Jim, but it worked out in my favor, and I'll take it because I might have to use it for a hedge.
You could say whatever you want to say. It doesn't matter to me. It's like, yeah, $130. That's some good stuff, man.
I'll take it.
Hey, but looking at that iron condor really quick. So thing, if I can be honest, that thing is a bit of a mess. So I'm looking at that now. Look at that.
So narrow.
Well, yeah, but hold on. So it's super narrow, and it's not even symmetric on both sides. Look at that thing. It's a train wreck.
It is. Again, you got to look at it like you got to look at it from a different perspective, Dr. Jim. Are you ready?
Well, enlighten me.
These were two separate trades, but it looks like an iron condor with more credit skewed to one side than the other, because I know it's a $5 wide and the other side is a $3 wide. So these were put on separately with two separate mentalities. They just happen to be within the same expiration date. So it looks like a kind of lopsided iron condor, if you will.
Okay, that makes sense. And you mentioned that when you were going through the trade. No, you mentioned that. Yeah, I thought it was still kind of like an accidental legging into an iron condor.
No, this week was just crazy. I mean, when we just look at the NASDAQ market, let me /MNQ, not ./MNQ. But I mean, we had some extreme volatility, you know, directionally speaking, on both sides of the market this week, you know, and that's really why I got into that now I can say kind of legging into that lopsided iron condor. But I mean, we were trading at the extremes and we traded at the lows, and now we're trading at the extremes again. I mean, this is a volatile market if we're looking at price action for that matter. But the main approach, you know, again, made a little bit of money on the NASDAQ this week as well. So again, it's going to be able to finance, you know, these QQQ positions for the week, depending on what happens in the next couple of days. But those were the main things on watch this week, Dr. Jim. I do quickly, Dr. Jim. Somebody let me know. I put on that Amazon position, right?
Mm-hmm.
Didn't do too hot, but we went long on it. And I thought the intern was feeling. I think it was loan or somebody told me. Dr. Jim put on the opposite position. I was like,
totally went opposite.
I bought this from him.
Yeah,
all right, he saw. This man went opposite the next day.
I totally took you down. I totally did.
Right.
That's so funny.
No, that's.
So I came on this show, and I was like, yo, we got to play to the upside. We got this, we got that, blah, blah, blah.
Yeah,
and I thought about it overnight, and I went into the morning, like the Thursday, like going into my show. And I was like, I don't want to play this thing to the upside. I kind of want to play it to the downside. And I'm like, man, if I'm right,
well, that
I'm going to straight up call, just take E down.
Hey, at least one of us took advantage of that, but I'm not even mad at Dr. Jim. The Microsoft
you can't even trust me anymore, bro.
Oh no, we still have a cushion from the Microsoft and Meta trades.
There you go.
So we still got quite a bit of cushion. Is there anything else you guys kind of have an eye on?
Is Meta up again today? Because I saw something yesterday. It's been up like 17 days in a row or something crazy.
I mean, it's kind of been grinding really slowly to the upside.
Bring up a daily chart of Meta. I saw somebody post something. It's like 17 green days in a row or something.
Oh, this thing's going absolutely hand to the upside.
Okay, so there's a couple of red days in there, but
yeah,
you got a lot of gaps and stuff. Okay.
I like this though. That contrarian to me is already itching just pulling this up right here. And I know, look at that. We got the active follow. We got the active. That's how we trade the micros right here.
Yeah.
Have you ever used the active tab?
I have not.
It's very conducive if anybody else is trading futures, so check that out. But
okay, all right.
No, yeah, Meta, the IV rank isn't very attractive in here, but now that you do bring it up, it's something that does look attractive to, trade to the downside if we get something like that. But IV rank not there, so the premium is probably not going to be, too feasible here. But maybe it's really not that terrible. Are you guys doing anything on Meta? Why were you bringing that one up? Was it just
I was just curious if it was up again today because I saw something floating around that it had been 15 days in a row or something.
What is that? Another all-time high? Let me just quickly.
I mean, it's got to be. It has to be. There's no way it's not.
I mean, this thing is screaming to all-time highs.
Yeah.
10-year. We'll go 10-year 1 week. Yeah. I mean, look at this. This is the past 10 years on Meta.
Wow. Look at that. It was $100 at the beginning of 2023. Wow. That's 2 years ago, man.
Yeah, beginning of 2023. Barely 2 years ago.
That's crazy.
I know
wow,
about
that's
2
so
years,
crazy.
Yeah.
Man.
Anything else you guys are looking at on your side? Any type of upcoming?
I mean, we got PPI tomorrow.
Guys...
PPI tomorrow, and then I don't know what's on Friday. We got the old Valentine's Day economic print, I guess. And so
the old Valentine's Day economic print. What are you and the missus up to?
Dude,
Friday,
I scored some reservations on Valentine's Day. I'm gonna surprise Autumn. But you know what's funny about these reservations? Dude, I got dinner reservations at 4:30, bro. 4:30.
Yesterday?
No, it's for Friday.
Oh, evening.
Yeah.
Or morning.
For dinner, bro. For dinner. That's hilarious.
You guys having a late brunch.
Dude, I'm still digesting lunch. I'm like, dude, this is going to be. But that's all they had available. Yeah. So, you got to take it.
No, I hear you. I'm going to have to figure something out. But anyways, I hope that goes well. Whenever you say autumn, I always want to bring up like, well, it's about to be spring, but I was like, I just bit my tongue on that one.
I've heard that a lot.
Yeah, I bet. No, but anything else you want to add before we hop on out of here today, Dr. Jim?
No, that's it. No, it's good stuff.
Cool. Awesome. Well, that's going to wrap it up for today. There's a little bit about the CPI prints and kind of what to look out for in managing our portfolios. We do have PPI coming later this week, so keep an eye out for that. And a couple days left in this week, so we'll manage the positions, come back around and see how, we manage this QQQ position. But thanks for taking the time to hang out with us today, and we'll catch you guys next time. Peace.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies.
Very much.
Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Howdy, howdy, howdy. Tim Knight here, and we are post CPI. So, interesting stuff. The CPI came out, and the market immediately slumped and slumped hard. The ES was down like 60. The NQ was down hundreds of points. And as is so often the case, it undid a lot of that. At the moment, we're still down a little. I mean, the ES is down like a quarter of a single percentage point. The NQ is actually green, up about 35 points. But you know what? Still a good day. Things are working out nicely. In fact, some of the nastiest gains yesterday, like DVN and OXY, those have come some of the best gainers today. So I still think it's a terrific stock pickers market. Patterns are working. And I've got kind of an abundance of economic charts for you today from the Federal Reserve, which are from slopecharts.com, which you're free to try out. So I hope you like them. So let's jump in here and kind of see what we have in this post-CPI world. Here's the spider. So we continue to have, ever so subtly, lower highs and lower lows. So we got this and this and this and bang and bang. So it's just kind of, you can see sort of a gently sloping arc lower here. So the market is losing momentum, is losing strength, because it's beginning to dawn on them that don't listen to what Powell says. I mean, just yesterday, Powell was talking about how inflation is well anchored, which it's an odd term. If he means it's like not going anywhere, okay, he's right. I think what he meant was that things are under control and don't worry, pretty little head, I'll take care of everything. Look, just don't believe what the Federal Reserve says. This is not some ranting. Look at what's happened during their existence and who it's benefited and who it's harmed, and draw your own conclusions. Complete destruction of buying power and a shifting of wealth almost entirely to the upper hundredth of top 1%. That's the Federal Reserve. Don't buy this stuff about, we understand our dual mandate and we're here to serve the public, etc. It's nonsense. Added to which saying inflation is under control is also nonsense. Inflation is going to come roaring back. So as I said all last year, the idea that we're going to have, I think they had said 200 more basis points of cuts is preposterous. The cuts are done. There ain't going to be no more cuts. There's going to be raises in rates, which should cause some really interesting dialogue between the president and the chairman of the Federal Reserve. But yeah, ain't no more interest rates coming. Bonds are continuing to crumble. Interest rates are rising, and they will just keep doing so as inflation comes back. Here is the Consumer Price Index. Speaking of the good the Federal Reserve has done us, there's a tremendous amount of data here. This goes all the way back to the creation of the Federal Reserve. And with the exception of the 20s, which were actually a very depressionary period, and the Great Depression itself, a deflationary, I meant to say. So during the 20s and the Great Depression, the CPI was down tremendously. That was it, though. That was the exception, as you can see. On the whole, we have had inflation, just nonstop. And, sometimes it's horrible and sometimes it's terrible. Those are kind of the two styles of inflation. So we've gone from horrible here, and now we're sort of in terrible mode. It's really blasting higher. And, if you want to kind of observe, dollar buying power, just flip it upside down like that. There's your dollar. Sound as a dollar. That's what it's done during the tenure of the Federal Reserve Bank. So yeah, CPI is red hot. And in turn, TLT ain't liking life so much. Down hard, 1 1/3%, undoing weeks of progress in just a few days. So I've been saying that, don't count the 5-year long bond bear market to be over. It's not. In turn, XHB, which I talk about pretty much daily, continues to weaken. This is the home builders. They're down almost 2 full percentage points. And that long-term channel is doing a yeoman's job of keeping prices confined. And I would suspect that for the next year, and 2 years, and maybe even 3 years, there's a down on this as it gets closer and closer to major support, several light years below current price levels. I would also add to this the argument about inflation that is not going away. This is the 10-year break-even inflation rate. And back as of, say, a year ago, things were looking pretty good in terms of inflation being beaten down, because we've had a quartet here ever since a quarter century ago of inflation slipping lower, getting well anchored. And so here and here, and every time it's cool. We'd be cool with it. This time, something's different. It seems to be a little bit frisky here. Instead of slipping lower like it did back here, it's showing strength. It seems sticky, which is the favorite term of the Congress critters these days when they talk about inflation. So, yeah. Brazil doing nicely. EWZ down about 1.5%. It seems to me, and this is probably because of PBR, the biggest component of EWZ, that oil has a lot to do with what EWZ is up to. So oil is weak today. Crude's down almost 3% today. And so EWZ is down about 1.5% beneath that beautiful head and shoulders pattern. So looking good for a change on that one. This one kind of ticked me off, but we're hanging in there. Yesterday, I acquired puts on SMCI, which had earnings last night. And I did so because this gap was just about closed. So I bought August puts, and earnings came out, and the stock crashed, which was so nice to see. And that was over in about 4 seconds. And then it started climbing. And it went from being down 25% to down 20%, 15%, 10, 5, 0, positive. And then it actually started climbing decently. However, the gap is completely sealed now. I didn't sell any. In fact, not only did I not sell any puts, I bought more when it was up in the lower 40s. And so here it stands. So we'll see. I think today's high is an important marker. I don't want to see it go past that, but we are past earnings on SMCI. And this year, August puts again, $39, I think. So it just shows, and you've seen this before, that the sudden moves can completely reverse based upon nothing, just kind of people digesting it or chewing on it or thinking about it, even though the data is unchanged. SMH, the semiconductor index, is down about 0.5%, and this also remains well anchored. So we're below this dashed line, and hopefully will remain so. In turn, XLK, even though the NQ is still up 35 points right now, the technology ETF is down. And what's important here is not to exceed this gap. So everything's clicking along there. There's been no violations, no problems. Here's another interesting chart. This is the United States trade balance. Exports versus imports. As you can see, we sure are importing a lot and exporting not so much. This kind of jumped out at me because it's such an incredible plunge. You know, this goes back to the early 90s. And for a while, it was just sort of a truism that the balance of payment would get worse and worse. But it's, it's lower than ever. I mean, it's crumbling into oblivion at this point. So that was an eye popper. This was one that kind of surprised me. You may recall back in March 2023, the 13th, I think, our dear Janet Yellen bailed out the banks with a massive relief program, and I was kind of skeptical about it. To the credit of the banks, it actually seems to be done. It looks paid off at this point. It's kind of an amusing graph. Looks like a Coke bottle to me, but they borrowed, and then paid it back. So point up for Janet. Worked out. Also, part of the whole save the banks thing was the reverse repo. This, too, seems to be just about undoing itself to irrelevancy again. So, in spite of these like multi-trillion-dollar balances, it seems to be kind of yesterday's news. Here was another one. I was going kind of crazy with the economic charts today. It's not all equities this time. This is, you remember the old years ago, the bromide about, learn to code. The world's changing. Learn to code. Don't learn to code. Just Please don't. Everybody's a CS major these days. They're in for a surprise because this is the chart of software development job postings, which had been sensational up until the first quarter of 2022, and now not so sensational. And this does not even take into account whatever effects AI might have on dealing with lower to middle level code. So another kind of an upside down V on this one. Really, really powerful chart. Bitcoin, pretty much unchanged right now, but I must say it is just continuing to grind it out. This range has been in place for months now. I mean, like before Thanksgiving. And here we are heading into Valentine's Day. So in spite of all the good news, it's just banging around between about 90 and 108,000, going nowhere fast, as Mr. Scott might say. Goodness, almost out of time. EQX, a precious metals miner that I've suggested that I like, looking good. Up about 4% on this, continuing to push away from that lovely little base that it's formed. Some other long items, Gilead, GILD, up almost 7%. You know, we've talked about this before. This is a very big range, goes back a decade, lifetime high. So that was, it's not all bearish. I do long ideas, and I like to celebrate those victories here because you've seen all of these before. And we haven't talked about this one in a while. Maple Bear, which is the peculiar name for what's basically Instacart symbol cart. And this has also been doing nicely lately. Over on the more comfortable side of things, which is short positions, Nucor, terrific angel shop on this one. This is reversing nicely today. This was no fun on Monday and Tuesday with all the tariffs and so forth, but totally burned off now. Let's say that again. The benefit from the tariffs is not only gone, we're lower than it was before even the tariffs were announced. So, the half-life of these big political announcements measured in hours. So, yay. The pattern is absolutely terrific, and I'm glad I bought more puts on that, even in the midst of this thing going against me. In the same vein, XOP down hard 3.4%. It was very strong yesterday. And in particular, DVN, which is a specific position. This is down very nicely today. A bearish engulfing pattern on this, down 3.3%. And OXY, down about 2% below its dashed line there. And you know what? We'll end on a high note because that is the bottom of the hour. And the pressure's off. The CPI is always a hand wringer, so hope you did okay. I'll see you here Thursday. Thanks as always for coming by, and you take care. See you tomorrow. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
Look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
no.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like You know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated?
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the last call, my friend. Even the S&P is trading significantly more than they have as of late, on volume at least. 1.3 million cars have traded. Even the S&P is down 18, significantly off their lows by about 50 handles and about 35 handles off of their highs, sitting pretty much mid-range for the day, as you can see here on that little red candle on the right-hand side. NASDAQ up 30, Sadnoff, after being down about 1% this morning, trading near its highs. Russell down 1780. That's still the weakest of the group. It's been the weakest all day, but it's cut its losses in half. Dow down 260 and change, and volatility in by 5 cents to 1750. Volatility really never percolated too much today. As my brilliant son, Nick Batista, pointed out on his Johnny trades earlier today. Bonds down 111, 113.14. Hey, Saz, correct me if I'm wrong. Bonds go lower, rates go higher, correct? I thought rates were supposed to go lower. How can these bonds be lower?
Ooh, boy. Yeah, it's amazing, isn't it?
It sure is. Let me finish and then I'll give it all to you. Bitcoin hanging out at 97,000, 97,500. Oil down $2. Significant size move after the last 3 days higher in oil. Ivy rank still low at 14. Gold is mid-price for the day, even though it's down $8. Gold was over 29.36 is near its highs. That was higher than that earlier yesterday and down near 28.86. So gold really kind of rallying throughout most of the day today. Silver rallying for sure, up almost 40 cents. That's a 1.5% move. Nat gas up small tick, but you can see Nat gas has had quite a few good days. Sadnov, after Bat put out his Tesla buy, Tesla's up 13. It was actually up higher than that earlier today. It was up around 17 or 20. It got as high as 346, which is another $4 higher. That's all I got.
Yeah, Tesla was a good one today. We put a strangle on there yesterday, and obviously it came in nicely today. And we gave it a little long delta. Biggest three big commodity moves aside from gold, which I really don't have a very big position there, so I don't really care.
Nor a good one. I have one of those too.
A couple of interesting commodity stories today, more so than Tesla is one of the few stock stories. Maybe
I think
Intel.
Netflix is a good story too. I don't know if you got a Netflix position. Ivy rank's only 15, but the stock is up another $16. Been on quite a tear this month so far.
Apple up almost $4 today. There was a lot of NASDAQ stocks that really exploded. But I thought the big stories were, well, crude oil down $2, which it's been up recently, so that's something. I don't care that much about that. I thought the big story was, volatility never upticked all day.
Yeah.
The VIX is actually down on the day, isn't it?
VIX you're looking at?
Yeah.
Down 13 cents, yeah.
The VIX is down on the day. June futures in the volatility futures are actually down. I think the Mays are up, but it's like they're for a down day, nothing. Mm-hmm. And that's, with the bonds down 1.5 points almost, that's a pretty significant move in interest rates.
Yes. Usually not a bullish thing for stocks, right?
No, not a bullish thing for stocks. So something's going to give here. I sold a bunch of puts in the bonds today, and I scalped some bonds actually okay. Bought some at 02 and 03 and sold them at 14. Then I also bought some at 24 and I haven't sold those yet. But we also sold a bunch of puts in the bonds and a bunch of puts in the notes. So I have fully reloaded in bonds, and that is exactly what I wanted to do. So Godspeed.
At prices you didn't think you were going to see. I mean, this is better than you thought you were going to be able to get. Now I don't know if it's going to be a profitable trade, but these prices you didn't think you were going to see. You didn't think we were going to go into the 113 handle, mid 113 handle.
Not a chance in hell.
What about the Meta story, Sadnov? I think it's up, I don't know, 125 days in a row now. I think it's 18 or 19, but something like that.
So I haven't not had a Meta position on forever. Let's see, Meta.
No earnings looming. Low Ivy rank, only 8.
That's a hell of a move.
Yeah, you think?
That's a hell of a move. What are you doing there?
It's quite a story.
What do you do?
Definite call skew.
Expected move $50. Stocks trading 725. Let's go 775, 785, 775, 780, 775, 785. Man, there's no difference here. It's $1.05 per spread.
Are you trying to sell a call spread?
Yeah.
What about put diagonal? March, April.
What about
March has a 30 implied volatility. April has a 31. You'd rather sell your little crappy call spread. I got you.
I like
simple stuff.
I'm a simpleton. I'm not gonna lie. I'm a simpleton. I would sell a bunch of call spreads up here in Meta. I don't love trading Meta.
It's for the amount of movement it has, it doesn't seem you're getting filled right around mid price.
Penny or two below. I don't love it. I don't love trading Meta. I'm going to set some orders in a little higher because I want to let them come.
It's a $700 stock. Well, $725 stock. I mean, it doesn't open it up to a lot of plays.
No. This is a play where I would like to sell a ton of call spreads, but I kind of feel like you got to sell them. I'm just going to nibble right here, but I think you got to sell them. You got to sell them a day that the stock opens higher. You sell them into strength and let them have it. Tomorrow,
it's easy.
Tomorrow might be my day in Meta. Today, you got no. I mean, you can't really do much else. IV ranks like nothing.
Crocs was the stock you were looking for before you were on the break. We were talking about a stock that we did for earnings. I think you did Crocs, didn't you?
I did Crocs and PANW, I believe.
You also have Cisco, Reddit, if you're interested, RDT, and Hood.
I don't have a position on any of those.
MGM, WMB, John Deere, Cisco.
Yeah. In Hood, I would probably be a small seller. In Cisco, I have no interest in trade. I would stay a million miles away from Cisco. And
Hood's trading like a meme stock.
Yeah, Hood's been on a tear, but I wouldn't touch it here.
Mm-hmm.
Yeah, Tesla just dropped $6. It's kind of weird, and it's in play. Meaning it's look at the volume in there right now. It's like
it's huge, and it's huge stock, huge option volume too.
Yeah, stock just dropped 6 it was just up 17. Now it's up 10.
Well, Nasdaq just went unchanged, and even the S&P's dropped 10 also.
Yeah, there's a lot of rumors about little retaliation tariffs in Tesla, but I don't know.
Like 100% tariff on Tesla cars or something. Somebody wrote to me.
Yeah, you know what's funny is the only place I've ever been that has like 100% markup on cars is Singapore. Do you know, like, if you buy like a car that's like $50,000 in the U.S., it's $150,000 in Singapore. It's crazy.
I did not know that until you told me a year or so ago.
Yeah, Singapore's crazy.
Mm-hmm.
I mean, it's insane what cars cost.
You care about D-Dog?
No.
My Taiwanese sources tell me TTD also.
The Trade Desk. Don't touch that one either. Those are death stocks. I don't like the liquidity in there, anything. You got to be awfully careful. Yeah. I mean, last night we made the right move trading SMCI because it had 104 million shares traded. There was 10,000 on every block, and every single option that anybody sold, calls, puts, whatever it was a huge winner. But today, when they're thin like this, like that stock APP, remember we looked at this morning?
Yeah.
I mean, I couldn't get filled. So, I mean, if a bunch of people wrote me about it, and some people actually got filled, but no bueno for me. I'm offering some stuff.
2.5 million Tesla options have traded, 2 million NVIDIA options,
which is down from the 5 million days that we were having.
And close to 10 million some days. So yeah, no, for sure, volume down in each one of them.
Yeah. Well, anyway, I would say for me, I was a little more busy today than yesterday. We made about 62 trades today. Some opening trades, mostly in bonds, and a few. Oh, we did What's Your Assumption? So a few trades there.
Yep.
I would say the market again, all in all, showed a hell of a lot of resilience again.
Yeah, opening down 50, 60 handles after the number came out, for sure.
I am so tired of the market making lows on the opening. One day it's going to open lower.
Coin was trading lower. Everything was trading lower. Coin's up $8 now. Bob is up $5.
One day,
Palantir's up $4. I mean, Palantir's had a $7 range or something like that. It's up $4 now.
Palantir is another tough one. One day this market is going to open lower and go lower, and we're going to say, I told you so. But that has not happened yet. Let's see Palantir. PLTR. No, we had a good day in there. I don't know why.
Well, that's good.
I think they just myrtleized premium. Yeah. So here's the stock. I have one stock that I need to go higher that can't buy an uptick. You want Moderna.
Oh, mRNA. It's a lost puppy.
It's $30. It looks like death warmed over.
Yeah.
Cannot buy an uptick.
Look at this. Oi
is right. So I'm a little long Moderna. I feel like Moderna is my new, now that Intel's rallied, Moderna is my new Intel.
Well, make it your new Baba if you're going to get long it. I mean, I remember when Baba was trading lower too. So make it your new Baba. Forget it out of Intel.
Baba and Baidu have been good this week to us. I have only a position left on in Baidu, and that was good to us today.
Mm-hmm.
Actually, today, everything was pretty good to us. The only losers we had today were the Japanese yen, which was ugh. And
wasn't that your holdover best play of 2024?
Still is.
Still is of 2025 now. Sure,
we're up money in there.
Yeah, because it closed on its lows for 2024.
Boeing up $5 today. There's some stocks, man. There's some stocks that rallied. AMD, which was down all day. I'm looking at it right now. Man, that stock was ugly this morning. Ugly. And that rallied all the way up. So you had AMD. Ooh.
And I think didn't you do a DraftKings trade too with Nikki Batista? That comes. DraftKings has earnings tomorrow after the close.
Oh well, we don't care about that.
That's what you told him.
After the close.
After the close tomorrow. Right.
Oh, that's like an eternity. I might be stuck in a snowbank somewhere on the way to work.
That's right. That's right. So far, no snowpocalypse. Just a couple of inches out here, not much.
Nothing in the city. Have you ever been stuck in a snowbank?
Have I ever been stuck in a snowbank?
Did you ever get stuck in a snowbank?
Squish when I walk. I don't tuck when I walk. I don't get stuck in snowbanks. No, sir. I'm sorry. I've never. Even if I got stuck in one, I would never admit it.
Well, me and 3 friends were driving to Mont Tremblant. We were 18 years old.
Stewie, Louie, and Dewey?
And Dewey. Stewie, Louie, and Dewey. We were 2 blocks from the mountain, going over a hill, and my buddy was driving.
You were 2 blocks from a mountain. There were blocks. Got it.
We were about 2 blocks. Mountain. Going down a hill. My buddy hit the brakes. The car just skidded right into a snowbank, and
the Porsche slid right into the snowbank. Go ahead. What?
Our parents' Porsche.
Your parents' Porsche. God, that's good.
We were 18. Back then, our parents didn't buy us Porsches. We just had to use theirs. Okay? So,
oh my God.
So it's pointing straight up in the snowbank, like pointing straight up. So you should have seen the 4 of us out of the car trying to push the car up so we could push it down so we could push it back down the snowbank because we were too embarrassed to call somebody to come, help us.
At least you had some intestinal fortitude not to try to call somebody. My God.
No, we couldn't afford it either, so we had to do it ourselves.
Oh, man. You ever get stuck in a snowbank? Unbelievable.
Nowadays, kids would call their parents. Back then, it was like...
Call the parents, say, hey, Mom, Dad, come pick up your car.
Yeah. Nowadays, back then, it was like, nobody tell anybody this happened. It's the only time I've ever been in a snowbank. Sure. Yeah. All right. What time we got here? It is 2:52. We've talked about earnings. Look at something's going on that. Tesla just lost half its day. That's weird.
Yeah, they're talking about tariffs in there again. It's only up $9 now.
Yeah.
And the implied volatility actually upticked. I took a look at some trades that I made just a moment ago that were profitable, and now they're put them back out for more money. I'm not going to, sad enough. I have to keep my profits.
I don't know why I'm not filled in Meta. It's at a new high. Oh, there you go.
There you go.
There you go,
108
Meta.
on your call spread.
108. Now we put the 110 offer in, get all our prices up. Because Meta is just, and then tomorrow we let them have it, Bat. Just so you know.
Of course.
Tomorrow we give it to them. Like,
you're gonna call your 3 friends in the Porsche. Tell them today we give it to them.
First, I got to ask my wife tonight if it's okay if I sell the call spread.
Okay, that's right.
Then I push it out tomorrow.
Then you let them get it. Then you let them have it. That's right.
Yeah. Yeah, we'll have that conversation at dinner tonight. Honey, do you mind if I sell some call spreads in Tesla? I mean, in Facebook?
It's defined risk, right, honey? Yes, it is. Okay, you can do it.
All right.
You want to bring in our strangers?
Yeah, because if we don't bring them in now, Tesla might be down in the day.
I think we got Chris and Ilya. Ilya, Chris, how are you?
Gentlemen. Hello.
Hello.
Boys.
How are you doing?
Is it time to short Meta? Because we're shorting Meta right now. Is it time?
I like it.
I agree.
I'm not doing it because individual stocks is not really where my my macro lens is, but I like it. I sold a little Russell today after that bond market fiasco, but I don't really like the idea. I want to be a buyer of bonds again pretty soon here. I took my long off, but I gave away a bunch of P&L. It ended up positive, but still. But I want to be a buyer again, and I want to be a buyer soon.
I bought them all day today, starting a little too early. I bought the top after the number, and I bought the bottom after the number. So I think it's all going to work out somewhere in between. And we're offering bond options. We're offering puts in the bonds and notes right now. I'm on each offer. So hopefully on the last trade of the day, maybe somebody needs to cover. But I agree with you. Today is the day. They were 116 plus a couple days ago. Now they're just hovering over, 113.
113.
Yeah, that's a good pullback. That's a good pullback.
Yeah, it's good. I mean, PPI comes out tomorrow. It might give people a little bit more of a scare, but I'm getting ready to get back in.
Yeah, they don't have much downside. 111, 112, something.
And you got a memo, Sosnoff? You got the memo?
I did get the memo.
Okay.
Jay Powell sent me a memo, said they don't have much more downside.
Did you get the memo?
Got it. I didn't get the memo.
I'm going to have to amend the blog I wrote now. Now that we have the memo.
Dylan got the memo.
What's up, Mr. Radigan? How are you?
What memo?
The memo to buy Tesla yesterday.
Oh, buy bonds, buy Tesla, buy bonds. I'm feeling intelligently corrupt. Is that a thing? Can you be extremely intelligent and corrupt at the same time? I think that's sort of the new paradigm of glory.
Most people that are corrupt are intelligent. Like, the Bernie Madoffs of the world. He was supposedly pretty intelligent.
Yeah.
Sam
What's her name? Theranos? Elizabeth Holmes.
Elizabeth Holmes. I mean, Sam Bankman-Fried. I mean, all the true grifters are,
Bill Caddy.
Who?
Bill Caddy.
Yeah.
Okay.
So these are low-level mobsters. Don't worry about it.
Okay, I'm confused, but it's fine.
That was my dad.
He's just naming guys from his neighborhood.
Yeah.
That was my dad.
I tried to bring it up with Sosnoff earlier on Truth or Skepticism, but I know my counterparty too well at this point, so I don't even bother trying. But now that I have a larger group, there's going to be peace in Russia, by the way, or not peace in Russia. There's going to be a settlement in the Ukraine.
And become Russia.
Oil is selling off as a result.
What can't Trump do?
He can't tell the truth.
Anybody can give it away. You want to give it all away? No problem.
He can't touch his toes.
Yeah, he definitely can't touch his toes.
Hegseth told the world that European security is no longer a priority for the United States. So yeah, I think some kind of a something is coming.
Boy, oh boy, you guys could spin anything you want, man. Anything you want. Make it look anything you want. Unbelievable. You would have cut off a pinky 2 years ago when it was supposed to end in 2 weeks to get rid of the war. Now you're giving away Europe, you say. Unbelievable.
It was long oil back then, Tony, so...
Hey, I've been bearish on oil the whole time.
Are you a member of the Japanese mafia? They cut the pinky. That's what the pinky cutting comes from the Japanese mobsters.
That's
Yakuza.
right. You're right. You're right.
Yeah.
100%.
We should do that. We should do that.
That's how you know you got a real tasty trader.
Here at Tasty.
That's how you know it's real. Like,
Hey,
if you're
Beth,
willing
I
to
can't
take
come out in April.
if you're willing to take your pinky off, you got, you're worthy.
The loyalty. Lot.
And I'm gonna tell you right now, that would be big on social media. On TikTok, that'll be huge.
The pinky chop. And then there ain't no way you're gonna do some secret account of Interactive Brokers if you chop your pinky off for Tasty.
Billionaire financier forces employees to cut off hands.
Not employees, clients.
Only if we corporate finance full body tattoos
you want to
and
open
go
an
full
account?
Yakuza.
Like you got to send the ACH. We need to know your home address, your social security number, and you need to mail in half your pinky.
That would be bold. You want to open an account? You have to get a tattoo. Or cut off your pinky. Take your choice.
Yeah, take your pick.
It depends on if you want margin or not.
You want margin? Both pinkies. You want portfolio margin? You got to take off a thumb.
No margin, you squeak by with a tattoo.
The problem is, as you take fingers, they can trade less because all of a sudden they can't enter the trades because they're down.
No,
fingers.
you don't need your pinky to trade. You know.
It's the Fat Finger Protection Service. We just remove the fingers.
Yeah, we'll spin it. We'll spin it like we're doing you a favor.
like it's a protection.
Hey, Nick's writing into me. He doesn't want any more tattoos. He's not putting any more tattoos on anybody's bodies anymore. No more of that. No more of that. I don't know if you were around, Dylan, for that. Maybe Ilya and Chris weren't around either. We had stick-on tattoos that you had to put on with water of Tom doing his lean. He does that lean.
Mr. Cool.
Yeah. So we did it at a trade show, and people were putting them on the small of their back. Who wanted it on their thigh? I mean, who wanted it on a breast? And my son had to do it. And you know our audience, right?
He loved it so much.
This sounds like a breach of the labor laws.
That kid thanked me for days after that. He's like, "Thank you." These beautiful women
like a breach of the labor laws.
Could you tattoo me?
Boy.
And he's like, "Of course." It was amazing. He loved it.
Jim, I don't want to put a California license plate on your back. I won't do it, Jim. I won't do it. I'm going to take a quick 90-second break. I'm going to come back. I got more Tasty Live after this with the overtime, boys. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Well, he's more public in his mentality. I'm a believer. I believe that the world is good. And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Inflation skyrockets, but stocks shrug it off. It is Wednesday, February 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, here to take you through the next hour as we wrap up the futures trading day. If you're on the platform, if you're on the website, come over to YouTube. Tell us what you are trading, what you think of this turnaround Wednesday. Otherwise, if you're already on the YouTube, as the kids call it, come over to the website and the platform, see what we're all about. Guys, we had the CPI report this morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time, and those numbers came in hot. Headline inflation, 0.5% on the month over the month, year over year, bumping up back to a 3 handle. Core inflation back up to 3.3%. Yikes! Even supercore is up by 0.7%. All seemingly moving in the wrong direction. And then a funny thing on the way to the forum happened. We see that the market stops selling off immediately after the data and then spends the rest of the day clawing back. The NASDAQ here is actually in positive territory in the day, up by 0.03%. Ilya, help me make sense of this. Fed rate cut odds were cut down by a cut today, and yet equities are saying that, why should we be worried or not worried?
Lest you get excited that what this means is equity market resilience. Take a look at the dollar and find that it is weaker. If this was the kind of report that said, oh, goody, this is the good kind of inflation, the economy is accelerating, more earnings, more cowbell. No. When you look under the surface of these numbers, they are not good at all for the growth side of the equation. The reason we end up with these hotter than expected numbers is actually all the wrong reasons when you consider the economic growth perspective. The core services part of the mix, which is, of course, where all of the growth is, where all of the employment is, and where all of the inflation has been stuck since everything else disinflated now over a year ago to essentially nothing. That actually declined. In fact, we had the smallest contribution to overall inflation from core services since the first few months of 2022. This is not a good sign for growth. So how did we end up with these hot numbers? Well, the goods side of the equation became less negative because there's some natural statistical churn there. We went from a negative 10 basis points to a negative 3 basis points of contribution to overall CPI. But the real story, as you and I were talking about offline, Chris, was the energy side of things. And that's when you look at headline. Now, of course, core surprised higher also. So that's not necessarily energy per se. That excludes it at the top. But this was, even in its extension to energy services and sort of related things like insurance, this was a story about higher costs of energy becoming a positive contributor versus a negative contributor in December. In December, energy shaved off 4 basis points from overall inflation. Now it's added 6. That's quite a swing from one to the other report. And that's how we end up with these hot numbers. It's goods and energy becoming less negative in the calculation, but the actual growth part of the story is by no means encouraging. And that's why you don't get the kind of response from the US dollar for the most part that sticks. It ends up down against the euro on the day, down or flat against, in fact, most of its major counterparts, save for the yen, where it's just a pure yield story and the yen does what the bond market does. If stocks were, in fact, inspired by growth here, we'd be rallying. We're not. We end the day basically unched on the big indexes. Certainly off the lows, because if you were concerned that the Fed was going to have a head change entirely, well, that concern is plainly not here. And that's why you come off the lows. I do get the sense that maybe 25 basis points, which is all that we're baked in to cut now, is maybe the end of the line. Because to go from 25 to 0 is a big head change for the Fed, and they're not going to have room to telegraph anything like that for quite a while. They just walked through this exercise of Powell's testimony where he was gradualist and attempting to tamp down any expectations for any action anytime soon. And the next time they meet is March. So it seems like maybe the move in bonds relative to everything else looks overdone. Maybe the move in yen relative to everything else looks overdone. But this is not the kind of report that tells the Fed you can't cut at all. And it's certainly not the kind of report that says the U.S. economy is showing signs of strength. The internals here show quite the opposite.
Dylan, it feels like this is another day where we had a big binary event risk. And it's another day where the market absorbed the body blow, right? We get that hot inflation number, and that's a number if it came out in 2022. Inflation's accelerating, core month over month higher for the 7th month in a row. Fed doesn't have its hands on the steering wheel. Have we just deluded ourselves into buying every dip here? Doesn't matter if it's good news or bad news. Is that what we're working through right now, where we're kind of immune to anything that doesn't confirm a bias to the upside?
I mean, it feels like it, right? I mean, I obviously don't have an answer to that question. I would have expected, I mean, and this is why this validates Sosnoff's longstanding point, which is I tell you the number, I tell you whatever the CPI number, the Fed decision, before it comes out. Like if you told me we're going to have a hot, or even some would say quite hot inflation reading, that the NASDAQ would not be unched to slightly higher, that equities would sell off substantially. I won't get into the nitty gritty of it.
I mean, they did. So, they just didn't hold it.
Yeah, but again.
Yeah.
So yeah. Which means, but again, if you're not watching every tick of the day, if you're just a person and you're like, oh, how was the number? You're like, oh, inflation was a bit, hot, and then you look at the close and you're like, oh, it got kicked in the teeth for 2 hours, and came back.
Yeah, and I mean the price action validates exactly what you're saying, that most people, were you to have given them the number, would have said this is bad for stocks. That was their knee-jerk reaction, clearly. So most people were of that view, and then on reflection were clearly shown otherwise. I just have a hard time thinking this is good news for stocks that they've shrugged this off, because it doesn't look like the kind of set of numbers that's at all growth encouraging. And I think you're absolutely right, Chris. Were this 2022, it would be a very different story. But we're in a very different place in the Fed cycle now. And
but what place is that?
Yes. That's, I think, the key difference. Because we got a report like this on February 13th last year. I have that with this vertical line here on the chart. That's when last year's inflation data came in much warmer than expected. And did I take this down for some reason? I don't know why I did that. And I don't even know if I have the one for the overtime slide. So we're just going to use the slides from Futures Power Hour today. But I think this is the tell here. Okay. In our super core inflation reading, the biggest contribution is this transportation services. Ilya, you point out that we're going through a rebasing period here. And then we have this other source as well. Last year, the January report was like half the inflation was from transportation services and other. So when you like look through the numbers, and I think about what happened last January with the CPI data, I say, okay, well, last January was super hot, right, for that report. I remember the market selling off right before Valentine's Day, and then it was bam, the market was bought back up immediately thereafter. While we bounced around for the next week, we ultimately resolved to the upside right now. And that was the case for all of those reports really at the start of the year, where you'd get a bad CPI reaction and then the market bounces up, because you have that dynamic where, okay, inflation's missing and it's running hot, but the Fed is still going to ease. So what's the best hedge against inflation?
Well, and growth was accelerating.
And growth
Let's remember, the beginning of 2024 was a period of accelerating growth. That was the Fed going, hey, maybe we need only one cut. This economy is strong, yada, yada, yada.
Yeah, if this is following last year's template, it's not a surprise that maybe we front run then the reversal today. But it also probably means that we're going to have a few days of digestion here before we make up our mind about whether or not we're actually comfortable with it. We like it. We hate it. Of course, maybe we're going back into the hole. It's another weekend coming up, Fridays in 2 days. And we've seen the last few weeks that the market has de-risked on Friday afternoon. Right, Ilya, you and I go on Futures Power Hour, stocks start selling off. And then they sell off until the futures open, and they're either down for a few days or a few hours or a few minutes, but then ultimately the gap is closed. Maybe that's what's going to happen here again this weekend. But the S&P, the NASDAQ, they both show that great resiliency today. The data itself, to say that this was a surprise, 73 economists polled by Bloomberg News, not a single one thought inflation would be this high. So it is a curveball for the day. And while stocks rebound, our beloved bonds and notes just get taken out to the woodshed here, in part because those Fed cut odds just get absolutely slapped around. SR3, Z5, their year-end 2025 rates, we are now going back to our lowest point that we were on a closing basis since January. And in the Z6 odds, we are now going back to a place where there's still one cut priced in for next year, through the end of next year, but we're beginning to slip to where, as you point out, Ilya, we may be looking at one more cut in the cycle again. So I suppose the question is, at 4.6%, is our long notes, long bonds idea done right now? Because this is not what you'd want to see. Well, obviously not. It's not what I want to see. I'm watching money go out the door again in bonds. But this is a technical breakdown that fails. We have now since reversed into the uptrend. What does that say to you technically, Ilya?
So I got out of my my TLT calls when we got a little bit of a reprieve off the lows today, and that's fine. The trade made money, and I ended up giving away maybe about 50% of the P&L from the high last week. This price action says that if you thought this was a head and shoulders or some sort of other sort of analog pattern, that's not what this is. And so I thought the price action merited taking my remaining winnings and sitting down. But I am looking to get back long before much time elapses here, because I think once you get to that 25 basis point threshold, and there's no time for the Fed to methodically unspool the idea that they're biased to cutting, that's probably the end of the road. This is probably the last big downtick in the bonds. We get, at least for the immediate term, we get PPI tomorrow. There could be a shock there because, again, to your point, Chris, a lot of this was transportation. And again, let's really hammer this home. This rhymes very ominously with the University of Michigan consumer confidence data, which went down because inflation expectations surged. It rhymes very ominously with the ISM and S&P Global Service Sector PMI numbers from last week, which showed us the weakest growth in a year. This report told us that the reason inflation was hot was because energy and because front running of tariffs, most likely, or at least that's what the surge in the University of Michigan's inflation gauge told us. Respondents there said, we're taking inflation back to over 4% in a year, and the reason that we're doing it is we're concerned about the impact of tariffs. Meanwhile, the one part of the economy that's been growing healthily is a downdraft on inflation in this report, which echoes those weak ISMs and those weak S&P global numbers, which tells you that you are looking at certainly not stagflation, but you're looking at the kind of risk where growth is weaker and inflation is high for the wrong reasons. This is perhaps why stocks aren't rallying on this. They've managed to shrug off the initial, oh my God, the Fed won't cut sort of knee jerk, because obviously that's not what these numbers say. But from a growth perspective, this does not look good at all.
That is a difference if growth is increasing or decreasing in real terms, right? So if inflation's warmer, but the trade-off is like we're getting plus 5% growth in exchange for 3% CPI, but it's like, well, if we had 2.5% CPI, we'd only have 3% headline GDP. Like, would you take real GDP of 0.5%, or would you take real GDP of 2%? You'll take real GDP of 2%
all day long,
any day of the week, all day long, right? But a world in which growth is decelerating while inflation pressures are rising, that does speak to the modeling that the Fed has done. We talked about this after the China, Mexico, Canada tariffs, where if you to assume, given what happened in 2018, the impact would be somewhere in the neighborhood of a 1.2% decrease in GDP over the course of a year and a 0.7% increase in inflation, which if you add that up from where we are right now, it basically means GDP comes down from 2.5% or so into the ones, and inflation bumps up from the mid to high twos area into the mid to high threes. And all of a sudden, you're talking about real GDP that's now, 1% and change as opposed to being 2 or 3%. And that's has obvious implications for income. But Ilya, you're
huge
talking about
implications also for the world economy, considering this is weakness in the U.S. service sector, which is the only part of the global economy that's really growing.
Right. And you mentioned energy was particularly in focus today in the report. But Dylan, it was the comments about Russia that drew and piqued my interest. I'm sure that many people saw that Trump truthed or tweeted or whatever we call it these days about this. Posted, I guess, as they're not just calling it on Twitter or on X, that there could be a conversation about negotiating a settlement to end the war. Oil prices here react quite negatively to that today. We see here that it's not the CPI report on our 5-minute chart that ultimately knocks down the market. 9 o'clock is when, 8:30 here. Oil doesn't care. We see here that 9 o'clock rolls around, and then the Trump report right at noon that this conversation has occurred, and oil trends lower for the rest of the session, Dylan, what's your purview on this Russia-U.S. On treaty where Putin and Trump are planning on visiting each other's nations?
Well, I think that one, this was sort of, foreshadowed and not unexpected. 1, 2, obviously if it's, bad for oil prices. 3, I think it becomes interesting we've talked about around this. I'd like to see the other charts, maybe not great for India because India stops being able to, stops being able to exploit the situation. Maybe good for Dubai because they become the home of capital flight if capital restrictions on Russian money get lifted in Europe and they don't want to bring it back to Moscow. Dubai is becomes the ultimate third party safe haven for Russian money. And I guess is this what's the who knows? I don't know whether it's tick for tick, but obviously it's going in that direction. So I would say it's India negative, it's Dubai positive, it's probably Istanbul positive. I don't know if Turkey is worth financial attention at this point, but
I don't think
probably,
Turkey would be an intermediary that would benefit from all this, right? We just saw how Turkey moved on Bashar al-Assad in Syria. Russia's probably not too happy about that.
Just culturally, Istanbul is the closest to Moscow and is decades of just being it's like the Miami Beach of New York. So if you're in Moscow and you want to set up somewhere in the south, so to speak, and you don't want to go to Dubai, which is a longer haul, Istanbul is your only other choice. And it became the location of record, during the war. With that said, I don't disagree with what you're saying, which is they're a less reliable partner than Dubai, which is Dubai is a city built on finance. Istanbul is a city built on its culture, which is not the same as being built as a banking capital. Dubai is built as a banking capital, and it is surely a more politically reliable location.
Well, and I increasingly, from all angles, the scuttle, but essentially is that Dubai is today what Hong Kong was 10, 15 years ago. Sort of, if you want to go to where the hot money flows free and there's lots of stuff to do, and the overarching lens through which people look at is how can we help you to make money today? And there's a kind of influx of expats and safety and all these things. Dubai starts looking a lot like Hong Kong circa 2010.
Does that mean that China's going to take over Dubai in a few years?
It means that the China takeover of Hong Kong is another thing that's been supportive of Dubai's boom, and this deal is great for them.
And teaches Saudi an important lesson about taking things over.
You can just do it, apparently. Yeah, like the Trump comment yesterday with Gaza, like, how much are you going to pay for Gaza? He's like, we're not paying for Gaza. We're just taking it. The geopolitics is really the fascinating aspect of this, because if there is some sort of resolution, these two poly markets I've been watching, obviously this isn't a representative sample, yada, 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 no American traders. But the odds that Trump ends the Ukraine war in the first 90 days, a few weeks ago was trading at 18 cents back on February 2nd, and those odds are now up to 36%. The slightly variation of that market will be a ceasefire before July. Those odds again have risen from about 36 cents, 35 cents or so back at the start of the month to now over 50. So that tells me one of two things. Like, there's clearly, if you're following the news flow, if you're looking at the conversations, heck, the prisoner exchange last night, right? The conversation that's revealed public today, they're clear on treaties. Whether you like it or not, this is the direction things are going. So the question is, if we're only priced in, say, a 30-odd% chance for a ceasefire in the first 90 days and a 50-odd% chance that we're going to get a ceasefire by July, that means the market is not fully priced. That's not to say that we should be buying those and saying, the war is definitely going to end. But it means, were it to end, there is going to be capital moving around, right? When we get to an 80% likelihood that a ceasefire is going to be arranged, the money is going to have been moving to where it should be. So the question is, where should the money be going, guys, if this war ends? Is this the end of oil, right? Does this mean with Russian supply coming back onto the market, OPEC Plus is going to be facing more difficulties about expanding supply? And in turn, as Trump continues to push forward his drill baby drill agenda, does this increase the probabilistic scenario that we're going to be looking at an oversupply in the market sticking around for longer, right? Does it mean maybe a collapse of OPEC Plus altogether? That's certainly something possible. What if the US and Saudi Arabia and Russia decided to do a pact themselves? The rest of the world is on their own. But the end of the war, and given the relationship and the people involved in pulling the levers right now, means that there's going to be a great deal of capital dislocation soon, just like there was at the start of the war. And I think that perhaps provides, we have the AI story one in the background. Obviously, that's going to continue to be there. But two, I question whether or not if we should be treating it like an unwind of what happened in December, January, February of 21, 22. It feels more complicated than that, Dylan. Like, we can't just reverse engineer what we did back then and play the opposite side. I'm not going to go long tech stocks and short oil this time, although maybe that is a good idea.
Yeah, why aren't you going to do that?
Well, doesn't that seem... Well, that was the play back then. Be an oil man, get short Kathy Wood. That made my year. So
and now get short, and basically you could. I mean, the real situation would be if you get the Hamas hostage release this weekend. Oil's going lower. I mean, that's a big if. I understand.
Well, actually, one interesting thing about all of this, and one reason, so I got out of my oil short, as we talked about yesterday. Obviously, it would have been better, but by a fraction to wait. But I don't think it doesn't. I don't think it matters terribly. And now that we're approaching the previous swing bottom, I'm actually a bit hesitant to be a seller on these headlines, because the entire story that we were so successfully trading last year was that neither the Russia-Ukraine theater nor the Israel, Iran, Hamas and company theater really manifests as actual disruption of crude deliveries. That the geopolitical risk, when it pops up, is a thing to sell. So now that geopolitical risk is going away structurally, it doesn't really make sense that there should be another big removal of a risk uplift in the price of crude, since everything we've been doing sort of speaks to the idea that it wasn't really there, that it was incremental panic. Instead, the influence might well be that the ending of hostilities, in particular in the Russia-Ukraine theater, means China has to now buy oil on the open market again. And they're the largest buyer in the world. You get that
China
demand.
and India were the two winners in the whole situation.
That's right.
They'll be the losers coming out of this. In terms of oil, I don't lose generally, but in terms of cheap oil, they'll be the losers.
Well, right. But even more dramatically, if you see their demand now start to show up in market rates, because as opposed to buying off market on the low from Russia at steep discount, they have to buy through the usual SWIFT-based US dollar channels. Well, that's going to probably look like the demand for oil picture is not what is priced in currently, because what is priced in currently doesn't really account for their flows actually. Surely it anticipates it to some extent. Markets unpick these things, they find proxies, they adjust, but now we'll see it for real. And what it might actually do is lift the price of oil, of all things, while the markets kind of rebalance and readjust to what the real supply and demand, let's call it equilibrium for lack of a better term, kind of a level is. Obviously, this is something that's always in motion, but there might be a different floor on this once China is visible and India is visible in the price as an open benchmark.
Dylan, one of these theses that we've been kicking around since the election was that if the Russian war ended, right, if the Russian war ended, then money centers would become greater outlets for capital flows, while the intermediaries that process the commodities would suffer. We talk about how UAE would do well in that scenario and India would do poorly. Since then, since the morning after the election, the UAE ETF has outperformed the India ETF 27.65%. It's been a very strong run. India is now at a fresh closing low for the year, and it is now the lowest close that we have seen going back to the end of last January here in this market. So Indian equity is really being punished right now. It's not just a function of a strong dollar, although that's certainly hurting. The Indian rupee has been getting hit pretty hard. particularly in those Asian hours in recent weeks. But it's also a fact that they may be losing a major pipeline of business that has kept their economy, churning for the past 2+ now almost 3 years here. So Dylan, I think it's worth continuing to watch. Also, what does that mean for something like gold? I don't know. Probably that Russians are going to be buying more gold. China's buying more gold. They're changing their rules to allow insurance companies to buy more gold. Right now, for the big three COMEX vaults here in the United States, there's more gold in Manhattan right now than there has ever been before in American history. The gold being stored in COMEX vaults has surged to its highest level, just eclipsed the COVID peak. Who on earth is stockpiling all this gold, and for what reason? Why are we doing that? That's a good question. Maybe we're doing a Die Hard 3 type of thing. I don't know. But there's a lot of demand for precious metals out there right now. As this war looks like it's coming to an end, it's going to be something that we have to follow here, obviously moving forward. But adjacent to the war ending, Dylan, we of course have negotiations with the White House. You mentioned yesterday that you were looking along the shares.
Tesla buyer. Mm-hmm.
Yes, of the president's top advisor, Elon Musk. Today, he announced that he will be sticking around in Doge for at least 4 more months. When that news came out, Tesla share prices dropped from where they were trading roughly $345 and change, now down to where we are in the after hours, $336. Is this the purest reaction, purest evidence that we have that the market thinks that Elon Musk's time is divided, and quite frankly, the best thing that we can look forward to once we get a sense of when he's going to be leaving Tesla? Should we just be buying calls on the other side of when his expected exit from Doge?
It's a good idea.
Excuse me.
You're just to run it out. I mean, the only reason that's probably that's obviously fraught with risk is, time commitments are changeable, and so what was said today doesn't mean that happens tomorrow, as we all know. But that was a great linear illustration of the market's preference to have him not in Washington, or at least of the Tesla shareholders' preference to not have him in Washington, in the most literal expression thereof. I mean, it's a different kind of madman's delight, because you're basically banking on the fact that there's not going to be a calendar change. So you're buying calls, whatever, for June 1st or something, or July 1st, on the belief that, that the second half of the year that Musk is out of there. And that he's saying some.
Yeah, we could put it as a calendar call spread, right? Like we're short the front dated months, and we're long the calls further out, right? Like if he's going to be sticking around in the short term, the market clearly is assigning a discount to Tesla share prices with that news emerging. So maybe this is an albatross for a little bit of time here in the very short term. And then in turn, when his exit from Doge does come, then the markets is finally his attention will be back on the things that we as shareholders care about, which is making us money. The shares can be rewarded.
I mean, is it not surprising that what he said was only 4 months? I mean, do we not have a 2-year window in which they're supposed to prepare this Doge report and identify the savings that they're going to identify? Is it not a bit strange that we're saying, oh, well, he's just going to be there for a few months and then he's gone? And of course, Vivek is already been made gone. Who's running this thing, and is anybody, and what's it going to do in 4 months for the remaining year and a half?
No idea.
Aren't they supposed to be running it?
Dylan?
No. I mean, I don't want to change. I was going to change the topic, and it was inappropriate. I'll put in a little. We have time enough that I can come back to my primary issue. I don't. Who knows the future of Doge? To answer your question, Ilya, I mean, I think that his thesis is that he can institute a system that then, once he institutes the system, that the system can be managed by other people. We'll see. I think that I like owning Tesla, full stop.
The odds of Elon Musk leaving Doge before the end of July in Poly Market have increased from 16 to 20% over the course of the day. So, Dylan, I think you have a good point there that, there could be some task that he finds to justify sticking around for a little while longer. There may be a way to structure a trade there, right? Obviously, I'm paying attention to this via XLY. Tesla's about 15% of that particular ETF. So its bounce today was nice, but there's still a lot of damage here. And you're starting to see XLY fall apart, which is problematic. You go over to XLF, on the other hand, it's off the highs, but recovering a bit. You can go to industrials. So that's not looking fantastic. The cornerstones of the sector rotation, it's a little sloppier than it was a week or two ago, where it's not consistently clear across the board. Home builders today of interest, they underperform basically everything except the Russell here. With tariffs, Trump says this afternoon reciprocal tariffs could be coming down the pipeline. With tariffs and the Fed potentially needing to stick around with higher rates, how is housing affordability going to get solved in this country if we're not going to build anything?
I don't believe it will be solved. I think the answer is it doesn't get solved. That you end up with, I think America is rapidly, and everybody knows this is just becoming like a legacy European nation with an overclass that owns the landlord class and the renter class. And you're either born to a family that owns real estate or you're not. And that's it.
And by the way, slightly less this was no, I don't. This was the order of the day for most of human history.
Thank you, Ilya.
What's really changed things is the incredible 40 years of perpetually declining inflation and declining interest rates that has enabled a lot more people to take out loans to buy real estate from about the late 80s, early 90s through to the COVID pandemic. And this was always going to be a thing to some extent because, of course, the demographics of the situation are such that the baby boomers are exiting. There is not as big of a generation behind them. And so everything is changing. Labor markets are changing. Everything is changing unless we decide that we're going to build more in earnest. And that may be coming. Might be one of the only things that the two sides of the political spectrum agree on, as a matter of fact, that we need to build more stuff. Let's see it. Because right now, the share of inventory of overall single family homes that's new houses is only about 1 out of 4. Almost all the inventory is existing inventory, and rates need to come down to unlock it. As we've talked about a lot here, the rate hike cycle in 2022 essentially took both buyers and sellers out of the market. If you're selling, why would you sell? You've locked in a mortgage at what, 3.8, 3.6 on average, and you're gonna refi it at twice that? No.
No, we keep getting pieces of mail like, have you thought about refinancing your mortgage? Absolutely not.
Absolutely not.
No. Not at these rates.
Save the trees. Don't send me this nonsense until we're at best at a 5 handle.
Yeah. Builders here, they face a problem where if we're looking down the tariffs and we don't have the reforms, the margins that are being eaten into begin to weigh heavily because it's that or they pass on the cost of the consumer.
Yeah.
Fannie Mae put out a report a few weeks ago. If you want to get housing affordability, forget back to where it was when we were all young whippersnappers, Dylan. But back in the day, like, say 2019, pre-pandemic. The good old days of 2019. What a world.
I enjoyed that year. I think I went to Hong Kong in 2019.
Yeah,
it was when Hong Kong was a free and prosperous state.
Oh, what a beautiful place Hong Kong used to be.
I think it's probably still lovely. Chris is trying to do his job here. Sorry.
My
the
friends
mountains,
left.
the water, the boats.
My friends have mainly
the dumplings.
Dumplings.
Dumplings. Come to San Francisco. Dumplings can be had here.
You say some of your friends have departed. More of my friends have moved in. It's
To Hong Kong?
That worked out. Yeah, like what?
Yeah, a lot of my friends.
I think they're commies, though.
Yeah, a lot of my friends in finance that I used to see there a lot. They've picked up and left over the recent
I had a
years.
friend who opened an office in Hong Kong right before the revolution and then had to shut it down shortly thereafter, taking a material financial loss in the process and coming out with some great frustration.
Yeah.
Other than that, I don't have any friends in Hong Kong.
Well, so this Fannie Mae report says one of three things needs to happen in order to return housing affordability back to where it was just 2019. So I guess 6 years ago now. What are those three things? Incomes need to rise 60% overnight. Now, granted, that'd be nice. But if incomes rose 60% overnight, do we think that would filter through into house prices? Probably. The 30-year mortgage rate needs to drop down to 2.35%, which, fun fact, at the height of COVID, the 30-year mortgage rate hit a low of 2.65%. So we need to have a crisis with more stimulus and the Fed's balance sheet largesse being used in a greater capacity than was used during COVID to get mortgage rates that low. Probably not happening. The third scenario would be an immediate 30% correction in house prices overnight. Now, I think about this in the area where I grew up and now where I live, just north of New York City. In 2009, at the peak of the global financial crisis, house prices declined by 15% that year. So what you would be pitching to people is if you want to get housing affordability back to where it was in just 2019, you're going to have to endure a loss to your home's value twice as great as the worst loss that you've ever seen in your lifetime. Which one of those three things are realistic or palatable right now for people? Are we going to get 60% wage increases overnight? Are we going to get a 2.35% mortgage rate? Are we going to look at a 30% reduction in home equity and just smile and take it? The only way out of this stuff is to build. It's the only solution. We've tried everything else. We've done all the environmental reviews. We've done the traffic reviews. It's happened. This is the choice. We can build something or we can accept that this is the problem in perpetuity. Dylan, you say that this is never going to be solved. Oh God, that's so bleak. That's so bleak. And I suppose
I mean, what do you mean bleak? That's the history of mankind. One group of human beings owns all the real estate. Another group of human beings does not.
And then what happens at the end of that?
And those who own the real estate give it to their children, and their children rent it to those who. I mean, you know.
There is one difference. In fairness, while I completely agree with Dylan's historical analysis, one would be foolish not to, because it's just facts.
Right.
There is one key difference.
Okay.
Real estate used to be the main source of wealth. This is feudalism.
Sure.
The main innovation of the Renaissance was to decouple wealth from real estate with the advent of banking and credit, mainly coming out of the Italian city-states. And so
mainly coming right out of here in Milan with the Met. I mean, this come on, I'm in the this
Medici's.
It was invented a block away from me. Come on.
So what you end up with then is the boom in trade, the boom in financialization, the birth of fractional reserve banking. You're welcome for that. And the end effect is that you can build wealth outside of just passing down the castle from one generation of tutors to the next or whatnot. And so you then have a different world, and that's the world that we live in now. But from a real estate perspective and from sort of owning property perspective, this is much more like history than like the past 40 years, which in this sense were an aberration.
Very frustrating turn of affairs in the housing market.
I mean, how about I would say here's a solution for you that's abstract and just to satisfy your angst, but multifamily housing. The whole idea that everybody has to have their own building is absurd
and strange.
So,
historically.
Okay, but this is the problem with that. And
this is an abomination. Who do these people? What are we doing? Like,
yes.
What are we doing?
And
everybody's got to have their own 5-bedroom house. Everybody's got to be the king of the castle. Maybe you guys got to calm down and move into a building with everybody else, like everybody else always has forever.
Yes, that's all very well and good, and like there are legitimate density reasons for why having more people living in a smaller area is better, right? Like if you are someone who's concerned about climate change, a 30-story apartment building in Manhattan does more than for a single-family home.
Neighbors, it creates more of a society, less isolation, it's less hatred, more interaction, more interdependence, more need to reconcile petty disputes.
Depends where you are in the income sphere, right? There's a lot of research out there that suggests that if you are in a very low income situation, the dense living actually becomes part of the psychosis that you deal with, the punishment of being poor, because you are inundated. Your senses are constantly inundated with the smells and the sounds and the sights because the walls are thin and there's just no privacy, right? You lack that privacy and your sense of safety is gone because your senses are always being inundated. So there's a balance.
Take a look at any hip hop album coming out of New York City circa early 90s. You'll get a very clean picture of what Chris is describing.
So like multifamily housing is good. Is it too dense? Yes, but also like there is this conception, and this is something, Dylan, that we want to address. Like there's the idea passed on from our grandparents to us who grew up in the post-World War II era that we were entitled to move out to the suburbs and have a plot of land with a green lawn on it. Right. And that is still very much, it may not be Gen Z's thing and millennials may be the very tail end of it. But for a large portion of the country, the notion is that like I work hard, I go to school, and then I get my own home. I'm not going to have to share with other people because I'll be financially independent. So that's a cultural break as well that I don't know that most people are willing to accept right now.
Then you can rent your house.
And there is a solution. It's just the solution is to build.
Don't be about owning it. You can rent it. You're going to be a renter then. That's fine. You can't have it both ways. You want to own something, you can own a multifamily. You want to be the king, you can either be born to a rich family that owns real estate or you can rent. Those are your two choices.
Or we can build, to Chris's point.
Or what?
There's just, or you can build, to Chris's point.
There's just build.
You can't build because you don't have enough money. Lumber's too expensive. Inflation is too high. You don't have the money. You can't do it.
What's that mean? Like men will do anything except go to therapy? Like we will do everything in this country except build the freaking housing.
Yeah,
we will do everything else.
There's all the room in the world. Apparently, we're lumber independent to the point where we're slapping tariffs on Canada, which is a big lumber market for us.
Yeah.
So apparently, that's not a problem because we're lumber independent. And if we are in fact slashing regulations, which is what oftentimes holds up construction, then you could say that if all of this is a benign kind of a thing, ultimately, then here we go. I mean, lots of the so-called Build Back Better agenda, only a very small part of it got actually implemented, but the interestingly named Inflation Reduction Act had a ton of infrastructure build out in it, and very little of it has actually occurred because of things like environmental reviews and what have you. So you unlock that, you can build a lot.
Yeah, I mean, I also have like this very blunt view about that kind of stuff, which is, if we don't build this, if we build this, this species may be endangered. Sure. If climate change is existential, that species is dead.
As is every other one.
As is everything else. So if you believe in this stuff, like, do I want to go to the movie theater at 3 or do I want to stop and get some, go to the grocery store and pick up ice cream? It's like, well, if I want that ice cream not to melt, I probably shouldn't go to the movie theater right afterwards. I might have to skip the movies and go back home. There are trade-offs in the world, right?
Yeah.
So like if we care about housing affordability, you just got to build. If you care about climate change, you know what? You got to build. You got to do it. You have to do it. That's what we should be doing. We should be building. Let's get back to building. Can we do it?
The problem is the word should implies some sort of right and wrong, which is non-existent in the world of the Trump administration or artificial intelligence. There is no right, there is no wrong. There just is.
But what there is a trade-off. I mean, you can either like to have your environmental reviews, or you can like to have cheaper housing. You can like to have ludicrous rules saying you're not allowed to have the cheaper aluminum windows facing your street. They have to be made of wood because things have to look like the house that you bought that was built in the 1950s. Very granular example, I know. That's for those of us from San Francisco. And you could do that, and that's fine. Or you can have cheaper housing. And the view from the public seems to be that what they want is lower inflation, hence what we've just seen in the U of M numbers, hence the survey that you showed me earlier, Chris, from Bloomberg, that says that folks think the administration is doing maybe too much on tariffs and not enough on bringing inflation down.
So what should maybe they do? Should they stop threatening to raise prices?
Maybe build more houses? I don't know.
But how do we do that if we get rid of all the people who are going to build the houses? How are we going to do that if lumber costs 25% more expensive?
Okay. Can we go back to the beginning, please, in the last couple minutes? Because I'm unsatisfied with the beginning.
Talk to me about the beginning. There was light, there was darkness.
How is it, good sir, that we can have hotter than expected inflation, we can take rate cuts off the table, and the stock market doesn't care?
I think the reality is that it does. And if it didn't care, it'd be rallying.
It does care, Dylan. Stocks are an inflation hedge. That's why the NASDAQ is higher now than it was before the inflation data came out.
Okay. I feel like these are like I feel like we're like talking I feel like we're inventing words after this is like, you know what you're doing.
The bottom line is that neither major index, not the S&P nor the NASDAQ, has gone anywhere. And the same sort of bottom line that we had on this yesterday and the day before and last week and almost every single day for 2.5 months is choose your own adventure. This market does not want to have conviction. It is still stuck in the same up and down 6% range where it got into in early December. And if it was shrugging off these things, it would be shrugging them off. Notice, since the last swing high, what is the market doing? It's setting lower lows. Maybe, but it's definitely setting lower highs. After every single shock, after the DeepSeek shock, we've not revisited the high. After the first tariffs shock, we've not revisited that high. It's a lower high. After last week's gap, we've not revisited the high. It's another lower high. So is this a market with incredible resilience and conviction? Where?
Ye of little faith. Dylan, I came across a really interesting stat about corrections in the market and how often they occur. Since the low on March 9th, 2009, the global financial crisis low, we have had 29 episodes where the market has declined by 5% or more. Those episodes have lasted on average 26 days for an average correction of 7.6%.
Okay.
Given the bull market that we're currently in right now, shouldn't we afford the benefit of the doubt to lean long deltas until proven otherwise, given the broad distribution of occurrences where this market just either grinds sideways or is moving up predominantly for the last several years, decade plus even?
100% yes. You'd be a fool. At this point, anybody with a point of view that is not that
Well, the market has a point of view that is not that, because it hasn't gone anywhere since early December.
But just look at even today. They tried to say should have been kicked around the street today on that inflation data. Lasted an hour.
Because that's not what it cares about, apparently. And if we look at the front end of the yield curve, we can see Fed policy odds have been steady for about as long as stock markets have been sideways.
That's what I was getting into it on Twitter with. I wouldn't say getting into it. Him and I were having a respectful exchange with Cameron. No. I was getting into it with people yesterday on Twitter because, I, as a con law major, the fact that I have so many people screaming like, well, Trump's executive orders can do this. It's like, that's not okay. Cameron pointed out, like, why we've been focusing so much on Trump more than like the Fed and inflation. And I said, all due respect, it kind of looks like the market doesn't think inflation matters. Coming into today, the S&P was pricing in 0.5% in either direction. There were points in 2022 and 2023 where you were looking at 1.5%, 2% either way on a CPI day. And the fact of the matter is that the market is telling us right now that the Fed doesn't matter all that much, because the Fed's next move is going to be determined by which way inflation goes. And which way is inflation going to be moving? That's going to be determined by the next fiscal policy change we have coming out of DC. If that's a budget from Congress, if that's a tariff from the White House, the path forward on inflation and what's happened in the rear view isn't necessarily what's going to inform the Fed's next decision, right? And so you look at this market reaction today, yeah, inflation last month was hot, but does that really tell us if the Fed is going to have to hike or cut or stay on hold or anything? No, because if the tariffs never come to pass, then the Fed won't need a hike and they could probably get back to cutting. And if the tariffs are bigger than we anticipate, then the Fed may have to turn this boat around entirely. So you can't really react. Unfortunately, this is the game right now. The game evolves over time. Why didn't we talk so much about Biden in 22 and 23? Folks, you guys called him Sleepy Joe for years. He was asleep at the wheel. We didn't have to worry about him doing anything. It was the inflation reports, the NFP numbers that guided the Fed's decision. Fiscal government wasn't doing anything. Manchin and Sinema were shooting every bipartisan piece of legislation down. It was gridlock, but there's no gridlock right now. One party has all the levers of control. That's why in 2021, we focused a lot on what Biden was doing because of the Inflation Reduction Act, the immediate COVID response. Democrats had the chambers, right? So when there's gridlock, who cares what's happening with the president? But when there's not gridlock and that president really can push the country in a certain direction, their words do carry a lot more weight. I think today exemplifies that. We have a hot inflation report that if this came out in 2022, the market would have panicked. The Fed is missing the boat. Doesn't have its hands on the steering wheel, but instead right now we go, you know what? The Fed doesn't have its hands on the steering wheel. Trump does. So who cares what the over-the-shoulder data says? We need to be worried about where asset prices are going to be 18 months from now, and this report doesn't inform us one way or the other. That's my spiel.
It doesn't inform us, but that it's showing weakness in services, which rhymes with other weakness in services we've seen elsewhere, and actually warns that where we're going in 6 months to 9 months is no place good.
It's for a third or fourth week that we're going to end this episode of Overtime with the S&P right near 60, 70. Hopefully tomorrow's different. For Dylan Radigan, I've been Chris Vecchio. For Ilya Spivak, I've also been Chris Vecchio, but you're going to see Ilya Spivak in a quick moment because he's back with Macro Money coming up at the top of the hour. I could be here later today for the Price of Truth, so see you later, folks.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in a pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammy is when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
U.S. inflation is hotter than expected, and the markets are confused, unsure of what to do. At least that's the message that we are getting here from stocks, currencies, and perhaps the bond market. So what do we make of all of this, and what does it mean going forward? See, turns out it might be a deeper and more interesting story than meets the eye. We're going to try to unpick it here on Macro Money. This is Ilya Spivak, head of global macro here at Tasty Live. And the sort of price action that we got from these numbers today, understandably confounding for the markets. We can sort of clearly see in the response across the major asset classes just how confounding it was. But the upshot might well be something that is much more insightful than it appears at first blush. And that's what we're going to try to unpick here as we look at what the internals suggested and how that might actually line up with what the markets ultimately did, and then what they might do next. So, first, the results. The headline inflation number higher than expected, 3% versus 2.9% expected. The core reading also higher than expected and actually up versus the downtick that was anticipated. Markets thought we'd come down from 3.2 to 3.1, and we instead went up to 3.3. So all the way in the opposite direction. So not surprisingly, at the first look here, what we have is an ambiguously higher set of inflation numbers than anybody banked on. And the response from bond markets really makes the most sense. We have a sharp move higher in yields, sharp move down in the bonds. We can see this is the continuous contract for ZB, the 30-year rate. It ends up seeing the most damage. Things are more contained at the front end of the curve, and the 10-year ultimately looks more like this, but suffers a smaller decline in percentage terms. This is really where the bleeding is. The market's apparently saying, oh, well, hotter inflation means the Fed will have less room to cut rates looking forward, and that's how you end up with rates surging in bonds, dropping back into that. We can see that inflection zone around the 113 area on this ZB benchmark. So this part of it makes sense. Higher inflation, probably less of a dovish Fed, so rates go up. This much makes sense. What's interesting is what then happens in stocks and in currencies, because it ends up being a very different story. Stocks initially lurch lower. That's not surprising. You can see that right here in this latest candle on the continuous S&P 500 futures contract, the ES benchmark. But they ultimately come back in and erase most of those losses to finish the day down, but only by a whisker. It is a even more dramatic story for currencies. But before we go there, just the main takeaway here still, the range that has held since early December, it holds. And we haven't gone anywhere still. About the only thing we've seen happen is that since that DeepSeek shock here, we've continuously set lower highs. So a lower high from the DeepSeek spike, a lower high after the initial tariffs to Canada and Mexico that didn't really happen spike. And so we seem to be kind of inching lower. Nothing is really happening. And equities did not find in this CPI report what looked like, at the very least, a convincing catalyst for deeper losses. Nevertheless, we also don't find a catalyst for convincing gains. So is it that the market is shrugging off higher inflation? Or is it that the market saw something else here that maybe wasn't the initial reason to get spooked and not the reason that the bonds did what they did right here, but something else? And we'll try to see what that is. The response in currencies likewise suggesting something else might be happening here. Take a look. With higher yields, the natural expectation is that the US dollar would grow stronger because its yield advantage against other currencies would be bolstered. And indeed, just as we had an initial spike in the stock market lower, we had an initial spike in the US dollar higher. This is a chart of the euro as a kind of benchmark, most liquid version of the dollar's value and a kind of benchmark for what the dollar does on average against most currencies. As a matter of fact, the DXY, the US dollar index, is overwhelmingly skewed to euro in the basket because many of its legacy currencies that initially made up the dollar index are now the euro, like the Deutsche mark or the French franc or the Italian lira. And so this is a good sort of barometer for overall US dollar performance. And ultimately, we see the US dollar actually ends the day a touch lower. It does rally, but as stocks reverse course, so too does it. Now, we should point out there's the exception here. The Japanese yen is significantly lower against the dollar today, and that's the most bond market adjacent, the most yield sensitive version of the dollar's expression because of the unique characteristics of the yen, whereby it's basically just a play on US yields. But outside of that, the dollar clearly much weaker than you would expect, and stocks more resilient than you would expect if you came into today, as apparently most markets did, with the idea that hot inflation and fewer Fed rate cuts is bad news for sentiment and good news for the dollar. Because indeed, those were exactly the initial reactions, and both faded over the course of the day, despite the bond market looking rather unambiguous. So what was this all about? Well, it certainly wasn't about diminished Fed rate cut odds, because they have become somewhat diminished, or at least somewhat moved around. So we can see that we are down to a single rate cut for this year, to 27 basis points. The markets aren't even trying to flirt with the idea of two. The Fed, of course, said that there would be two, or at least that's the median forecast of Fed officials as of December. The markets have questioned that, but here the verdict is quite clear. For next year, the situation has become a little bit more dovish. So we've gone from about 17 basis points being baked in for next year to now a full cut on the menu. What's interesting is that the upshot has changed very little. The overall rate cut cycle being baked in over the course of this year and next has only narrowed in by about 2 basis points. It was 54 basis points in total yesterday. Before this data, it's 52 basis points now. No big changes. The markets are still very much off sides relative to the Fed. The Fed thinks that it's going to do double this. But the markets think that the mix of when the cuts are coming has changed a little bit. Fewer this year, a little bit more next year. But ultimately, only 0.5% is still only 0.5% yesterday versus today. So what might explain this? Well, looking at the internals of the report, you start to see what might be going on. So here's your headline number, 3%. It's a little bit higher than expected, which was a hold at 2.9. Here's the core number going up, 3.3 versus 3.2, and the expectation was that it would go to 3.1. Now, let's consider here what the biggest contributor to inflation is. And not surprisingly, it is the service sector. If we very quickly look back at how this has evolved, we can see what this looks like coming out of COVID. So we can see here's the onset of COVID, and initially, energy completely falls off the map because the global economy is effectively closed. And then once you get to the reopening, energy surges, and it is, of course, helped along by the breakout of the war in Ukraine and the adjacent energy shock in Europe. Then goods inflation starts to pick up as you get reopening from COVID, and those supply chain disruptions from the pandemic really take their toll. This is the part of the complex here that the Fed was calling a transitory inflation that was likely to go away by itself. And indeed, it already started to do that before the Fed even started to cut and or hike rather. And indeed, there we go. It's already whittled down to next to nothing by the end of 2022 going into 2023. The same thing happens to food inflation. This is another global supply chain disconnect sort of a story. Here you get this big build in food costs, but then again, as you get those supply chains normalized, it goes away. Where inflation is left is the service sector. This is where the Fed perhaps miscalculated on its transitory idea. As we've argued then, and as we continue to argue now, this is mainly a story about the cost of labor being sticky. And when people get big wage jumps or are hired coming out of COVID when labor is still scarce and people are reluctant at a heavy premium, those costs don't adjust back down as easily as floating costs for food and goods and things like this. Those costs are locked in unless there is some sort of a mass reset of wages. And of course, that means layoffs. And we've seen some, but not nearly the kind that would bring us a meaningful rise in the unemployment rate, which has not materialized. So this is where we are. Most of the inflation is in services, and indeed most economic growth is in services. Now let's look back at these contributions. The inflationary contribution from that critical service side actually declined in this report. And the food component was completely unchanged. The real difference, the real way we ended up with these hotter numbers, and by the way, that's including core, is that we got a readjusting in goods that seemed to rebase from a bigger negative contribution to a smaller one, and a rise in energy. Now, this is, of course, the core, so how in the world would energy end up here? Well, transportation services are one of the biggest reasons why core inflation is hot here. And of course, an input into transportation services is the cost of fuel. So what happened here was mainly not the kind of thing that would spook the Fed. And as a matter of fact, what happened here was a weakening of inflationary pressure in what is singularly the most important engine of U.S. economic activity, the service sector. Now, what this rhymes with in a most unwelcome way for U.S. economic growth is the set of purchasing manager index numbers that we got last week from both S&P Global and the Institute of Supply Management. Here's the S&P Global version. It's a bit more dramatic. We can see that January gave us a dramatic slowdown in service sector activity growth. That, of course, would rhyme with diminishing inflationary pressure as demand eases. And so you end up here then with the weakest service sector growth and then the weakest overall growth, the composite index here, in a year as ever. These numbers signal growth above 50, signal contraction below 50. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So that we are going from higher 50s to lower 50s here means we're still getting growth, but at a much slower rate. The ISM set of numbers, not quite as dramatic, but pointing in the same direction. Service sector expectations were 54.3, so higher growth than what we ended up getting, which was 52.8. Now, this is a set of numbers taken together with the CPI report that starts to paint something rather ominous. And the reason that it is because, as we've seen before, global growth is primarily made possible by three economies: the US, the Eurozone, and China. They account for 58% of global GDP, and the remaining 42% are, for the most part, vendors that depend on exports to the former three to have demand and to have economic growth. So the critical engines here are these three economies. And what we've seen, certainly since the, let's call it, latter part of the first half of last year, going into the middle of last year, is that the U.S., until January, has vastly outperformed, while the story in the Eurozone and in China has been of deceleration and most recently of standstill. These readings at 50, they're not quite contraction, but they essentially amount to nothing moving. Whereas what's happened in the US until January was very robust growth, and only in January do we see this downtick. Now, if the US is such an important part of the whole, why is it that all this US outperformance is not spilling over and feeding these vendor economies and feeding China, which in the case of the US is certainly a vendor economy as well? Well, it's because most of the demand is in the service sector, where most of the providers are domestic firms. Meanwhile, the situation in goods is essentially a goose egg. There is really no demand pull there, hence the inflation numbers being basically non-existent. It's the same story told through a different visual here. This is where demand is. This is where demand isn't. And what the U.S. mainly does on the import side of things is goods. And what it mostly services domestically is services. And so the U.S. resilience of last year really didn't spill over. In fact, so much so that even Canada is in dire economic straits, and 80+% of everything they export comes to the U.S. They, of all economies, should be swimming in economic fortune with the U.S. this strong. But they're not. And it's because the U.S. is largely keeping its growth to itself. What this also means is that the three major engines of the global economy have been whittled down to one as of last year, because clearly the Eurozone and China here are at standstill. And the troubling part of the CPI report is that even though the headline is high, the internals suggest that this most critical piece, the U.S. service sector, is now suddenly weakening. And the upshot from these PMI numbers a week ago seems to be finding some reinforcement. That, of course, is not just bad news then for the U.S. economy downwind, it's also bad news for the global economy overall, and could explain why stock markets, even though we got this rejiggering of Fed policy odds and the bond market clearly noticed, why stocks could not mount a lasting rally and could not find encouragement, even as they could not find a lasting sell-off catalyst, because these were not inflation numbers that suggested anything positive for growth, despite the fact that they suggested that the Fed is not in a position probably to move a lot in the near term, something that Fed Chair Jerome Powell has been telling us in testimony in Congress, both yesterday and today, never mind the January FOMC meeting and before. It's also why we might have a U.S. dollar that isn't reveling in higher yields. This does not portend those higher yields holding. So the next inflection point here then becomes all the more interesting, and that, of course, is Friday's retail sales report. We're expecting to get a decline of 0.1%. That would be the first negative reading since back here, middle of last year, but generally within the bounds of recent dynamics. Where this becomes particularly interesting is if, in fact, services as powered by domestic U.S. demand are starting to fade, and indeed U.S. domestic demand is starting to hit a roadblock, well, then this ends up looking like a much more ominous set of numbers than meets the eye, despite the fact that most U.S. economic data, according to analytics from Citigroup, has tended to come in broadly in line with expectations. We can see when this index is at zero, it's basically realized results are matching forecasts for the most part. Now, if this ends up looking differently, and we end up seeing perhaps a downside surprise on this retail sales data as we move forward here, and it ends up showing us that indeed U.S. consumer momentum is easing, and this is how we end up with services weaker, then the story is bad news not just for the U.S., it's bad news for the global economy, because to the extent that services is what powers the U.S., and the U.S. is the last pillar of the global economic pie with any strength for most of last year, the U.S. service sector is really, and the U.S. consumer is really the shoulders upon which the entire artifice rests. And there is something to be concerned about because, of course, we've just seen last week the markets react violently on Friday to the University of Michigan Consumer Confidence Survey that showed a dramatic decline in sentiment as inflation expectations have surged. So when we look at this, we end up with essentially the worst of all possible worlds. If consumers are getting defensive, and incidentally, the respondents in this survey mainly cited tariffs as the reason for the jump in inflation expectations and in their commensurate turn south on sentiment, we end up with a world where inflation looks stickier, but for the wrong reasons, not because of robust demand, but because of a repricing of inputs. Meanwhile, confidence is fading in the one part of the story where you don't want it to be fading if you are concerned with U.S. growth. And the story ends up looking like a confirmation of this, a deceleration of the business cycle in the one part of the landscape you don't want it. And so if then these retail sales numbers surprise on the downside, the consequences could be quite dire indeed for stocks. The U.S. dollar may weaken further, and the bond market may have seen its last big downtick in a while. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may follow. I am on with Chris for Futures Power Hour Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Oh yeah. Tasty Nation, good morning.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school. What do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were gonna kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, we're back. Tasty Crypto Show. My name is Ryan Grace, and with me today, it's Wednesday. So, of course, we got Shelly Van in the house or on the stream. I guess you're not actually here physically in the flesh with me, though it does look like you're sitting right across from me. Got the same background and everything as the studio. Looking good. How you doing?
I'm doing okay. I'm nice and warm. I hope your commute isn't too sloppy.
I've been here here as in Chicago for 13, 14 years now. And I don't know. I mean, this is going to offend people, but you guys are weak out here when it comes to the snow, precipitation. I'm from Buffalo, New York, Shelly.
I mean, I'm from here. I'm not a wuss. It's just I'm new to sedan life, and I must say I'm not a fan. Driving is unpleasant.
I can understand. I want to jump over to the browser really quickly. I want to show you what, just really quickly, I want to show you what Buffalo, New York looks like when it snows. Can you see this?
Yeah.
Yes, this is a real, snowstorm, okay? Just so you know. Yeah.
Yeah. I did do a stint in Montana, so I might be able to compete with you on that one.
Absolutely. All right. Fair enough. Fair enough. You know what it's all about then. How you doing though? Keeping warm. You're not on the roads.
Yep.
You're good.
Warm, safe. Hello to the chat. I see Dino's here. Lone Sophos. Hello. I'd like to ask a question with following up from Katie's Monday show about soup, because I feel like soup is a little bit of the theme for today. It's cold. So Ryan, do you have a favorite soup?
Oh yeah. I'm basic in that sense. I love chicken noodle soup.
Okay.
Yeah.
All right.
Probably no surprise. I'm a boring, bland individual. What about yourself?
Okay. I am new to the soup game. I have recently discovered like
just had it recently.
Well, not like for the first time, but I grew up with like the canned stuff, not like homemade. Okay, so now that I've dabbled in the homemade, really, really good soups, that's like life changing, and I'm kind of obsessed. But so there's a really Americanized version of a Mexican soup that I'm getting down with, that I've kind of made my own.
Okay, that sounds good.
Yeah.
I prefer the can. My favorite soup is Campbell's chicken noodle soup. Sometimes you have to get a couple cans, combine it into one bowl. It's got all the salt you need. It's delicious. It's
for
beautiful.
A month.
Yeah.
For like the condensed where you have to add water.
Yeah. And then you can decide how much water you really want to add. You know, what level of potency do you want the soup to be?
See, that's how I grew up. Like, definitely chicken and stars.
Yes. Yep. Had a slightly different flavor than chicken noodle soup. The stars.
Yeah.
You couldn't
Shapes
combine
matter.
those.
No.
Well, you have some
Progresso
soup fans.
Okay. My name is Earl knows what's up, because if I am going to go for the can, it's going to be a Progresso can of like minestrone or something like that.
You can kind of step it up nowadays. You've got the chunky. You've got a little bit higher quality, slightly higher quality out there. Well, you'll have to bring in some of this Americanized Mexican soup, and we'll have to do a little taste test here.
Challenge accepted.
All right. Well, we've got the chat fired up. Let's jump into the show.
Let's do it.
You want to go market update, market awareness first, or do you want to jump into the main theme? How do you want to kick this off? I'll leave it up to you.
Let's see what's going on out there first.
Beautiful. Let's throw up the browser here, and we've got some of our trading view charts. We're just going to quickly run through the just updated prices here, because I do have the slides that went out in the email, our market update email this morning. I didn't get a chance to update the expected moves, so they're going to be a little bit different than what we saw this morning, but we'll jump back to that in just a second. But following, what was a pretty quick sell-off post some economic data this morning at about 7:30
Wait,
a.m.
sorry, really quickly. When you do those expected moves, if you just did them this morning, have they really changed that much?
They haven't changed
right
that
now?
much, but we were going off of a spot price for Bitcoin of about 96,000, where we're at 98 here. Almost 2,800 for ETH, where we were at 2630 earlier. So in that case, a bit of a move, especially with ETH, because the expected move in there was around $250 or so. So you definitely get that adjustment. And that's the thing to keep in mind with these. They're dynamic. So if the spot price changes, if volatility changes significantly, going to have a completely different range. That said, we're looking at moves here with Bitcoin 7,000, 8,000. Today we're to the upside. The volatility hasn't changed that much, so you can kind of just adjust the range in your mind by about the same amount, given that there hasn't been much of a volatility change. It's not going to be perfect, but kind of gives you some indication of what that range might look like.
Okay.
But yeah, quick check of where we're at. We've got a bounce underway. Feels a little bit differently than it has the last few days or really few weeks. We've been on that downward trajectory, but here we're back at 98. Really haven't been able to break above that recently. ETH back at almost 2,800. Solana hanging on to 200. I don't make too much of this, but how are you thinking about it?
One, I can't see your slide. Do you see your slides on screen right now?
I don't see my slides. I only see you.
There
here.
it is. There it is. Perfect. So now I'm looking at it. ETH's looking a little sad.
Oh, you've got the slide up on the screen.
Yes.
Yeah, so these are the numbers from earlier this morning, and this was ahead of a bit of a sell-off. If you recall, ETH pushed back down into the 2,500 area, and Bitcoin was lower as well. That was post some economic data that came out, the CPI or inflation report. Consumer Price Index showed an increase in inflation, which in terms of the instant interpretation of that is bearish in the sense that the Federal Reserve's not going to lower interest rates off of the back of that. None of that matters. It's backward looking. It's the inflation data from January. Most indications here thus far in February are of a little bit of a slowdown in inflation and also economic growth, which is, I think, what explains some of the weakness that you've seen here in the market as well as in kind of the traditional equity space. And so I believe that it's very likely that once we get that February inflation, which will be reported in March, we'll see that inflation has moved a little bit lower from here. It's a fun way to try to explain some of the short-term volatility, but you can see obviously we're up about 2% now from where we were, up about 6% or more from where ETH was. So our performance dashboard, our price momentum is a little bit dated here, though the signals all remain. I mean, ETH has been pretty bearish recently. Bitcoin has outperformed. Bitcoin dominance is still about 61%. So no real change there, but I wouldn't read too much into the price action this morning on the back of the CPI report.
Sounds good.
Quick check of the expected moves, and then we'll jump into today's show. Here are those ranges that I'm talking about. So volatility hasn't changed much with ETH. We came in at a 70% implied volatility. We've got about a 68% right now. So that would actually pull your range in a little bit, all else equal. Obviously, price has increased a bit, but if we rerun these right now, you're going to get about a $250 expected move. Ranges remain kind of in the same levels or areas that we've been for some time now.
Yeah. I'm excited. I just pulled out a bunch of ETH and USDC to set up a new liquidity pool. So these ranges are extremely helpful.
Awesome. Yeah, let's we got to revisit that one of these days again. I know it's a popular topic, something that both you and I enjoy talking about at least. So we'll have to touch on liquidity pools again soon.
Agreed.
You want to jump into the research today that we've got?
Oh, yes. Let's make crypto soup.
I like that. Okay. I see what you did there. There was a plan all along.
It was. I was plotting. The soup game is strong.
Crypto soup. We have added a few more ingredients, I suppose, to the pot here. at Tasty Trade recently. So we've talked about the addition of Dogecoin. I believe that was back in December. We have Solana now trading on the Tasty Trade platform, Ripple or XRP, excuse me, and I believe more coming soon. So that said, I wanted to kind of do a little bit of a research piece and look at whether or not it made sense when we analyze historical performance to diversify your portfolio. That's a common theme I'm sure everyone is familiar with. You want to be diversified, right? Well, do you really want to be diversified? Are you diversified, Shelley?
I'm super diversified when it comes to meme coins and shit coins, if you will. I have quite a bit of the big five we have here. Doge was the first crypto I ever bought way back when, and then I started dabbling with Bitcoin, ETH, Litecoin. But I mean tiny amounts.
So you started with Doge?
I did.
Okay. That was your gateway drug.
It really was, and it was like 0.0005.
Wow.
So, or 1 when I initially bought in. So it was very, very early.
And have you held it this entire time?
Ryan, if I had held it this entire time, there would be signs.
You wouldn't be here. We wouldn't be doing the show.
No, I would be. But
you'd be doing the show from the beach.
Yes, yeah. Exactly. So no, I made a nice little bag back in the day and then bought in again and, chopped it up, but definitely didn't hold until the all-time high.
Awesome. Well, you have a diversified portfolio from the sounds of it here today, and certainly an allocation to memes. And that's one of the things that we'll get into as well, because I think a lot of people look at some of this stuff, and maybe rightly so, they question how real is any of this at times. It's hard to, on the surface, initially understand what's the value of something like Doge. How does it have a value? Maybe more so. Until you really understand what it is. And then when you run some of the numbers, I think there's a strong argument for why you might want some of these exposures, even if only temporarily, in your portfolio. So I want to look at that here today.
Mm-hmm.
So can you see the slides on the screen?
I can.
Okay, perfect. Let's jump into the first one. We're going to talk about portfolio construction. And as we kind of set this up, Bitcoin's been a great investment. It's had some down years. Don't get me wrong. We've gone through some tough periods, some tough times. But generally speaking, it's been a great trade. It was up well over 100% last year, and it's tough to find anything that's been better than it over a longer time frame. Maybe Doge. But in the equity market, for example, maybe NVIDIA, there's just not a lot that's outperformed Bitcoin, even though it has, I think, this narrative that it's very volatile, it's very risky.
Well, and the question I always get is just, I don't get it.
Yeah.
What is it?
It's digital gold, right? And so
Digital
I think
gold.
There's probably less of that today, but naturally then as people start to learn a little bit more about Bitcoin, maybe they understand the digital gold narrative, the place that it might have or where it fits in your portfolio, I think people start to look at other cryptocurrencies, other tokens, start to understand some of the different technologies a bit more and consider investments in them. But I really want to objectively look at whether you should have an investment in anything else. No axe to grind here, but given just how well Bitcoin has performed, should you diversify? Did you miss out elsewhere? Or should you only be in Bitcoin? Maybe.
So in this scenario with our soup analogy, is Bitcoin the broth?
Yeah, in this case, it's like, should you just have a bowl of broth or do you want some noodles in there too?
All right, let's go.
One way to look at it. So we're going back to kind of traditional Tasty Live research team studies. As everybody that watches Tasty Live and is familiar with the content knows, we do a ton of research on the show, talk about different approaches to the market as it relates to options trading. I want to do that here with crypto. Clearly, a different vehicle, different animal. You can really only buy it and hope it goes up. But I want to look at, again, how should you think about portfolio construction given you have some of these tokens that are wildly volatile versus some of the others? Do you need to own them? Should you own them? And so on. So we're going to compare a portfolio of 100% Bitcoin versus some alternative allocations, and we'll break those down in just a second. And I eventually want to get to what's the optimal portfolio allocation to minimize volatility and maximize returns. So here's the performance of a couple different portfolios versus a portfolio that's 100% Bitcoin going back to January 1st, 2022. So I understand we're cherry picking a point in time, but with some of these tokens, they didn't exist. There's not a lot of data. And in terms of adoption, it hasn't really been all that relevant up until, let's say, the last 5 years or so, post-COVID. So we're going to do the 2022 to present period, takes us up to today. So here's 100% Bitcoin. Your total return's 122%. Your annualized return's 20%. You have an annualized volatility of 45%, which is right about where Bitcoin's annualized volatility is right now. And we have a Sharpe ratio of 0.45. You can see the max drawdown for each one of these portfolios is almost the same across the board. Speaks to the correlated nature of this and what has been or was the driver at one point, which was the collapse of FTX in 2022. So they're all about the same in volatility terms to the downside when the market dumps. But depending on your portfolio construction, you could have wildly different returns.
Mm-hmm.
So just to walk everyone through it before we get into the visualizations, all of these are equal weighted. So when we look at a portfolio of Bitcoin, ETH, Solana, and Dogecoin, that's assuming you have 25% of each token.
Okay. And so at first glance, does this mean that we're looking at drinking some broth?
It does look that way. Yeah. Given this period of time, and I think that's evidenced again by just recently, look at the outperformance from pretty much 2023 on with Bitcoin. Bitcoin market cap dominance at 61%, ETF inflows galore. And we know the ETH underperformance story here is the second largest crypto by market cap. You're drinking some broth. Or if you were only drinking broth, it's actually a pretty tasty soup.
Yeah. Super nutritious.
I just wanted to put this out there that in terms of diversification, and I think a lot of this can be explained by the Ethereum underperformance over the last couple of years, you would have been better off objectively just being long 100% Bitcoin versus saying, hey, I've got limited amount of capital, whatever that number is. I want to put some in ETH. I want to put some over here. There were points in time where I think you might have outperformed, and we'll see that in the chart. But as of where we are today, you did not. And so here's what that looks like. And our high water mark, you can see the horizontal 100% BTC benchmark there, the dark dotted line. At one point, some of these were 50% above in terms of outperformance, right? You think about Dogecoin at 40 cents. Well, it's back at closer to 20 here today. So you've got to take the profits again when you have them. I do think you have to trade actively, but if you're just buying and holding, you've done a little bit better just holding Bitcoin.
Mm-hmm. Diamond hand soup.
Yes, diamond soup. So this is the performance. And as of right now, any other strategy aside from 100% Bitcoin here, at least compared to what we're looking at, 50% Bitcoin, 50% ETH, equal weighted across Solana, ETH, and Bitcoin, throw a little Doge in there, or put an equal amount into each one of the tokens that are currently offered at Tasty Trade, and that's in the blue. You've done a little bit better at times, but again, still underperforming Bitcoin presently.
Okay.
When we look at this from the volatility perspective, clearly there's the potential for greater returns, but you're also going to have more risk when you look at this from the volatility. 100% Bitcoin is the lowest volatility, but has the best return. And so that gets you the best Sharpe ratio. We'll talk about what that is in just a second, but this is going to be your risk-adjusted performance. And so from that perspective, again, 100% Bitcoin outperformed.
Okay.
That's important because now we can optimize a portfolio for both volatility and return. Generally speaking, the perfect portfolio would be the one that's the least volatile but has the greatest performance compared to all of the others. So I want to focus in on the Sharpe ratio here, because using this, we can start to construct a portfolio that potentially minimizes vol and could outperform. So this portfolio, if we think about how do I optimize it, is going to prioritize, again, your best return per unit of risk, but balance out, the volatility. So this is the Sharpe ratio formula. We don't have to spend too much time on this, but what you're basically looking at, and you can calculate this for a portfolio, you can calculate this for a token, you can calculate this for a stock. You're looking at the annualized return of the token. And in cases where you have a risk-free alternative, I can invest in a U.S. Treasury bond versus an equity. I know that the U.S. government isn't going to default. I'm going to get that money back, even if they have to print it. The U.S. dollar is a reserve currency. I have a risk-free rate of return. That risk-free rate of return today is Fed funds. Let's say it's about 4%. For crypto, there isn't a direct alternative. I mean, sure, you could just put your money into treasuries, but we'll just assume that the risk-free rate is 0 here. And then what we're looking at is your annualized volatility of the overall token. So what you're basically doing is you're just dividing the return of the token, and you can do this on an annualized basis or really any time frame, but we'll look at this on a 1-year period, and you're going to divide that by the overall volatility. And that's going to get you your Sharpe ratio. And from there, you can then construct a portfolio of tokens that have the best Sharpe ratio at that point in time and rebalance as a result. So if we look at it from that lens, considering the Sharpe ratio, what would the optimal portfolio have looked like from January 2022 to present? You wouldn't own any ETH, Bitcoin Cash, or Litecoin. And given its just insane return, and I don't believe that it stays here, but who cares what I think, you would own a lot of Ripple. I'm not quite sure. Maybe people own a lot of Ripple, but you would have been anchored in Bitcoin. You want some Solana. You want some Doge. And what this shows me is that you need those volatility exposures, but you have to size them appropriately. And that's true of portfolio construction in general. We want higher volatility. We want asymmetric returns, but we're not putting everything we've got into the most volatile assets. If you're right, you're absolutely going to outperform. If you only owned Dogecoin, then you've actually outperformed Bitcoin. But there's a lot of risk involved with doing that. So I just wanted to show this makeup and kind of set the stage for this concept. I know we're going to run out of time here today, so this is really only part 1, and we want to talk about rebalancing and performance there as well. But here is how that performed in yellow versus Bitcoin if you actively manage this or just allocated based on the Sharpe ratio. Now, this is in hindsight, so there might be a period going forward where the best portfolio is 100% ETH. I don't know. This is just trying to illustrate that concept of looking at this from a risk-adjusted basis and understanding that, well, yes, we want volatility in our portfolio. We have to size it appropriately. We can minimize volatility, and in some cases, you're basically just long Bitcoin again because it was the best performer, but also one of the least volatile. But if we allocate based on a Sharpe ratio, we have the potential for outperformance. And here's what that looks like against all of those model portfolios based on the previous allocation. So again, 50% Bitcoin, 50% ETH, sprinkle in some Solana. You underperformed unless you allocated based on this optimal approach. So these slides will be posted for everybody if they want to go through this. We have some conclusions here. Most of this we've already hit on. I know we're running out of time. But the static portfolio performance, 100% Bitcoin has outperformed. That's not going to be true forever. But I think when you look at Bitcoin market cap dominance, you kind of just wait for that to roll over before you start rotating into others. You can rebalance based on outperformance, relative outperformance at times, but we have not yet applied that approach to this analysis. We'll do that on the next show so that we can show how much of a role that active management based on this approach actually matters and contributes to your overall return.
Ryan, you've been cooking.
I've been cooking the soup.
I'm excited. So
Except that
we'll be
it's
back
just
on
really the
Wednesday.
broth. What's that?
Just the broth for now, but Wednesday we'll go over part 2 with all the ingredients, the full recipe.
We'll spend less time kind of chit-chatting at the beginning. We'll jump right into it and cover a little bit of a recap here, and then go into how you can optimize this further by rebalancing. And it's tough because you could get very granular and you could say, I'm going to rebalance this multiple times a week. I think we look at it monthly, quarterly, or just based on large movements, right? If all of a sudden we get to a point where Bitcoin has significantly outperformed and it's a much larger component of the portfolio, we might want to reduce some of that and reallocate into something else, assuming it's going to outperform on a relative basis over some time frame. We'll talk through all of that. But again, I think this is very interesting to objectively look at. It's been difficult to outperform Bitcoin, but when you optimize for volatility and you optimize for Sharpe ratios in your allocation, I think you can position a basket of cryptos that definitely can outperform because you want those really volatile components in there. You want Solana, you want Doge, you want Ripple. And at points in time, there will be an argument to put something else in there. This is just something you have to be aware of and constantly analyzing.
Yeah. Stirring. You got to stir the pot. And somebody just referred to you as Brainy Smurf. So I see a meme forming already of Ryan as Brainy Smurf.
Awesome. Well, Shelly, I appreciate you, as always, coming on the show here and walking through some of this data with me, or letting me kind of just yell at you about what we've put on the slides here.
Oh, I love it. Thank you for having me.
Yeah.
And thank you for everybody in the chat and everybody watching.
Absolutely. And we got to continue to pump Beans, your new show, which is coming out next week, Monday.
Yes. Wednesday.
Sorry. I'm jumping the gun.
That's okay.
You're going to have to wait,
Yes.
everyone.
Beans starts 9 a.m. Central on Wednesday. We're going to be doing so many fun, full spectrum of crypto, Web3, all the good, fun things. Don't miss it. There will be giveaways. It's going to be really, really fun.
Awesome. Well, I'm looking forward to that. It's going to be broadcast on the Tasty Crypto YouTube channel. So get over there and subscribe to the channel so you don't miss it. We will be back next week. Shelly will be back with Beans. And I think with me on this show, we're off on Monday. But thank you all, as always, for watching. Until then, I'm Ryan.
I'm Shelly.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Oh, yeah, it is Wednesday, February 12th, 2 days before you-know-what day, the fakest holiday of them all. But for now, it's a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little show called The Price of Truth, a podcast where we like to explore the incentives that govern your world. And man, they're throwing a lot of incentives at us. They're flooding the zone. That's the strategy if you're listening to Bannon. And there's a lot of people trying to govern the world. So we've got our work cut out for us. And luckily, on this wacky Wednesday, we've got Professor Christopher Vecchio to help us make sense of it all. Chris, how you doing, my friend?
I am doing well, Victor Jones. Victor Jones, doing well. How are you?
You look great. I'm okay. You've casualed it up. You know, we went from Tuesdays to wacky Wednesdays. On Tuesdays, you used to wear your button-up shirt, and now you're in your T-shirt like me. So I don't know what to think. I got no chest hair. Our views are going to be down probably 30% because of it, even though we're 99% male. I don't know what that means, the audience. But, I'm okay otherwise. How are you?
Yeah, listen, you're very funny, man. You're the conversation before.
What was that word you said you wanted to say, but you couldn't?
Just say it. Oh, don't even put that on me. That guy. You're good, you. You're very good, you.
Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, bing, that just popped up on your screen, probably, maybe not. You've got to go to the evil Google YouTube, part of the New World Order, and start typing, use your phalanges, metacarpals, what have you, and just slap them on a keyboard and spoof the Google algorithm into putting us in front of as many people as possible. And if you think it's not important, you are wrong. Just go ask Reddit, who, with a tiny tweak of the Google algorithm, missed their numbers. So it is important. These algorithms are important. Christopher Vecchio, there's so many places we could go. So many places, but I suppose we should just start at price. My friend, the curve is lifting, and we're weird sort of mixed day in price action world over the last couple of days. What are your thoughts, man?
Deja vu. Are we at the exact same price level from this time last week?
Yes. It is almost exactly where we were last time we talked.
It feels like it, but maybe something's changed along the way. The gaps are getting closed faster. DeepSeek took 5 days. The Canada, Mexico, China tariffs took 2. The aluminum and steel tariffs took an hour on Sunday night. Today, CPI is shrugged off, not immediately, but by the end of the session, the NASDAQ turns green. The S&P is back to 60.78 right now, here up a little bit after hours. Bitcoin and Ethereum are rebounding here, Victor. Sounds like people are happy to take on some risk. But what's changed? Nothing's really changed. Maybe we're absorbing body blows. It feels like the market's resilient. That's why I'm staying long. But it feels like this is a market that's kind of waiting for a green light of sorts. Today's CPI data could have been the green light. And instead, we're still at the stop sign. We haven't really moved. And I think the market's rebound today is fairly instructive because this time last year on February 13th, we saw the very warm January CPI report. If you want to see the graphic itself, people can go check out Futures Power Hour or Overtime today when I shared it. But effectively, the biggest contribution to inflation in the most recent reading was transportation services, which if we think about where we were this time last year, the biggest contributions to CPI were transportation services, insurance costs, really things that are one-off and rebased and don't really find any continuation into broader price pressures thereafter. And so what did the market do on February 13th, 2024? It fell and it chopped around for a few days, but then it ultimately resolved itself higher. And that was the cadence of really all those CPI reports that we had for the next few months, where sure, they were warming up, but they were warming up for the reasons that we don't necessarily think are sticky. And so the market ultimately keeps trudging higher. Maybe we close that gap today quicker because we learned our lesson from 2024, but we're still stuck in the mud. I mean, we are at the exact same price level we were this time last week, give or take 5 or 10 S&P points. What has changed is that gold is a good deal higher, that yields are a good deal higher, that the dollar is ultimately, well, it looked like up until today it was starting to weaken versus the yen and potentially turning versus everything else, but it is still stuck in the mud. So a lot of time has passed. 7 days or 5 trading days in the market's not nothing, but we haven't learned anything new. And Powell didn't give it to us. Trump is still doing Trump things. Congress hasn't put forth much more than a framework for their latest spending bill, although the bones are out about that, having had a chance to look through the appropriations bill this afternoon. What do you do here? Like, what do you do here right now? So I'm still leaning long deltas in stocks because we've absorbed body blow after body blow after body blow, and we have not cracked yet. So, you know, all I got was this T-shirt, Victor, the non-neck hair V-neck T-shirt.
I don't not agree with you. I agree that we're at the same place, but I feel so much has changed outside of equities. To your point, gold is higher. The position of the dollar has changed. Yields have moved up. The whole curve has shifted up. Cuts have been removed. I would agree with you that stocks have been resilient, but I also think like stocks are kind of the big dummy in the room. You know, stocks are kind of the guy who wears the hat with the bend in the middle like this.
Oh,
no,
okay.
with the bend in the hat that's just that comes at the V. you know what I'm saying? That guy in the room. So I don't know that you get punished by being long. I feel like the market needs a reason to dump. And I don't think there's a catalyst there right now, a strong enough catalyst. Though I find it strange that the market is not repricing to a completely different curve. I have been sort of baffled for maybe the last 9 to 12 months about the relationship between between equities and in interest rates. I suppose I shouldn't be, because I know that at a CPI above 3%, the relationship between yields and equities, it flips. There's an inverse correlation if we have inflation that's under 3%, and at or over 3%, we get the inverse. And so that's why it's sort of very difficult to track. You say you get a hot CPI report, the curves moves higher. Why don't equities puke? Maybe give it a day. Maybe that's the answer. Or maybe the fact that people are paying more money, that they can stomach more price pressure somewhere in the economy. Maybe it's not insurance. Maybe it's not their house. But, airline tickets are costing more, or whatever the case may be. Somebody's bleeding more money out of the consumer, and the consumer's still piling it up on somebody's credit card. And that generally means more revenue and stocks number go up. But don't you think, like, at what point do you think this gravy train runs out? Or do you just think the party continues, man? Is that just me? I can't hear you, bro.
That's my fault. I was coughing before. The biggest threat to the economy right now, and probably to markets, is recession. Right. The corporate earnings picture is still strong. Maybe we're changing leadership for the AI story, which, consistent with that theme, as we talked about on Wednesday, January 29th, I believe it was, that if we're going from phase 1 to phase 2 because of the composition of the indexes, the heavyweights and semiconductors that carried us here, them coming down and that money being reallocated to the phase 2 names, net, the money's not leaving the market, but because of how the indexes are constructed, you get a lot of churn. And then you sprinkle in the seasonality where markets don't do anything until the Ides of March. Okay, you have a compelling picture for a lot of slop and chop. And hey, we're still between 57.75 and 61.75. So the 4-month range is there, and slop looks like it'd be ahead. So why bet against that? I think the more important thing right now is that if we take a look at the breadth in this market and the volume today on the dip after CPI, for example, you could pull up a 1-minute chart. The volume after the initial sell-off shows that there is a greater interest in buyers rather than sellers. You go to 5-minute candles, shows the same thing, but the up candles, generally speaking, are accruing more down, volume up than down. There is still a desire underlying all this to get long equities, despite the pain. I mean, sure, if the economy is performing well, so rates are going up because inflation may stick around, taxes could be cut. And hell, what's the best long-term hedge against inflation? Being long equities. So inflation being up a little bit more than anticipated, is that a reason to dump? I mean, Vic, we need more. You say we're waiting for the event to drop. I guess that's why I'm still so bullish. All these things have dropped. We've heard about trade wars with Canada and Mexico, or maybe not, but definitely aluminum and steel tariffs and tit for tat with China and USA red, white, and blue land. And once we get Greenland out there, a lot's changing. But the market isn't telling us that equity prices are really worth taking down a peg. So, yeah, I find that I just, if we got an inflation print that we did today back in 2022, Vic, do you see the market responding today the way that it did? Where it comes above the high end of consensus forecasts. Bloomberg polled 73 economists. None of them saw inflation coming in this high. Right? That would have been, oh gosh, the Fed doesn't have its hands on the steering wheel anymore. Right? They're so behind the curve. They missed the boat. That's not today's reaction. It feels something feels fundamentally different. Like we don't even care about this because this is all about the rearview mirror and Biden era policies and what the Fed was doing in response to those fiscal policies. And what we're concerned about are the tariffs, which are about inflation ahead. And today's data does nothing to inform us about what's coming next. It just tells us where we are. So why sell off? If you sold off, we're back to where we were yesterday, where we were this time last week. Still waiting. I meandered. Yeah. I was weaving. I'm sorry, I was weaving there.
No, I mean, I guess what I'm trying to, I hear what you're saying, and you're saying the risk favors, we're in a consolidation phase, and you're saying the risk favors holding on through what will likely be a sloppy sideways price action, because your point of view is that the risk and reward favors the upside once we break through this sloppy sideways trading action. Is that sort of like the fair,
yes.
If I pull everything out of what you're saying here, that's sort of where you're going, and
innocent until proven guilty, right? Like the ball has been, you favored the bulls over the last several years, but I also go back to the whole longer term view, Charlie Bolello, Compound Advisor, shared this chart yesterday. Since the low in March 2009, there have been only 29 instances where the market's corrected 5% or more from a high to low period. Those corrections have lasted an average of 26 days, producing a move of 7.6% lower to the downside. So finding 29 different instances going back to the low in 2009, that you are waiting for Godot. Like, sure, you'll be right eventually, but the market may rally 20 or 30% before you ultimately get your 5% to the downside. And given the fact that this is a market that, yeah, maybe no rate cuts are coming, but if you look at the House Republican plan today, we're getting another $4.5 trillion in new debt over the next decade. The deficit spending's not going anywhere. So the stimulus spigot, like, it's not getting turned off in DC necessarily. We've killed $100 million in various USAID grants, but we're also going to be spending $4.5 trillion more than we were anticipating over the next decade. So, like, that's still stimulative. And if stimulus is coming into the market, it may not be from the Fed, but it's there. And that's not enough to get rid of an equity market rally yet.
Yeah, I agree with that. I think, can you explain to me why, do you think we are closer to a stagflationary world that just nobody's talking about? Or do you think stagflation is so far in the rearview mirror given where GDP is currently at? What do you think?
Well, can we let's get a unified consensus on what stagflation means. Right? Mm-hmm. Is stagflation the slowdown in growth, or is it actually negative growth? Right? You have to have two things.
Slowdown.
Okay, so slowdown is one. Is it how much of a rise in the unemployment rate?
I know the economists factor in unemployment rate. I just think slower economy and higher inflation.
So where are we? So let's just start where we are right now. 4% unemployment rate, 3% CPI, and we'll call it 2.3% real GDP. Okay. So if what the Fed said were to come true, would we be looking at stagflation?
2.3? Oh, in the last print. Okay, sure.
And the last print. And the current quarter, depending upon if you're looking at the Atlanta Fed GDP Now growth model or the New York Fed Nowcast, the Atlanta Fed is currently at 2.9% for the first quarter. And granted, there's still a lot of data due out, but the New York Fed's Nowcast is currently sitting at 3.12%. So let's just, split the baby here. We'll call it 3% even between the two. Okay, so if we're at 3% on GDP, if we're at 4% on unemployment, and then 3% on CPI, if the scenario that the Fed says comes true, where we lob off 1.2% from GDP and we add 0.7% to inflation, a year from now, just setting aside the labor market component for a second, that means we're looking at 1.8% GDP and now 3.7% CPI. So growth is still positive in real terms, right? But we're now having weaker real growth. Is that stagflation?
No, but that's stagflationary. So the way I think about it, the way I think about stagflationary conditions is it's not we're in stagflation. There's that 4-quadrant chart that I think Ray Dalio made sort of famous in his all-weather portfolio, which is just you put growth on one side, inflation on the other, and whether it's accelerating or decelerating for both of those quadrants. And in one of those quadrants, you're going to have growth down, inflation up. That's sort of your stagflationary quadrant. And it seems like that's sort of the ballpark that we're playing in. That's the playbook, the investing playbook that it seems the market is deploying right now. And it seems weird to say that because things sort of look good on paper. So because people think of stagflation as this thing that, it's like deflation. It's a binary event. Well, no, you can have stagflationary conditions and still decent environment for risk. It's just which assets outperform. And I sort of think when you look at gold at 2,900, it's screaming. That's the playbook that the market is sort of deploying right now. The stagflationary condition playbook is what the market is deploying right now.
That makes a lot of sense, though, right? So that scenario is not stagflation unless the unemployment rate spikes to 7 or 8%, but it is stagflationary. And if it's stagflationary in a world where the Fed is kind of, it's hands are tied because it's a reactionary group. And Powell said that as much yesterday in front of the Senate Banking Committee, right? Like the Fed reacts. They are not a proactive policy group by any stretch of the imagination. And that's why I like to say things like the Fed's always fighting the last battle. The general's always fighting the last war. They literally are not allowed to fight the war that's in the future. So they can't ever skate to where the puck's going to be.
Sort of. But then, like, how do you square that with forward guidance?
Okay. So like that is a very good counterpoint. And Powell said something yesterday that kind of drove me a little crazy when he said, like, oh, the Fed doesn't influence the long end of the yield curve. Yes, you do. If you didn't think that you could influence the long end of the yield curve, why would you do QE, right? The whole idea there is to reduce investors' theoretical returns and push them out along the risk curve to get money deployed into the economy so that people aren't sitting in cash, right? So like, yeah, you absolutely have the tools to influence long end rates. And if you decompose a long end rate, at least what I was taught, CFA Institute books around here somewhere, like long end yields are influenced by short rates plus growth, inflation premiums, and a term premium. So unless something changed, Powell's absolutely wrong on that. But granted, I happen to think that he is correct in the other view. But nonetheless, Victor, right? Is it stagflationary? It could be. That could be the setup here. So then if we go to a higher, longer for world, what is the Fed going to ultimately do? The labor market is still strong at a 4% unemployment rate. Given the difference between native-born citizen and foreign-born labor market entrants over the past few years, if you were to remove those foreign-born workers, the unemployment rate probably tightens up, because there's more slack in that pool of workers right now than there is in the native-born population. And so that means higher wage pressures, higher inflation, but also, more importantly, what does a flatter yield curve do? That is really interesting. There's a chart that's floating around. There's a fantastic Twitter account called Daily Chartbook, and they've been pushing this chart around today, looking at the relationship between the yield curve and various companies' balance sheets. Companies that have bigger balance sheets, the mega cap tech, do better when the yield curve flattens. They outperform the companies in the Russell 2000. And that makes a good deal of sense. If you have an expanding yield curve, you're expecting a lot more growth. Short-term rates are going to be lower, easier to service your debt. Hold on a second. You have floating rate debt if you're a small cap company, much more so than a mega cap. But in a world where you expect rates to flatten out, the yield curve to flatten out again because the Fed can't do anything, its hands are tied, mega cap becomes a more appealing outlet for expressing equity bullishness than small cap. And so I don't find it surprising then, as the dust settles now, as we look in the rearview mirror from the CPI report this morning, forget where equities are, that they close their gaps for the most part. The NASDAQ is outperforming the Russell by a fair margin here. And I think that's fairly meaningful. Mega cap tech is kind of like the all-weather hedge for any of these concerns, even if inflation's bumping up by 0.1 or 0.2% more month over month than what the world's finest economists submitted to Bloomberg.
Let me take a quick look. Is this the chart you're talking about right here? Did I get it?
Let me take a quick look. Yeah. There you go.
All right. It looks like this old dog can still navigate the interwebs. That's all I wanted to double check.
Good for you. What do you use more now, Google or ChatGPT?
Google.
Interesting.
Yeah, Google. There's things that I like about ChatGPT. I don't love to search on it because it makes so many mistakes or assumptions.
Mm-hmm.
And it presents it as if sort of this is truth. I don't like
authoritative, yeah.
Yeah, Google, I can sort of see, okay, here's my source, here's where it's coming from, here's my alternatives. And then I sort of, from the consensus crowd, come up with sort of, okay, what do I believe? And so for super simple things, I like ChatGPT, but like on balance, I probably use Google more. And then if it's political, I use neither of those two. I go to DuckDuckGo.
Sure.
I do. Why do you ask me that question? Why are you curious which one I use?
just curious as to how people find their information these days.
What do you use?
I almost exclusive. Yeah, I only use the Chinese version because I only want my views. Obviously
you use ChatGPT for sure. You talk in ChatGPT.
No, I don't talk. I
AI.
haven't gotten there yet. But
Yes, you do.
As soon as we got that company email, like, by the way, we have Claude 3.5 Sonnet available for everyone. I was like, yes, please. I will take that sign up.
Isn't that a big deal with the younger kids? Don't most of the younger kids use Claude?
You are a little bit older than me, so yes, we do.
Yeah, right. Yeah, right. By younger kids, bro, I mean like middle school, high school, not 2 years younger than me with a wife, a kid, and a mortgage. That's so funny. Bro, we are the same age and lifestyle. I don't care what your birth year is. If you're making dental appointments and you're nearing a prostate exam, we're the same age. Have you had one yet? A medical one. A medical one.
I got my teeth cleaned in November.
That's not what I was asking. Anyways, the VIX at 1589. The VIX at 1589 and in a consolidation range. How does that change in any way? I know if I asked the same question to Tom, and I loved his answer because it's like asking a blackjack player, do they change their strategy? You go, no, you idiot. Of course I'm not going to change the way I play the game because then I would just be giving edge to the house. So I understand how he moves, and I had to ask that question. I'm going to ask you the same question because I think your style is different, sort of like mine. How does a 15 and change VIX, which we've been at for the last week or a couple of weeks, how does that change the way you approach your bullish point of view on the market?
So my ideal world is like, give me a VIX with like a 14 handle, and we're sitting just above like the 1 month moving average, and I'll buy there and go fishing for a month. And we're not there yet.
You buy as in, because you don't buy futures. And I don't think you buy like SPY. You buy long calls, right?
Yeah, but go out there and buy like, long 30 delta calls, 45 to 60 days out.
Or call spreads. Or
depends how I'm feeling, right? Like in November 22, I was feeling really good, so I just bought ES futures. Like I'm like, this is the low. I feel really good about this.
You do trade futures. Okay.
Yeah, but like when I'm really confident, when I'm like, I know this is good. Like, I can't tell you that it's going to happen, but like, I know in my bones this is going to happen. And sometimes that helps. And sometimes I get kicked in the face. And like right now I'm long the 6150, 6300 call spread in ES. And even if we get to the typical tasty 21 days, will I roll it? Yes, because I think the balance of risks is if all these things are so concerning, like investors are so scared of what may be in the future, so they're just going to take their money and sell their stocks and put it under their pillow, they would have done so by now. They wouldn't be taking body blow after body blow. And as the healthiest thing for most long-term investors is just to like never check your portfolio, add a little bit to it every month, right? And then look at it when you retire. For traders, you have a very different mentality because you ride every little bump of the wave in the market. You're not just you're not sleeping during that cruise. And so, yeah, I'm not like super comfortable here, but it's a 15 handle VIX and the slope of the moving averages remains positive and we're almost overbought in stochastics, and corporate earnings growth was 12% year over year. And for now, the Fed is still cutting for maintenance reasons. And the House Republicans are not going to do any substantive spending cuts if you're looking between the lines at the legislation that's been sent forward. Doge is causing a lot of drama and flooding the zone, as a Steve Bannon might say. But in terms of actually, like counting up the dollars that we're saving for American citizens, perfect example. Yesterday, I saw a big tweet going around, the CFPB is going to be emptying its account and returning the $711 million that it has to back to American taxpayers. Great. We're all $2.75 richer. Fantastic. Like, where's the real spending cuts?
You do this every week.
I do,
but I don't understand why
you
do it.
Because the legislation that just came out from the House Republicans, if it is passed into law, will not produce any substantive spending cuts and add another $4.5 trillion to the debt over the next decade, which means from a fiscal impulse standpoint,
but you're
traders
fighting
need
a straw man, Chris. You're fighting a straw man.
No, the straw man is the news. It's the news. It's the noise out there. I'm saying ignore the noise. Ignore the noise. The news is that Doge is out here cutting all these.
What you're saying.
Oh, absolutely. The news out there is Doge is cutting these programs, and with all these government spending cuts, we're going to shrink the federal government, and that could be something that's not, though. If we're growing the debt by $4.5 trillion over the next 10 years,
shrinking the government by what measure? By employees?
I don't care about the employees. I care about the fiscal impulse. We're traders, Victor. But we're talking about this from the trading perspective, right? We care about the fiscal impulse. The fiscal impulse here is still deficit spending. So why would I be worried as an equity market trader about
just to be clear, Chris, you want a balanced budget. Is that what you're saying?
I don't care.
I know.
Our job as traders is
I want to know you personally. I don't want the Doge. Do you personally want a balanced budget?
Depends where we are in the cycle. I want counter-cyclical fiscal policy. That when aggregate demand ebbs, policy flows. When we're eating fat and healthy as a country.
Why is it you have a difficulty answering this question? Why don't you want to answer this question on record?
Because I don't think it's applicable for a standard view, right? Like if we have a growing economy, we should be paying down our debts. We should be trying to store some away. When do you save money, Victor? When do you prepare for a rainy day? When the sun shines. You don't go out and buy flood insurance when it's flooding out. So when the economy is running thin and we have a drop in aggregate demand, the government should spend more money, and with deficit spending, yes.
So like for instance, 2 years ago, would you have said the economy was strong or weak 2 years ago?
Weak, but with the limited knowledge.
You would have said it was weak.
And it needed help. Yeah.
1 year ago.
And no, did not need help. But we were getting the help, which is why you had reflationary trades going on. Right.
So 1 year ago, you would have wanted spending cuts in a balanced budget.
Want in terms of what? I don't want anything.
What's your opinion?
What do you
want? You're a citizen. I don't drop the trader thing. I don't care what you think as a trader. I'm talking to Chris Vecchio right now.
I'm getting off the camera. I'm taking off my pants like everyone else.
You don't wear pants on this stream. Don't.
Do you want me to stand up here? Do you want me to stand?
You don't wear pants.
I am wearing.
I'm curious. You as a tax-paying citizen of America, Chris Vecchio, do you have an issue with deficit spending since 2001?
Not all of it, no.
I'm sure not all of it. Okay, I'm going to get off this because I don't think you want to be pinned down to an answer, and that's okay. But my issue here, though, is if you're going to come back to this show every week and your issue is I've got an issue that the stuff that Doge is ticking off isn't the big stuff. And then I go, okay, do you actually want to balance the budget? And you go, I don't know. Well, I'm like, well, what do you want? What are you actually arguing here? Do you want big things ticked off? And then do you want a balanced budget? Or are you really just trying to picket this entity? Because you got something in your craw.
No. I am working backwards from the question of the Mundell-Fleming model. And I mean this with utmost sincerity, right? The way that I view the macro world is that we care about two things: the fiscal impulse and the monetary impulse. Okay. And out in the zeitgeist right now is this, and I know the audience, I know which way they lean. I see the stats of what media they consume, right? What's out there in the zeitgeist is that we have these big spending cuts coming. And my quip has been, they're saying that this is going to happen. Where are they actually appearing right now? Because if you add up the money there, that's not happening. And why do I care about that? Because if we're placing trades on the expectation that there is a big decline in government spending cutting, right? We're placing trades now to where the puck's going to be. That's not really what we should be up to. Because when we hit the rubber meets the road, while they're doing all these things that are flooding the zone to take the media's attention, and we're going to try to balance the budget, the actual legislation that's coming out is not indicating any of that right now, right? what it's indicating is that we're going to get the same kind of spending that we've had for the past few years, which I'm okay with either way. I just want to know which way the puck is moving so I can skate there. And so in a world where the Fed has to keep rates where they are for the next year and we are doing deficit spending, I'm thinking about like, should I be long equities in calls or call spreads, or should I sell puts? Should I do leaps? And yeah, I think that if we're going to be adding $4.5 trillion to the debt, we can forget the Doge headlines and all that noise they're making out there. And the tariffs could all be noise. Stay long stocks. Ignore the noise. Go to sleep. Put your head to the pillow with your long, just go to sleep with your long ES position on it and don't worry about it. That's what I'm trying to get through, Victor Jones.
God, man, I don't want to step in this booby trap you're setting for me. But it's like impossible.
Why do you hate stocks, Victor Jones?
So just to be clear, you think the fact that the Treasury the U.S. Treasury has less controls in it than a startup with 10 people, you think that's noise? Just to be clear, you think that's noise that should be ignored by the everyday individual?
As traders, I think this is noise that should be ignored.
You keep doing that.
Yes.
You keep doing that, but
do we think Trump's not going to pay good to bondholders? I mean, come on.
Do we think what? No, of course.
There's fraud in treasuries. Do we really think that like the U.S. is going to turn around and say, actually, these auctions that we did, those bonds that were purchased, those were fraudulently issued. We're not going to pay good on those. That would destroy everything.
No.
Right? Like that. Yeah. Just
I don't think that. That's not what I'm saying. What I'm saying is, go ahead. Sorry. It's
a story. It's a distraction, right? It's as traders, we need not concern ourselves with anything other than what's actually happening. And if you look at the House Appropriations bill that was just set out today, these big spending cuts that they're touting what's happening in Doge, it's great theater. The fiscal impulse is not changing. And so, you and I have gone back and forth, right?
I agree with you.
Are long bonds a good trade on deflation, right? Are long bonds a good trade on deflation?
I just feel the angle you're taking on this argument has always been a straw man, because Doge was never going to touch defense spending, nor was it going to touch entitlements. So by that, if you just go look at a pie chart of government spending and you understand the three areas they could not touch, then by definition, this entity was not going to fix the broken budget in Washington. And so I think I agree with you that Doge itself is not going to fix the deficit problem. But maybe it's the echo chambers that we're in. I don't see anybody saying that. So maybe you're sort of in this other world of content
Elon
distribution.
Musk stood in the Oval Office last night and claimed that he was going to cut $2 trillion in spending.
I think he said $1 trillion. He said $1 trillion.
$1 trillion is an enormous amount of money for let alone any economy. Yeah, that's what I'm listening to. He's making the claim that they're going to cut $1 trillion, and the next day the House Republicans go, yeah, we're not doing that. This is the actual legislation that's going to be put in front of President Trump. Right? Like
I had always said, I think the number when he said 200 or 2 trillion, excuse me, and I've said this before on the show, I'll say it again. And I still think I might be high. I said the real number might be between 500 billion and 800 billion.
Yeah.
And so $1 trillion seems closer to reality, but still optimistic. And if you know anything about Elon Musk, that's his style. He's not gonna give you the low number and then come in above it. He's gonna give you the optimistic number and then try to hit it. That's his style. And so again, putting it all in context, $1 trillion, what he really did was talk everyone closer to reality off of 2 trillion. So what I saw yesterday or the other day, I lose my days, I saw him walking it back off of 2 trillion. That's what I saw.
The end of the day, all of this is noise. Where's the Fed going with rates? Is the government spending more or less money? That's what equity market traders care about, right? In 2022, inflation's raging. The government's not going to be able to do all the spending anymore. They're going to come to their senses. The Fed's raising rates. That's when the market finally finds its senses, comes to its senses, right? After we figure that out. Right now, it feels like the market is saying like, hey, We're not going to come to our senses anytime soon. We don't need to worry about pricing in a future with lower corporate earnings because the spigot isn't being turned off.
Yeah.
And look at Bitcoin, 97K. Like that's not collapsing. Right?
So I think to your point, and this is what makes this environment so hard, that if we trip something, right? We trip into a recession, or we trip some credit event, or we trip some global trade issue. Like the idea that you're not going to have either a fiscal or monetary response. One of the two is going to happen. If the monetary response doesn't come, then the fiscal response will come because there's an incentive structure for power that's there. So I agree with you. So that's what makes it hard. Like even if you do get a knee-jerk reaction to the downside in stocks, it's hard not to want to be in stocks because when you get that impulse, they're just going to devalue everybody's purchasing power, and you've got to be in something that can hold on. And I think that's what makes this thing so tricky. You kind of know you're on a knife's edge. You know that we're all on borrowed money here. You know that this is a big gamble on a ton of debt, but you also can't afford to not be there. And that's what has made this last year so effing difficult. The risk to reward, the risk of being in stocks at crazy valuations is high, but the risk of staying in cash is arguably
also high, even higher,
even just as high. It's crazy, and that's what makes this last year so frustrating and difficult. I think for everybody, for all risk takers, bears or bulls.
I don't know. I mean, I think my attitude along the way has been this may be a bubble. The bubble may be inflating. We have no idea when it's going to stop. So trying to time the top and say arbitrarily this is the top, like you can't play that game.
I don't play that game though, but I try to go to assets that sort of offer what I think is value. And even that has been sort of, I mean, I've stayed alive, but it's been a losing proposition relative to the opportunity cost of being a dum-dum and just go buying 5 stocks or 7 stocks and just waiting, and or the highest beta index. I say that a dum-dum, but those people are the real winners at the end of the day. So I'm sort of being a little bit of a hater. But the point is, even the go find value and wait for the money rotation, none of that shit's working. It's like one play, and it's been that play for 12 straight months, Chris. And that's sort of the frustrating thing for people like me who don't play the binary, trying to call the top whatever. But the money rotation game is not there either.
No, and like the ride's going to end at some point, right? Like a 20% correction happens on average once every 5 years. So the last one we got was in 2022. The chances that we get one the next 2 to 3 years, not that low. It's just the cadence of the market over time. And so it's going to happen, but do we know this is when the music stops? I feel like there's a big wall of worry in place. Like, when are the tariffs going to come? That's sort of Damocles, right? Like, the Fed can't lower rates anymore. What if the AI overbuild is, we too much capex in the wrong areas? Okay. Like, I would also then pose the question the other way, like, hey, bears, if I told you that we just found out that all this AI can be done at 1/30th or 1/6 of the cost, and that inflation is raging way more than we thought. Egg prices are up 138% on a 3-month annualized basis. I mean, Chris can barely afford to feed his family now because he eats too many eggs. What do you like, where's the S&P going to be? And you'd be like, oh gosh, like if the DeepSeek and the tariffs and like, gosh, the S&P is probably off like what, 2, 3, 4, 5% now? And you're like, no, it's off 0.75% from the high. Right?
Yeah.
Like this was
we're in an upside down world where a 5,000 S&P is a healthier outcome, in my personal opinion. If we're at 5,000, things are healthy.
Say that to my calls, Victor Jones.
If we're at 8,000, things are bad. Things are really bad.
It sounds to me like you may be short my 6150 calls, so that would be bad for you.
No.
Okay.
No. I just, somewhere along the line, I started to like I have this like mental hedge on. Like, okay, I'm long, but I don't want to be, and all this stuff should go down, and it would fix a lot of our problems if we stop acting irresponsibly, and people would see that life, you would be a little bit harder to come by $1. You'd buy a lot less shit, but things would be a lot more normal, and people don't want to buy less shit, and they don't want it to be too hard to come by $1. And I understand that because it would be a bit more difficult, especially for people that are already in difficult circumstances. But it wouldn't be fucking crazy when you looked outside, Chris. That's my point. And so I'm like, okay, this is the way I'm like, I'll play the game. Oh, it went up today. Okay, I made some money. Great. It's still crazy outside, isn't it? Yes. Okay. That's how I think.
My sweet summer child.
You're the best. All right, man. Here's my thing. I've been aggressively neutral on crude oil, and I don't want to be. So give me an opinion. I need a smart person to tell me what to think.
I've been frustratingly disengaged in crude oil.
I'm aggressively neutral. You're frustratingly disengaged. All right.
Right. So here's the thing. Like going into the holidays, I had my whole spiel with you. Look, my daughter's out of school. Do I really want to sit around and trade while she's out of school and I'm paying someone to babysit her? No, because if I lose money trading that day and I just paid someone to watch my kid, I'm going to be doubly pissed. So
negative. You got negative carry on that. Sure.
Negative carry on that, right? So let's just lob off that scenario. Let's assume I'm an idiot so that I'm going to lose money on every single day trading. And like, so the downside is almost guaranteed. I should just not trade. Like one of the ideas I had in December was, you know, if we looked at crude, it was coiling, and vol was really, really cheap. Something like a reverse iron fly would have been an appropriate way to express that view. And sure enough, if that's what people did coming into the start of the year, it worked out brilliantly. Now it feels like we're kind of back in that area where I saw the IVRs today in crude in negative territory while we're sitting right near $71 a barrel. In an ideal world, the IVR would be like 70 or 80 right now. We could slap on a short iron condor and, you know, go fishing for a few weeks. But that's not what we're dealing with. I need something more right now. I'm of the mindset that if we do see an end to the Russian war in Ukraine, then there's a lot of oil that has to be purchased at market price. So that probably helps boost oil in the short term. As Westward was pointing out today, crack spreads for refiners have started to bump up in value too. So that should put a near-term price floor underneath oil. But then again, if Trump gets his drill baby drill promise, even though we're basically at production capacity right now, and there was a really interesting report in either Reuters or the Wall Street Journal about how the feedback the Trump administration's received from the energy sector has been like, we're not building new wells anytime soon. Let's just set that aside. If they do get the tax credits or incentives they need to bring more supply into the market, you're looking at a world where outside of isolated geopolitical risk, there's probably a ceiling on oil prices in the short term. So I just don't know if the juice is worth the squeeze, I guess, is my problem. Is it really worth putting on a short iron condor trade where I respect the 52-week range high-low, or at least the 6-month high-low range, and lay out $5 to make one when I could do something and have more upside elsewhere?
Yeah. Let me ask this a different way. So if one of the reasons to sort of be long right now is don't fight the Fed, maybe, or just sometimes the saying is don't fight the Fed. If the U.S. administration seemingly wants lower energy prices, is that a decent reason to play that direction? That if oil gets up towards its upper part of the range, let's say near 80, that the U.S. administration clearly doesn't want higher gas prices that would be politically difficult to stomach. They don't want higher inflation or higher prices. And so the U.S. administration clearly has a mandate from their voting base. And part of their point of view has been like, you know, the 3-3-3 strategy from Besant. I don't think they're going to get the 3 in the crude oil world, but whatever. Do you think it makes sense on the upper end of the range to bet with the U.S. administration, which is at lower energy prices? Would you use that as a crutch, or would you just say that's something to note but throw that away? You can't use that to be actionable.
No, I mean, look, I mean, obviously everyone wants lower energy prices. That would be fantastic if our heating bills were cut in half. But the reality is you need to have some supply that comes into the market in order to substantiate that, or a reduction in demand, quite frankly. They talk about the way that they want to lower yields on the long end of the curve is by reducing aggregate demand and bringing more energy supply into the market, because if you have more energy supply, lower oil prices, lower inflation expectations, that's all well and good. But how are you going to get there? What are you going to do to get those energy companies to make those kind of capital investments? And, Vic, there was maybe it was on Jones and Friends years ago, but we talked about one of the reasons why I had like a longer term bullish view on oil, despite being a believer in climate change, is that we don't have the infrastructure to make a transition. We don't have the nuclear energy that we need. We're finally getting there, which is actually really remarkable to see that the zeitgeist is shifting in this direction, something that I'm in favor of long term. But the reality is that we don't have any stepping stone infrastructure to a green future. And so as the economies continue to grow, as populations continue to boom, these energy companies are in a great position to continue printing money. But here is the situation. America is not a country where it's like 55-45 one way or the other. This is a country where basically every election at the top line level has been decided within a few percentage points, right? 51-49, 52-48. But whenever that party that just wasn't in power comes to power, they act like they have a 70 or 80% majority. But private companies understand that's not reality. They understand the reality is that it's more of a 51-49 country. So Trump and the Republicans could be saying all these things right now, but the reality is that if a Democrat comes back into the White House, they may turn around and say, we're going to change the rules on climate change and emissions and yada, 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 that renders null and void any of these capital expenditures. And oil executives are on record saying this, that they don't really see an incentive to make the type of capital expenditure investments they would like to, because they're worried about that political instability and regime uncertainty down the line. Better to hold the ground than throwing away shareholder funds after what was that overinvestment period of the mid-2010s, where there was way too much overbuild, and the shale revolution happens and oil prices are crushed, and all these oil companies go through a horrible situation for a few years. They've learned a lot from that. They're not going to make that mistake again. So we have a situation right now where we want more energy supply. Is it going to be fossil fuel? There's too much volatility in political futures, regardless of who's currently in the White House, because this country is flip-flopping back and forth every few years. So again, the answer is nuclear. We need nuclear. We need something else to fill the gap. It's not going to be wind turbines. It's a mix of all the renewables, but the missing puzzle piece right now is robust nuclear.
Amen. The only question is, whose backyard, mine or yours?
I am pissed off they shut down the nuclear plant in my backyard, okay? They did. They just shut down Indian Point 2 years ago, and now our coal and natural gas emissions are up, and pollution per capita in New York State is up. It's like, so you shut this down for climate? Who was behind shutting down that nuclear plant? What Westchester resident, Victor Jones, who's now the Health and Human Services Secretary, led the cause to shut down Indian Power Point? RFK Jr.
I'm gonna guess RFK.
God damn. Makes me so mad.
He should have been our 47th president. Chris Vecchio, it's 6:00 p.m. on the dot. 6:00 p.m. on the dot, my friend, which means your time is up. I want to be respectful of your time this week, since I blew past the time limits the other week. If the people want more from you, and they should, tell them where they can go. Unfortunately, your fans didn't get to see chest hair, but most of your appearances on the network do feature a deep V, sometimes a double V, as they call it.
We've done the testing. Our audience, mostly middle-aged men, seem to enjoy that, so I'll continue to wear the low-cut shirts. It's at CVecchioFX on Twitter, X. Of course, Futures Power Hour, Monday through Friday, 1 p.m. Eastern. Overtime, 4 p.m. Eastern, Monday through Thursday. Let Me Explain, Tuesdays, 9:40 a.m. And then, of course, here with you, Vic Jones, Wednesdays, 6 p.m. Eastern.
And if you want to follow him on Twitter, you should. And make sure you spam him with every Doge headline you can get your hands on, because Chris Vecchio loves it and he needs to know that God's work is being done. Chris Vecchio, I appreciate it, my friend. You're a godsend to this network and to the people that follow. And I always appreciate kidding 60 minutes with you, man. Have a good one. Peace. All right, you crazy. Take that, Dr. Jones. Well, Sleepy Mocha, Jesus, we are Vecchio sexuals. Good God. All right, everybody, that's going to do it. That's going to do it for this Wednesday episode. I will see you back here, same time, same place, same great network. Tomorrow, only on Tasty Live. Do me a favor, hit the like button on your way out, comment if you can, and follow me on Twitter or X or whatever you call it, at Victor Jones. The O in Jones is 0 because I like to be difficult. Hopefully you enjoyed the conversation. We'll see you back here tomorrow. Peace.